a powerful pitch can unlock transformative growth.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey.
Actually marked the region's strongest quarter ever with $1.2 billion raised. Why did that happen? Was it pent-up demand from the second quarter? I remember the last time you were on, we were talking about the uncertainty around tariffs and how that was all going to play out.
Absolutely. I mean, historically, the summer has always been a period of slowdown.
Yeah.
And the last time we were here, we were saying really that the tell will be whether the summer succeeds. And we've seen a record amount of capital. I think you're basically seeing the private markets catch up with what's happening in the public markets. Mm-hmm. We're beginning to see the euphoria of record highs across the globe in terms of the public markets. And now private capital is seeing both regional and international investors' appetite for the regional private capital space.
One other interesting stat was that a lot of this activity was actually driven by mega deals, i.e. large deals. I don't know what the cutoff is for your definition for mega, but why is that happening? Is it because companies are staying private for longer? Is it because of the availability of capital? Or what is going on to finance some of these bigger deals?
So a mega deal in our report is basically an investment deal that's greater than $100 million to kind of separate large investment deals versus the underlying ecosystem. I've been a big proponent that once interest rates start coming down, you see that late-stage capital becomes a lot more attractive. Mm-hmm. Why? Predominantly for two reasons. Cost of capital becomes cheaper, so investors are more likely to allocate. And then the likelihood of another round after that, or the potential for exit, becomes a lot more attractive.
Yeah.
And therefore, it's a sign of interest and risk appetite for later-stage investments and growth capital over early-stage investments in the ecosystem.
Yeah. And is that the same situation for earlier on in the cycle, Series A and Series B funding? What are you seeing there?
I think it's across the board that you're seeing that the appetite is returning to venture as an asset class, both from the international community and the regional community, and that has resulted in these record numbers. Ultimately, to achieve record growth, you need the underlying ecosystem to grow as well as the late-stage investment capital.
Okay, so how does the Middle East compare to what's been happening globally with some of these broader trends? I was actually moderating a global deal-making panel a couple of weeks ago in London, and the ladies on the panel were saying that things have massively ramped up just in the last couple of weeks. Also, the size of the deals are getting bigger and bigger. How does this region compare to the rest of the world?
I think one of the benefits that we have is that we can actually foretell the future by seeing what happens globally, and then it starts happening here. And effectively, the trends that we've seen from global benchmarks were already kicking in the latter half of last year, and we're now seeing that parallel into the ecosystem here. That delay in reporting that we really tried to fix at Magnet is something that we're very dear to, but we're now seeing that pickup of activity.
Okay.
I think one thing interesting to note, though, is it's very concentrated in the UAE and Saudi Arabia.
Well, I was going to ask you about that. Saudi Arabia is saying had the most deals for the first time in the quarter. This must be this 9 months of the year, 173, right? Yep. That's for the first 9 months. One of my colleagues, Laura, has written a story about how the PIF are slowing down some of their IPO activity, the share sales in the market. What sort of trickle-down effects would that have to the ecosystem, do you think?
I think that in the IPO world, the tech area is extremely hot right now. I mean, we just saw Dubizzle here potentially looking to list in the UAE. Saudi Arabia has many companies that are looking to list. Having said that, many of them are preparing to list. Now, we don't know how long that preparation process takes place. I think that PIF is the anchor investor in Jeddah, which is the fund of funds, along with SVC in the kingdom. But the appetite for exits remains probably the largest, not necessarily red flag, but orange flag for the ecosystem. And the need for liquidity to pay back many of the investors, founders, and the governments that really invested into the space is key.
And how do you read some of the decisions that we've been reporting on at Bloomberg recently, that the CMA are considering changes to lift the cap on foreign ownership of stocks? I mean, again, I know this pertains to the public markets, but does that all help the broader ecosystem?
Absolutely. As someone who's been following the public markets myself, you've seen the uplift in Saudi Arabia, which has been lagging many of the regional markets. In terms of tech IPOs, I think there's a couple of things. Capital gains is something that keeps getting repeated as a big challenge for companies that are listed or looking to list in Saudi Arabia. But the openness for foreign investment really will catalyze the growth of companies transitioning from private markets into public markets, specifically in Saudi. Saudi.
Yeah, Phil, always good to have you on. Thank you so much for bringing us your report. That was Phil Bahoshi, founder and CEO of Magnet. And coming up, Mauritius Commercial Bank says it remains committed to its Madagascar business despite the current unrest. That conversation next. This is Bloomberg.
Technology touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The CEO of Mauritius Commercial Bank says the company remains committed to its Madagascar business despite the current unrest. Thierry Ebro told us there is still plenty of opportunity for growth across Africa.
Our capacity of development in our own country is more driven by our country itself than by gaining market share. Although we can certainly develop more cross-selling, more flows business, from more financial market business in our own country, but that has a limit. When you take the continent, I mean, the huge potential of the continent is offering us a real capacity of growth where there is room for everyone. Again, I repeat, international banks, for the vast majority, have left the continent. They have their reasons for that. I think there are not good reasons. I think it's a little bit stupid from their side, but we can understand it, and that leave a lot of space for regional banks like us, or South African banks, or some Nigerian banks, for example, or multilateral banks, to position ourselves in this market where everything is to be done, and we need everybody around the table. There is room for really everybody around the table in this African environment and ecosystem.
I was going to say, how much concern do you have when you look at the events in one of your main markets, Madagascar, especially if you consider some of the growth that is coming there? How much concern does the unrest that we're seeing leave you?
Of course, it's a concern. At the same time, if we take the history of Madagascar over probably the last 50 or 60 years, this country has gone through hiccups and has recovered each time, although has suffered tremendously from these regular difficulties and unrest. This is not... Today, it's a concern for our people, for our staff, of course, and we are very cautious about that. But we do not believe that will change drastically the country for the next few months and years. So our strategy to be in Madagascar remains exactly the same.
SEBI Bank CEO Thierry Ebreau speaking with Bloomberg's Jennifer Zabazaja. Now for a look at some of the other stories we're following today. Airbus is opening new assembly lines in Alabama and China to boost output of its best-selling A320neo jets. Engine issues have forced the company to build gliders or planes completed without engines. Airbus aims to build 75 aircraft a month by 2027 as it works through a backlog of more than 7,000 orders. SpaceX's Starship has deployed test satellites in space and returned to Earth largely intact, and a major win for the company. The flight repeated several successes from August, with the Super Heavy booster separating and firing its engines to position itself for the landing. The mission marks a big step towards SpaceX's goal of turning Starship into a landing vehicle for future moon missions. And a quick look at equity futures. Things are turning south as the heat rises between China and the U.S. with some new sanctions from China imposing curbs on 5 of Huawei Ocean's U.S. units. So that's the reason that we're seeing a big decline in equity futures. And that is it for our show, Horizons Middle East and Africa.
Technology touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
Showing up everywhere with your highest integrity really has to come through. For any leader, it's really important to be as authentic as possible. That has been core to me from the very early stages of my career. Really show up as yourself for your colleagues, for all of your stakeholders. In our case, it's our YouTubers and our creators. I hope that when they're interacting with me, they're really seeing who I am, being true to yourself, and then having a core set of principles, especially when it comes to making difficult decisions, not just at my level, but really so that people at every level within the organization can make decisions, is really important in an uncertain world, but also in a world that's, very dependent on innovation.
Then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Tuesday. These are the stories that set your agenda. Metal momentum, gold gains again with silver surging to an all-time high. But the risk rebound runs out of steam. Shares trade lower in Asia on fresh trade uncertainty. China heading back on shipping as it responds to US measures on the sector, slapping curbs on American units of a Korean shipbuilder. Plus, the US president calls it the dawn of a new Middle East as world leaders join him for the signing of a peace deal between Israel and Hamas. So trade volatility is back, and a reminder that China appears to be in no mood to reverse course at this point. We're hearing comments from the Trade Secretary, Scott Bessent, being reported by the Financial Times, attacking the Chinese economy, and additional measures now being put in place by Chinese officials in the maritime space. All of this leading to a risk-off mood across these markets after a very strong session on Wall Street and in Europe on Monday. Today, European futures pointing lower by 0.2%. Here in the UK, FTSE 100 futures pointing lower by 19 points. S&P E-minis, after gains of around 2% by the close yesterday, looking lower, pointing lower by 0.4%. NASDAQ 100 futures, again, a very strong session powered by the AI trade yesterday, now pointing lower by 0.5%. Let's flip the board and have a look cross-asset then, with the focus, as we've been discussing, on the metals space as well, given the eye-watering run-up that continues for both gold and silver. But we'll start with the 10-year, currently at 403, so close to 4% right now in the benchmark US 10-year, largely unmoved in the session today. Euro dollar at 115. A little stronger, up 0.2% for the single currency in the session today. Gold at fresh record highs, closing in now on 4,200. SocGen saying their new target for the yellow metal is $5,000 per troy ounce, up 1.4% in the session today. And spot silver, for the first time, above 52.50. That was the mark in 1980, 52.50. They're crossing above that, 53.25 right now. A record. We have never seen this before in silver, up 1.7%, and that is partly down to a short squeeze here in London. Let's cross over to Asia right now, though, because Winnie Su is standing by in Hong Kong with a check on the markets there amidst this fresh trade uncertainty and the tit-for-tat, China versus the US. Winnie.
Yeah, there's a lot going on in Asia today, Tom. We are seeing that the gauge is extending losses to about 1% right now, and that's really on that new headline saying that China is now imposing curbs on the U.S. units of the Korean shipmaker Hanwha Ocean. And here we're seeing that that is dragging Korea stocks from the green to the red here, with also Hanwha Ocean now down some 7%. And yes, earlier we did have that positive earnings from Samsung saying that they were posting the best quality earnings in 3 years. And we are seeing a bit of a profit take there after the stocks having surged for some 70% so far this year. Now we take a look at what's going on in Japan, because that's also dragging down the overall region a lot today. So we are seeing that the Topix down some 2%, and the Nikkei also at one point down 3% or so. And Japanese markets are reopening after a holiday. So quite a bit of a catch down that really is still driven by the political uncertainty and instability there after the collapse of the ruling coalition. So investors right now unwinding that Takaichi trade and rethinking who might be the next prime minister for Japan. And also take a look at what's going on in Chinese stocks, because we are seeing still a bit of a weakness there extending for another day because of that ongoing trade tensions between US and China. So pairing some earlier gains, and we are seeing that onshores down flat-ish, and also the offshores actually leading a bit more losses. Overall, we are seeing a bit of a resilience when it comes to the Chinese stocks, when we saw how stocks actually rebounded yesterday afternoon and this morning, gaining a bit. So we are hearing that some investors are positioning into buying some dip. But overall, many are still cautious as we see how this US-China trade tensions continue to develop.
Winnie Su, thank you very much indeed, with a check on the Asian markets, with the implications, of course, of the latest on the trade front and the unwind of the Takaichi trade in Japan as well. So as Winnie mentioned, shares in Korea's Hanwha Ocean are dropping after China slapped curbs on 5 of the company's US units. Hanwha is one of South Korea's biggest shipbuilders. It comes as Beijing says it is looking into the impact of the US investigation into its maritime sector. Bloomberg editor Jill Desis has more then. Jill, what do we know at this point?
Well, at this point, Tom, I think the really critical part of this is really just that these are the U.S. units of this South Korean company, and that I think when you're bringing into totality all of these little trade tit-for-tats that have happened between the U.S. and China over the past several days kind of calls into question whether we're actually seeing an increase in U.S.-China trade tensions ahead of what we're still expecting to be a meeting between Donald Trump and Xi Jinping, likely at the end of the month or early next. So this is really, I think, some of the critical things that we're looking out for when it relates to these latest curbs that Beijing has just announced, really just within the last hour. I think, remember that there were some U.S. port fees that the U.S. had announced many months ago, but that were set to go into effect today that could result in large Chinese ships being charged millions of dollars to dock at U.S. ports. I think that kind of enters into the equation as well. So really, again, Tom, I think what you're seeing is that escalation of tension between the two world's largest economies, and some real questions here about what this may ultimately say about this anticipated Trump-Xi meeting.
And Jill, you talk about that anticipated meeting, and we heard from US officials overnight suggesting that that meeting is likely still going to be on. Scott Bessent saying that he expects that meeting still to take place. So fold in, and you've touched on this, but just round out the picture for us in terms of where these tensions lie between the two sides, because there was some take at the early start of the session today that maybe both sides positioning for a reopening of communication or continued communication, and now you have these maritime measures. Is there a risk it derails the conversations between the two sides?
Yeah, I mean, I think, the maritime measures are one thing, Tom, but where a lot of the escalation to me really seems to have resulted from were some of those measures that China put in place last week, some export controls involving rare earths. That's really been at the heart of a lot of these U.S.-China trade negotiations and tensions. That was something that came up earlier this summer when these two sides met in Geneva to sort of work through talks. It seemed like they had maybe reached some agreement on the rare earths issue then, but then we saw a delegation of U.S. lawmakers go to China actually maybe a month or so ago, mentioned that rare earths was still a major issue there. I think that that's really where a lot of the tension here lies, at least in my view. And, that's something that they seem to be continued to open to negotiating. We did hear a bit from the China side that there's still some working level talks that are going on between U.S. and China. So it does seem like there is at least some desire to continue those negotiations before this Trump-Xi meeting. But again, I think when you've got this kind of tit for tat, you've got these latest measures announced from China, you do have that back and forth, that's still kind of, it symbolizes to you that even if these two sides are negotiating, there's still, a bit of daylight between them and potentially some work to go before they reach a negotiation on trade that they feel comfortable with.
OK, an important update from Bloomberg's Jill Desis. Jill, thank you. Let's stay on this story and the market reaction because, of course, as we've been discussing, the US Treasury Secretary Scott Bessent says he still expects President Trump to meet China's Xi Jinping, saying there had been substantial communication over the weekend. Donald Trump had, of course, threatened to cancel their meeting, as Jill was saying. He threatened that later this month. The meeting expected later this month after Beijing announced new limits on rare earth exports on Friday. Let's get more in terms of how all of this is tying in to the market moves. The volatility is back. Valerie Teitel, let's bring you in at this point. Val, what are we seeing across these markets, the adjustments around the trade story?
Well, look, risk is on a back foot this morning, tied to what you were mentioning, these export restrictions on rare earths from China, prompting Scott Bessent to write in the FT that China is tempting to bring down the world's global economy. His words, not mine. He's also said in that article, Tom, that in China's, I guess, guide to try to export their way out of this deflationary recession, that they could bring down the world's economy with them. Some strong words from Scott Bessent in the FT this morning, really tempting to market think who was the safe pair of hands to walk back these comments from Trump last Friday that did kick off that risk-off mood. The chart behind me is S&P futures over the last 3 days. Tom, we still have a gap to make up. Even though yesterday's rally was a decent one, we're still down over 1.5% from Friday's session, and this overnight news not helping. It does feel like the market, Tom, needs an update every few days on whether this Trump-Xi meeting is still expected at the end of the month. But we should tie in the other global moves off the back of this. Gold is rallying no matter if equities are higher or lower, jumping another 1.3% today. Geez, 1.6% today. Mark my words. Gold nearly reaching 4,200. We heard from SocGen overnight. They are amping up their 2026 target for gold to 5,000. But But Tom, at this pace, we're looking at 5,000 before Thanksgiving. This rally has been unstoppable since the middle of August. I also want to mention we did hear some interesting comments from a Federal Reserve, a new Federal Reserve president from the Philly Fed, Anna Paulson. She was speaking to the media for the first time yesterday, and she did comment, Tom, that the U.S. economy doesn't seem strong enough to really generate sustained inflation on the back of tariffs. She becomes a voter in 2026, so add another dovish member to the voting council for the FOMC. We did have treasuries reopen after their holiday yesterday. Note, Tom, they are holding on mainly to that massive rally from Friday.
Valerie Teitel, thank you very much indeed. Yes, she was talking, wasn't she, confirming really market bets for another 2 cuts by the end of this year, almost 2 fully priced by these markets, and certainly fully priced for the next meeting at the end of this month by the Federal Reserve. Expectations that the Fed will cut again at the next meeting this month. Meanwhile, President Donald Trump has laid out his vision for broader Middle East peace following the success of the US-led mediation efforts, of course, to end the conflict in Gaza. Trump signed the Gaza agreement alongside world leaders, calling it the historic dawn of a new Middle East.
This is the day that people across the region and around the world have been working, striving, hoping, and praying for. They have done things over the last month that I think were really unthinkable. Nobody thought this could happen. With the historic agreement we've just signed, those prayers of millions have finally been answered.
Let's go to Bloomberg's Dan Williams, who's on the ground for us in Jerusalem. Dan, of course, an historic day, which you were present for. You covered it all for us yesterday. President Trump, of course, taking claim for the events, and even his critics suggest that he is right to take much of the credit for that. But 3,000 years, he says, it's taken to reach this. There was also a lot of hyperbole, as well as the reality that this was an historic moment.
Indeed, a rather epical speech there by Trump in Sharm. Perhaps his ebullience could be understood. He was blessed as a peacemaker in Israel's assembly, really a crowning speech for what was a very significant day, and not just for Israelis, for Palestinians in the Gaza Strip who suffered during this war, and for others in the region who feared the destabilizing effect of a war that lapped up and ignited several other fronts. That's part of the reason for the impressive turnout of foreign leaders at very short notice alongside the US president in Sharm in Egypt. What was the event itself out there? Well, I'd say it was somewhere on the spectrum between a photo op and a working meeting. Obviously, there's only so much that can get done in a couple hours of posing for photographs and signing documents, especially as Trump ran late. Such was the success of his visit in Israel, the duration of his speech in the Knesset in Jerusalem. What I think he was doing there was making sure he had the greatest possible number of stakeholders, people and countries and governments with a buy-in to his Gaza peace plan, a plan that will require long-term commitment, a lot of money, a good deal of risk-taking. He wanted them on record, on camera, committing to stay with him for the entire stretch of what will be a major strategic development for the entire region if it's successfully implemented.
And on that question of implementation, Dan, the 20-point plan, what are we watching for in terms of the sequencing? What comes next in terms of implementing that plan?
Well, the first stage of the plan, so we say 2 or 3 points of the plan are out of the way. They were met yesterday with the return of the last living hostages held by Hamas in the Gaza Strip, though it's worth noting that a small number of hostage bodies were delivered, just 4 out of 28, and that could prove to be a hurdle. There's a good deal of rancor building in Israel, and indeed Trump did raise that in Sharm yesterday. But what does the future hold for the deal now? Those ensuing clauses require that Hamas disarm, that many of its men accept amnesty, return to the fold as regular Palestinian civilians who accept coexistence with Israel, who renounce terrorism effectively. It also requires an interim alternative Palestinian government that would be overseen by what's been called the Board of Peace, sort of a board of trustees chaired by Trump himself, by the former British Prime Minister Tony Blair, and an interim security force whose members are not yet clear. Apparently there would be a US military component outside the Gaza Strip, whose job would be everything from recovering the bodies of the war dead lost from the rubble, excavating for unspent munitions that could cause a danger, and indeed making sure that while a full-scale, full-term permanent government is set up, security can be established in the Gaza Strip to reassure all parties.
Dan Williams in Jerusalem. Thank you very much indeed for that update. And of course, Dan will be continuing to cover this story for us as the story evolves, and we got more details, of course, out of the region. We're going to switch focus right now. It's earnings season, of course. We're looking ahead to US banks later today. But the earnings coming through from Ericsson a few minutes ago. The stock is down around 10% year to date, but the maker, of course, of telecoms equipment coming through with a beat in terms of the margin view. So Ericsson seeing fourth quarter networks adjusted gross margin of between 49 to 51%. The estimate had been for 49%. So at the high end of that range, 51%, that is a beat on the estimates. They have also signed a deal with Vodafone as well, agreeing a 5-year networks deal with Vodafone. For that is a stock to watch with the earnings coming through from Ericsson and slightly higher margin forecasts than the estimates. Here's what else to think about today then. Before the market, bank earnings then, JP Morgan, Goldman Sachs, Citi, Wells Fargo, of course, before the open of the markets in the US, BlackRock as well. So a big day for the US earnings story. We're going to give you a preview in this show as well in terms of what to think about, what to focus in on with all those banks coming up. And at 5:20 p.m, Jay Powell of the Federal Reserve, of course, will give a keynote speech at the NABE annual meeting. So we will give a run up to that. And, of course, we'll bring that speech to you live as well with all the market reaction. And it's 6 p.m. Talking of central bankers, Andrew Bailey of the BOE, the governor, of course, will be speaking as well. Another one to keep an eye on for you. Andrew Bailey in focus at 6 p.m. UK time. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, Dayb Go, on the terminal. And, of course, there is a focus on the debasement trade and all the details around that, the implications for crypto, gold and US Treasuries. Coming up, high hopes for a banking bonanza then. We're going to look ahead, as I mentioned, to the big banks kicking off US earnings season. That is next. We'll set you up. This is Bloomberg.
Technology touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Today's CFOs are reshaping the C-suite. Bloomberg Chief Future Officer shines a spotlight on these dynamic leaders. IMAX is having a blockbuster year, with more hit movies on more screens delivering more at the box office. CFO Natasha Fernandez says the scene is set for even more success.
You can see all of this growth ready to happen, and you have the ability and the responsibility to make that happen.
Watch Chief Future Officer Wednesday on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Now, major US banks kick off earnings season today with JP Morgan, Goldman Sachs and Citigroup all expected to post strong results in investment banking and trading. Charlie Wells is here to give us a preview. Charlie, what is the overarching narrative then going into this earnings season with the lens on the banks?
Well, Tom, there are very high expectations going into this earnings season. I want to take a look at that KBW Bank Index, that index of major lenders across the United States. It has been outperforming the broader market
To bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
Of course, diversification is very, very important, as we all know. But I would just say, if you look, for example, at gold, after such a rally, if you look at some indicators like RSI, it's really overboard. It was above 80 on RSI, so now it's below that. But I think it's not a surprise. And I would say, if you see gold correcting a little bit, I would say it's a healthy development, but we would buy that dip on gold, because I think that story for gold is not over from our point of view. And so I would say also on the equity side, as you said, we've seen quite a rally. Last day's markets were a bit sideways. And as you rightly said, it's about the earnings that are coming in for further market development and market direction.
So we're learning that actually demand is pretty strong in the U.S. We learned that from Delta. Levi's was really interesting yesterday because they actually upgraded their expectation for earnings, and yet their shares fell out of bed because they increased their expectations for the tariff hit. They said consumers were taking on that tariff increase in costs and actually paying higher prices. What's the conclusion? And I understand that it's early, but what is the conclusion from the earnings we've gotten?
So I would say, if you look at the earnings, first of all, the market is not as much expecting from a growth perspective as for Q2. If you look at Q3, I think that's good news. On the other hand, if we weigh this a little bit, what you can see is that the earnings revisions were not as much lowered as before for Q2. So from that perspective, the market probably is a bit cautious, but I think it's not expecting too much. So there is a room for companies to be better. From that perspective, I think we do expect the earnings season to be okay-ish. If you think through of the tariffs, I think we see the pass-through rate so far being quite low. That might be increasing a bit over the next months. And our conclusion from that is what we've been saying before, we don't see inflation to come down quickly. So it's rather staying at levels where we are or slightly higher. So from that perspective, we are not surprised that yields, if you look at 10-year treasuries, for example, are above 4. We would say 4.25 is possible in 12 months' time.
Right now, and to Lisa's point, Levi's is talking about how the consumer is able to handle what's going on with tariffs. But when more rates get passed on, as you talk about in coming months, how difficult is that going to be for corporate America to continue pass on higher costs?
I think you need to take this into account, right? So do companies take that from their margins, if you want? Or is the consumer able to digest this? I think so far the economy in the US is very strong. We do see a soft patch. So just to give you some numbers for Q4, over Q4, we do expect a growth rate of 0.8, so 0.8. But if you then look with fiscal spending into next year, if I meet you again in Q4 2026, the growth rate we have Q4 and Q4 is 1.7 already. So it's a soft patch. But I think the growth in the economy could help the consumer as well.
Christian, how difficult is this moment with the U.S. government still shut that we do not have the gold standard data coming out of the United States?
Yeah, it makes things a bit easier, right? So I see on your ticker as well, shutdown of the U.S. government. Be careful what you're doing there in a way. But yeah, we have been living through government shutdowns before. So from that perspective, I'm not so concerned. Of course, you fly a bit blind, but we think we don't need to change our forecast at this point in time. If you look at equity markets, for example, government shutdowns have not been really completely negative. I mean, the longer they take, there could be higher volatility. But we are not that concerned about this one because we think, yeah, even it might be a bit longer, but at one point in time, it will come back and then we get the data. They might be disrupted, then they might cause some volatility. But from our point of view, we don't need to change strategy because of this.
I love it. It makes it easier because there are fewer numbers to analyze. So, go home early. I guess I am wondering, though, does it make things like the University of Michigan sentiment survey take on renewed importance, even though it is sort of a disputed indicator of exactly what it's measuring?
No, of course, as you rightly said at the beginning, right? You try to get everything you get from the data perspective. So, for example, ADP, when you don't get the non-farm payrolls, you really watch closer. But of course, you need to take into account what kind of indicators are there. And I think, for a certain period of time, you probably can fly a bit blind from the data perspective. So you look at the markets, at diversification, as you're saying. But we have a clear view, as I said, soft patch, but then increasing. And so we would be very surprised if that's changing.
How do you deal strategically, Christian, with things like the credit line in Argentina, like this question of companies that could get caught up in the crosshairs of international disputes, as we're seeing this morning with the likes of Qualcomm in China? I mean, how do you deal with political threats that are new and that could potentially strike specific companies?
Yeah, look, the whole year was about this already, right? So there's a lot of discussion about tariffs, geopolitical risks that came this year, but so far the markets have done quite well. So I think it helps a lot to look at sectors. It helps a lot to look at companies that work globally and how they are impacted. And of course, what we have been seeing this year, what's not so much impacted to a certain extent is the AI trade. You talked about this before. So from that perspective, that's why we look at earnings. And as long as we get them, I think this trade is up and running. And that's clearly a driver for markets, especially in the US. But then on the other hand, we look at markets which probably have so far a bit of negative sentiment, and sentiment is then turning better. And talking here from Germany, we had some weakening sentiment, I think, but now the government has started to put some measures in place, and we do get more calls from clients from outside from Germany, from Asia, from the US as well. And so maybe we see a change in sentiment here, which would be positive for markets.
Christian Nolting of Deutsche Bank, thank you so much for being with us. We hope you enjoy your weekend. We were talking there about Qualcomm, and China came out this morning opening an antitrust probe of Qualcomm's auto talks deals. It just highlights how this sort of effort to try to gain leverage ahead of any kind of talks between President Trump and Xi Jinping is escalating and moving to more industries.
We're going to see tit for tat every single day until those two leaders sit down. And we saw a number of, not just Qualcomm, but a number of salvos coming out of Beijing overnight, as well as when it comes to ports and ships. So we're going to see this tit for tat until these two leaders sit down. What's interesting, what's so complicated for Qualcomm, probably why their shares are down some 3% in pre-market trading, is because they get almost half of their revenue from China. So when China goes after them, it's a really big deal.
And this is a reason why it's becoming a really fraught territory, particularly in the semiconductor space, to get involved and try to predict what the political backdrop is going to look like. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The U.S. has launched a bailout for Argentina, offering $20 billion in financing and carrying out a rare intervention to prop up the peso. Treasury Secretary Scott Bessent announced the currency swap and government purchases in a social media post. Trump's support for Argentine President Javier Milei comes ahead of this month's midterm elections in Argentina. Meanwhile, President Trump is doubling down on his threats of sweeping cuts to Democratic priorities as the U.S. government shutdown continues. Speaking at a cabinet meeting, Trump repeated his warning of cutbacks while blaming Democrats for the shutdown. Government workers and military personnel are set to miss paychecks today. And Maria Corina Machado of Venezuela has been awarded the Nobel Peace Prize for 2025. Machado winning for her work promoting democracy and decades-long struggle against authoritarianism in Venezuela. Known as Venezuela's Iron Lady, Machado has been in hiding for more than 14 months after Nicolás Maduro declared victory in the disputed 2024 elections. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, day 10 of the government shutdown.
We'll be cutting some very popular Democrat programs that aren't popular with Republicans, frankly, because that's the way it works. They wanted to do this, so we'll get a little taste of their own medicine. We have no idea who we're dealing with over there.
Ed Mills of Raymond James joining us next. This is Bloomberg Surveillance.
touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
It is day 10 of the government shutdown, and right now what you can see in markets is just an inability to find direction. So many crosswinds underneath that we are essentially paralyzed at 6779 on S&P 500 futures. And the Russell 2000, you're seeing a little bit of a lift, and maybe it's coming from the bond space. If you take a look at what's going on in 210s and 30s, you do see a rally led by the long end. It comes after yesterday's 30-year auction that was not necessarily a screaming buy in terms of just the concession, and yet you did seem to see the internals really support demand for the longer end yields. Those yields down almost 4 basis points at 468.51. Meanwhile, the precious metal of the moment, silver, up more than 70% so far this year, up again this morning, another 2.4%. And Anne-Marie, what I find fascinating is this is a metal that actually has an industrial use well beyond just keeping in your basement and feeling that you can sleep at night.
Yeah, it's dual use. Usually when gold rises, sometimes the, was it stepkid, ugly duckling cousin, silver also rises along with it. But to your point, there actually is a use case for silver, not just in a store of value and assets. So it's also getting some love.
Yeah, almost half of the demand is coming from industrial uses. Under surveillance this morning, day 10 of the government shutdown.
We'll be cutting some very popular Democrat programs that aren't popular with Republicans, frankly, because that's the way it works. They wanted to do this, so we'll get a little taste of their own medicine. We have no idea who we're dealing with over there. Republicans have voted repeatedly to pass a clean, nonpartisan bill to reopen government. We're not going to do anything only good for health care. We're really, I think, become the party of good health care.
Here's the latest. Government workers are preparing for missed paychecks today as the shutdown enters its 10th day. Congressional leaders are still at a stalemate as President Trump threatens sweeping cuts. Bloomberg's Tyler Kendall joins us now. Tyler, do we have any sense of where the potential plates of progress could come from? Have there been any? Is there any sign of progress?
Yeah, hey, Lisa, good morning. At this point, there are no indications that either side is letting up. Republicans are really holding firm that they will not negotiate until the government reopens. Now, our understanding is there are informal bipartisan talks happening on the Hill, but that leadership is not engaged. For example, this week we got sort of an insight that there are some discussions happening about what potential structural reforms could look like for the Affordable Care Act premium subsidies, such as a potential new income limit in exchange for an extension to those tax credits. But leadership says that they're not going to talk about any of those changes until the government ultimately reopens. And pressure is definitely mounting. As you mentioned, today marks the first missed paycheck for many federal workers. And I'll point out that the Senate left town last night. They're not going to be back until Tuesday. That is one day before October 15th, when many members of the military could also potentially miss a paycheck. Now, our analysts at Bloomberg Economics say that if this shutdown extends into a third week, which at this point with the Senate out, it looks likely, the U.S. unemployment rate could jump from 4.3 to 4.7% as furloughed workers are counted as temporarily unemployed, which is just a good reminder that 750,000 federal workers are expected to be furloughed during this shutdown. And Lisa, while we are talking about data, important to point out that a person familiar tells us that the U.S. Bureau of Labor Statistics is calling back some of its employees to prepare the September CPI report that was also supposed to be out next Wednesday. At this point, it does not look likely that they will make that deadline, but it is expected to be released before the next FOMC meeting at the end of the month.
Tyler, you asked the president about troops getting paid next week. We have a number of organizations that represent the National Guard, that represent the more than 1 million currently serving active duty service members, writing to their House and Senate representatives asking for a standalone package. Is there any sight on Capitol Hill that there is going to be legislation to pay our troops?
Well, President Trump told me, Anne-Marie, that he would encourage Congress to pass a standalone bill to pay our military. He did say that he thinks that the issue will be resolved by that October 15th deadline. But at this point, House Speaker Mike Johnson is holding pretty firm that they are not going to put that up for a vote. Republicans are really trying to hold this line that they are not going to negotiate. They want Democrats to pass exactly what's in front of them, which is that that clean stopgap measure that would fund the government until November 21st. Now, we have to see if the pressure mounting will continue. The House Speaker did hold a phone-in town hall yesterday on C-SPAN where he heard from many members who were urging him to pass some sort of standalone legislation. But Anne-Marie, at this point, we haven't gotten any indications that that's going to move.
Tyler Kendall, thank you so much. We'll be speaking with you throughout the morning. Meanwhile, Ed Mills of Raymond James writing this. A short-term continuing resolution is likely, though we cannot rule out a prolonged shutdown through November. Ed joins us now for more. Ed, can you just lay it down what actually is happening, who's offering who what, and whether there is actually genuine negotiations on both sides or whether this is just all politics?
Lisa, at this point, I'd say this is mostly politics. I don't think much is being offered in either direction. And in many ways, this is the shutdown that isn't. If you are a government worker, if you're a member of the military, this is very real. This is very personal. But let's look at what else is happening in Washington, D.C. Yesterday, the Federal Reserve held a community bank deregulation summit. We have a peace deal potentially here in the Middle East. We have a Trump-Xi summit later this month. The Senate actually passed the defense authorization bill. That is almost as if there is a government shutdown that's just in the background, that we're not really focused on that. Previous government shutdowns, it was like a 24/7 news story. It was really the only thing that was going on in Washington, D.C. So to the extent that it almost feels normal, that there isn't the pressure to reopen it, there isn't the kind of all hands on deck approach here, really does push me to say, when you ask me about the timing, right now, Lisa, I'm taking the over.
Ed, though, I hear what you're saying, but if you listen to that C-SPAN call yesterday with Speaker Johnson, you had Americans around the world, especially individuals whose families are active duty service members, incredibly angry. Do you think at some point, if this lingers, they're going to be forced to make moves?
Yes, I mean, we're going to reopen, and I think that when we've asked, kind of questions, and we've gotten, kind of this, at Raymond James here, what actually forces this open? It is missed paychecks. It is an actual impact on day-to-day lives of Americans. We're starting to see slowdown at airports as TSA lines get longer, as kind of flight delays get longer. That pressure builds. We probably need to see one of the political parties make a mistake. Right now, Republicans get slightly more blame in most polls, but it is kind of not overly skewed in one direction or another. Democrats feel like they are fighting the good fight, and they feel that having a conversation about health care is important, and they feel as if they have this fight and they have a situation where kind of Americans who are on the Affordable Care Act get significant increases, that they will politically benefit from that. I go back to the 2018 elections. How did Democrats win the midterm election when Trump was in office the first time? Make it about healthcare. That's what Democrats are doing here. So right now, these battle lines are still being drawn. The pressure hasn't built to the point where someone feels as if it is absolutely necessary to reopen, because so much else is going on and so much bigger fights are happening here in D.C.
But Ed, just to be clear, because former Speaker Nancy Pelosi said it wasn't a clean CR, and then Minority Leader Hakeem Jeffries was on our program yesterday saying it wasn't a clean CR. What is on offer is a clean stopgap funding measure. Is that correct?
Yeah, there's some, most of it is a clean CR. It's a 7-week extension of the current budget. There were some additional things that were added on there, especially more kind of security support for kind of members of Congress and other government officials. And traditionally, Democrats have always said, if it is a clean CR, you vote for it. The Republicans have not voted in the past sometimes for those clean CRs, and Democrats have been able to message that. But Democrats are also saying, because there are some cliffs coming, especially on the subsidies for the Affordable Care Act, Obamacare, that doesn't make it clean. Right now, it's mostly a rhetorical fight. This here is kind of something that Democrats, kind of like the fact that it is mostly clean so they can talk about healthcare, rather than oftentimes we're dealing with all of the appropriations bills and we have messages across the board on what's in there on healthcare, what's there on education, what's there on defense. So I think Democrats strategically decided to do it when it was mostly clean so that they can say it's about healthcare rather than all the other things that are part of this government budget.
How palatable is it, Ed, for people in the United States not to be receiving paychecks from the federal government at the same time that the U.S. is offering a $20 billion swap line to Argentina?
Yeah, it's politically difficult. I mean, I think that when we look back to the longest ever government shutdown, that was 35 days back in 2018. And the reason it lasted that long was the Defense Department was already funded. I think that the military members in particular are going to be something that the American people have a hard time not getting paid. What I'm watching for is there going to be something that President Trump tries to do creatively to pay even outside the appropriations process. We've already seen the president say that he's going to use Section 232 tariff money to fund WIC and SNAP benefits for women and children of economic need. Is he going to use some of that funding for the military? Is there going to be a push to kind of change the conversation here? One thing I've always noticed about President Trump is he does not stay on the defensive very much. He always goes on the offensive. Yesterday in the cabinet meeting, he was threatening Democrats about different programs that he would cut. Does he take that money and move it over to the military? Does he find a way, even if he's going to get sued, to fund the military to try to put pressure on Democrats to say that lever is not going to be the thing that gets you to reopen this? You have to come to the table and do something different if you want me to negotiate.
Ed Mills of Raymond James, thank you so much for taking the time this morning. Coming up, AJ Radajaksha of Barclays on what's driving gold's record run. Plus, Danny Berger with your morning movers. Applied Digital soaring on a new data center deal. This is Bloomberg Surveillance.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Stocks struggling to find some direction, understandably, given how many different aspects are at play geopolitically, but really underpinned by the idea that we are near record highs still. So not exactly really doing too badly. 6779 on S&P futures, going nowhere on the NASDAQ. Russell 2000 seeing a little bit of a bounce, up 0.2% coming alongside the move that is going on in bonds, where you do see a rally, particularly into the long end, with yields down something like 4 basis points, 4.69%. Across the board, seeing fairly strong auctions on the 10-year and the 30-year this week. I mean, yes, a concession, but still the internal demand dynamics have been good. Meanwhile, in gold, yesterday, a pause after a huge screaming run of about 50% so far this year. Today, trying to pick it back up about 0.6% as people take a look at where they can find a haven amid geopolitical instability. 3 hours away from the cash open. Here is your morning movers with Danny Berger. Danny.
Hey, Lisa. Qualcomm getting hit this morning, down 2.7%. News from state regulators in China that Qualcomm is being probed over anti-monopoly charges. It bought Autotalks earlier this year. It's an auto tech company that lets cars talk to each other, essentially for safety. The allegation here is potentially that they did not properly report that acquisition. So again, shares down almost 3%. Also on the move this morning is Applied Digital, up nearly a quarter, up 22%. This is a data center company. Reported earnings are really strong. But within that, it also said that CoreWeave was signing one of its leases. Again, there's this really big hype around the AI trade and finding out who the winners are. Data centers, especially with Microsoft saying yesterday that there is still a data center crunch that will persist into 2026, making these companies attractive for investors this morning. Finally, things to the downside. Levi Strauss. Lisa, I know you've been talking about this morning. The fact that Levi's beat on its earnings not only that, but its profitability also held up and improved. The issue is the CEO saying that tariffs are starting to bite. Clearly not showing up in their margins yet, considering that they've been able to find more profitable channels and raise prices and have consumers buy it. Still, these shares have run up a lot to date, so shares falling nearly 7% this morning, Lisa.
Danny, thank you so much. I'm so glad that you really went into that, because to me it was a fascinating story, and I wonder how much this is investors just not believing they're better than expected projections, considering some of the tariff headwinds.
And also, these are the tariff headwinds now, when most economists are coming on the program and they're saying a lot of companies were able to absorb more than half of the tariff impact, and next year is going to be the pass-through. Do Levi's have to even raise prices again come 2026?
Which is what we're hearing from some CFOs, with the question around whether consumers will absorb it. And in Levi's case, so far, they are doing just that. On our radar this morning, talk about political instability around the world. Japan's decades-old ruling coalition has officially collapsed. The Komeito Party ending its 26-year partnership with LDP, delivering a major blow to Sanae Takaichi's bid to become the country's first female prime minister. You are seeing just a touch of support underneath the yen, with this idea that maybe this would be the key indicator that would force the Bank of Japan to hike rates later this year, should there be a bigger sell-off, a bigger weakening in the yen. President Donald Trump announcing plans to travel to Israel for the expected release of hostages under the Gaza peace deal. The president saying he hopes to be there when the hostages return next week, and added he might address the Israeli parliament, the Knesset. The U.S., meanwhile, launching an effort to stabilize Argentina's economy. Treasury Secretary Scott Bessent announcing a $20 billion currency swap and a rare market intervention to help prop up the sharply declining Argentine peso, which really is fascinating, considering, Anne-Marie, that we wondered whether he would make good on this, or whether it was just the promise of some sort of swap line that would be enough to really stave off any kind of massive weakening.
I was with the Treasury Secretary in April when he made his first trip internationally, and it was to Argentina to show this support for Milei. And I asked him, are you going to potentially do something when it comes to more of a swap line? What kind of tools on the table? And they said, no, not at this moment. Clearly, things got bad for when it comes to Argentina and the markets. And mostly that's because a lot of individuals and investors are concerned that more leftist policies might creep in if Milei doesn't succeed, which is why you have this. But you bring up the point, the political blowback at home is going to be very challenging. We saw this with text messages from the Agricultural Secretary Rollins to the Treasury Secretary. If you want to make America great again, then why are you buying pesos, especially when Argentina, it now has an avenue to sell soybean cargoes to China, and they're not buying U.S. cargoes.
And it's a pretty narrow bet that Javier Milei will win, and then will fortify some sort of stability in the peso, given that he just had a pretty big political blow in a recent local election. So how much will this swap line continue should he lose the next election later this month?
Right. And the problem they have, that if they don't have Milei in Latin America, the way the Trump administration sees this, their concern is there will be a government that is more friendly when it comes to China. And the Treasury Secretary made this very clear last night. He said what they want to do in Latin America is make sure that these countries are turning to Washington, not Beijing, in times of trouble.
Yeah, so this to me is really the key question. And honestly, I want to rip up the script and go right to our next guest, Ajay Rajadaksha of Barclays, to talk about what we're seeing with respect to the international picture, how much that's edifying what we're seeing in the gold trade, but also how difficult it's been to really make some sort of international call. When you take a look like Argentina, how much does that complicate the emerging market bet? I mean, how much does that complicate understanding what the calculus is there?
It does, but it depends on the asset class you're talking about. So on the bond side, it does matter hugely. But on the equity side, remember, Lisa, you're talking about an EM equity asset class that is primarily dependent on what China does. Not so much Argentina, not so much Brazil, not even at this point India. Indian equities have basically traded water for a while. But the Chinese equity market has been on a tear. And that, I think, is the wind beneath EM's wings for the foreseeable future. So there's noise, yes. But this is not going to upset the EM equity rally.
This is fascinating, because how much is China the wind beneath the sails of gold? We've been talking all about gold as being this debasement trade, but you're not seeing it necessarily in treasury yields, because you are seeing some kind of demand at the auctions. Is this really just central bank buying led by China that's fueling in a narrative that's taking on a life of its own?
It is partly central bank buying, and it started in 2022 when the West froze Russia's FX reserves. We saw an immediate pickup almost double the amount of buying in 2022 from central banks relative to 2021. And it has not let up since. Central banks have bought over 1,000 tons of gold each year starting in 2022. They used to be at barely 300 to 400 tons. But part of it is also the lack of supply. Weirdly enough, despite gold prices basically tripling in the last 5 to 6 years, the amount of supply, call it geopolitical issues, call it geological issues, but the amount of supply really hasn't picked up anywhere near as much as you expect. And then that is the third thing, what I think you're referring to, which is just uneasiness about the global financial and monetary order.
When it comes to that uneasiness and the central bank buying, what's the impact of that? Because that means then they're not buying as many U.S. Treasuries.
That is actually a very clear impact. So for the first time late last year, by our estimates, the amount of FX reserves globally held moved to a majority, not a majority, but more FX reserves were held in gold and US Treasuries, which is not something that has happened for a long time. Like you guys just said, it is true that it's not shown up in a lack of auction demand, for example. But if you look at swap spreads and where they are right now, they still seem to be screaming that on a relative basis, sovereign debt is still not as much in favor as all-in yield levels would suggest.
Do you call this the world de-dollarizing?
No, I think the world, it's not so much one currency versus another. Because let's face it, there is not an alternative to the dollar. The renminbi is not an alternative. The euro has its own problems. The yen used to be a safe haven, but has struggled in the last 3 or 4. The Swiss franc, quite frankly, is very expensive, too small. So it's not de-dollarizing as in the world moving to other currencies, but the world absolutely is worried about how much we are awash, both in fiat currencies as well as in the trillions of dollars of sovereign debt with the promise of trillions more to come. That is the uneasiness that I think investors are turning to gold for.
I wonder if we're just trying to create narratives around a liquidity picture that people don't fully understand. And as the head of research at Barclays, I'm sure you track the liquidity pictures and the idea that you're having the fiscal and the monetary engines kind of firing at the same time. How much do all assets end up trading in tandem? And I know I shouldn't make too much about this, but the fact that stocks, bonds, and gold also sold off yesterday sort of hinted at this question around liquidity almost as much as some of the narratives that we're trying to put around them.
So I'm less worried about, you're talking about too much liquidity in the system.
And then being withdrawn and how much that ends up really kind of creating the dynamic in markets well beyond any question around geopolitics or loss in U.S. exceptionalism, weakening growth beyond, et cetera.
So I think yesterday, just to address that, smaller question first, was not about liquidity, partly because, like you said, gold was so overbought. The RSI, I have just never seen it. When something goes up 50%, it's not crazy for it to take a little bit of a breather. Equities, I would say the same thing. Bonds, we are running, according to the Atlanta Fed, at a 3.8% quarter-on-quarter growth number annualized for the third quarter. That is a nominal GDP print of over 6%. At some point, bonds are supposed to start to reflect that, and I think that is what they were doing. But I do think that the Fed is laser focused on the amount of bank reserves it starts to take out of the system as it continues with QT. Now, the problem that they have is the way that there is a problem is when there is a problem. We are all guessing at what is the correct level of bank reserves. But if I had to guess, I think they would err on the side of caution, meaning leave too many reserves rather than too few. And that, again, is gold, Bitcoin, silver positive.
So is it very difficult to be bearish in anything right now, considering that that's the backdrop of liquidity?
It's hard to be bearish given the economic outlook. We've turned, you notice, neither of you guys has asked me a single question on tariffs, and there's a reason for that. We have turned the page on what used to matter. There's this massive AI boom, which even if it ends up with some problems along the way, this amount of spending there's names, Lisa, that I never knew. Colossus, Rainier, Stargate, these are all fantastical names, except that they are all gigantic data centers, each one of them half the size of Manhattan. And that spending is not going to go away. And while that is going on, I just see no reason for a big pullback in most asset classes.
Ajay Rajadaksha, thank you so much for being with us. Ajay Rajadaksha of Barclays joining us here in New York. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The Senate passed a bill that would require top chip makers, including NVIDIA and AMD, to ensure that U.S. companies get priority access to their products before China. The bill's path to becoming law remains unclear as the House passed its version without clarifying language on export controls. Lawmakers must now negotiate a final package. Meanwhile, a grand jury has indicted New York Attorney General Letitia James over fraud claims after calls from President Trump for her prosecution. Court filings show she was charged with bank fraud and making false statements to financial institutions. In a statement, James called the charges baseless and a weaponization of the justice system by the president. And Paramount Skydance CEO David Ellison says more content is key for his company going forward. Speaking at Bloomberg Screen Time Conference in Los Angeles, Ellison made the case for what he sees as the best path forward to keep up engagement and bring value to shareholders.
You actually need more content to yield more engagement, more movies, more television series, more to get to scale, because you need that content, you need that great storytelling to yield engagement.
Ellison also said he sees more consolidation ahead in the media space. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. I've got to say, I feel like a lot of choices. Just saying. Up next, aiding our allies.
Argentina is a beacon in Latin America. We do not want a failed state. We are going to use Argentina as an example. We back up our allies.
Doug Redeker of International Capital Strategies joins us next. This is Bloomberg Surveillance. Stocks looking for direction this morning after a pretty big week. More gains until yesterday when suddenly there was a halt, particularly led by a number of the broader stocks. A question here about tariffs, the ramifications for some of the retailers in particular. Under surveillance this morning, aiding our allies.
Argentina is a beacon in Latin America. We do not want a failed state.
So this isn't a bailout?
Sorry, it's not a bailout at all. There's no money being transferred. We are going to use Argentina as an example. We back up our allies. President Milei has done the right thing. He is also a great ally for the U.S. He'll be coming to the Oval Office next Tuesday.
Here's the latest. The U.S. finalizing a $20 billion currency swap framework with Argentina's central bank. Bloomberg's Michael McKee joins us now. Mike, can you just give us some perspective on what swap lines like this have been used for in the past, how frequently they are used by the United States?
Well, they did two things yesterday. They finalized the swap lines, and they also intervened in the currency markets to buy Argentine pesos. Those two things related but not necessarily connected. The U.S. has bought foreign currencies 3 times in the past before this Argentina one to aid Japan twice and once with the euro, but they haven't done it since 2011. The swap line is an interesting thing that we really don't know a lot of details about at this moment. Normally, swap lines are between the Federal Reserve and the central banks of other countries. The idea is to be able to provide dollars when dollars are short for companies in those countries who have to pay back dollar-denominated loans. And what they do is they send us a certain amount of money. Say Argentina would send $50 billion worth of pesos, and we would give them $50 billion. We'd hold on to the pesos, and then we would send them back, and they'd send us the dollars back when that's over. But this appears to be a treasury swap line, and the details haven't been really made public, but it's maybe analogous to what happened in the Mexican peso crisis, where the Treasury Department used the Exchange Stabilization Fund, the same thing that they used yesterday to buy pesos, to basically guarantee Mexican debt. They couldn't roll over their tesobonos, so the U.S. guaranteed that the debt would be good, and they gave some money in swaps, but not a whole lot. And then the Mexicans guaranteed that loan and the guarantees from the U.S. by pledging oil money for collateral. We don't know what Argentina's collateral would be or how this would all work, but it does look like what their goal is to get Milei through the next couple of weeks until the congressional election down there, hoping that he can stay in power and he can continue his unpopular but the kind of reforms that the administration wants to see made down there.
Michael McKee, thank you so much for that perspective. Joining us now is Doug Redeker of International Capital Strategies, who's been covering and studying Argentina for a very long time. Doug, were you surprised by what was announced yesterday?
We certainly had enough flagging that this was coming that I guess I wasn't surprised. I'm in following on what Mike was just saying. This is a unique use of the Treasury's instruments under its control under the ESF, the Exchange Stabilization Fund, in that law, the law that created the ESF, says it doesn't use the word swap. It doesn't contemplate a swap. It says actually there has to be an assured means of repayment. And as Mike was just saying, we haven't heard the details, but the details are pretty important. So I guess what surprises me is that the U.S. Treasury is effectively extending a loan by another name. They're calling it a swap, but it's actually a loan to Argentina on terms that we don't know about, but which seem as if they are unique in the history of the ESF, in that we are lending U.S. Treasury dollars to Argentina in exchange for something that seems to be at best of questionable equal value. A swap is we lend you, as you guys were saying, $50 billion for $50 billion worth of pesos. The question is, how do you define what $50 billion worth of pesos really looks like? That's the key.
Doug, why isn't the IMF doing this?
Well, the IMF has extended over $50 billion, the largest program in IMF history for the last several years. They've been doing this over and over and over again. It started back 30, 40 years ago. I forget exactly how many programs. But at this point, the most recent IMF program, where the IMF extended $20 billion of additional funding to Argentina with $12 billion paid up front, was very difficult to get through the IMF executive board, because this is the classic case of throwing good money after bad. And so the U.S. put pressure on the managing director and the board, and they agreed to do it. That doesn't mean it was the wrong thing to do, but the idea was that that $12 billion was supposed to be used to boost Argentina's reserves in anticipation of exactly where we are today. And instead of doing so, the Milei regime, which has otherwise on fiscal in particular done an admirable job of trying to right the Argentina ship, they just whiffed on this one. They didn't use the dollars provided by the IMF to boost their reserves. They are, by most accounts, negative net reserves today. And so when Scott Bessent says this isn't a bailout, I have to scratch my head and say, how are you lending money without collateral to a country that is negative net reserves and viewing it as something other than a bailout? It's a bailout.
Whatever you want to call it, the olive branch that the United States is extending to Argentina, is it enough to stop the bleeding in the financial markets in Argentina?
Well, I guess we'll see, but I'm not convinced. I'm not convinced largely because Secretary Bessent's argument on Fox last night was that the peso is actually undervalued. I don't think you're going to find too many people who believe that. And I think the markets are going to test that. So whether it is the structure that they're undertaking, this 400, well, we don't know how much they intervened yesterday, but the market rumors were that the U.S. intervened as much as $400 million worth of buying pesos naked in the market. At some point, that's going to be tested by the markets. Whether it is enough to get them through the October 26th midterms or not remains to be seen. But I have a hard time thinking that the markets aren't going to be scratching their heads and taking their pencils out and trying to test this, whether it's today, tomorrow, or the next day. It's going to happen.
There is an argument, though, and this is what Treasury Secretary Scott Bessent is talking about, that the U.S. wants to increase its presence in Latin America and have a greater competition with China, which has really increased its presence there. I'm just wondering how instrumental you view Argentina in that effort, in terms of what they're doing, in terms of their alliances already.
So geopolitically, this administration, President Trump, really has a spheres of influence worldview, and Western Hemisphere down through Latin America is included in that. So it's a high priority for this administration, for this president, to try and exercise American dominance or control over Latin America. And the big impediment to that, amongst other things, including the will of the people themselves, is the Chinese presence. In Argentina, Milei came in and was very strident in his rhetoric against against China. The problem is what we started with, which is China has an $18 billion swap line outstanding to Argentina. If Bessent gets what he wants, if China says, you know what, we're washing our hands of this place, we're getting out of here, then from a matter of what that $20 billion swap line is going to be used for, that's almost dollar for dollar, simply replacing the $18 billion that China would be withdrawing. So Argentina is actually no better off. So we have to be aware that it might be a little too late to simply aspire to getting China out of Latin America and out of Argentina, because at this point, they're pretty deeply in. And are we as a country really ready, willing, and able to put up that much money to say we're going to replace every dollar of investment and swap exposure that China has in Argentina so that we are the big fish in town? You know, that extends beyond Argentina. What are we going to do in other countries in the region where the governments are not so friendly to the Trump administration? This is a big thing to try and bite off.
Doug Redeker of International Capital Strategies, thank you, and look forward to continuing the conversations next week at the IMF and World Bank meetings. But this really is a key question. And when I was in Peru last year, I was struck by how significant the Chinese presence was with Xi Jinping coming to open a port. How much is the U.S. willing to really compete with that in order to get a foothold on the copper reserves, on the other types of precious minerals?
And the Treasury Secretary said that as well last night in this Fox News interview. He talked about the recent export controls that came, more of them from China, and he said, look to what potentially mineral deals we can do in Argentina. They want to bring these economies closer together, and it almost was a Draghi moment yesterday. Whatever exceptional measures needed.
Coming up next, we speak with Katie Kaminsky of Alpha Simplex, Tobin Marcus of Wolf Research, David Tinsley of Bank of America Institute, and Republican Congressman French Hill. Good morning.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level, being open to comments, feedback, discussions. There's always this back and forth workflow. Sometimes conversations with different people might open up ideas to explore.
Embrace a growth mindset. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
I'm not sure that the Fed can fully ignore what's going on with inflation.
There are risks that come from the inflationary side. Cuts seem a little premature.
Short-term rates are pricing more Fed easing over the course of the next 12 months.
The risk to look for right now is, can the Fed cut rates as much as the market is presently anticipating?
I think they cut again, in part because they may not get me more official data.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance, heading into University of Michigan Sentiment Survey Friday, because next week isn't CPI week, and yesterday wasn't Jobless Thursday. And why not? Well, the U.S. government is shut down for the 10th straight day, with federal workers starting to not receive paychecks. And traders are reeling with a slew of international political risks, given that the biggest headlines probably are not coming in markets, because guess what? There is no data.
There's no data. We're still in this data desert. The government is still shut down. The one positive signal from Washington, D.C. is the White House has decided to deem some individuals at the BLS essential. They are going to start collecting the inflation data that we should then have at the end of the month. It'll be delayed, but we will get the data. In the meantime, everyone is grappling with other forms of data we can use. And you've been great on this, Lisa, in terms of corporate America. What are they telling us right now about the health of the U.S. economy and how resilient this consumer is?
So yesterday we got Delta, incredible read on the U.S. consumer, and it pointed to real resilience, a real strength, not only at the front of the cabin, but also in the economy seats as well. A bit weaker there, I suppose. Levi's, though, and we keep pointing to that because we haven't talked about tariffs. Ajay Rajadaksha of Barclays pointed out we're not asking about tariffs, and yet Levi's said they were going to see a bigger than expected impact on the rest of the world, even outside of China, something like 20% in terms of the cost increase.
And how many more executives are actually going to come out and say it so bluntly? What's happening? Quote, we have started feeling the impact of tariffs. Remember months ago when Amazon wanted to put the tariff impact on the website? And then there was a huge drama between Jeff Bezos and President Trump, and there was calls going on. Levi's CEO is saying we're starting to feel the impact. But a lot of analysts have come on this program and saying, well, for the most part, companies have been eating it. What kind of impact can we see in 2026? How difficult is that going to be for the Fed?
And Levi's gave a sense of what impact they were seeing in terms of elasticity or consumer response to increased prices. And frankly, they're absorbing them. And that, to me, is going to be a question for the Federal Reserve. Meanwhile, market's not doing much this morning, which is really telling given the fact that everybody's gone home. John's been out today because why should he be here since it's University of Michigan Sentiment Survey Friday?
He's answering the call.
And we know, he's answering the call. We know how he feels about University of Michigan Sentiment Survey. Up just a touch in terms of futures, up about less than 0.1%. You are seeing a little bit of dollar weakness, but really a dollar strengthening underfoot that has been a real sea change from what we had seen for the rest of the year. And 10-year yields lower by about 3 basis points, 4.10, 4.11 round up. Right now, coming up this hour, Katie Kaminsky of Alpha Simplex with Wall Street pressing a pause on the latest record rally. Tobin Marcus of Wolfe Research as President Trump and U.S. troops head over to Israel. And David Tinsley of Bank of America Institute with a consumer spending surge. We begin this hour with futures struggling for direction with stocks hovering around record levels. Katie Kaminsky of Alpha Simplex writing this. The rally has been somewhat broad with small cap ahead of big tech. Despite this, there are still concerns about the strength of the AI theme. And Katie joins us now for more. Katie, good morning.
Good morning.
So you're trying to find a trend. Is there any trend in what we're looking at, which right now feels just incredibly paralyzed?
Well, I think the interesting part is the only trend is all systems go. Equities have continued to move. We have been talking a lot about gold this week. I know it reverted yesterday, but really it's this lots of headlines, but nothing moving the markets. Government shutdown, everything is good, and, it's kind of confusing to me sometimes.
Well, yeah, I think for all of us, I mean, when we take a look at how sort of bombastic some of the headlines are, and then you take a look at just sort of this quiescence in markets, I am wondering, one of the big movers has been the dollar. And we will get to gold in a second. But the dollar really has seen a strengthening, which has questioned or threatened some of the people who have big short positions on the currency. Do you think that that could be, based on your strategic research, that could be the beginning of something that really feels like a dollar strengthening rally?
Well, I think it's definitely possible, but we also have to remember that we have rate cuts on the horizon. So that's definitely going to be against the dollar coming up. But you have seen so much pressure on the dollar this year that there's a lot of extended positioning. And it's really moved so far that I think it's moved out of a range that people might be comfortable with. So that's why you're definitely seeing that potential pop up in the dollar that could continue, especially if stocks were to revert a little bit.
Is it also because of the timing? Political paralysis in France. You have an implosion of a 26-year tie-up in terms of the coalition government in Japan. So what else do you do if you've already done too much in gold? Maybe it's time now to recalibrate what's going on with the U.S. dollar.
This is a really good point because I've been getting a lot of interesting questions about gold. People have been going into gold with this idea that there's no real safe haven to look for. And maybe at some point those are getting extended and they're starting to think the dollar is actually looking like it's still somewhat of a safe haven, especially if we think that the news and headline risk has kind of gone past us and the dollar is still kind of that strong currency that people see as that safe haven.
But also clients asking you at a time when we are in this data desert and we actually don't know, hopefully the end of the month, we really don't have an exact pinpoint time frame and where we're going to get the gold standard economic data out of the BLS.
Well, this is a good question because I think in the absence of data, people seem to be perfectly happy, which is strange.
Ignorance is bliss vibes?
I guess so. I mean, you'd think that people would be reacting. We don't know what's going on, what this data is going to be. But instead, the markets are just still so focused on AI is great for the long term. The U.S. growth is still strong. And I just think it's going to take a couple of interesting data points to kind of change that narrative.
Do you think that there is any evidence that that narrative should be different?
Right now, there isn't. I mean, that's what I've been looking for. And I think the interesting part is more going to be once we have the situation where growth is strong and we have a potential for overstimulation, that, we're in a situation where growth looks good, earnings look good, yet if we start cutting rates, that's a potential risk that I'm thinking about and seeing, is that then you could see issues with treasuries. So demand for treasuries, potential steepening in the yield curve, which we haven't seen yet, but we did see last month. And you see that gold position is the only indication that people are a little worried about maybe this is full throttle. Maybe we need to pull back.
I was reading a research paper yesterday saying that that whole idea of the dollar devaluation trade as being represented by the gold is really challenged by what we're seeing in the yield space. The fact that we are seeing demand at the long end of the yield curve, and you haven't seen that kind of sell-off that you would expect. I mean, how surprising has that been to you?
It's been very surprising because, in this particular environment, you've seen almost no signal in fixed income in terms of trends. It's been sort of back and forth in terms of, are we going to eventually see steepening, then we see flattening? So I think we're going to need some sort of catalyst and some sort of realization. So things like CPI are very important to understand that narrative, and we're not going to know what that is. So that means that surprise or potential obstacle for bonds may just be delayed, which could actually make it more extreme.
It's been confusing, especially as we talk about the AI theme and we talk about electricity costs. We talk about the likes of Levi. I mean, if you look at the anecdotes, you can point to a whole different a group of nodes of inflation, whether it's Levi's increasing prices on jeans that we saw and people actually absorbing them. The only argument here is housing. And that, I guess, is sort of the question of whether housing and sort of the lack of a rebound there can provide a tailwind to the Treasury market in a way that single-handedly upholds it. I mean, how much are you looking at indicators like that, much more than you have in the past?
Oh, I think that's an important point because I always remember that inflation is the greatest enemy of bonds, right? And so if we start to see more data, especially more idiosyncratic areas, it's just, you highlighted this perfectly. It's in some areas, but not in others. That means that it's not just a broad-based inflation effect, and it's also something we haven't experienced before. So this tariff, cutting rates, overstimulating the economy, we don't know where that inflation is going to come out. And inflation is very insidious. It can come in some places at one point and then not be observable until later in another sector of the economy. So it makes looking at multiple data sources like housing or retail even more important. So not just the inflation number itself, but drilling that down.
The Fed chair has talked about the fact that basically he's now re-anchored the Fed to the bias, to the labor market, and almost said you can look through these inflation prints. Is that going to haunt them in 2026?
It's quite possible because I think inflation is a very insidious force, and it will definitely show up where it hurts most, which is the bond market. That's where you're going to see that impact. I do think there's always a delay between how you see the reaction and the response with inflation. So it's also hard to tell at this point, but it's definitely a risk.
Could it be a place where the Fed start considering hiking interest rates, even though politically we know that there is a move to make a Fed that's more dovish?
I think that's a very low probability event, just given the trajectory of sentiment with the Fed and all these questions about Fed independence. But, should we move to a point where, let's say, growth continues to be strong, the markets are still moving strongly, rates go down, we have some overstimulation, then a pop-up inflation, they're going to be in a situation where they have to answer to that. And most people do not like inflation because you feel it every day.
So for now, it just sounds like you put it all together. Your highest conviction is be long because there's nothing else to be?
I'd say yes.
Katie Kaminsky of Alpha Simplex Group, thank you so much. Really appreciate your time. And a lot of people seem to be saying, stay long until it becomes a bubble and then get out. But we're not there just yet. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. French President Emmanuel Macron is expected to pick a new prime minister by tonight, following the resignation of Sébastien Lecornu earlier this week. France's caretaker finance minister Roland Lescure says the country is on course to meet its budget promises to the European Union, even after outgoing Lecornu indicated there will be less fiscal consolidation next year than previously planned. Meanwhile, Israel's security cabinet and the negotiating chief for Hamas signed an agreement to end their 2-year-long war. Iran-backed Hamas is set to return all of the remaining hostages held in Gaza, and in return, Israel is due to release almost all jailed Palestinians, plus allow a ramp-up of aid to Gaza through United Nations agencies and other international bodies. And Microsoft's data center crunch will continue into the new year as shortages of physical space and servers persist. Sources telling us here at Bloomberg News subscriptions for Azure cloud service are restricted in some crucial server farm hubs. A lack of service to rent out to customers has been a recurring concern for cloud providers. That's Bloomberg Brief. Lisa.
Thank you so much, Yahira. And it's the reason why they say maybe it's better to overinvest than not invest enough, even if you end up overpaying. Up next, peace in the Middle East.
Peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. I'm going to try and make a trip over. We're going to try and get over there.
Tobin Marcus of Wolf Research joining us next. This is Bloomberg Surveillance.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
Markets looking for something to chew on without any official data sources. Maybe they'll chew on University of Michigan later this morning. Maybe that's why John called out. What we're looking at right now is a rally because futures tend to do that. This morning, we're seeing about 0.1% gain on the S&P and NASDAQ, up 0.3 on the Russell. Some headlines coming out of CNBC reporting that the race to become the next Fed chair is now down to 5 from 11. The candidates are ones that we know well: Fed Vice Chair for Supervision Michelle Bowman, Fed Governor Christopher Waller, Kevin Hassett, who of course is the director of the National Economic Council, and then Rick Rieder over at BlackRock is also one of those selected, with Kevin Warsh as well, a former Fed governor.
So the two names that stand out to me is Rick Rieder, because he also got a pretty significant shout out in the Financial Times report from people close to the matter that have been part of these discussions and the interviews the Treasury Secretary is holding, and Mickey Bowman. Because Mickey Bowman has come to the Fed and really talked about wanting to get back to the basics, not what the Treasury Secretary would call mission creep. Also, the focus she has on regional banks. This has been an administration that continuously says Wall Street has done well for decades. We want to focus on Main Street. That is someone who brings regional bank experience and could be an interesting pick, because we already know what's going on with the Kevins and Governor Waller.
Yeah, I do think it's interesting to have Rick Rieder there. Mickey Bowman has been on the Fed and definitely has been a stalwart behind a view that the administration seems to agree with. It's interesting that we haven't gotten one already, because a Fed chair nominee, given the fact these names have been in the mix for a long time.
Right. How has the president not just blurted out who he's decided on? But I find that this administration no longer has the urgency to talk about the Fed chair the way they did over the summer, because guess what? Jay Powell's cutting interest rates.
Meanwhile, under surveillance this morning, peace in the Middle East.
We reached a momentous breakthrough in the Middle East, something that people said was never going to be done. We ended the war in Gaza and really, on a much bigger basis, created peace. Peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. And that'll be a day of joy. I'm going to try and make a trip over. We're going to try and get over there.
Here's the latest. President Trump heading to the Middle East on Sunday as Israel and Hamas agree to end the 2-year war in Gaza. Bloomberg's Tyler Kendall joins us now. Tyler, do we have a sense of what President Trump wants to do when he goes over to Israel, and how fragile this ceasefire still is?
Yeah, hey, Lisa. Well, we are still waiting on official confirmation from the White House on President Trump's itinerary, but he himself has said that he will visit Israel and that he's been invited to speak in front of the Knesset. He's also previously suggested that he could make a stop in Egypt, where we know that this final round of negotiations took place. Now, the Israeli government approved this ceasefire agreement overnight, and it's actually our understanding that President Trump's special envoy, Steve Witkoff, alongside his son-in-law, Jared Kushner, actually attended the Israeli cabinet meeting in what was considered to be a sign that this White House was very determined to see this over the finish line. But as you mentioned, there are still a lot of big questions here, including will the ceasefire hold? What will that future reconstruction of Gaza look like, as well as what is going to happen when it comes to that demand that Hamas disarm? Still, the administration is leaning heavily on regional partners. We heard President Trump yesterday in his cabinet meeting thank these countries by name, saying Qatar, Egypt, as well as Turkey have really played an instrumental role. And we know they're going to play a role in the security forces that are going to be on the ground as well, because Lisa, yesterday, a senior administration official confirmed that 200 U.S. troops will be traveling to Israel. They're not expected to go into Gaza, but rather set up this coordination center where they will help to enforce and oversee security as well as the distribution of humanitarian aid. And they will also be supplemented by these other regional forces there on the ground.
Bloomberg's Tyler Kendall, great work as always. Thank you so much for being with us. Joining us now is Tobin Marcus of Wolf Research. And Tobin, some of these international outreaches come at a rather awkward time domestically, considering that those troops going over with President Trump may not get a paycheck in the next couple of weeks. I'm just wondering how this is being read domestically, even as it is a great victory when it comes to peace, at least for now, in the Middle East.
Yeah, so certainly the peace deal is a genuine breakthrough. I think to the extent that it holds, it's a huge accomplishment and is going to play well domestically as well. I think the questions domestically are many of the same ones that Tyler just flagged. Are we actually going to see Hamas disarm, which they have not really committed to doing, even though they're on board with the earlier phases of the agreement in terms of hostage exchanges and so forth? And if Hamas does not disarm, does not quote unquote decommission their weapons in the language of the peace deal, will Israel really be willing to indefinitely suspend operations absent that step? So I think those longer term questions are still there, but for now, a very welcome breakthrough.
Yesterday, Caroline Leavitt was quote tweeting Fox News, which said the U.S. troops are headed to Israel to support the historic peace deal. And she said this is not true and taken out of context, that the 200 U.S. personnel will be tasked with monitoring the peace agreement. Is the administration going to face some blowback given the fact that President Trump has promised not to entangle the U.S. in international conflicts?
Yeah, I don't think that there's going to be a sort of major long-term U.S. peacekeeping role here. Again, there's lots of elements of this are still up in the air, but I think that the political resistance to, indefinitely having U.S. troops on the ground in a sort of enforcement or operational role is going to be sufficiently high that I don't think President Trump will want to do it. He's always resisted putting boots on the ground to a meaningful extent, even in situations where he's been happy to conduct air operations during both his first term and his second. So I think he's going to be very wary of extending the U.S. directly into this.
When it comes to active duty service members, including those 200 U.S. personnel that are headed to Israel, will they get paid next week, Tobin?
Increasingly, it seems like the answer is no, with the Senate having decided yesterday that they're going home for the long weekend after the vote that they took yesterday on the National Defense Authorization Act. There's not really sort of realistic story you can tell about Congress passing something that gets the government reopened in time to get those troops paid. So I think the only question about whether or not they'll be able to avoid missing that paycheck is if the administration can work out something using mandatory funding from the big, beautiful bill to pay them rather than the normal discretionary appropriations. That's been in conversation throughout the shutdown. There's been resistance to that on the Hill. We haven't seen any plan to that effect from the administration, so I wouldn't count on that happening, but I think that's the only remaining possibility, since it sure does look like the shutdown is going to extend past the point that would preclude those paychecks.
Will that be a pressure point for the government to reopen?
It's been one of the dates that a lot of people in Washington have circled, going back to September when we were going into the shutdown, and even more so since it started, this October 15th military pay date. At this point, it looks like something that's going to apply pressure after it happens. People will start hearing those complaints. Presumably members of Congress will start getting calls from their constituents with a very wide footprint of active duty service members across states and congressional districts, rather than something that they're sort of afraid to do in advance. I think one of the interesting political elements of this shutdown has been that the instigating party is not really getting the lion's share of the blame when you look at the polling. It's been somewhat surprising that, most polls have said the Republicans have sort of the plurality of the blame, although there's plenty to go around, even though Democrats are the ones who are making the policy demand. And so I think that creates a situation where even as you look at these consequences, like missed paychecks, like air traffic disruptions, if neither side really feels like they're at fault or they're going to be blamed for it, it doesn't create the same urgency. So it's not like Democrats or Republicans are looking at that missed payday and thinking we can't possibly do that because they're hoping the other side will get the blame. So it does look like we're stretching on a little while longer. I'm still optimistic that we'll get a solution next week, but the odds of an even longer shutdown do seem to be rising.
Tobin, to that point, I mean, yes, the Democrats might not be getting the bulk of the blame for now. Do they have a cohesive message, though, other than we just want to fight?
I mean, their message is healthcare, which is sort of the one issue that they still know how to message about. A moment when the party in general has been in shambles. The one thing they still have the muscle memory for is attacking Republicans for cutting healthcare, and that's really the message that they've set up here. And I think we have seen, as we expected going into the shutdown, that there would be increasing nervousness across, various parts of the Republican Party about the rise in premiums as these Affordable Care Act subsidies expire. And as we go into open enrollment, that the political reality of that has gotten more concrete for a lot of the Republicans who are staring it down. And so we've gotten these interesting moves like conservative firebrand Marjorie Taylor Greene sort of going out publicly and breaking with leadership and saying, we really need to fix this. And leadership didn't really tell us that this was coming.
But Tobin, isn't this a policy error on the Democratic side? These enhanced subsidies have an expiration date based off the policy and the law they wrote.
Well, sure. I mean, this is a time-honored move, including both the 2017 tax bill and the tax bill that they just passed that the Republicans also did, which is figuring that you'll be able to get an extension of your more popular policies because no one's going to be willing to let them expire. So that was a Democratic calculation in 2022. These were last extended in the Inflation Reduction Act. And the limiting factor at that point was what Joe Manchin would be willing to vote for. They got him to go along with 3 years of these subsidies. They couldn't get him to go along with making them permanent. And so here we are. So, at some level, it's an error. But if they manage to get some deal on this, then it will have played out largely as they kind of hoped back in 2022, the same way that Republicans, successfully calculated in 2017 that they were going to be able to get these nominally temporary tax cuts extended when they came up for expiration.
Tobin Marcus, Wolf Research, thank you so much. And right now, we are still in that data desert as a result of the government shutdown. Although, to your point, they are bringing people back from the BLS in order to get that CPI print to be able to calculate Social Security checks at the end of the month.
And if they are bringing people back, I wonder if they will deem essential the labor market report before the Fed meets, if they're still in a government shutdown, and potentially release it, because that's ready to go. We're just waiting for someone to push the button.
Yeah, and in the meantime, everyone in the market is taking time off, evidently, because right now we're seeing a pretty quiet start to the last trading day of the week. Coming up next is going to be David Tinsley of Bank of America Institute to really get a check on consumer spending. Guess what? It's staying solid. Plus, Danny Berger with your morning movers. Stellantis shares higher as shipments bounce back in the third quarter. This is Bloomberg Surveillance. Futures have a lift after some time this morning, looking up a little bit as you do see a rally into the bond space. And as a number of people say, look, how much can you get bearish amid the cash machine that is artificial intelligence? S&P and NASDAQ futures both up about 1/10%. Russell 2000 really seeing the outperformance, up about 1/3% because of the bond space and the rally that we're seeing there. If you take a look at 2s, 10s, and 30s, you can see the long end driving the rally. 30-year bond yields now 4.68%, down about 3 basis points after yesterday's auction that was better than expected. But across the curve, a rally in. 2 hours away from the cash open, here are your morning movers with Danny Berger. Danny.
Hey, Lisa, a tough morning for Qualcomm. Shares are down 1 1/3%. It is is off the lows that we saw pre-market, but this was after Chinese authorities saying that they were probing Qualcomm over anti-monopoly measures. It has to do with a company they acquired called AutoTalks. It does auto technology, allows cars to talk to each other, and concerns that they didn't properly report that acquisition. So again, Qualcomm shares are off this morning. Elsewhere in this market, we see Applied Digital up nearly 25%, a huge move. As you were saying, Lisa, can you really be bearish on this when you have this opportunity of AI? This is a data center company, really solid earnings, and they said that they had a new lease agreement for CoreWeave. So you're involved in this digital economy. Investors snap up shares. Again, shares almost up by a quarter. Finally, this morning to the upside, Stellantis up 1.1%. Its deliveries rose 13%, and that was led by North America. Those deliveries up 35%. And it wasn't just small cars they were buying, it was big cars. Apparently the reintroduction of their V8 Ram truck, whatever that is. I'm in New York, so I don't know trucks, but apparently that was wildly popular. So those positive sales sending shares higher, Lisa.
Thank you so much, Danny. Appreciate that. On our radar this morning, the U.S. finalizing a $20 billion currency swap framework with Argentina's central bank. The Treasury directly purchasing pesos to help stabilize the exchange rate and prop up Argentinian President Javier Milei, who faces re-election later this month. Meanwhile, the Senate passing legislation limiting AI chip exports to China. The move requires NVIDIA and AMD to give U.S. companies priority access to their products before Beijing. The measure now goes to the House for approval. Meanwhile, China, for its measure, has come out, Anne-Marie, and talked about increasing restrictions on rare earths metals, which is creating ire around the world. But again, how much is this leverage and how much is this actually policy?
Tons of leverage. China has used this before, at least when it comes to rare earths, and it worked at the negotiating table. That's when we saw that U-turn when it comes to the H20 chips and whether or not they can go to China or not. But it's not even just rare earths. We are talking about constant tit for tat every single day. This morning, Qualcomm is now under investigation in China. Also, they're slapping levies on ships that come into their port that are American flagged. There's going to be a tit for tat between Beijing and Washington to the last moment before Xi Jinping and Trump sit down. And then what's going to happen is slowly these are going to unwind. That's the, I guess, for a lot of people in the market, best case scenario.
It does feel like this is the U.S. and China fighting. It's like mommy and daddy are fighting and the rest of the world is sort of feeling the impact of it. I found this fascinating, the fact that the German's finance minister came out this morning and was talking about how China's expansion of export controls to production facilities of rare earth minerals outside of China is a huge concern. And you take a look at their auto manufacturing sector, and it's really obvious why this is a big issue for them.
China is decimating the German manufacturing base and hollowing out what is going on in Europe in terms of their industries. And right now, Germany sounds a lot like the United States. German companies must reduce dependence on critical raw materials, including rare earths. And basically, they want to reallocate some of that work and do it in Europe. Well, that's exactly what this administration wants to do in the United States. And that's exactly what the Trump administration and even the Biden administration was pushing Europe to do as well. Make sure you're alongside what the U.S. is doing when it comes to competition with China.
Yeah, and meanwhile, people are looking at how the U.S. economy is actually doing. And guess what? We don't know. And why not? Because we're in a data desert. Meanwhile, the BLS announcing that it will release a September CPI report by the end of this month. The agency recalling staff to prepare the key inflation data needed to calculate next year's Social Security checks. Will this end up being the predecessor of some sort of reemergence of official data? We shall see. Nonetheless, maybe we can rely on something more than the University of Michigan Sentiment Survey. Turning to the consumer, household spending rising for 4 months straight, despite tariff pressures, according to the Bank of America Consumer Checkpoint Survey. Joining us now is David Tinsley of Bank of America Institute. David, thank you so much for being with us. The report was fascinating because it shows an increase in spending, but not necessarily an increase in incomes or an increase in the paycheck. How do you reconcile these two realities?
Well, I think on one hand, you've got consumers still spending in the overall US economy. You know, as you say, up 0.2, that was the last 4 months have seen a rise. So the overall consumer looks solid. But I think when we delve into the data, we see these divergences between higher income consumers and lower income consumers. So higher income consumers, their spending growth up 2.6% year over year. Lower income consumers up about 0.6 year over year. So there's this quite wide gap. And that's also reflected in wages and salaries as well.
So this is important, David. Are you basically saying that to the extent that the consumer resilience story is one that everybody keeps talking on and betting on in markets, it is one continuing to be resilience of the upper income consumer and not necessarily an overall read of the health of the U.S. economy?
Well, you know, I guess as a share of overall US consumer spending, the higher and middle US consumers make up a disproportionate share of that spend. So their spending kind of drives the economy, if you like. And higher income consumers, in a way, they have two clubs in their bag at the moment. They've got wage growth at 4% year over year. So that's real wage growth because inflation is below that. But they're also benefiting from these wealth effects from the higher stock market, for example, because wealth is so skewed towards that higher income cohort that they're really the guys that are benefiting from the rise in the S&P as well. So lower income consumers, weaker wage growth. It did tick up a little bit in the September data, 1.4% year over year, but quite a bit weaker. And of course, they don't really benefit from at least directly, from the S&P rallies or even housing wealth to a large extent. So I think, you know, they're in a tighter spot.
When it comes to spending groups, are you also seeing a divergence in terms of generations?
Well, yeah, this is quite interesting. This isn't such a new thing, but really over the last couple of years, in our data, the older generations, the baby boomers, traditionalists, they've been driving the spending growth. And actually, you see that reflected in some of the things that have been rising, like cruise line spending. Younger generations, so obviously millennials, Gen Z, but even Gen X to some extent, are in a much weaker spot in terms of their spending growth. I mean, why is that? Well, I guess for the young, you know, you have seen some labour market pressures in things like graduate unemployment rising above overall US unemployment. As you graduate at the moment, it's a little bit tougher to get a position. For Gen X, you know, increasingly they're in this position where they're potentially going towards retirement, they've got to save more, they might have older relatives, they might still have the kids at home. So they've got quite a lot of pressures on them, I think.
And this has impacted, of course, as well, housing equity, has it not?
Yeah, you know, I mean, there's a lot of equity in homes. It's not increasing that much because obviously the housing market is pretty stagnant. So consumers could, in principle, access that equity that's been built up over time through things like home equity lines of credit, HELOCs. What we look at in our data, which is the HELOC utilisation rate, so people who've got this facility set up, how much they're tapping it, it is picking up, but it's picking up relatively gradually. So I think that's not a major driver for the overall consumer story, but for some, as the Fed cuts and those rates become more desirable, it's going to help.
So, David, we're in a data vacuum right now in terms of the official government numbers that should be coming out. We should be heading into CPI Tuesday next week. Instead, we're talking about University of Michigan Consumer Sentiment Survey Friday. How much do you see some sort of resilience that we should be observing in the data, right? What would we be getting if we were getting that official government data?
Well, you know, I think, I mean, we do this every month, rain or shine. So it's has increased focus right now, of course, because of the dearth of official data. I mean, I think what you'd see in things like the retail sales print is retail might be a little bit soft in September, but the overall consumer picture is pretty healthy. In CPI, I mean, we don't have too much to say on that in our report, but we do notice that when you look at transactions versus dollars spent in some categories of retail that are quite tariff sensitive, if you like, there is a divergence. So there is some tariff pressure probably coming through in the bottom line, but it's, you know, it's gradual and it's relatively modest.
So essentially not necessarily contradicting anything that we're seeing in the corporate earnings or any of the other stories that speak to this consumer resilience for the most part. David Tinsley of Bank of America Institute, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here are your Bloomberg briefs with Yahaira Anand. Yahaira.
Hi, Lisa. China will begin charging special fees on American ships docking at its ports starting On Tuesday, the move comes in retaliation to a U.S. plan that charges port fees on Chinese ships. It marks a significant escalation in the months-long trade dispute and comes ahead of high-stakes meetings between the country's leaders later this month. Meanwhile, Amazon is rolling out an updated version of its main artificial intelligence tool for business. It says Quick Suite is a chatbot and set of AI agents that can analyze sales data, produce reports, or summarize web content. It's the company's latest effort to grab a slice of the market for software designed to automate and speed up office work. And Treasury Secretary Scott Bessent has narrowed down the list of candidates to replace Fed Chair Jay Powell from 11 to just 5. CNBC is reporting the following names made the list: Michelle Bowman, Chris Waller, Kevin Hassett, Kevin Warsh, and Rick Rieder. Trump's pick could be nominated to the Fed, though not necessarily as chair, by January. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. And Chris Waller, who is speaking in a television interview, said that there is nothing political that he experienced in an interview for Fed chair, and that the Fed can use alternative data during the government shutdown. Are they calling ADP?
ADP, they're looking at open table bookings maybe. I'm sure they're looking at everything they can get their hands on, corporate America and the likes. Maybe it hasn't been political in these interviews. I will say, though, based on what I have heard about how this has gone when you walk into the Oval with the president, the number one question is, will you cut interest rates?
And that speaks to what he said, which is that the U.S. labor market is not doing great. Up next, standoff on Capitol Hill.
We will evaluate in good faith any bipartisan proposal that is sent over to us from the Senate if it decisively addresses the Republican health care crisis.
Arkansas Congressman French Hill joins us next. This is Bloomberg Surveillance.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
Building on what already has been a record rally, futures turning up as the session grows older, with bond markets still also rallying. What you are seeing is about a tenth of a percent increase on S&P futures. The dollar giving back a little bit after a pretty strong week, a reversal of what we had seen for the earlier part of this year, and a rally into bond markets. 10-year yields now lower by 4 basis points, 4.10. Just amazing to see how stable it has been over there, especially given the fact that the government has been closed for 10 days. And now we're looking at this data desert that leaves people spinning their wheels. Under surveillance this morning, standoff on Capitol Hill.
We will evaluate in good faith any bipartisan proposal that is sent over to us from the Senate if it decisively addresses the Republican health care crisis. It's got to be meaningful. It's got to actually improve the lives of the American people. But unlike Republicans, we are actually willing to sit down and evaluate in good faith anything that could advance the ball here.
Here's the latest. The partisan stalemate is dragging on in Washington, D.C., with President Trump threatening cuts to Democratic programs. Some federal workers are preparing for missed paychecks today as the shutdown continues for a 10th day. Arkansas Congressman French Hill joins us now. Congressman, thank you so much for being with us. Is there any progress being made? Is there a good faith effort to be getting in the room and talking about some of the details?
Well, good morning. It's nice to be with you. I think senators are certainly having conversations about what they'd be willing to do in the appropriations process after the government reopens. This is the issue. The House passed a clean, bipartisan, continuing resolution to have all of government open. And just yesterday, Chuck Schumer put a sign up saying, we're getting stronger every day. Well, you know who's not getting stronger? People dependent on the flood insurance program who are concerned about storms or floods. People who are working in the military who know next week they get their last paycheck. People who are dependent on grant programs from the federal government to keep state child care programs open. That's who's not getting stronger every day. And so I would just simply say all the Senate has to do is pass the continuing resolution and keep the appropriations process going. So the answer to your question is yes, senators are having conversations about what they want to do in fiscal 26 spending, including on health care.
Chairman Hill, you just said the active duty service members, the military members, will get their last paycheck next week. Is it your understanding they will get paid next week? Because I think there's still been a question mark about that.
Well, I think that's the last paycheck that I'm aware of is the 15th, and maybe it's not. But either way, this is why I declined my pay during this whole period as I have in previous shutdowns. I don't think members of Congress, particularly in the Senate, should be paid while federal workers are furloughed, and some federal workers may well lose their job, when the simplest thing to do, Anne Marie, is to get this government back open. We were in the middle of discussing all of the spending for fiscal 26. The Senate had passed 3 bills across the Senate floor. We had passed 4 bills across the House floor. And Susan Collins and Tom Cole have that process underway. And Schumer, I think, for internal Democratic political purposes, chose to pick a fight with Trump and try to make a name for himself once again. So the Schumer shutdown starts in his office.
Meanwhile, we do see the executive branch continuing along on a number of foreign policy issues, including Argentina. I'd love to get your thoughts on this $20 billion swap line. If they are using the ESF, isn't that taxpayer dollars going to Buenos Aires?
Over many, many years since the 1930s, the U.S. Treasury has used the Exchange Stabilization Fund when they think it's in American interest for geopolitical reasons, for global international finance stability reasons, by both political parties. Treasury Secretary Bessent's first trip as Treasury Secretary was to meet the leadership at the Malay government in Buenos Aires. I visited Argentina in August to assess the IMF program, assess their progress. For the first time of trying to return Argentina back to a market economy that people can be benefited from by low inflation, lifting kids out of poverty, created a private sector, dropping currency controls. So I think the Malay government is on the right track, and I think Secretary Bessent is trying to carefully and prudently see how they can encourage that success. If they're successful, they will rival the stories in Taiwan or Singapore or the Asian tigers, and they will reverse the curse of 150 years of mismanagement in finance in Buenos Aires.
But Chair Hill, I was with the Treasury Secretary when he went to Argentina in April, his first international trip. This is because of the midterm elections coming up, not some geopolitical issue.
I disagree completely with you. I understand that President Milei is having national elections in Buenos Aires and on October 26th. That's true, and it's important that he keep the momentum going because they need legislative support for the reforms that they've made. But just in the first few months of his leadership, he's made substantial macroeconomic reforms that have improved the outcome, and individual citizens have been improved. So it's more than that. Argentina is an important strategic partner to the United States in the Southern Hemisphere for national security purposes, for shipping purposes, for global open navigation purposes. So it's a much bigger issue than just the fact that they have domestic elections coming up.
Congressman, the market is shrugging off all of what's going on, whether it's geopolitically or whether it's the government shutdown. And they're actually looking more to measures that you've put forward, including some of the deregulation of banks, including some of what we've seen with respect to easing some of the ability for tie-ups in the financial sector. As someone who has been a part of the financial sector in the small banking area, as well as who's been really a leader in this particular space, how much more do you see this continuing? Are you encouraged by what you're seeing? What kind of consolidation are you hoping for?
Well, it's not about consolidation. It's about right-sizing the role of government supervision and tailoring bank regulations. This began under the first Trump administration when we passed a bipartisan bill that was signed into law by President Trump back in 2018. And in that effort, we wanted to tailor regulation and supervision of our financial institutions based on their complexity, not just simply based on size. And that's been a theme that we've had for my first 9 months of leading the Financial Services Committee, is we want tailoring both in capital markets and in commercial banking so that we encourage banks to be able to stay successful, have the capital they need to lend to customers, whether they're building new homes or starting new businesses. And that had gotten atrophied under the leadership by the Joe Biden Fed. It was too bureaucratic, too paper intensive, and that's the focus that we've taken.
How much are you watching what's going on in financial markets, the unprecedented run in things like Bitcoin, the mergers and acquisitions, the leveraged buyouts that are starting to come back, and starting to worry that maybe things will begin to get a little too far? Is that something that is in your purview in any way?
Well, I do think there is a return of animal spirits in the market. You see that in the equity and bond market spreads. You certainly see it in the number of initial public offerings that we've had, the largest in probably about 5 years. And so there are elements of that, and you've seen a return to some merger and acquisition activity in some industries. All of that is true. It's not something that I worry about instinctively that it's happening, but can it be overdone? Certainly, and that's the nature of markets. We want a regulatory and supervisory system, both at the Securities and Exchange Commission and in the bank supervisors, that makes sense, that's focused on material financial risk, focused on information that investors need, focus our CEOs and boards of directors at banks on material safety and soundness issues, and not be distracted by, tertiary topics like, is making this loan going to have an impact on climate risk?
Arkansas Congressman French Hill, thank you so much for being with us this morning, and good luck as the negotiations do continue. Really interesting to see kind of these diverging issues, the idea of markets that see animal spirits at the same time that you see a real kind of conflagration of desires down in Washington, D.C.
Oh, yeah. The divergence is on full display. And also what we see is going on in the equity market is fueled by AI demand. At some point, that is going to become incredibly difficult politically. Electricity demand, the price is already skyrocketing. We're seeing in places around Texas where some people are actually having to line up and ask for federal help to pay their electricity bills. And not only that, all of these graduates coming out of school not having the menu of entry-level jobs because so many firms are starting to look at potentially using artificial intelligence.
Retraining programs and energy support is going to be the really key two issues going forward that maybe we'll be hearing about in terms of Washington, D.C. talking points. In the meantime, what we are seeing in markets is a bit of a lift to end the week after what we have seen, which is near record highs, led by the bond market, which does continue to rally. Coming up next hour, Paul Christopher of Wells Fargo, Sheila Kayalu of Jefferies, Alejandro Grindal of Ned Davis Research, and Charlie McElligott of Nomura, as we do look to the potential for more of a data desert. University of Michigan Sentiment Survey. John is saying, I'm so glad I'm not there because you keep focusing on that. This is Bloomberg Surveillance.
A powerful pitch can unlock transformative growth. having at least 1 million pre-launch equips companies with a 25% higher likelihood of success.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey. Not just my own area of physics, but things on the business side.
The right expertise can move your business forward. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
The American capital markets is the envy of the world.
The equity market is doing really, really well, despite the economy not being particularly healthy.
People like myself, I think, underestimated that role of AI, and I think it helps explain the resilience of the U.S. economy.
Even if the AI narrative continues, it might challenge the fact that we look around and say everything is extraordinarily expensive.
As difficult as it is, and it is difficult to invest in these valuations, we think that you need to stay invested.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. John stayed home today since we're going to focus on the University of Michigan Sentiment Survey. After all, what else is there to focus on given that the government and all its data releases are staying closed and disrupted for a 10th straight day? We can go over what we might be getting if it reopens, which it probably won't. We would be getting that University of Michigan Sentiment Survey at 10 a.m. Eastern today, as well as a number of Fed speakers. Over into next week, we would get Wednesday CPI, we would get retail sales on Thursday, and we'd also get PPI, initial jobless claims, so much to chew over. Instead, Anne-Marie, we're looking down the barrel of just more emptiness.
We'd also get the jobs report, which we still don't have. That is done, that someone just basically needs to press the button and release. The issue right now, of course, is we're in the middle of a government shutdown. You just heard from Chair French Hill of the Financial Services Committee. Does there seem like any urgency based on the politicians we spoke to this week that they are going to reopen anytime soon? The Senate has left. It's a long weekend for them. So we're going to pick this story up on Tuesday, which means likely no data next week. But what the White House is doing is deeming some individuals essential, so at least they can make sure the collection of data is ongoing, so that by the end of the month, if the government does reopen, we do get CPI report and the others.
Well, if we want a CPI report, if we want any kind of data, we've been looking at corporate earnings. Delta, we mentioned, really demonstrating a positive read on the consumer, and Levi's indicating they're able to pass pricing along. Right now, what you're seeing in markets is a little bit of a lift as the session grows older, because ultimately people can look around, hate the valuations, as we just heard Cameron Dawson talking about, but ultimately having faith in this AI story of about 0.1% on the S&P and NASDAQ. Russell 2000 futures up about 0.33%. If you take a look, the rally is into the bond space as well. These two asset classes have been intimately connected for quite a while now. 30-year yields lower by 4 basis points after an auction yesterday signaled that, yes, there was plenty of investor demand, even if there was a concession. 4.68% after flirting with that 5% level not so long ago. Meanwhile, gold reprising its rally after yesterday's brief hiccup after seeing a 50%, more than 50% gain, continuing to turn upward in the market. Coming up this hour, Paul Christopher of Wells Fargo, as stocks are stalling near record highs. Sheila Kahyaoglu of Jefferies as airlines face the impact from the government shutdown, perhaps. And Alejandro Grindal of Ned Davis Research as we look ahead to University of Michigan Sentiment Survey, because what else do we have to look for? We begin this hour of futures struggling for direction with stocks hovering around those record high levels. Paul Christopher of Wells Fargo writing this: based on our expectations for accelerating earnings, we believe the next 12 to 15 months will favor U.S. equities. Paul joins us now. Paul, let's start there. The idea that people don't like buying into valuations like this. They don't like buying into consensus. They don't like doing it in a vacuum that is just because of government dysfunction. And yet it seems like that's the only place to go. Can you explain how that is somewhat of a difficult trade, yet an obvious one to many people, including yourself?
Yeah, I mean, surely it is uncomfortable for all the reasons that you mentioned. But, you know, you have to sort of focus here on what I'd call the big rocks. The big rocks are that artificial intelligence is a trend. It has some momentum behind it. It's investable, and we need to take advantage of it. Now, there's smart ways to do that and not smart ways to do that. And we're going to try to stick with the smart ways, and I'm happy to talk about those.
Okay, so let's talk about them. The smart ways to do it. Is it investing in the hyperscalers, or is it investing in energy companies that are going to have to fuel this over the longer term?
The answer is yes. But look, you've got hyperscalers in comm services, communication services, and in information technology. All right, so you've got two sectors there. Do you want to buy them both, or do you just want to buy one right now? Buy the one that looks the least overpriced, and then let's sit there for a while. And then at the same time, let's try to diversify that AI exposure by going with what I would call adjunct trends, like the data centers. You know, you've got some of these 2 and 3 ton computers right now around the country sitting under tents. So they're going to have to build places for those computers to live, and they're going to have to build out the energy infrastructure, not just to power them, but to cool them. Computers often have cooling below the floor. So utilities and industrials look like two sectors to us that are not as overpriced as, in fact, even attractively priced compared to information technology and comm services. And then a third way to diversify, or let's call it a second way to diversify, is to look for trends that aren't necessarily directly related to AI, but that play another big rock in the economy, and that's the fact that we think that the Fed we believe, is going to cut 2 more times this year and another 2 more times next year. That's going to take the short end of the yield curve lower, and with long rates, we think, hovering near where they are right now, that's a pretty good looking environment for banks, right? They're going to pay short-term deposit rates, which are going down, so their costs fall. At the same time, longer rates stay high, and that's what they're going to earn on their lending. So we can play different trends here in different ways that aren't as overpriced as the overall market or the individual hyperscalers, the Mag 7. So I think that's the way to go here. You want to try to be as effective with your capital as possible. And look, there are going to be pullbacks. So we're going to get to earnings season. There are going to be some disappointments, and those firms will be punished. Those could be buying opportunities. We'll have to see what transpires.
Well, I'm glad you brought up the energy demand that it's going to be for this entire AI boom. Electricity demand, do you think that could end up slowing this momentum because it might not keep pace with what these hyperscalers are trying to do?
Yeah, it's a good point. I mean, look, there are always going to be constraints when you're going through a growing trend, a growing pains trend like this one. This is a very disruptive economic trend. We saw the same thing if you go back to the 90s, right? There were shortages of things. If you go back to the 40s and the 50s and the 60s, we were developing automobile, ship, and air transport, and there were constraints there. We eventually broke through those constraints, and for investors, those constraints really represent opportunities, right? So as long as you see electricity production and transmission being constrained, that means there's opportunities in utilities. There's opportunities in midstream energy. There's now opportunities in natural gas. For a long-term investor, those constraints have to be worked through, and we believe they will.
Well, I want to know what you think are basically what you're doing in absence of U.S. economic data. Christian Nolting from Deutsche Bank earlier in the program was talking about how actually it's been easier without having the U.S. economic data. What have you been relying on?
Yeah, it is easier in a sense. You don't have the reports coming out every day. But look, well, let's go back to the idea of the big rocks. For a long-term investor, what matters right here, right now, is that the economy is still growing. I don't think anybody doubts that. And that inflation is still moderate. I don't think anybody doubts that, really. And that combination, along with a labor market that's continuing to soften but is not generating a lot of new unemployment, that also tells us the Fed is likely to cut, the economy is likely to grow. We think earnings come up to $300 per share next year on the S&P 500. Those are the big rocks that investors really need to know about. The government shutdown, that's noise, it's distraction. Let's look through it.
Yeah, at this point, though, you have to wonder whether the strength that we're seeing in corporate earnings pairs with this idea of a Fed easing. We were talking earlier with Kata Kaminsky of Alpha Simplex, and she said it is confusing to her that we're not seeing some sort of sell-off in long-term bonds as a result of the Fed presumably cutting 2 more times this year in the face of real strength in the U.S. economy. How do you manage that risk, considering that we really haven't seen much of anything in the bond space in terms of volatility?
Well, that is one risk on the long end of the yield curve, the maturity spectrum, and we would agree that that's a risk. We would see other risks as well. Potentially, the tariff revenue will not generate as many dollars as Congress thinks, and so you could end up with wider deficits going forward. So there is risk, we think, on the long end of the maturity spectrum, and that's why we've been underweight there for some time, for some months. We're also underweight on the short end, expecting the Fed to cut. So that really leaves us with a bullet strategy where what we really like is that intermediate portion of the maturity spectrum, the yield curve, that 3 to 7 year range, investment grade munis and corporates. That's where we would target. Look, you're going to get a yield in that 3 to 7 year range that's not far off of what it is in the 10 year. But you're going to get a lot less duration risk, a lot less risk from fluctuating long-term yield. So whatever the reasons are, yeah, we would agree that we want to be underweight long-term debt at this point.
Are bonds still the diversifier that they have been traditionally?
Yes, over time they have been, and I mean we've done the work behind this to show whether it's short-term or long-term in terms of the number of years you look at. Bonds are consistently the best diversifier for equities, on a regular and ongoing basis. At the moment, there's lots of trends that are churning around fixed income. So there's some buying in the fixed income space, pushing yields down a little bit. That's also tending to push more money into stocks. But that's just part of the normal give and take between those two markets. We would want people to hold both bonds and stocks because we don't want to try to predict when one is going to peak and the other one's going to trough.
Paul Christopher of Wells Fargo Institute, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. The U.S. has launched a bailout for Argentina, offering $20 billion in financing and carrying out a rare intervention to prop up the peso. Treasury Secretary Scott Bessent announced the currency swap and government purchases in a social media post. Trump's support for Argentine President Javier Milei comes ahead of this month's midterm elections in Argentina. Meanwhile, the Bureau of Labor Statistics has recalled staff to prepare the September CPI report because it is necessary to calculate the size of next year's Social Security checks. The agency was directed by the White House Office of Management and Budget to bring back employees to assemble the report in time for publication by the end of the month. And it was a stunning start to NFL Week 6 as the New York Giants pulled off a major upset on Thursday Night Football, defeating the defending Super Bowl champion Philadelphia Eagles 34-17. The Giants' rookie duo of Jackson Dart and Cam Scatibo led the way for Big Blue as Dart accounted for 2 touchdowns, while Scatibo powered his way to 3 rushing scores to secure the victory. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. Up next, the morning calls, plus Sheila Kayalu of Jefferies as airlines get set to face the impact from the government shutdown. Have you booked flights recently? Are you concerned about this?
About flying domestically? Yes. Internationally? No.
Well, that's next. We'll get her view. This is Bloomberg Surveillance.
I think the biggest challenge over the past several years that we've seen in terms of brand purpose is that a lot of it's been performative. Between COVID, between racial justice movement, social justice movement, there were brands all jumping on the bandwagon to be seen being purposeful. Now, you have a pendulum swing that's going very significantly in a different direction than it was a couple of years ago, and on things like DEI, things like ESG. In this environment, I think it's arguably more complicated and harder to be a brand that's leaning into issues than it's ever been. Consumers and brands care of what type of value does this provide to me or to society. There's still courageous brands out there that are doing purpose right. I would argue that that's actually much more important to consumers, and that's where the future is headed.
Senators are certainly having conversations about what they'd be willing to do. All the Senate has to do is pass the continuing resolution and keep the appropriations process going. Schumer, I think, for internal Democratic political purposes, chose to pick a fight with Trump.
That was Arkansas Congressman French Hill. As we reach day 10 of the government shutdown, both sides seem to be pretty dug in at this point. Right now, what you are seeing in markets is a rally that seems to be increasingly dug in as the session grows older. Futures now up almost 0.2%. Meanwhile, the dollar fading just a touch after a strengthening trend, counter to what we've seen for most of this year. And that rally building in the bond space is coming after Chris Waller said that he would be open to a quarter rate basis point rate cut at the next few meetings, and talked about a labor market that really is, as he sees it, under pressure. Time now for the morning calls. First up, RBC raising its price target on Tesla to $500, noting potential market share growth in the humanoid robot business. Those shares up about 0.33%. Next up, Evercore ISI raising its price target on Oracle to $350, expecting it to raise its revenue forecast. Oracle reprising some of the gains, up about 2.2% after a number of skeptical notes about the circular financing that we keep talking about. And finally, Bernstein raising its price target on Delta to $74. That's up from $59.80 right now. It's citing its premium demand in domestic travel. Those shares up 0.4% after a huge rally yesterday on the heels of an earnings report that projected real strength across the cabin. Sticking with air travel, flight delays rippling across the country as the government shutdown heads into its 10th day. Bloomberg's Tyler Kendall joins us now. Tyler, is there any sign that people are going to come back to Washington, D.C., or have they all left town for their long weekend?
Lisa, at this point, no one's coming back. According to the Senate, they adjourned last night. They're going to be back here on Tuesday. But no doubt this strain at airports nationwide is going to continue to ramp up the pressure on Congress as the government shutdown really does drag on, because we're seeing these flight disruptions across the nation due in part to this shortage of air traffic controllers who are being forced to work without pay, miss their paychecks amid this threat from the administration that they could actually lose their jobs permanently if they don't show up from work. Now, I think it's worth mentioning that during the last government shutdown in 2019, we heard from airport employees who said they had to pick up second jobs because they weren't getting paychecks, or they had to stay at home because they couldn't spend on childcare. And partly due to this pressure from airports, we saw that contribute to the deal that ultimately helped the government reopen. But Lisa, at this point, the data is pretty stark. The U.S. Transportation Secretary Sean Duffy saying that on average, air traffic controllers contribute to about 5% of the delays that we see at airports. That number has jumped to 53% in just the last week alone. I will point out that the problems have the potential to compound here. Lisa, the U.S. Travel Association says that the U.S. travel industry is estimated to lose $1 billion in spending each week that this drags on.
Bloomberg's Tyler Kendall, thank you so much. Sheila Kahyaoglu of Jefferies joins us now. And Sheila, as somebody who might or might not be interested for personal reasons as well as otherwise, how much are we seeing these delays really trickle through the airline industry?
We're seeing some delays, but, some select airports were closed yesterday for several hours, like Burbank. But in general, the airlines are telling us this is not going to impede travel demand, and we're going to continue to see momentum in the airlines. So it's unfortunate for the consumer, not so much for the airlines and the workers who aren't getting paid.
Essentially, people have to get places regardless of how much of a pain in the neck it is to get places. So it's not necessarily going to affect revenues for now. Nonetheless, does this kind of put a hitch in some of the airlines' plans? Particularly, I'm thinking United, that's been trying to really fight and counter some of the reputational risks around the likes of Newark.
Delta reported yesterday, and they gave us a range for Q4 of up 2 to 4%. And I think that range puts into account how long the shutdown lasts. Last time it was only about $1 million a day. This time they think it's going to be less than that for the last 9 days that they've seen. So Newark is always a highlight and a poster child for air traffic delays. So we'll see how United fares. Southwest has a slightly more exposure to government employees as well. But for now, we don't think it's going to stop travel demand. I'm out all week next week traveling. I don't think I'm canceling my plans.
So you can give us a personal update on that,
yes,
if you're seeing delays. But we are seeing delays, and we're seeing staffing shortages across air traffic control towers around the United States. And we're 10 days in. What happens when we're 20, 30 potentially days into this shutdown?
Yeah, we'll see more and more delays. But unfortunately, we see 1 to 2% cancellations usually. and about 20% delays. So it'll just have people stay at the airport a bit longer, but that's all we have for now.
Do you think this is a pressure point for Washington, D.C.? Because 2019, when we saw massive delays in big airports like Orlando and New York, that day, President Trump caved, and then the government reopened. Could it come down to just, airlines and delays?
I think it's a lot more than that. I mean, if you look at the defense side of the business, Secretary Hegseth is talking about awarding the 6th-gen Navy fighter. This is during a shutdown. So I think the administration's trying to move forward, but we'll see what happens with the shutdown and how badly consumers are affected.
One thing that we've seen consistently through all the earnings reports has been, and I'm just moving to what we got from Delta yesterday, aside from the government shutdown, is that the front of the cabin has been the real money driver and the back of the cabin has been the laggard. And it sort of is a tale of two airlines, the ones that are able to cater to the business class side of things, the ones that are faring with the budget customers. Did we see a shift in tone yesterday from Ed Bastian of Delta?
I think on a number of fronts, not only the discrepancy between main cabin and premium, that pricing Delta gap even wider, that was the first. Corporate was up 8% year over year. That was really solid. Cargo was up 16% or so year over year. Their MRO business was up 60%. All these stats were pretty positive economically, if you ask me. Some of it is market share gains on MRO and cargo, but still, those were pretty high percentages.
Well, that's where I wanted to go. Is this a read-through to the entire industry, or is what we're seeing a consolidation of market share in the likes of Delta, United, and American at the behest of some of the budget carriers?
I think both fronts. You're seeing United and Delta really outperform. They've picked the right strategy. We saw United add more routes to Europe yesterday. Europe would be the one area in Delta's report I would call out that was negative. The read-through on pricing in Atlantic revenues were down in Q3. That means there was either too much capacity or there was tariff-impacted bookings. So people that were going to book summer travel in March decided not to travel into the U.S. So that would be the one data point I would call it as weak. But going back to the airlines, it's the story of United and Delta winning, the strategies of Southwest and American and JetBlue needing to refocus their areas.
Did you see any evidence that the rest of the cabin, the people who are sandwiched into economy, are coming back, that the recovery that you're seeing in demand is also coming from people at the middle income, the lower income spheres of the population, rather than just the people at the front?
You saw that a bit. In the first half, we saw pricing for airfares down. In Q3, Delta's report was a turn positive, and they're forecasting an improvement in Q4. So we really needed to see that positive inflection in the main cabin in Q3, and we got that, and we're going to see more momentum into Q4. Some of it is because airlines are cutting capacity, so you're having less routes, and some of it is because the consumer feels more confident, and that was evident in their close-in bookings. They saw more and more cash sales.
What are you expecting from American and JetBlue based on what we've learned from Delta?
I think the Atlantic data point for American is one that we've highlighted as potentially being weak. They're the third carrier in the Atlantic. If you have too much capacity, not enough demand for multiple reasons, I think you'll see a weak report there. We're more bullish into United, but I think Delta put up a very clean print without any news, any other items to muddy the waters.
What about the budget carriers? Given the fact that Delta is saying, to Lisa's point, it's the entire airline, do you think the budget carriers are going to do well, or are those customers going straight to the big dogs?
We lean into the network carriers. I think Southwest adding routes into cities like Las Vegas isn't going to necessarily help their pricing momentum. But United opening up a route to Bari or Bilbao in Spain or Italy, I think that, ignites demand that wasn't necessarily there. That's a route that nobody flies directly from the U.S., and it could, instigate demand. Last year they did Greenland, so this year they stuck a little bit more conservative with their routes.
Sheila Kailu of Jefferies, thank you so much for being here. Really interesting point there that Sheila made, Emery, about the international travel for Delta and this question of whether it's tariffs, whether it's other issues, the international inbound class. That's the one area of weakness that you are seeing.
And the issue with tariffs, if you were looking to potentially not take that trip, not buy that car, well, once you have certainty, you're willing to maybe buy the car. But are you going to take the trip now that it's October and it's a little bit cold when you were maybe planning on doing a summer holiday in Europe? No. So maybe you just say, I'll go next year. You can't make up for some of that lost demand.
Meanwhile, what you are seeing in markets is something of a rally that is building on the heels of these comments from Fed Governor Chris Waller, where he did say the job market was a bigger concern than any kind of inflationary pressure, saying that payrolls was likely negative. This in an interview this morning. That's giving a real boost to what we're seeing in the bond market, and then giving a boost. The Russell 2000 futures up 0.4% now, Anne-Marie, really outperforming on the heels of the rally in the bond space.
And Governor Waller has been making this case for months. It was almost as if Jay Powell at Jackson Hole, the speech you were there for, almost it was like Governor Waller wrote that speech. He's been talking about the cracks in the labor market. What really concerns him is the north of 7% unemployment for college graduates. So it's no wonder here, this is where his bias is going to the end of October, whether or not we have the U.S. government data.
Given the fact that he is a potential contender to be the next Fed chair, his voice has a lot more clout in the market, as we're seeing this morning. Coming up next, Alejandra Grindal of Ned Davis Research, as more U.S. economic data gets delayed. Plus, Danny Berger with your morning movers, the data that we do get. Levi's falling after warning tariff impacts are just starting to bite. This is Bloomberg Surveillance. Seeing a lift to the open as we get a little bit closer. Futures higher on the heels of comments by Chris Waller, Fed governor, when he said that he was looking at the labor market first and foremost and seeing a weakening that has ignited the stock market rally, particularly futures on the Russell, up 0.4%. It is because you are seeing a deepening rally into the bond space, particularly on the longer end of the yield curve, led by that 30-year denomination down 4 basis points to 4.68%. Similar kind of move in 10-year treasuries, and a 3 basis point or 2 basis point move in the 2-year yield. 1 hour away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa, we had earnings from Levi's and they upgraded their outlook. Their profitability is looking better. Yet this is what you're seeing, a decline of nearly 7.5%. Yes, the shares have run up, but the thing investors seem to be grabbing onto is the CEO saying that tariffs are just starting to bite. So that profitability they got because they were able to raise prices and people kept buying jeans, maybe that's limited for where we go from here. Elsewhere this morning, silver stocks are having a really great day. A lot of the miners here up at least 1.4% this morning, with Pan American, First Majestic Silver that's up 3.9% with silver, the precious metal, trading around record highs. It's outperformed gold. It's that whole fear, debasement trade, what have you. And also there's some real tightness and some oddities in the London spot market that also seems to be fueling a premium in New York. Meanwhile, we're looking at Venture Global, those shares getting crushed. This is the LNG company. It in a surprise loss in arbitration with another oil major. The concern is that this sets up potential litigation actions around its LNG shipments for those that face similar issues. So those shares down 18%, Lisa.
Thank you so much, Danny. Just picking up on what Danny was talking about, silver. It just really is remarkable to see up more than 70% so far this year. And I was looking at some statistics. The metal is used in things like solar panels and wind turbines. All of that industrial use accounts for more than half of the silver use. So this isn't just jewelry. It isn't just necessarily storing in your basement. And demand is set to exceed supply for the 5th consecutive year.
Yeah, there's actually a use case for this, which is a really good point. Unlike gold, where everyone just wants to basically flood into because they're nervous about central bank buying and geopolitical risk, silver is actually higher than gold has been doing. Gold is up 50% for the year. Silver's up 70% on the year, and still counting.
Yeah, well, you're still to talk about some pretty big numbers at this point. Turning to the global economy and the historic U.S. investment in Argentina, Bloomberg's Michael McKee joins us now. Mike, you did a great job putting into perspective what this is like. Can you just give us a sense of how unusual this type of $20 billion credit line really is?
Yeah, it is the swap line, not the intervention in the currency markets, that's really kind of unusual. The U.S. has intervened in currency markets before, never on such a small level as Argentina. They've bailed out the euro and they've bailed out the yen. But the swap line is kind of different because ordinarily they're between central banks, and the idea is that the central bank that needs dollars will send their currency to the Fed, and the Fed will send dollars to that country for companies that need to repay loans in dollars. and then they will send it back, and the Fed will take a little bit of an interest rate gain on that. In this case, it doesn't look like we're going to be sending dollars. At least Scott Bessent says we're not going to be sending dollars to Argentina in that sense. Maybe more along the lines of guaranteeing loans, which is kind of what they did in the Mexican peso crisis back in 1994. Some loan guarantees, and then the U.S. bought some of the Mexican paper. But we don't have any details yet. And of course, there are people who are noting that a lot of people who are in the hedge fund business and worked with Scott Bessent in the past have bought a lot of distressed Argentine debt and wonder if he's trying to help them out. He's not going to tell us, but that could be an ancillary benefit.
Mike, in the meantime, we're talking about this as we don't have really official data to talk about. We're going to be focused on the University of Michigan sentiment survey that comes out in about an hour and a half. But then we would be getting CPI, we would be getting retail sales, we would be getting PPI and unemployment claims next week. But it looks like right now we're not going to get it, right?
Well, we're not going to get it next week, but we may get CPI. The Michigan numbers are going to be important today because of the lack of other data. It's the inflation expectations number that you can see there. That's the 1 year that is going to matter to the Fed because they're trying to keep inflation expectations grounded. We did see in the New York Fed version of inflation expectations that they went up on a 1 year basis to 3.4%. They run a little bit hotter in the Michigan numbers, but if they stay where they are, and not rise, that would be some good news for the Fed. Now, as for the CPI, the Bureau of Labor Statistics said last night that they are going to bring back some employees and put together the data that they had already gathered in September of the CPI and try to get it out by the end of the month. Their goal is to have it ready because it's used in the calculation of Social Security cost of living adjustments. But if they can get it done by the 29th, when the Fed meets next, it would be a big help to Fed officials trying to figure out what's going on in the economy. The one thing they have not explained with this, though, is why they don't put out the employment report, because that's already finished. They don't have to bring anybody back to do it. They just have to push the button. So that's a question still out there for the BLS.
Yeah, Mike, great point. Michael McKee there. Thank you so much for that. And Chris Waller was saying that he thought it would likely be a negative payrolls number had we gotten it. Alejandra Grindal of Ned Davis Research joins us now. Alejandra, it's so interesting. We don't have the data coming out of official government sources. We do have the data coming out of the hyperscalers that just shows incredible investment and profitability. Is that essentially what everyone has to hinge their bets on at this point in the absence of anything else?
At least for the time being. Thank you for having me again. And I do want to point out that there's still a fair share of private sector data out there. So even though we're not getting as much of the public sector data that we've been used to getting, we'll have the PMIs, the ISM, NFIB. You mentioned University of Michigan later today. Conference board data. And, you know, I'll be honest with you, I'm also a global economist, and I have to deal with a lot of instances where there isn't much data, certain countries, especially some emerging markets. So if you look at it in the whole realm of things, we're not necessarily flying blind. We're definitely dealing with less information, but we're not flying blind either.
Are you saying that this is a good time to look at the template for emerging markets and take out that playbook and follow that in the absence of everything else? What is it showing? If you are looking at the other data points that are available, does it confirm this idea that Chris Waller was talking about, that the labor market really is flagging? Or does it confirm this idea that the stock market seems to be rallying around, which is that everything is great?
Well, so most of the data is telling us that we're seeing slowing economic growth, but no recession. So the stock market usually continues to rally as long as we don't have a recession, right? But in terms of some of that job market weakness, that's why the Fed has intervened. We have seen some job market weakness, and we actually did start seeing that in other data even before we started seeing it with the payrolls data with the establishment survey. Some of it was official data, such as the JOLT survey, but we were starting to notice some weakness in jobs through some of the survey data, such as the Conference Board's Consumer Confidence Index, some of the NFIB data, and even the ISM data.
So if we have a weakening job market, what you talk about is below trend growth in the U.S., but not a recession. So what kind of environment is this?
You know, it's a lot of it is just an environment that's being held down by near-term uncertainty. You know, at Ned Davis Research, we tend to focus on a lot of data. And most of the data we look at will look for, what are called like recessionary thresholds that look at a broad array of data. And for the most part, they're not really giving us an indication that recession is a near-term concern. And we have gone through periods where we've had below trend growth and no recession.
How do you feel about inflation now, the fact that, as Lisa has brought up today, we're hearing companies talk about it like Levi's, that they are passing on these costs to consumers?
For the time being, we do. And I think last time I was on the show, I said the same thing. We do see upside risks to inflation, obviously coming from the tariff perspective, but I think also a very underappreciated source of upside inflation can come actually from a lot of the deportation policies that are seeing a decline in workers in certain services related industries and agricultural industries. So we do expect a modest upleg in inflation. Up until now, yes, you mentioned Levi's. They have a lot of consumer goods tend to have smaller margins, so they may have to pass on the higher costs. But up until now, we have seen businesses absorb a larger share of the tariff costs. The issue is this going to be just a one-off thing, or will it continue for longer? And that's really the question up in the air, and something that the Fed needs data for to be able to gauge. We do anticipate that the Fed will reduce rates, but how much they end up going, whether they actually get to neutral, will depend on how long this tariff impact happens. And the longer we see prices accelerate, even if it's modest, if it starts impacting inflation expectations, then that ultimately could become a self-fulfilling prophecy. And that's really what we'll be watching.
Has it surprised you, Alejandra, that we haven't seen those expectations of higher inflation priced into Fed funds futures, whether it's the long end of the yield curve or even just inflation expectations in break-even rates?
Yeah, it's a balance of risks. And so for the time being, because the market-based measures of inflation expectations remain fairly stable, we are, reasonably confident that we won't see runaway inflation, but we'll be watching it because we are seeing it within the consumer measures. Mike McKee mentioned it earlier. We'll probably see a little bit with University of Michigan today. And if it moves further and further, then it might start impacting the market-based measures. But at least the fact that those have remained, fairly stable gives us some hope that the impact of tariffs will be relatively short term.
Meanwhile, the incredible rally this year has left a lot of people nervous, and they've been trying to poke holes in it. And earlier this week, we talked a lot about the potential for an AI bubble. And then Microsoft comes out with this overnight where they forecast data center crunch persisting into 2026. Is there just this fundamental drive that really does force any kind of bearish sentiment around the hyperscaler space or the AI rally that we've seen to just go away and hide in the corners for a little bit longer?
Well, that's the fundamental question, right? How long can that work? It's a lot of also what's been driving the economy, right? Like if you look at capital expenditures, we're seeing quite a bit in the AI space, and that's what's, keeping that element of the economy afloat. And then it's driving markets. And for those who own stocks, that's creating a positive wealth effect, and it's keeping people spending, despite the fact we're seeing some of these job concerns, especially keeping spending within the higher income levels. So that's definitely driving that story. Whether it's excessive optimism, we have a lot of measures in-house that try to measure optimism, and we're not seeing excessive measures yet. I think there's still some people sitting on the sideline because they're concerned about the impacts of the Trump administration. There could be other folks sitting on the sideline, but we could be getting closer to that point, but I don't think it's coming at least within the next few months.
Alejandra Grindal of Ned Davis Research, thank you so much for being with us, and have a wonderful weekend. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The 72-hour period to release the Israeli hostages has begun. Steve Witkoff, the U.S. Special Envoy to the Middle East, says the ceasefire agreement between Israel and Hamas started at noon local time. President Donald Trump is planning to travel to Israel on Sunday to be on hand for the release of the hostages. He also said he might address Israel's parliament. Meanwhile, Maria Corina Machado of Venezuela has won the Nobel Peace Prize. Machado won for her work promoting democracy and decades-long struggle against authoritarianism in Venezuela. Machado has been in hiding for more than 14 months after Nicolas Maduro declared victory in last year's election. President Trump's assistant posting on X, Nobel proved they place politics over peace after the announcement. And Apple will expand the roles of some top executives as Chief Operating Officer Jeff Williams prepares to leave the company. Services Chief Eddie Q will take over Apple's health and fitness teams, and Craig Federighi will oversee the Apple Watch operating system. The moves come ahead of the planned launch of a new subscription service dubbed Health Plus. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Have a wonderful weekend, and thank you for this morning. I can't wait until we don't have doctors anymore. We just have wristwatches that tell you, please stop eating that. That's what I imagine.
Or rings.
Or rings.
That tell you that you're not sleeping enough.
Or little humanoid robots that tell you to go get more exercise. Up next, setting you up for the day ahead. Plus, Charlie McElligott of Nomura saying that investors are not shying away from the AI trade. I know you all were wondering that. Looking today, again, NASDAQ futures up ahead of the open. This is Bloomberg Surveillance.
You try to get everything you get from the data perspective. So for example, ADP, when you don't get the non-farm payrolls, you really watch closer. But of course, you need to take into account what kind of indicators are there. And I think, for a certain period of time, you probably can fly a bit blind from the data perspective.
That was Christian Nolting of Deutsche Bank, who said it was easier without all of those data points that you have to analyze, considering the fact that things are still chugging along. Counting down to the opening bell, here's a trading diary into next week, 10 a.m. Eastern, University of Michigan sentiment survey. Also today, rounding out the week with Fed speak from Goolsbee and Musalem. 5 p.m. Eastern, President Trump is making an announcement. Next week, more key economic data that we're probably not going to be getting. On Wednesday, we've got CPI data, or we don't have it. On Thursday, PPI and retail sales are supposed to come out with that additional round of jobless claims that we did not get this week. Turning back to markets, Charlie McElligott of Nomura writing, in spite of such euphoria in asset prices leading to what many would expect as caution, the client refrain for many now is you cannot own enough AI trade mega cap tech. Charlie joins us now. Charlie, thank you so much for being with us. I have to say, it seems like in the absence of data, the buy AI trade only gets stronger because ultimately the data that we do get just continues to support it. Is there the skepticism in your clients that we hear from investment analysts sometimes on this show?
No, there really isn't. I mean, look, there's dual narratives right now. The AI, the AI phenomenon has been, massive with regards to the CapEx, and now this very kind of self-referential, self-reinforcing financing dynamic. And that's been part of the high water raising all boats with regards to markets and easier financial conditions. But macro-wise as well, there's been this kind of fiat currency debasement trade, right, where governments are running fiscal hot, heavy deficit trajectory, the spending in conjunction now with central bank easing. And when you have all of that working together, it's creating more of this kind of pro-cyclicality, both in markets, market forces, economic forces. So people are more concerned right now, just having my big macro quarterly dinner this week, more concerned about missing the right tail than they are about downside, even with markets at highs.
It sort of raises this question, especially when you talk about the debasement trade and this monetary and fiscal bazooka that it seems to be firing on both cylinders right now. A question of whether the AI trade is viewed as almost safer than some of the more traditional ones. And I put it in safe in quotes, but the idea of that being more reliable than, say, government debt or credit in certain spheres.
Yeah, for sure. I mean, look, these companies are, and the big difference between this time and, kind of the tech bubble, right, is that this is not, a dream per se, right? These companies are generating massive profits and cash flows. And so far, that's been most of the financing of this pursuit of the chips and the centers and everything, with regards to the kind of the Delta One around that, the halo of the energy providers and the utilities and all that stuff. The thing is that these companies are super high quality, obviously, very highly rated debt as well, at a time where bonds haven't worked, right? And you want to speak to about this kind of speculative environment, the speculative backdrop, right? It's not just risky assets. It's not just the AI right tail. It's short volatility strategies, right? Short volatility strategies have kind of become this new tool for income generation in a world where bonds haven't worked for 5 years because we've been running, above trend. So they're quality, they're big cash flow generators. They have this story to them. They keep going up. They're liquid. There's a lot of stuff going for it right now. And honestly, right now, imminently, it's going to take some sort of a margin shock, that currently is not out there, that the market has not really felt, to sway them from this trade. And it keeps, again, working with these market forces, particularly, the stuff that I care about, options and leveraged ETFs. It just feeds us higher.
Does it give any of these investors pause, though, that all these deals are rather circular?
They are, but I think, again, the difference being that there's real money that's being made right now. Real money, real profits, real cash. The thing that I think can inflect us as we go forward here is this idea that, and you've already seen this with Oracle, right? And you've seen, the Oracle kind of, the debt ratios really change, where you're talking now about bringing debt because you're burning through so much of your cash, right? Cash has been a huge part of the buyback story for 15 years. When corporates learned with, how well rewarded you could be with buying back your own stock, that's become that was probably over the past 15 years, the largest single source of demand for equities, and it's a vol suppressor, right? You're shrinking the float, you're stabilizing bid under the market, and then when stocks are selling off, they're even more aggressive. If that cash is now being burned through in pursuit of this, CapEx euphoria, and you start now having to bring more debt to kind of fund all of these things at the same time, the risk here, and something that I'm watching closely in coming quarters, is if you see that almost perpetually higher announced buyback number across S&P 500, which is largely these AI mega cap tech companies, if that starts turning lower at the same time that the debt issuance from these companies is moving higher, because that now has to be brought in too to fulfill all of these obligations. That's something that I'm going to watch because, again, that buyback bid to stocks has been the number one source for stocks over the past 15 years.
Jonathan's made this point a lot, though. The market is rewarding these companies for doing that, for levering up.
Well, but it's still really, really low leverage. And look, this has been a talking point too this week at the macro dinner, our credit discussion. People are nervous, kind of on the outside looking in with regard to First Brands and Tricolor and, delinquencies at Carvana, wondering if some of this clustering you're seeing in pockets of like asset-backed or super subprime space is something bigger. And it is going to be part of the story next year because tech is now the largest part of kind of the IG issuance. That's a big story. If this kind of keeps perpetuating where you have to bring more debt to finance these pursuits, and it's somehow also, too, at the same time, impacting the amount of stock you're buying back, it's something to watch. But again, these companies are incredibly cash flow positive, incredibly high quality because they're so profitable. So that's an inflection in the future, but that's not a now issue.
How much are people stretching outside of the hyperscaler space in order to get returns, in order to get alpha, given the fact that it's a pretty played out trend, if not complete, on the hyperscalers?
Yeah, so, the fear of the right tail is taking prominence, as we've spoken about. And I think the last time I was in here, I was talking about this kind of people were in the bunker. So we've moved from the bunker to the fort, fear of right tail. In this case, people now, and this tends to corroborate what you're seeing with regards to an early cycle move, right? Fed cutting into an early cycle economic reacceleration. You're now moving into really high beta, junkier stuff. So like unprofitable tech has been on a tear. Short basket's been on a tear. A lot of these things up 15, 20% in the past week and a half. So you're seeing elements of that. Obviously, you've seen crypto move to new highs, partially as a function of dollar debasement or fiat debasement, most recently the yen with regards to the elections there. So you're pushing into like the wingier stuff, which is providing that extra beta. It's silver, as you spoke about earlier, right? Silver is, the junky high beta version of gold. And it's acting that way, even with an industrial purpose, right? That's where you're getting your juice. Call skew in these things, right? Demand for out of the money stuff versus at the money, 95th to 100 percentile on all this stuff. So people are reaching because they're worried about this right tail and all this stuff because you have a career anxiety right now. It's performance anxiety. Like it's existential. If you don't capture this, you're cooked. The trick here now is that at one point does all of that suppressed volatility, all of that exposure built off of the suppressed volatility, all of the leverage into the highest beta stuff, oftentimes that tends to tip over and kind of collapse under its own weight. And that's what I'm conscientious of. So like I'm constantly looking at like where are people hedging, and it's the VIX calls, VIX upside, VIX call spread space.
Charlie McElligott, thank you so much for being here.
Good
Wonderful to have you. Let's do it again. Charlie McElligott of Nomura with the meme metals with silver. I love that. That's a fantastic way to look at it. Coming up on Monday, Peter Shear of Academy Securities, Alessio DeLongis of Invesco, Seema Shah of Principal Asset Management, and Jean Beauvais of BlackRock. Thank you for listening. Have a wonderful weekend. This was Bloomberg Surveillance.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Tom McKenzie.
And I'm Stephen Carroll.
China is imposing curbs on 5 American units of the South Korean shipbuilder Hanwha Ocean, the latest escalation of trade tensions between the countries. Beijing announced the move after the US trade representative began an investigation into China's maritime sector. The Chinese limits forbid any individual or entity from doing business with the 5 companies. Markets have been rattled by the tit-for-tat measures between the world's 2 largest economies. Speaking yesterday, US Treasury Secretary Scott Bessent said Washington won't back down in their trade fight.
This is China versus the world. They have pointed a bazooka at the supply chains and the industrial base of the entire free world. And, we're not going to have it.
Despite the firm stance, he said he also believes a planned Trump-Xi meeting, quote, will still be on, noting substantial communication over the weekend. The rhetoric has hit market sentiment, with contracts for the S&P 500 falling close to 0.8%. Those for the NASDAQ 100 currently down 1%.
World leaders signed a Gaza ceasefire agreement brokered by US President Donald Trump, who hailed it as the historic dawn of a new Middle East. There were emotional scenes in Israel where families reunited with hostages who were taken by Hamas during its October 7th attack 2 years ago. Their release, along with the freeing of Palestinian prisoners, marks the first phase of the US plan to end the war. President Trump described it as an achievement 3,000 years in the making.
For so many families across this land, it has been years since you've known a single day of true peace. But now at last, Israelis, but also for Palestinians and for many others, the long and painful nightmare is finally over.
Even Trump's critics and political opponents agreed he had succeeded where others had failed, although some questioned his rhetoric. But many still have concerns about how the plan will work out in the long term. Officials have yet to lay out a clear plan for disarming Hamas or how to fund the colossal task of rebuilding Gaza. There are also questions over who will run the territory, which is home to 2.2 million people, almost all of whom have been displaced by the war.
Britain's labour market is looking more stable after April's payroll tax rise. The number of employees on payroll in September dropped by 10,000, according to data from the Office for National Statistics. Wage growth also slowed to 4.4% in the 3 months to August. That's the lowest since 2021 and below estimates. The pound extended losses on the news, which is set to fuel the debate in the Bank of England about whether or not persistently high inflation is under control.
Well, the Bank of England policymaker Catherine Mann was speaking at an event in Philadelphia yesterday, and she said that Brexit and the mini-budget crash under former Prime Minister Liz Truss have made the UK a less competitive and slower growing economy. The central banker said after the UK's vote to leave the European Union was one step in a long erosion of sterling as a global currency. She added the implications of Brexit meant growing the supply side of the UK economy is a real challenge. Mann has voted to hold interest rates at the last 2 BOE meetings in an effort to shrink inflation, which at 3.8% is almost double the bank's 2% target.
Philadelphia Fed President Anna Paulson has signalled she's in favour of 2 more quarter-point interest rate cuts this year. Speaking at the National Association for Business Economics annual conference, the policymaker said she doesn't see conditions that would turn tariff-induced price increases into sustained inflation.
My base case is that tariffs will increase the price level, but they won't leave a lasting imprint on inflation. And given this base case, monetary policy should look through tariff effects on prices. Why? Let me start with the economics. Here, the lessons from economic theory are clear. So long as expectations are anchored, increases in prices due to supply effects do not turn into an inflation problem.
The Fed's Anna Paulson speaking there. She went on to say the policymakers' decision to cut interest rates by 0.25 percentage points last month made sense, though a narrow majority of FOMC members favour at least 2 more cuts this year. Others have argued for a cautious approach as inflation remains above their 2% goal.
Silver prices hit an all-time high as traders drive a supply shortage. Spot prices for the precious metal traded near $53 an ounce, beating a record set in the 1980s before falling back. Concerns about a lack of liquidity in London have led some traders to fly bars across the Atlantic to profit from higher prices. The squeeze comes as investors globally look for safe havens. Gold also climbed to a fresh record high earlier, building on 8 straight weeks of gains.
SpaceX's Starship rocket has managed to launch satellites and made it back to Earth intact in a closely watched test. The milestone was critical to CEO Elon Musk's aim of preparing the rocket for regular space missions. Here's the moment it launched from the Starbase facility in South Texas.
3, 2, 1. We have liftoff. Go Super Heavy. Go Starship. Thanks for all the historic flights, Pad 1.
Minutes later, the Starship's Super Heavy booster split from the spacecraft as planned before splashing down in the Gulf of Mexico. The success marks a step forward in Musk's ambitions to carry NASA astronauts to the moon in under 2 years and eventually establish civilization on Mars.
Those are your top stories on the markets. The Stock 600 down 0.8%. The FTSE 100 is 0.4 lower. The CAC 40 down by 0.9. The DAX in Frankfurt 1.1% lower. So trade tensions weighing on European markets, it seems, as well. S&P E-minis on Wall Street down 0.9. Nasdaq futures 1.1% lower. We saw a sell-off in Asian equities as well. Silver turned negative now after hitting that record high earlier, down 1.5% at just over $51 an ounce. Gold is steady on the day at $4,106, but erasing earlier gains as well. Those are your markets.
That's news when you want it with Bloomberg News Now. I'm Tom Mackenzie.
I'm Stephen Carroll, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
There are two kinds of people in the world. People who think about climate change and people who are doing something about it. On the Zero podcast, we talk to both kinds of people. People you've heard of, like Bill Gates.
I'm looking at what the world has to do to get to zero, not using climate as a moral crusade.
And the creative minds you haven't heard of yet. It is serious stuff, but never doom and gloom. I am Akshat Rati. Listen to Zero every Thursday from Bloomberg Podcasts on Apple, Spotify, or anywhere else you get your podcasts.
After 2 harrowing years in darkness and captivity, 20 courageous hostages are returning to the glorious embrace of their families, and it is glorious. 28 more precious loved ones are coming home at last to rest in this sacred soil for all of time. And after so many years of unceasing war and endless danger, today the skies are calm, the guns are silent, the sirens are still, and the sun rises on a holy land that is finally at peace, a land and a region that will live, God willing, in peace for all eternity. This is not only the end of a war, this is the end of an age of terror and death and the beginning of the age of faith and hope and of God. It's the start of a grand concord and lasting harmony for Israel and all the nations of what will soon be a truly magnificent region. I believe that so strongly. This is the historic dawn of a new Middle East. I want to express my gratitude to a man of exceptional courage and patriotism, whose partnership did so much to make this momentous day possible. You know who I'm talking about. There's only one, Prime Minister Benjamin Netanyahu. Bibi, please stand up. And he is not easy, I want to tell you. He's not the easiest guy to deal with. But that's what makes him great. That's what makes him great.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
We normally look more closely at gold than at silver. And on the gold side, we see that the main drivers of this push higher have been higher ETF positionings in Western ETFs, as well as higher central bank holdings, whereas more the net spec positions seem to have been more stable. And this matters because this type of driver is stickier. So when you look at ETF positions, they tend to stick around, and central bank holdings as well. So when we look at this step up, and then we look at what can come next, we still expect a little over 20% upside from current levels. So we had, as a result of this run-up, we had to raise our forecast for December 2026 from 4,300 to 4,900 as a result. And silver is interesting because you mentioned that the impact to prices was higher than in gold because silver is a smaller market. So you can have sometimes the same notional show up in the market, but the impact you can have, the volatility you can have in price is going to surpass that of gold.
Yeah, so the distortions maybe show up a little bit faster in the silver market. One thing that we've been pointing out is the dollar and how it's recovered since mid-September when it hit a 3.5-year low. The dollar and gold tend to trade inversely, right? When the dollar weakens, gold goes up and vice versa. If you have the dollar rising, how much further can gold go?
You know, the way we look at these two assets is not that dollar will drive gold, but that sometimes you have a common underlying driver behind both and pushing them in different directions. I think because, you know, I mentioned the upside for gold in our view over the next year is a little over 20%. Almost all of it, just about 19 percentage points of that, come from what we expect to see in central bank holdings of gold going forward. And this is just a diversifying push that we think happens, whether the dollar is a little higher or not. To be fair, if you have higher, let's say, recession concerns for the U.S. You were just talking about the tweets earlier today and concerns with trade. This can absolutely add to ETF positioning in gold. But that aside, the dollar aside, just from a central bank reserve diversifying push, we see a pretty significant upside to gold.
So when you look at the two big drivers for gold, ETF fund flows and central bank buying, is it as simple as to say the ETF inflows are fast money and the central bank buying is long-term money?
Well, we see ETF money as long-term as well, but the way that tends to move historically, it has such a strong correlation with real interest rates. And because we still expect about 100 basis points of cuts from the Fed over the next year or so, we still expect that ETF inflow to continue and, importantly, to stick around. It's just that the magnitude of what we expect to see in terms of gold buying from central banks is a lot higher. So again, about 23% of upside over the next year, 19 percentage points of that coming from central bank buying, only about 5 coming from ETF in our view.
Okay, thank you for that breakdown. We talked about gold, we talked about silver. Silver, of course, an industrial metal as well. What is your take here on copper? Because it's so much more economically sensitive than those precious metals.
Yeah, absolutely. And we just had recently a big mine disruption in Indonesia. So we do think that this step up in copper prices now in the $10,000 to $11,000 a ton range, this is going to stick around. We do see fundamental support to that. That said, in the near term, we think that 11,000 can work as a ceiling against that just because the higher prices are, we tend to see a response in scrap production. We tend to see, depending on the price level, the Chinese kind of moving out of the market a little bit. And again, the higher copper goes relative to aluminum in particular, you tend to see more substitution into aluminum. So yes, now sustainably in this 10 to 11,000 range, which is something copper had not done sustainably before, but with a limit for the moment.
तो गाइस इंडियन मार्केट होने वाला है क्लोज। क्रूड ऑयल को देखोगे थोड़ा सा ज़्यादा ही गिर गया। नीचे एक सपोर्ट था, कल से आ ही नहीं रहा है, कल से कोई ट्रेड ही नहीं बना है ना नेचुरल गैस में। कल भी रेंज के अंदर ही था, अभी भी उसी रेंज के अंदर फंसा हुआ है, ना नीचे एग्जैक्टली आ रहा है ना ऊपर जा रहा है। लेट्स सी, यहाँ पर सपोर्ट तो है, कुछ बनता है तो देखते हैं। एग्जैक्ट लेवल पे नहीं आ रहा है, पता नहीं बिल्कुल भी। ठीक है, उसको देखते हैं। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। बाकी इंडियन मार्केट क्लोज होने वाला है, निफ्टी बैंक निफ्टी दोनों ही देखोगे फ्यूचर में तो मॉर्निंग पे ओपनिंग के बाद ठीक ठाक सेल ऑफ। ठीक है, ठीक ठाक सेल ऑफ आया था, वापस रिकवर कर गया। सेम आपका निफ्टी के साथ भी हुआ, मॉर्निंग पे सेल ऑफ आया था, गैप अप। ओपनिंग के बाद कंटिन्यूअसली पहली कैंडल ही ओपन इक्वल टू हाई थी, फिर रिकवर कर रहा है। देखते हैं आधे घंटे में तो शायद क्या ही होगा कुछ खास। कि गोल्ड ऑल टाइम हाई, वहां से एक शार्प कैंडल बनी थी थोड़ी देर पहले न्यूज़ की वजह से, वापस वापस वो भी रिकवर कर गया। बट जस्ट फॉर कंसीडर क्रूड ऑयल फर्स्ट। बाकी डेटा देखोगे तो 12:30 तो ऑलरेडी हो ही चुका है, न्यूयॉर्क सेशन म्यूटेड ना रहे मार्केट। अभी इसमें कुछ प्लान मत करना, ये इसको लेवल ही बता देता है। 15 मिनट पीछे कोई लेवल शो नहीं कर रहे हैं, तो 30 मिनट के अकॉर्डिंग ही देखना पड़ रहा है क्रूड ऑयल में। ऊपर रेजिस्टेंस तो है 15 मिनट में, सपोर्ट के लिए 30 मिनट टाइम फ्रेम यूज़ करना पड़ रहा है। तो आज आईएमएफ की मीटिंग ही है, सेकंड डे। कोई डेटा आज भी नहीं है। 7 PM यूएस मार्केट, 5:30 न्यूयॉर्क सेशन ओपनिंग। यहाँ पर लेवल देखोगे तो 30 मिनट का ही यूज़ करना, 15 मिनट में तो नहीं है कुछ। हाई हायर हाई हायर हाई, एक और हायर हाई। भी ये सपोर्ट ही है, बट ये जैसा मैंने देखा था लास्ट टाइम, 3-4 बार यहाँ पर टेस्ट कर चुका है। लास्ट टाइम जब आया था तब तो बिल्कुल ही टच करके गया था 5145 को।
Good decision making is learned. Good decision making is learned, not born.
So I connect with this global network to bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
Not far behind, up over 10%. Now, this can be one of two things, Vonnie. Either the market is assuming that China is not going to pull back any of its export restrictions on rare earths, or perhaps the market is just thinking that now that China has raised the stakes, that perhaps the U.S. government would act more quickly and more decisively on taking equity stakes in these miners. Let's also add tech stocks to what's rebounding today. Nvidia leading the gains in the Mag 7 so far this morning, up 3.7% as investors look to buy the dip in tech stocks this morning. Nvidia was down near 5% on Friday, so we are erasing a lot of Friday's decline with this pre-market move so far. Lastly, let's end on StubHub. This is the ticket resale platform that went public back in September. It's been initiated by a number of Wall Street banks, Goldman, JP Morgan, Evercore, even BMO, all initiating coverage of this stock this morning. All of them are bullish. The stock is up near 4%, up 3.7% so far in trade. Analysts are quite bullish on the prospects of them entering the primary ticket sale market. Bonnie?
Valerie, thank you so much. Valerie Teitel there. And later in the hour, Jordan Rochester of Mizuho Bank will be joining us. Hamas has freed all remaining living Israeli hostages being held in the Gaza Strip. President Trump is scheduled to address Israel's Knesset in just moments. Let's go live now to Bloomberg's Oliver Crook in Jerusalem, overlooking the Old Town. What do we know that President Trump will say to the Israeli Knesset today, Ollie?
I think that he will really sort of affirm the message that he's had really since he was inaugurated as president of the United States, which is a message of strong friendship and support for the Israelis. And that is a message that, has been sent by many American presidents, but has been matched in many ways by unparalleled action by President Trump in a way that I don't think we've seen really from many American presidents in the past. And that is at least the Israeli view on things. I mean, you look at basically the genesis of how we got to this point. This is something that was really entirely brokered by the Trump administration. Something that would have been thought pretty impossible even as recently as 2 weeks ago, and really has come into being where now, as of this moment now, Hamas has no longer any custody of any living hostages for the Israelis. This has been the day that the Israelis have been waiting for more than 2 years now. From the Palestinian side within the Gaza Strip, it is the first time in many, many months that there have been nights without gunfire, without explosions. That has begun on Friday. And as from the Israeli perspective, I mean, just arriving within Tel Aviv, as I landed a couple of days ago, you can see skyscrapers, one of them illuminated with the Israeli flag, with the American flag. Underneath it, it says, "Thank you." And the road that President Trump just traveled from Tel Aviv to Jerusalem is a road that is lined with Israeli flags. Every third flag today, and since Friday, is an American flag. And that is really the kind of reception that Donald Trump will be receiving by the people of Israel within the Knesset, where he's expected to speak within the next few minutes. This is really the last time, the first time, or the third time, I think, in history an American president has spoken before the Knesset. And I believe it's the last time we've had a sitting president since 2008, when it was George W. Bush. So really a significant moment, really to mark what is at least the end of a certain phase of this war. Whether or not is the end of the war entirely is a much bigger question, and one to which you have different answers when you ask President Donald Trump, when you ask Prime Minister Benjamin Netanyahu, and when you ask the Israeli public.
Ollie, you mentioned the signs of celebration. We saw massive scenes in Hostages Square and all over Tel Aviv of celebrations and a lot of tears. You're in Jerusalem, it's a lot more ethnically diverse in many ways. What are, the people doing there? Is there celebrations going on? Is there a lot of chatter about what's going to happen when the Palestinian prisoners are going to be released?
I think that on the public display, it's a much more sort of sober environment. That being said, I think that the feeling in Israel is universal right now, which is one of jubilation, one of extreme optimism, and one of optimism that you have not heard in a very, very long time in Israel. And as you say, in Jerusalem, remember 1/5 of the Israeli population is also Arab, passport holders of Israel. And so it's a very obviously complicated situation. I do think that this jubilation, though, Vani, and this is a point that I think we will be sort of more and more coming into contact with as the days and weeks progress, is it sort of masks the bitter complexity that still remains in resolving so many of the issues, right? We have a day today where everyone can be happy, everyone can celebrate, but it does not answer so many of the questions that are still ahead of us in terms of getting to the eventual road, not just to sort of Palestinian statehood, but a road to a secure Gaza Strip, a road to a sort of technocratic governance structure that is envisioned by the 20-point plan. And I think the next question for everybody is going to be what comes next for Hamas. As you know, the Israeli goal, there have been two goals in trying to end this war. One is the return of the hostages. The other one is the destruction or disarmament of Hamas. Goal 2 has not been achieved. So as a consequence, Trump says the war is over. Netanyahu says not so much. And that will be the question for us for the coming weeks and months.
Absolutely. Ollie, thank you so much. Ollie is going to stick with us throughout the morning. That is Oliver Crook there in Jerusalem. Let's now get the view from Arab leaders. Bloomberg Horizons anchor Jumana Bersachi joins us now from Dubai. Jumana, we know there's a summit obviously taking place in Egypt also today, but what do we know from the region, other types of reactions?
Well, Vani, I think the fact that this summit is actually taking place in Egypt and Sharm el-Sheikh just underscores the involvement of Arab leaders in bringing about this outcome. Oliver was just talking about the hero's welcome that President Trump is receiving in Israel. He's also expected to receive a hero's welcome once he lands in Egypt in a couple of hours' time. Earlier this morning, the Egyptian president, Sisi, announced that he's going to be awarding Trump with their highest Medal of Honor, that is Order of the Nile, in a recognition of his efforts to bring about this peace plan. And of course, yes, it is still very early days. This is the early innings. This is just, day one, you could say, but a huge, huge moment, not just in Israel, but also for the region as a whole. And I would also say that over the course of the weekend, even when Special Envoy Steve Witkoff was addressing the Israeli public who were congregated in Hostage Square at Tel Aviv, he paid credit to the role of the mediators. He thanked them personally. He thanked the leaders of Qatar, of Egypt, and of Turkey for bringing about the outcome that we're seeing today. And this really just underscores how important a role the Trump administration believed that the Arab leaders did play. Rewind back to a month ago when the situation was very different, and we were here discussing that attack that took place on Doha when Israel was trying to take out senior Hamas officials. A couple of weeks later, you had that very seminal meeting on the sidelines of the UN General Assembly, President Trump meeting with those Arab leaders. A couple of days after that, putting out that 20-point peace plan. So here we are, and I think today is really just a recognition of all of the efforts and the diplomatic work that has taken place over the course of the last couple of years. That's not to say that all the problems are solved, but there has been a key role by these Arab leaders.
Of course, Jumana, this also releases an amount of humanitarian aid desperately needed in the Gaza Strip. What do we know about whether those trucks have already started filing in?
Absolutely. So the exchange of hostages for prisoners is underway, as we've been reporting throughout the course of the morning. But of course, over the past 24 hours or so, you've started to see the trickling back of some of that much needed humanitarian aid back into the Gaza Strip. The UN say that they're ready to send in about 180,000 metric tons of key supplies, be they medical, food, water, with the sole purpose of distributing them. And the availability of aid has never been an issue. What has been an issue has been the distribution, the dissemination of aid, and the fact that it hasn't been able to get inside the Gaza enclave. There are going to be discussions about the crossings, the reopening of the Rafah crossing, likely to happen in the next 24 hours as well, because from the Palestinian standpoint, of course, many of these displaced Palestinians have started the arduous journey of returning back to their homes, only to discover that their homes no longer exist. So part and parcel of the discussions later today are going to be addressing some of those longer-term issues about the reconstruction of Gaza. 90% of it is uninhabitable, the resumption of humanitarian aid, and ultimately what governance looks like, with the international community pushing for no role for Hamas in future governance.
Yeah, I mean, even just taking the rubble out is going to take a phenomenal amount of time. Jumana, tell us a little bit more about the different summits that are going on today. So several European leaders and leaders from around the world are traveling to Egypt. Explain to us who exactly is meeting where and for what purpose.
So all of these leaders will be congregating in Sharm el-Sheikh. The list of invitees has been extended, globally. So you have representatives from Arab nations. Some questions as to whether the Israeli Prime Minister himself may make an appearance, so stay tuned for that. Unsure at this point whether he himself may be there. Hamas officials will not be there, but the key mediators, we spoke about Egypt, Qatar, Turkey, representatives from those countries will be there. In addition, we found out a short while ago that the Saudi foreign minister will be representing, in addition to European leaders, the likes of the UK Prime Minister Keir Starmer, President Macron, who has invested a lot of political capital in this, especially being one of the countries to recognize Palestinian statehood on the sidelines of the UN a couple of weeks ago. And then in addition to that, you have these international bodies. You have the UN Secretary General who'll be attending, the European Council President Antonio Costa, and the Arab League Secretary General as well. So the purpose is to bring together all of these key stakeholders, not just who participated in getting us to where we are today, but who will have a vested interest and a role to play in some of these longer-term questions that need to be addressed still.
Jumana, thank you so much. We will be watching all of these developments in real time. That is Bloomberg Horizons anchor Jumana Bersecci. Meanwhile, over in Washington, the Trump administration signaled openness to a deal with China to ease fresh trade tensions. Vice President J.D. Vance spoke with Fox News yesterday.
It's going to be a delicate dance, and a lot of it is going to depend on how the Chinese respond. If they respond in a highly aggressive manner, I guarantee you the President of the United States has far more cards than the People's Republic of China. If, however, they're willing to be reasonable, then Donald Trump is always willing to be a reasonable negotiator.
And as we await the president addressing the Knesset, let us get to Bloomberg's Balazs Pence now. Balazs, I'm just curious as to all of the geopolitical questions that are out there and what we should be keeping in focus in terms of US markets, obviously, as we head into a week where we're only going to get soft data and we have this tit for tat with China as the president is taking a victory lap in Israel and we're in day 13 of a US government shutdown.
Yes, that's right. It's a very tricky time for markets. Vani, in terms of the trade relationship between the U.S. and China, there was a bit of a change in tone from the U.S. administration, and we see that change in tone in markets today as well. So Donald Trump said that he respects and admires President Xi of China. J.D. Vance urged the Chinese to remain reasonable in this negotiation, and what those comments do is they open up this little bit of space for negotiation. They open up these potential off-ramps as the two countries come off this weekend where there was really an escalating rhetoric and this sort of specter of escalating trade measures between the two kind of reminded markets that they may have been too complacent when it comes to that trade relationship. So now as we get ready for the run-up for the meeting between Presidents Trump and Xi, there is more room for negotiation, and there are more deadlines to come. The U.S. Tariffs are supposed to kick in on November 1st. The Chinese measures a week later, and then in the middle of next month, there's the deadline for the current trade truce. So there might be a lot more negotiations. There might be a lot more voices coming in to influence markets when it comes to that very, very important trade relationship.
Now, interestingly, we did get some hard data. It was out of China, though, Balazs, and we saw shipments grow substantially at the fastest pace in 6 months, but they've been growing double digits, exports from China, for the last 6 months, and the last reading we have was that they were up 27%. Now, that's because China is replacing the US with some other countries, upping their exports to the European Union, but also the likes of Vietnam and so on. Does that give China more leverage?
Well, it certainly gives them more confidence that they're able to withstand tariffs in a way that maybe the U.S. might not have anticipated. It gives them confidence that they can find markets for those products that are being shut out of the U.S. When it comes to the Chinese economy, the overall picture is far from rosy. But the Chinese have always taken a longer-term view of this trade relationship, and they are very confident in their ability to withstand what they see as temporary short-term pain. They certainly think they have more capability of doing that than the U.S. And as we see after the big market sell-off on Friday, the U.S. changing its tone already, that probably gives the Chinese confidence that that is indeed the case, that they can be more resilient in this relationship than their counterpart.
Balazs, thank you so much for setting us up for the trading day. That is Balazs Pence. I want to return now to Jerusalem, Israel, where Oliver Crook is with us, and we're obviously waiting for President Trump to address the Knesset. He was invited to do so after it became clear that Hamas was going to release all remaining living hostages. They have now done so. And Ollie, the scenes were quite amazing. It was a bit of a split screen. The president was literally arriving at Ben Gurion Airport as the hostages were being driven onto Israeli soil. Quite the split screen.
I mean, absolutely. I mean, it's hard to really put into words the sort of emotional charge of a day like this for the Israeli public and for, many across the world who've been following the events within Israel for the last 2 years. For those who've watched since October 7th, the sort of impossibility, the equation of impossible diplomacy that sort of presented itself before the world over the last sort of 2 years, and then the sort of swift, sudden change within the last really week and a half from sort of Trump diplomatic efforts after all of these sort of incredible, unprecedented events, whether it was the United States bombing Iran in a sort of show of force and a show of solidarity with the Israelis that you really have not seen from any other American president, whether it was that failed attempt to kill some of the negotiators of Hamas by the Israelis within Qatar, all of these sort of destabilizing events that have culminated ultimately in something that was thought really impossible a couple of weeks ago. And as of this moment, Hamas currently has custody of 0 living Israeli hostages. And that has been one of the 2 goals of this war that was begun on October 7th by those attacks by Hamas and then waged brutally and intensely within the Gaza Strip. One of the aims was to return the hostages. The second aim, of course, of that war was to destroy Hamas, to disarm Hamas. And whether or not that aim will be achieved and how that aim will be achieved will be absolutely fundamental and crucial in trying to achieve the other phases of this 20-point plan. We can't really have any conversation about security within Gaza, any kind of conversation about governance within Gaza, and certainly no conversation about a sort of Palestinian state without first answering the question of what Hamas looks like going forward. I would like to just say just another thing that we're now getting confirmation from apparently the Egyptians. So initially this summit to be held in Sharm el-Sheikh, this peace summit chaired by Donald Trump and el-Sisi, the president of Egypt, with a number of different Arab leaders, was originally not going to be attended by Benjamin Netanyahu. We now understand that Netanyahu is likely to attend this summit in Egypt, which is a significant development. We also heard from local media here in Israel that the way that this happened, and again, we have not confirmed this ourselves, but what we've been hearing from reporting behind the scenes is that Donald Trump, made a call to the Egyptian president with Benjamin Netanyahu right there and basically negotiated that would be that his presence at this signing ceremony, which is, of course, significant to have a signing ceremony like this without the Israelis, but managing to get him in the room, again, speaks to another part of this sort of unconventional Trump diplomacy, which managed to get us to where we are today.
Absolutely, and it was clear that there was very warm relations between President Trump and Prime Minister Netanyahu when Netanyahu met him off the plane. And obviously it's been a fairly rocky relationship over the last several weeks and months. Bloomberg's Oliver Crook is staying with us. We are going to keep our eye on the Knesset and bring you that speech when it happens. First, though, to other top stories trending on the terminal this morning. U.S. President Donald Trump is considering sending Tomahawk long-range cruise missiles to Ukraine, saying it will provide a new step of aggression in its war with Russia. This follows a second phone call at the weekend between Trump and Ukrainian President Volodymyr Zelensky. Companies ranging from State Street to Marex Group are expanding their outsourced trading businesses. State Street is opening a desk in Frankfurt and strengthening its presence in London while looking to grow in the Middle East. Financial services companies are continuing to widen their global footprint in a race for greater market share. Xiaomi shares fell the most since April after reports that one of its SU7 electric sedan stores failed to open after a fiery crash in the southwest Chinese city of Chengdu, trapping at least one person inside. The crash further raises questions over the safety of electronically operated car door handles. Now, President Emmanuel Macron has announced a new cabinet as pressure builds for him and his reappointed Prime Minister Sébastien Lecornu to head off France's growing political crisis and pass a budget. Let's get more with Bloomberg's Caroline Conan in Paris. So, Caroline, he was given an extra 48 hours. Now he's been given a whole extra chance as Prime Minister. What can he bring to the table in terms of a budget that might appease anybody at this point?
It's kind of like the Groundhog Day movie where you feel like you're living the same day over and over again. As you mentioned, just a week ago, Lecornu was resigning as Prime Minister, then was given 48 hours by President Macron to try and come up with a solution. And then he was reappointed on Friday night at 10 p.m. French time, surprising everyone. And we had this cabinet again last night, slightly different from the one week ago, because this time all the presidential hopefuls such as Bruno Retailleau, former interior minister, have left the boat. You have a few unknown figures here, such as the head of the railway company SNCF or the prefect of police of Paris, entering the government, figures from civil society, because what Lecornu said is that he's coming back as out of duty in order to get a budget for France before the end of the year, but he doesn't want any presidential connections among the members of his cabinet. Tomorrow we're gonna have the first cabinet meeting after President Macron comes back from Egypt, and then tomorrow afternoon Lecornu will give finally his general policy speech that he was supposed to give already last week. We'll see how long this Lecornu 2 government can last.
Yeah, the OAT bond spread back above 84 basis points now. Look, what is the incentive for any other political party to go along with this? Macron is clearly, pushing their buttons here.
And President Macron was actually speaking in Egypt just an hour ago, saying that we need to finally bring the image of France of stability and strength, which is obviously not something we have seen over the past months or even the past year since he called snap elections in June 2024, creating this whole instability. Now, it seems like the tone of the opposition parties seem to have slightly changed over the past week, and this shock resignation last Monday, with the socialists saying that if they see a suspension of the pension reform in Lecornu's speech tomorrow, then they might refrain from toppling this Lecornu 2 government. However, he will still face 2 votes of no confidence proposed by the far left and the far right as soon as this week.
So there will be a budget, is that what you're saying, Caroline? And I mean, the market is still being fairly sanguine about this whole thing, I would say. We haven't seen a massive blow up anywhere, but at some point you would expect that, right?
I would say the chances of getting a budget before the end of the year has increased compared to last week. I would give it like a 75% chance, whereas last week was more like 50-50. Clearly, the parliament is still fragmented. This may be, again, President Macron's last chance before calling snap elections. And of course, this idea of suspending the pension reform will have an impact on the budget, but for many economists and analysts, the impact may be less significant than having another political crisis in France and another snap election.
Absolutely. We'll continue to follow with bated breath. Caroline, thank you so much. That is Bloomberg's Caroline Conan in Paris. Time now for your front page news. One story making headlines across the major news outlets. It's the story we're all watching at this hour. Hamas has freed all remaining living Israeli hostages being held in the Gaza Strip. President Trump is in Israel to herald the agreement. He's about to speak before the Knesset. Then he travels to Egypt for a signing ceremony on the Gaza plan. The ceasefire deal was secured after days of indirect negotiations brokered by the US, Egypt, Qatar and Turkey on the terms of a 20-point plan put forward by Trump. And I do want to mention that you're looking at live pictures right there of the Knesset in Jerusalem, Israel. President Trump is about to speak. He arrived a couple of hours ago at Ben Gurion Airport just as the hostages were being driven onto Israeli soil. And we are seeing the Bloomberg Israel Index up about 0.4% as it is trading right now. Let's take a look at some U.S. assets because we're in for a big day, it looks like, in the United States as well, with futures set to rebound strongly, at least at this hour, on the S&P and the NASDAQ 100, which, by the way, dropped 3.5% Friday, if you don't recall. We have the euro weaker today. It is below 116 now, so deteriorating there. A stronger dollar, of course. We're going to be speaking with Jordan Rochester of Mizuho Bank in just a few minutes, and he'll tell us more about all of that. This is Bloomberg.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures showing a big bounce back after the S&P 500 suffered its biggest decline Friday since April. This as the White House tempers trade threats against China. And President Trump is in Israel right now as Hamas has released all remaining living Israeli hostages held in the Gaza Strip. The president about to address the Knesset will bring you those remarks as soon as he begins. So let's take a look at these markets now. Obviously, the bond market is closed for the holiday, but we have S&P and NASDAQ futures looking to see the market roar back today. The NASDAQ 100 was down 3.5% on Friday. Potentially a great day for the Russell 2000 as well. This all as President Trump talked about November 1st being an eternity away, and also mentioning how he really feels warmly towards Xi Jinping. And so it looks like the market is perhaps putting the potential of an escalating trade war on the back foot, at least for this Monday. Let's take a look at the next board because we did see a 10 basis point decline across the curve in the yield curve on Friday. So we're obviously not trading today for the holiday. The bond market is closed, but we're at 403.22 right now. We started Friday above 413. The VIX got all the way above 23. It's back down to 19.5, so not at the levels we were on Thursday, but it is coming down. Gold, though, continuing to rise, 4,071, and Bitcoin did that round trip. It is back now above 115,000 a coin. Let's get to some individual stocks to watch now with Valerie Teitel in London. Valerie.
Good morning, Ivani. Let's start with a check on these American rare earth miners. They're absolutely flying in pre-market trade. USA Rare Earths up nearly 25%, critical metals up over 20%, and MP Materials up some 11% so far in pre-market trade. Perhaps this is the market assuming that China is not going to backtrack on those rare earth export controls, and perhaps the U.S. government will have a bit more urgency and a bit more aggressiveness when it comes to using equity stakes in order to combat China's dominance in rare earth mining. Next, let's have a check on the tech sector. As you mentioned, we are seeing the NASDAQ rebound very strongly, as well as the Mag 7 stocks. Leading those gains is NVIDIA, up 3.5% so far in pre-market trade. This stock did decline nearly 5% on Friday, so wiping out a lot of those losses with this pre-market move higher, up 3.5% for NVIDIA. Next, let's check on some ratings moves. We had an upgrade from Goldman on Estee Lauder. The beauty company is rising near 5% in pre-market trade. Looks to be a good session for this company. Goldman citing the fact that they could return to sales growth in the quarter of September, and also are going to be having some nicer trends to be confronting when it comes to China, one of their key growth segments. Funny?
Valerie, thank you so much. Valerie Teitel there in London. So the dollar is strengthening once again today. We're seeing particular weakness in the euro. It's headed for 116, a sharp move for the US yield curve Friday too during that so-called volatility pothole, sending the 10-year down to 4.03%, the 2-year to 3.50. Do we see the same reversal tomorrow when we start trading in the bond market again that we're seeing in equities? Let's ask our next guest, Jordan Rochester, head of FICC strategy at Mizuho Bank. So Jordan, was this a one-day move for the bond market, or is it taking threats of an escalation here with China more seriously than potentially equities are?
Well, I think the bond market has got a few things going on. There's also the situation for politics in France, the politics in Japan, the politics in the US. It's not just about the trade talks. But of course, Friday was a big wake-up call for equity markets and risk sentiment as a whole. We've rallied significantly into that event as well. So it caught a lot of people out being shortchanged by essentially hedges hadn't been built up significantly enough. But I think the sort of taco trade applies here. I mean, we've already seen the olive branch being offered to China. The key thing is that the talks between the US, President Xi and Trump's meeting at the APEC summit is still scheduled, because that was part of the threat as well on Friday, that would be cancelled, and that really would be a big step back in the geopolitics. But this morning you have seen European fixed income kind of try to sell off and sort of enjoy a bit of risk off in terms of risk on, in terms of the equity market. But it's rallied back a bit in terms of fixed income in Europe. Perhaps it's the French political uncertainty. It doesn't help that we don't have an open US market to really judge it, because what really moves global fixed income is the US Treasury bond curve. So when we find out tomorrow, when Columbus Day is over, that'll be the real test.
Yeah, the dollar is strengthening once again today. The euro obviously headed for 116, as we said. You know, how much is this consensus trade at risk? Could we see some kind of a squeeze here, and could that rock the markets?
I think it's a real big test of this consensus trade. If you go to any client investor presentation for the past 6 months, especially since Liberation Day, it's been short the dollar. And you see that in pretty much all of the positioning data as well. In the FX options market, for quite a long time, you saw demand for dollar hedging outstrip demand for the euro hedging. It's quite a rare thing to see. It's similar, but less so in the yen. Now we're seeing a little bit of a flip of that, because yes, Friday woke us up with this trade talks taking a dive lower. I mean, you saw dollar weakness, but it wasn't really that significant compared to what it was in Liberation Day. The reason for that is because everybody is already short the dollar. Meanwhile, if we take a step back from the geopolitics and look at the economic cycles, for me, for a long time, we've had this outperformance in European surveys. That is starting to lose its shine. We're seeing the PMIs, the ZEWs, the IFOs out of Germany and the euro area. The new export orders are starting to show signs of cracks from tariffs. Meanwhile, in the US, if you're a US consumer, it's been a fantastic time. You've got a wealth effect from your equity portfolio being relatively high. It's still near the historical highs even after the sell-off. You've got very low sort of front-end rates, and your mortgage rates for the long end have come down too. So we might see the US consumer step back in and boost economic growth in the US at a time when Europe looks to be faltering. So we might see the dollar bounce back in the short term.
I just want to mention we're getting some excerpts from what President Trump is going to say to the Knesset, and that's what you're seeing on your screen now. But Jordan, we're in a data desert. We may get the CPI, but not until next week. You know, BLS staff have been called back in order to put something together for October 24th. We do have some soft data this week, though. Is that going to be enough to give the Fed visibility for what to do at the end of October?
I think the Fed's pretty much on autopilot for a rate cut at the next meeting. You'd need to have some crazy NFIB survey to change the story on that, or indeed a very, very hot CPI, and we can talk about that as well. The alternative data is fantastic. It helps us predict what the official data, which is currently in shutdown, will do. But the problem is it's called the Rashomon effect. There's so many variants of alternative data that give completely conflicting signals. The ADP is probably the one that the market will lean on the most. We saw that the other week. We had negative payroll growth. But the NFIB, which is a long-running survey, goes back to 1970s, suggests that hiring plans are rising. So which one do you use? I think the market will put more weight on the ADP. Its correlation with NFP is higher. But let's talk about that CPI next week, or whenever it does come out. It's expected to be a hot one, especially for headline CPI. The TIPS curve, that's the Treasury Inflation Protected Securities, is expecting 0.5%, roughly speaking, for month-on-month CPI. So that's going to be a big number. Where does year-on-year inflation get to is the big question. And it's going to get to 3.4%, 3.5% by around April next year. So I think what economists got wrong about tariffs is how quickly they will feed through to the economy in CPI. But I think what they probably will be right about is they will feed through. Just it takes a bit of time. We're talking next April when we're going to see the peak of that impact.
Well, and also, you have to wonder if the US-China trade is a 50-50 trade. I mean, is it 50-50 that extra 100% tariffs go on, or is it something different? And how would an extra tariff impact the US down the road? And also the fact that we're, going into day 14 tomorrow when the president returns of a government shutdown, Jordan. I mean, how does the market balance all of these risks?
It's difficult. When it comes to the trade talks, Scott Bessent summed it up. Essentially, when we got to 145%, that was close to a de facto trade embargo. The rare earth minerals, though, they are a crucial part of the supply chain that China is dominant in. They're not actually that rare. You can find them around the world and mine them if you want to, but there's not many mines open, and they're mostly in China if they are. And it's actually the refinery part that is very costly in terms of the environment. So it's mostly in China too. If that is something that is a chip that China plays and Trump keeps escalating, that is something markets need to take note of, because that means supplies of consumer products, when it comes to electronics, supplies of military products that all use these sort of magnets will really struggle. And we could see a big inflationary wave from the back of that. I just don't think we're going to get there. That's because of the olive branch being offered by the US already by Trump in his tweets, and from big business saying, no, we really need this to stay open. So this is a long-term strategic problem for the world relying on one supplier, but it's definitely a strong part that China has. But I think the markets will rely on TACO, and they won't be looking at this as a major risk that's going to escalate from here.
I wonder about the euro as well, Jordan. Like, we're looking at 116 now at this point. I mean, is the ECB looking at this level and wondering if maybe it should move a little faster?
They're not looking for it to move either way, is what they would say. They would give that sort of neutral stance. But they have commented on the strength of the euro being a problem for inflation. If we get to 120, 125, which I think we could do next year with thanks to the German fiscal stimulus coming through and the Fed cuts, then that becomes an issue for the ECB. And we've got them cutting rates once more. I think they're going to skip December. I think that it's very difficult for them to cut rates in the short term. Their sort of mandate is being achieved at 2%, roughly speaking, for the past few months in CPI. Their forecast already expect a dip, but to recover back to 2. But I think by March, they'll be challenged by the currency strength, but also by the slowdown in surveys and the impact of tariffs feeding through as well. So we've got one more cut from them, which takes them to 175, which is the lower end of neutral. To go beyond that, we need to see a really big bad news in the growth outlook. And that's really difficult, given the German fiscal that's going to come through.
All right, Jordan, thank you so much for joining us this morning. Jordan Rochester there of Mizuho Bank. Now to other top stories trending on the terminal this morning. French President Emmanuel Macron has announced a new cabinet as pressure builds for him and his reappointed Prime Minister Sébastien Lecornu to head off France's growing political crisis and pass a budget. The cabinet will meet for the first time tomorrow, where Lecornu is expected to propose the budget. Jefferies defends its dealings with First Brands, saying its exposure to the bankrupt auto parts supplier was small. The investment bank is seeking to revive investor confidence after a sharp sell-off in its stock. Shares have tumbled in recent weeks and are down around 35% on the year. Economists marked up their estimates for US economic growth this year and next, though job growth is expected to remain weak. According to a survey from the National Association for Business Economics, the inflation-adjusted gross domestic product is rising 1.8 this year, up from the 1.3% forecasters had expected back in June. Coming up, the Trump administration signals openness to a deal with China. More on US-China trade tensions, and we'll bring you President Trump's remarks to the Knesset next. This is Bloomberg.
On everything that we care about: the economy, media and information, markets, trade, geopolitics.
it's going to be a delicate dance. And a lot of it is going to depend on how the Chinese respond. If they respond in a highly aggressive manner, I guarantee you the President of the United States has far more cards than the People's Republic of China. If, however, they're willing to be reasonable, then Donald Trump is always willing to be a reasonable negotiator.
Vice President J.D. Vance speaking on Fox News after the Trump administration opened the door to a deal with China. Joining us now is Bloomberg's Kasia Klimaszinska. Open the door is one way of putting it. Sort of walking back some of those dire comments might be another. Kasia, is it more likely now that, you know, we won't see that 100% tariff going into effect? Trump talking about November 1st being an eternity away and talking about the warm relations he had with Xi?
Exactly. So it all started on Friday when President Trump put out 2 truth socials threatening massive tariffs on China. He later specified those tariffs would be as high as 100% and that the U.S. would also stop exports of some of its critical software. That unleashed a sell-off in stocks with S&P 500 down 2.7% on Friday, and oil and cryptocurrencies also selling off, and that led to this damage control from both U.S. and China over the weekend, with both sides coming out and signaling that they are willing to negotiate, and President Trump specifically telling reporters that, look, those new tariffs would not go into effect until November 1st, and there is a lot of time between now and the beginning of the next month. So clearly the two sides hope to negotiate, and that's also what the Wall Street is expecting. Goldman Sachs put out a note saying that it is very likely that the two sides will continue talking, and so they will not reach for those most outrageous three-digit tariffs, but also there is this tail risk that it could happen.
President Trump also said he'd consider arming Ukraine with long-range Tomahawk missiles that would allow strikes deeper into Russia. Let's just have a listen first, Kasia.
I might say, look, if this war's not going to get settled, I'm going to send them Tomahawks. I may say that. The Tomahawk is an incredible weapon, very offensive weapon. And honestly, Russia does not need that.
How close are we to something like that happening?
President Trump had 2 conversations with Ukrainian President Volodymyr Zelensky over the weekend. That's fairly rare. The two don't have that strong of a relationship. And after that, we saw Trump spoke to reporters and he said he is considering maybe sending those long-range missiles, but he does see it as major escalation, so he wants to talk to President Putin before. Trump hopes to use this momentum that he has from the Middle East when he achieved a great diplomatic success. He clearly looks to accomplish something similar here in Ukraine and get the two sides to talk and reach some sort of a ceasefire.
Kasia, thank you so much. That is Bloomberg's Kasia Klimaszinska. We want to bring you back now to Jerusalem. We're still awaiting President Trump's address to the Knesset. That's going to happen in just a few minutes. Members have gathered and it's been called into session. But let's get to Bloomberg's Oliver Crook, who's outside the Old City in Jerusalem. Oliver, we do have some of the headlines. We got some excerpts of what President Trump is going to say. Can you fill us in?
Yeah, so what we're expecting from President Trump, is a really sort of really marking the moment, I think. And I think in sort of grand Trump fashion, really sort of trying to express in some way how enormous an event this is and really taking credit for it. And I think that, for all of the criticisms that can exist of Donald Trump and the many critics of them, this is one for which he deserves all the credit that he will be claiming for it. This is this deal that seemed really inconceivable even 2 weeks ago. And I think that before the Knesset, he will find an audience that will be in total accord with that perspective on things. And I mean, as we've been talking about, Vani, even arriving within Israel, even before the wheels of the plane hit the runway, I was looking out the window. You could see a skyscraper illuminated with the Israeli flag, the American flag, and underneath it reading, "Thank you." And those roads, the same road that Donald Trump will have taken from the Tel Aviv airport to come here to Jerusalem, usually lined with Israeli flags. Every third flag is an American flag. And that is going to be one of the messages that is going to be sent to the Israeli parliament. And despite despite the support that Joe Biden gave in the early days of the war to Israel, and we remember when he came here right after October 7th, the warm reception he got, Trump is seen as somebody who has been a much even greater ally to the Israeli people, to the degree that he has been willing to, for example, strike Iran. This is something that is kind of inconceivable, I think, for an American president to go quite that far. And that was part of, I think, the sort of fluid, some would say very unconventional foreign diplomacy that the United States has embodied that has got us to this point, a willingness to do that, a willingness to demonstrate how far their sort of support of Israel would go. And with that, a credibility that allowed President Trump to put pressure when pressure was required onto Benjamin Netanyahu to agree to this deal. And we should say on part of that pressure, we're getting now just some headlines crossing that after all the hostages that have now been released, that are all now in sort of Israeli hands from that side, we are now getting the releases of the Palestinian prisoners, which is the next step of this process. We now understand that they are being released into custody back to the sort of Palestinian side of things. And this is going to be sort of the process that is going to be ongoing over the next few hours, which will then lead, of course, to that big summit in Egypt a little bit later, where we understand now Benjamin Netanyahu, and we understand again from some of the local media reporting, after a call that Trump made to the president of Egypt while Benjamin Netanyahu was with him, now it seems the Israelis in the form of Benjamin Netanyahu will travel to Egypt, which is not entirely unprecedented, but quite uncommon, and a really sort of an attempt by the Trump administration to show full unity. And remember, we also had some other news outlets reporting that even the Iranians had been invited to attend this session. So again, some of this very unconventional foreign policy from the Trump administration, which has led us to a day that we really couldn't have foreseen even 2 weeks ago.
Yes, and just to reiterate what you said there, we are getting confirmation that the first bus of Palestinian prisoners has arrived in the West Bank. So obviously, with as many as 2,000 being released, it will take some time to get all of the Palestinian prisoners out of the prisons. But we do have all of the remaining alive hostages back on Israeli soil and being tended to by dedicated medical teams for each hostage. And we know that all the hostages were able to walk, so we know that they were in some condition. We also know that the summit in Egypt is going to at least try to begin to address phase 2, no doubt, Ollie, right? What can we expect to see and hear out of this summit in Egypt as regards the next steps, which are going to be crucial in order for this peace process to hold?
Yeah, Vonnie, I don't even know sort of which questions to begin asking because there are just so many of them. I mean, if we want to step all the way back and look at the sort of fullness of the ambition of the 20-point plan, I think for the Trump administration, really what the ultimate goal is a sort of reestablishment of momentum behind the Abraham Accords to have really sort of a harmonious relationship in the Middle East. This was seen as a sort of big development of his first administration, and I think that is ultimately his goal. There was even talk about, a Palestinian statehood and autonomy within the very end of that sort of 20-point plan. But in these sort of foothills, which is where we are right now, there are many questions to be answered. The first is going to be, what does a security arrangement looks like within the Gaza Strip? We've been talking about this international stabilization force. What will that look like? What militaries will be involved? And who really wants to front such a force? Because this is a force that needs to be both credible with the Israelis in the sense that they can furnish Israel with the security that they demand, and of course with the Palestinians who want this to be a legitimate enterprise and not just sort of a puppet of the United States and the Israelis. There is the question of the technocratic sort of Palestinian-led regime that is overseen by this sort of oversight board chaired by Donald Trump and potentially Tony Blair. And those are many of the conversations, and those are conversations that can't even begin until we understand what the role of Hamas is going to be going forward and if they're willing to put their guns down.
Absolutely. Ollie, thank you so much. Oliver Crook there in Jerusalem. And I do want to mention you can follow along on our T-Live blog, TLIV blog, for all of the updates there. Coming up, earnings season kicking back off already. We'll get you set for your trading week next. This is Bloomberg. President Donald Trump about to address the Israeli Knesset right now, as you can see, being greeted by the Prime Minister and by members of the Israeli Parliament after all of the living remaining hostages have been delivered over to the Israelis and are on Israeli soil and being taken care of. We are to understand that he's going to hail, quote, the historic dawn of a new Middle East. And he's obviously going to be travelling to Sharm el-Sheikh a little bit later on for a peace summit. Benjamin Netanyahu is actually going to attend that signing summit as well later on, as well as a raft of other leaders from around the world. But once again, do follow along on our T-Live blog as President Donald Trump addresses the Israeli Knesset. That's it for Bloomberg Brief. Surveillance is ahead. This is Bloomberg.
A powerful pitch can unlock transformative growth.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey.
We're in wars, okay? There is a financial money war, there's a technology war, there's geopolitical wars, and there are more military wars. And so we have a civil war of some sort, which is developing in the United States and elsewhere, where there are irreconcilable differences.
So how do you see it being settled? Actually, where do you see the U.S. going? Does it get settled? Does
well,
it
either we will rise above it and realize that our common good is going to necessitate us dealing with it so that what works for most people is going to work. I think that's a little bit idealistic. I have to be a practical person. And I would say that I think that these conflicts will become tests of power by each side.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
The market probably is a bit cautious, but I think it's not expecting too much.
If the AI story gets questioned, then the whole thing probably starts to slow down.
It's not just risky assets. It's not just the AI right tail.
We can play different trends here in different ways that aren't as overpriced as the overall market.
The interesting part is the only trend is all systems go.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday, taking down the temperature.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set.
President Donald Trump attempting to put a lid on rising tension with China. As reports suggest the Pentagon is looking to stockpile critical minerals, JP Morgan is making a $1.5 trillion promise to help boost economic security. That effort is still building.
And that news just crossing the wires currently, with JP Morgan adding $500 billion to the total that it already was planning to help finance. They're using about $10 billion of their own capital to make equity investments in some of these crucial companies. It comes at a time where every private asset manager has been trying to get into this field, because this is something that clearly is a priority for the United States. And in many ways, the U.S. is finding itself on its back foot because of its reliance on China for these rare earth minerals.
There is a fantastic stock market proxy, MP Materials. Check it out in the pre-market. It's higher by more than 11%, capturing the tension between the US and China. So I get the framing right now this morning. The president's backed away from the threat on Friday. Equity futures bounced back. But the tension over critical rare earth minerals, that's going nowhere anytime soon.
Absolutely not. And it's why you see the administration doubling down when it comes to what is going on with the Pentagon and making sure that there's billions of dollars that they can use to go into this space, as well as taking direct equity stakes into these companies. J.D. Vance, the vice president over the weekend, said it's going to be a delicate dance. And that is what it's going to be between now and November 1st. The president said on Air Force One, from now until November 1st, it's an eternity for him.
This is quite a quote from JP Morgan's Jamie Dimon. Check it out. It has become painfully clear that the United States has allowed itself to become too reliant on unreliable sources of critical minerals, products, and manufacturing.
And this builds on what he's been talking about for a while. Back in 2023, he wrote that U.S. supply chains for critical products and minerals, quote, must be domestic or only open to completely friendly allies or partners. This is something that has been on the docket for quite a while. How much is this going to be co-investments with the U.S. government in some way, sort of coalescing around this idea that, yes, the U.S. is investing, but so too needs some of the big corporate partners?
Take out what this means for the stock market and advanced technology in these chips. Magnets, rare earths, are needed for virtually every single weapon system. China owns them, processes them, refines them, and sells them. The entire supply chain is built around Beijing.
The futures bouncing back this morning, higher by 1.3%, following the biggest one-day loss going back to April and Friday's session. Equity futures firming up. Coming up this hour, Peter Chair of Academy Securities with stocks bouncing back. Norman Rule of CSIS as the Israel-Hamas peace deal begins. And Sonia Martin of DZ Bank on the dollar's safe haven status. We begin this hour with stocks rising as President Donald Trump takes down the temperature with China. Peter Chair of Academy writing, maybe this is it, and we are back to what passes for normal. But there is little to indicate China's stance has changed at all. This escalation was not started by the US, it was started by China. Peter joins us now for more. Pete, good morning.
Hey, good morning, John.
I think your framing is really, really important. Can you de-escalate something you didn't start?
Right. So I think there's two competing narratives, and I could not be any happier than with the announcements that you just made that JP Morgan said, right? I think the world is at the early stages of almost an ESG type moment, but it's about rare earths, critical minerals. We've been calling it production for security at Academy Securities for the last 6 months. We've been trying to catch that on. No one seems to be listening. It's been great for the portfolio of companies that we've had. And I think this is just going to expand and expand, right? Everyone's going to look and say, we need to do these things ourselves. We need to do that. I think that's part of why China's actually ramping things up, is they see the government finally taking some steps. So their bargaining chip disappears or dissipates over time. I think they're going to put pressure on. So I do think we're going to have economic friction, tariffs with China, so that's going to be a bit of a way on some parts of the market. And the other part, anything that's production for security, pharma, tech, chips, rare earths, critical minerals, natural gas, all those things should do very, very well. We need to produce electricity. We know it. I think that's finally catching on, and it might be even global.
Pete, just build this out. China wants to make this transition painful. That's what you're seeing here?
Yeah, I think China wants to make this transition painful. I think that's their card. They're trying to build up their own chip industry. So I think they're willing to disconnect. It's up to us. And what was exciting today, even on the way in, you're listening to more and more European countries, I think, come to this realization. Why did we give up our entire industrial base? Like, we might not need to make socks. There might be things that we don't need to make, but germanium, rare earths, and we need to produce electrons. We need to produce electricity. I think this is just a giant wake-up call.
Well, it raises the question of how much pain there's actually going to be. Mike Wilson over at Morgan Stanley is saying that there could be something like an 11% drawdown for the S&P. Should this really proliferate, It doesn't seem like that's that much if you really think about the auto industry, the smartphone industry, all of these key areas that depend on these rare earth minerals.
Yeah, and I think what we'll probably see even within that is a big shift to what areas really do well. And I think as people scour their portfolios for, I think last time I was on, we talked about using AI to just go through and search for companies under $10 billion involved in these industries. I think you can expand that. This is going to be bigger companies, people looking at that. People are going to walk to the White House and say, hey, how do we work with you? I think this is really a snowball effect. So those areas will do really well. And I think finally, I dare say it, but I think the Russell 2000 can now start really outperforming the NASDAQ 100 because that's who's going to benefit from this real big focus on domestic production.
And we actually saw glimmers of that on Friday. I'm curious, though, going forward, who stands the greatest pain? Is it China or is it the U.S., given that China has shown a willingness to push its companies, tech companies, away from using U.S. chips, and the U.S. sees its entire manufacturing base disappear when it doesn't have access to these elements?
One thing that's clear to me is Chinese people will bear greater pain. So I think that's an issue as we face this, right, is Xi can push on his people and force them to deal with stuff, I think, much longer than President Trump can. So if this drags on and gets ugly, we are at a disadvantage there. Having said that, I think China's making a big bet on their own ability to develop their chip industry, develop AI. They've got the electricity. Will they be successful? I think they've got the money pouring into it. They've got the engineers. But China tends to go in a certain path. And if that path is the wrong direction, they have to go back to square one. Whereas we have all these entrepreneurial aspects. We're developing in so many different ways and things bubble up to the surface. So that's been our competitive advantage. So I don't think it's a bygone conclusion that China can succeed. We are going to need to push regulation, deregulation. We need to do these things. I think Europe has to do the same. If we can do this all right, I think we win.
How long does it take to build what China has in terms of the critical minerals and the supply chain around it?
I think reality, a decade. I think we can do a lot in the coming year, 2 years. I think the one thing this administration is going to have to back off on a little bit is their anti-solar stance. I think solar, the only way we're going to get electricity really ramping up quickly, solar, we're probably going to have to use clean coal, which I know the president's a fan of. I think natural gas becomes a big source. But we also need to be planning and ramping up nuclear and production for things that will come online maybe 5 to 10 years from now. But if we set these things in motion, I think it was the start of that scared China a little bit, is why China's being a little bit more aggressive. We need to follow through on this, though.
So what is this relationship like in the meantime?
I think it's a lot of friction. I think people trying to game each other, trying to figure out ways around it. Hopefully we've stockpiled some of these. Hopefully we can go through periods of negotiation where China decides to sell it. But I think this is going to have to be, again, we almost talked about this as a Manhattan Project type moment where we need to focus on this desperately. And again, it can't just be us. Europe has to be looking at this, right? All these countries that kind of gave away their ability to produce what they need for security have to revisit that. And it feels like we made a lot of progress in the past week. I don't know why it took 4 years of us ranting and complaining about this, but finally something's happening.
You hear, say, 10 years, and I hear more than one political cycle. And we need to make sure Europe is in line, sure. But we also need to make sure that this is a bipartisan effort, both left and right. Refining these critical minerals is dirty. It's messy. And we've allowed the Chinese to do that almost precisely for that reason. Right. It's a messy process. It pollutes a lot. Do we have the commitment on both the left and right to park the green agenda and do what you think we need to do?
I think we're getting there because part of this was we closed our eyes. Oh, well, if China's doing it, it's not really dirty or it doesn't bother us. Right now, some of this is going to be locally dirty, but a lot of it's just pollutes the entire environment. And I'm willing to bet that if we put the effort in, we can do it cleaner. It'll be more costly to do it here, but we can control the process. Why would we let China do this? Why would you go in and inspect a factory in China, say, oh, this seems reasonably clean, knowing that the second you turn your back, leave the country, they're probably not operating at that level of efficiency. So I think, again, we should control our own destiny. Yes, some of this is dirty, but it's being dirty somewhere. Again, I've been really happy. The number of charts I've seen about CO2 production and showing what Europe's done while China's done this. So, yes, it's bad that, we've been trying to make these steps, but if China's out there not caring, we're losing. So I think this is something that people are getting on board with. I think Europe's going to be, slower to embrace this, but I think at least the seeds are there. So maybe they're a year behind us. I think we're getting close to that point where the U.S. just realizes we cannot be dependent on these things that are super critical. And it's easy to forget, these tiny little pieces of tiny component. If we don't have them, the product doesn't get finished. I think that's where we're headed.
So let's talk capital allocation. You touched on it. You buy the constraints, things like critical minerals, maybe energy more broadly. You sell the potential overcapacity. Where is that potential overcapacity now?
I think maybe in the data centers, maybe that's where we're looking at. Maybe some of the consumer credit things, some of those, there's issues there. But I think so you can be maybe a little bit underweight. I think you want to own some of Europe. I think Europe it's probably a bit early for this particular bandwagon, but I think this bandwagon's really just starting to take off. It's going to be the equivalent of, you're going to see fund launch after fund launch, ETF launch after ETF launch, trying to capture this, right? It is the zeitgeist of the moment, finally. And just like you may have shook your head and wondered why some of these things went on too long, I think that's the moment we're going to have here. I've sold some of my positions. I really regret selling anything in this space and probably have to chase it and buy back because I do think we've had this sea change.
Can I just finish on private credit?
Yeah.
We've had some events more recently. And some of these stock market, public market proxies for what's happening in private credit, KKR, Apollo, Blackstone, they're down around 20% since the middle of September. Those stocks have been absolutely hammered. Are you worried about these credit events becoming a broader economic story?
At this stage, I'm not really. I think some of these, with Trey Calore, it's probably tied to some of the immigration policies because a lot of their clients may have been forced either out of the country or out of jobs. So I think these are one-off things. I think private credit's this, whole easy thing to be a big boogeyman and, what's going on in private credit? Yeah. I believe since the GFC, it's become a cottage industry to look for the next credit bubble. I just don't see it in private credit. I don't see the leverage on leverage within the system. I think most of the deals have been decent. These companies will negotiate, will go through a lot. There will be hiccups, but when I talk to the investors, I don't think people walked in and said, I'm going to get 10% risk-free. I think people understand there's some risk in this. The overall portfolio effect will be good. I would be much more cautious of some of the smaller, newer entrants who may not see the big deal flows the big people saw, right? The big, large dealers, they have all the deal flow. They saw the deals they wanted. They could pick and choose. They had leverage. They had the negotiating power. I don't see this becoming systemic, though I am watching BIZD, or ZD, sorry, or ZD, I guess. Confused which country I'm in after the last week. But, it is a BDC ETF. That is lower than it was back in April. That's a bit concerning. So, you can't ignore what the market's telling you. So I'm looking at that. I think it's probably overdone, though.
I get confused, too. The Brits say Z and we say Z here in America. Peter Chair of Academy. Pete, thank you, sir. Appreciate it. I'm not sure that the people over at Apollo, KKR, Blackstone will want their businesses reduced to the fate of, say, First Brands and the likes of Tricolor. But ultimately, that's the situation, the way they've been traded over the last few weeks.
People are worried, and they are worried that it's been untested through a credit cycle. And you raised a point that this 10-year cycle is more than one political cycle in terms of building out some of these resources. It also potentially is more than one credit cycle. And a lot of what's going to finance this is not the politics, it's the credit. And I wonder how much of that credit's coming from some of these private asset managers. So these are connected stories in a very deep way.
There's a better mood this morning. Stocks are higher by 1.3% on the S&P 500 with an update on stories worldwide. With your Bloomberg brief, here's Yahara Anand. Hey, Yahara.
Hi, John. President Donald Trump speaking at Israel's Knesset soon, following the release of all 20 living Israeli hostages from Gaza. You can see live pictures there of that. Under the terms of the ceasefire agreement, Israel will free almost 2,000 Palestinian prisoners and has pulled back troops from most populated areas in Gaza and agreed to allow more aid into the territory. Meanwhile, the Trump administration is signaling it's open to doing a deal with China days after announcing new 100% tariffs effective November 1st. The relationship between the two countries soured last week when China announced new export controls on rare earths. President Trump posted on social media, quote, "Don't worry about China. It will all be fine." And as you guys mentioned at the top of the show, JP Morgan announced a plan to invest $1.5 trillion in U.S. security industries over the next 10 years. The campaign will ramp up the amount of capital, resources, and personnel that the bank already dedicates to a variety of sectors, such as rare earth minerals, pharmaceutical precursors, plus ventures developing defense, aerospace, and energy technologies. That's Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara later this hour. Up next on the program, attempting to de-escalate.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set.
That conversation up next with John Lieber of Eurasia Group, live from New York City this morning. Good morning.
Geopolitics.
Bank earnings season almost upon us. Your week ahead looks like this. Tons through Tuesday and Wednesday. Tuesday, JP Morgan, Goldman, Citi, Wells. Wednesday, Bank of America and Morgan Stanley. Into this, a market is bouncing back. Equity futures on the S&P 500 higher following the biggest one-day loss since April on Friday. Equity futures this morning higher by 1.3% on the S&P. On the Nasdaq, up by 1.8%. Max Kettner of HSBC, the big bull, just publishing moments ago. We think renewed tariff woes create another buying opportunity.
And other people seem to agree, as you can see from the market reaction. And clearly that's been the tone that we've heard in a lot of different notes, because guess what? Everyone thinks that there's going to be a resolution. Everyone thinks that ultimately this will go back to the same place that it was before, which is money printer going to go,
It's the top story for markets worldwide. Not that, but trade. Under surveillance this morning, attempting to de-escalate.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened. And I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us.
So here's the latest this morning. The Trump administration signaling openness to a deal. President Trump saying President Xi just had a bad moment, threatening export curbs on rare earths. Bloomberg's Tyler Kendall joins us now for more. Good morning, Tyler.
Hey, John. Good morning. President Trump hinting here that there is an off-ramp, going on to tell reporters aboard Air Force One that November 1st, that effective date for a higher tariff rate, is an eternity away, in his words, signaling that there is this openness for a deal. Though worth mentioning that the White House maintains that that threat of an additional 100% levy on Chinese goods does remain on the table. Now, we did get a statement from China's Commerce Ministry yesterday, which said it is prepared to retaliate, of course, escalating that threat of a potential tit-for-tat trade war here, but went on to say that the threat of additional tariffs isn't the way to deal with Beijing. Of course, tensions flared last week when we saw China move to unveil these new export curbs on critical and rare earth minerals. And as you've been discussing, they really do have a grip on the global supply chain. They accounted for about 70% of global rare earth supply last year alone. Now, President Trump himself has also said that there could be some export controls when it comes to U.S. software exports, as well as threatened to halt certain aircraft parts supplies. But I would say at the moment, the most immediate impact seems to be that it is throwing that planned meeting between President Trump and Chinese President Xi Jinping potentially into flux. They're set to meet at the end of this month on the sidelines of the APEC summit in South Korea. And John, of course, critical and rare earth minerals are supposed to be at the top of that agenda list for the two leaders to discuss. But I will also point out that the White House has repeatedly said that soybeans will also be at the top of that list. And I bring it up because new data out this morning says that China's imports of soybeans reached a record high last month, but that did not include any U.S. supplies.
That right there is a sore point, that's for sure. Tyler, thank you. Tyler Kendall down in Washington, D.C. With us for more, John Lieber of Eurasia Group. John, welcome to the programme, sir. Welcome back, as always. John, do you see this as positioning to negotiate or actually setting policy?
The Americans and the Chinese set a policy that each other didn't like, and you got a round of retaliation from both, and now they'll back off. And I think Trump's messaging this weekend was pretty clear that he does not want to see this spiral out of control. He says these very nice things about Xi Jinping because he wants to meet with him. And what we see is that both sides, the leaders, are really committed to this path of de-escalation and this path of getting together at this APEC meeting, which, as Trump said, November 1 is an eternity from now in Trump time. And what's going to happen is they'll negotiate their way to calm down and make that meeting happen. And we think the path here is going to be de-escalatory going forward.
What can we say out of this meeting then? Who holds the leverage going in?
Yeah, it's interesting. I think genuinely both sides seem to think they hold the leverage. The Chinese clearly have figured out this choke point that can really hurt the American military by denying them access to certain types of rare earth exports. And you see how sensitive that choke point is with the over-the-top response from President Trump on Friday, threatening 100% tariff, threatening cut off airplane parts, and threatening to figure out other things they can do we don't even know about yet. So I think the Chinese have definitely hit a nerve here. And when it comes to the rare earths, clearly have the leverage to hurt the Americans, and also, frankly, seem a little bit more prepared to weather the storm of a long trade war. We have to remember, of course, that Trump the original taco trade was Trump backing off of the Liberation Day China tariffs. And, I think that does suggest the U.S. can only withstand so much pain here. So I would say the Chinese have the advantage, but the Trump administration can can punch back pretty hard.
Is it really taco? I was reminded over the weekend what Ethan Harris said in the summer, which is Trump always tries again. We do have higher tariff levels, much higher than we had a year ago. Is this him just trying again on trying to get a better deal with China?
Well, I mean, you kind of have to hand it to Trump. He did sneakily slide in this massive, 5 or 6x increase in the average effective tariff rate for the United States, and the S&P is at all-time highs. So he has done what he said he was going to do by increasing tariff rates to around 15%. But he's clearly not willing to do the things that will cause the most pain to the U.S. economy. And in that sense, I think the Chinese know that they have a bit more leverage because he tends to respond with these threats that are a little bit outsized relative to what he's actually able to deliver on.
So this is interesting, John, because we had Peter Scheer on earlier saying this time is different, and it feels different because it's initiated by China, and you have the capital markets increasingly moving towards supporting this idea of a greater degree of domestic reliance on rare earths minerals. Are you saying that we're not there yet, and that essentially it can't be that different, and there has to be the heat taken down because right now the U.S. economy can't keep going without the products from China?
Well, it's not, the U.S. economy is affected. Yes, absolutely. I think over time, what you're going to see is companies innovate their way around this choke point the Chinese have discovered around rare earths so that they aren't reliant on China for them. But the real sensitive piece for the United States is how incredibly dependent their military supply chain is on these Chinese rare earths. And that is the important factor for Donald Trump and why he cannot tolerate the list of restrictions that the Chinese put out last week. Now, I think it's important to put the Chinese restrictions in context here. The U.S. just 2 weeks ago expanded their own export controls to affect a wide range of new Chinese companies that are now not allowed to get access to certain U.S. technologies. The Chinese, in our view, thought they were just retaliating proportionally to that. The Americans saw the Chinese retaliation as an escalation, and that's why we are where we are today. But it's the military that's the sensitive issue, not the U.S. economy when it comes to these rare earths.
As President Trump deals with a lot of international issues, I'm just wondering how it complicates the issue that the U.S. government is closed, that it's shuttered, and that there still isn't necessarily a sense or a path for how it can get reopened.
Yeah, good question. And I think one of the fascinating things here is how it seems to make no difference whatsoever that the U.S. is closed down. They did release their latest rounds of export controls. The U.S. did right before the shutdown began. So maybe you think that was because they were hurrying to get out the door. I don't know. I don't really think that complicates the fixing this issue that much, though. There's been an enormous, majority of federal workers right now are still on the job because they've been deemed essential. And there's just been, the Trump administration is taking very broad discretion in what people can do. The workers just can't get paid for it, but that's a problem if you're a federal worker, not if you're trying to enact policy.
John, I appreciate your time. As always, thank you, sir. John Lever there of your Asia Group. Friday was a very interesting stress test for this market and very different to the price action we saw back in April. If you think about what happened with the bond market, I know the bond market shut today for Columbus Day. Happy Columbus Day, particularly to the Italian community here in New York, which often celebrates that, including yourself, Anne-Marie. And I guess me too included. I'm on a little bit of a tangent here, forgive me. But the fact that the bond market rallied on Friday compared to what happened in April was a bit of a tell.
And it was the greatest rally that we've seen going back to August 1st when we got that payrolls report. So it gives you a sense of people looking more to a support, frankly, for the bond market rather than some sort of sell-off.
Equity futures this morning higher by 1.3%. Up next, the former senior U.S. intelligence official Norman Rule as the Israel-Hamas peace deal begins.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Happy birthday to the bull market. A 3-year run. Anniversary was yesterday, October 12th, 2022. We've had an 80% plus move on the S&P 500 over that period, and we bounced back this morning. The rally resumes, up by 1.3% on the S&P. On the Nasdaq 100, up by 1.9. What a move, erasing some of Friday's losses. Thank you to Jessica Menton over in Bloomberg News for breaking down some of the numbers. $28 trillion in value added to this index over the past 3 years. Nvidia up by 1,500% over that period.
If you can remember, it goes back to when OpenAI was launched, the idea of ChatGPT, and suddenly it revolutionized the idea of exactly what artificial intelligence could do to the workforce. And suddenly you have seen those names absolutely skyrocket and continue with the gains. Yesterday, or on Friday, I should say, those were the ones that led things down. Those are the ones that are leading things up today as everyone tries to buy the dip.
Nvidia up by 3.4%. More on that story a little bit later as we count you down to the opening bell, 3 hours away. With your morning movers, let's cross back over to Yahira. Hey, Yahira.
Hi, John. We are seeing shares of U.S. rare earth miners climbing. MP Materials up 10.7%. USA Rare Earths also up after President Trump, of course, threatened a new 100% tariff on China, fueling trade tensions. It comes just as China tightened its grip on its critical minerals. So these domestic rare earth miners are rising on the idea that they'll benefit if China-U.S. trade tensions continue to escalate. And moving on to NVIDIA and AMD, also rebounding this morning. AMD up nearly 4%, NVIDIA up 3% after NVIDIA fell 5% on Friday, also related to President Trump's tariff threats. And these semiconductors, of course, are caught right in the middle of this trade spat. And amid the risk-off mood on Friday, most major cryptocurrencies, including Bitcoin, fell. That made stocks like Robinhood fall on Friday as well. But we are seeing a rebound now in the pre-market of 3.7%. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. On our radar this morning, President Donald Trump softening his stance in the US-China trade standoff after threatening a 100% tariff on imports. The president posting on Truth Social, "Don't worry about China. It will all be fine." Elsewhere, Vice President J.D. Vance warning that painful job cuts are coming if the government shutdown is not resolved. Vance telling Fox News the longer the standoff continues, the deeper the cuts will be. And finally, all remaining living Israeli hostages have been freed from Gaza under a US-brokered peace deal. The ceasefire, including a swap for nearly 2,000 jailed Palestinians. President Trump is in Israel and is set to address Parliament over the last 30 minutes or so.
Absolutely historic moment. And the president, when he addresses the Knesset, is going to say, this is the historic dawn of a new Middle East. Not only do we have the remaining living hostages back in Israel, you do have hundreds of Palestinians from the West Bank now also being released. On top of that, he's going to go on to an unprecedented peace summit in Egypt. And that is really going to cement potentially what the next phase of this ceasefire, this agreement, could mean.
Let's head over to Jerusalem and catch up with Bloomberg's Ollie Krug. Ollie, the Israeli leader speaking right now in the Knesset, the president, Donald Trump, about to speak in just a moment. Just frame this moment for us, how important it is for the people of the region and ultimately also for the leadership of these two individuals.
Yeah, Jonathan, it's hard to actually put into words the sort of significance of this moment for the Israeli people who, since the beginning of the war on October 7th, more than 2 years so now, have been awaiting the return of the hostages who, as of this moment, are no longer in Hamas custody, which really, no matter what happens next for the Israelis, is the end of one of the most bitter parts of what has been one of the darkest chapters, really, in Israeli history, certainly in modern Israeli history. And I think it's summarized in some ways in some of what we heard from the Speaker of the Knesset speaking a little bit earlier, introducing President Trump. The thank yous all around from Trump, from the team. We were hearing chants, Trump, Trump, Trump throughout the parliament. But he's saying that basically the American president, Donald Trump, is not going to be remembered just as an American president, but as a giant of Jewish history and will be remembered 1,000 years from now. So that is sort of the emotion and sort of the sentiment that is being felt by the Israelis. I mean, Donald Trump is easily the most popular person in Israel right now. That is evidenced even before you land in Israel. When I arrived a couple days ago, looking out the window of the plane, you see a skyscraper, Israeli flag, American flag, underneath thank you. You get on the road to drive from Tel Aviv to Jerusalem. These are roads that are lined with Israeli flags. Every third flag as of Friday night is an American flag, and that is very much the sentiment among the Israelis here. Within the parliament, of course, Benjamin Netanyahu got a massive applause as well. But the sort of legacy for Benjamin Netanyahu and the broader picture for Benjamin Netanyahu is much more complicated. He, yes, has gotten a boost in popularity, having managed to sort of broker this deal alongside Donald Trump. But you saw it from Steve Witkoff speaking in Hostage Square a couple of days ago before literally hundreds of thousands of people. Every time Trump's name came up, chants of cheering for Trump, Trump, Trump. Benjamin Netanyahu name came up, it was booing across the board. Now, we should say that is a specific subset of the Israeli population, but that is sort of broadly speaking what these two leaders are looking at today as we wait to hear from the President of the United States speaking before the Knesset, the first American president to do so since 2008 under George W. Bush.
Ollie, thank you. Stay close, of course. Ollie Crook there in Jerusalem. Building on this historic story, Norman Rule, the former senior US intelligence official, writing the following: the Middle East continues to pose many challenges, but the president's approach reshuffled the strategic deck, offering opportunities and leaving the US the undisputed major power in the region. Norm joins us now for more. Norm, Witkoff, Kushner, the President of the United States. Norm, what made a difference here?
Well, we've got a president who spent the first 10 months of his administration developing a new policy for the Middle East, a policy that focused on constraining Iran's nuclear program, Iran's proxies, providing Israel with unalloyed support, but also building very strong relations with a variety of Arab partners, resetting relations with Saudi Arabia, the United Arab Emirates, but also maintaining strong relations with Qatar and ensuring strong relations with Turkey and Egypt. And together, this provided an architecture that enabled the Trump administration to speak with pretty much everyone that needed to be brought to the table, but also to provide pressure on all of those parties through those channels. And then he used unorthodox approaches, Mr. Witkoff and Mr. Kushner. And I have dealt with Mr. Kushner in the past, and he's a very sober and hardworking individual. And we've seen extraordinary results. We should not understate the tectonic nature of this moment.
Norm, was it the strategy behind this Trump team that really changed it? We spoke to Amos Hochstein on Friday, who was an individual that worked under Biden, and said this deal was on the table in January. What's changed in the 9 months?
Well, aspects of this deal were always going to be on the table. I mean, the idea that there would be a prisoner exchange, of a release of Palestinian prisoners, the release of hostages, that there would be some sort of a disarmament of Hamas, that was going to be true no matter what administration was going to be in power. But the idea that you would bring pressure upon the parties to make this happen, I don't think that was going to be achievable in the Biden administration because of the nature of their relationship with the players in the region. And the Trump administration had a very different approach, and that approach made this happen. So we should be clear, the Biden administration's approach to the region was unlikely to achieve this result. And the Trump administration did this in 10 months.
Norm, when it comes to what comes next, there's going to be this unprecedented peace conference in Egypt. What do you expect that will come of that? Will we get more information on what phase 2 looks like when it comes to Gaza?
This is an extraordinary conference. In and of itself, this is unusual. 20 nations. The president of Indonesia is showing up. You've got 20 nations dealing with Mahmoud Abbas, who has not been to Israel in some time. You've got the Prime Minister of Egypt, who has been invited and may show up nonetheless at the end of this important holiday. If that happens, that would be the first time he has been in Egypt in quite a while. If the Israeli Prime Minister attends, that would be the first time he would be meeting with some of these countries. And remember, there are countries attending this that do not have relations with with Israel. And this would be the Israeli prime minister attending with President Mahmoud Abbas, someone he has refused to recognize. So this would be an opportunity for Netanyahu and Abbas to, in essence, set the stage for that second effort, that second phase. Also for these countries to identify what support they're going to provide, and for the president to pull them together and start that process. And it is critical that this security, that this aid be put in place to provide the Palestinian people with the humanitarian and security architecture they need to restore their lives.
Norman, just to that point, you were talking about whether Bibi Netanyahu, the prime minister of Israel, will be going. His office said this morning, he thanked President Trump for the invitation, but said he won't be able to attend due to the beginning of the Jewish holiday this evening. So we'll see whether he eventually makes it there. But right now, it doesn't seem like it's the case. And I'm just wondering, if you parse this out, is this coalescing of powers in the region going to be helpful to bringing Israel back into the international fold? Or is Israel still the odd man out? Is it going to take a lot for them to regain some of their previous reputation?
Well, again, we'll see how long the conference lasts. And if at the end of the holidays the prime minister is able to attend, we need to see what the prime minister's politics are like if the hard right becomes a problem, which prevents him from participating as well, because he would be meeting with Abbas. He would have to make some concessions. He has stated no Palestinian Authority in the West Bank, so that's or in Gaza. That's going to be a problem. But we've got a situation where the Israelis are now not going to be responsible for security or some of the reconstitution of governance in Gaza. The Palestinians will be doing this. Will Hamas be responsible for the problems of Gaza or the Palestinian Authority? Or it's no longer Israel's responsibility. It's now a Palestinian issue and an international issue. So in essence, the blame shifts from it's an Israeli problem to an international problem. But again, we must get humanitarian aid, security aid, and rebuild the lives of the Palestinian people. So I think before we get to that political problem, this is a humanitarian and a security issue, and that's where the emphasis will remain at this point.
Norm, I wonder if there's a broader conclusion also, because we used to see that the alliance between Western nations used to be the United States, Europe, and a couple of others, maybe Japan. Now it seems to be really shifting to the Middle East. How much has this deal and the U.S.'s relationship with Saudi Arabia in particular really solidified that idea?
Well, you've seen several things. So first of all, this wouldn't have happened had the United States not worked with Egypt, Qatar, and even Turkey. Certainly that's true. However, there have been months of intensive diplomatic conversations with Saudi Arabia and the United Arab Emirates, and Saudi Arabia working with France and other countries that in essence created an architecture that also made this happen outside of the United States itself. And that Saudi, Emirati, and diplomatic pressure was itself a dynamic that cannot be ignored. So these capitals, these rising powers are something that need to be recognized and worked with. And the Trump administration, to its credit, did exactly that over the last 10 months, and we're seeing the results. So ranging from the chip deals that the Trump administration is putting together, the energy discussions, and now we're seeing this in the Middle East. It's a very interesting and dynamic approach.
Norman, appreciate your perspective on quite an important moment in that region. Norman Rule there of CSIS, and what could be a crowning moment for the president's leadership for years still to come. And we hope this is an enduring peace in that region. I imagine there's still doubts. The president is about to address the Israeli parliament. The White House pre-released some of the remarks he will make. The Holy Land is now finally at peace. A beautiful, brighter future appears suddenly within reach.
Absolutely. The president is talking about a new dawn in the Middle East. Almost echoes what he said as well in Riyadh, but this is just him in this crowning moment. And it really is, even though there's so many question marks about what comes next when it comes to the different phases of this peace plan, the fact that the living hostages are home, the fact that the remains of those that died in captivity are coming back to Israel, you have hundreds of Palestinian prisoners leaving the West Bank, and the president is going to sit down with Arab leaders in Egypt to talk about what's going to happen with Gaza, and potentially, to Norm's point, potentially Bibi Netanyahu will show up at the end of this holiday. This is unprecedented, and it's historic for the region.
We'll be tracking these events as they play out over the next few days, of course, right here on Bloomberg TV and on Bloomberg Radio. Historic week, potentially. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. French President Emmanuel Macron announced a new cabinet as pressure mounts for the government to pass a budget. On Friday, Macron reappointed Prime Minister Sébastien Lecornu just days after he had resigned. Macron's weakened majority and a widening budget gap are fueling investor concerns, with French bond spreads now at multi-year highs. Meanwhile, the Pentagon is looking to buy as much as $1 billion of critical minerals. The Financial Times reporting the purchase increase follows China's Ministry of Commerce putting new export controls on rare earths and other materials for defense and technology manufacturing. The Pentagon's Defense Logistics Agency stockpiles were valued at $1.3 billion as of 2023. And Warner Brothers Discovery has rejected Paramount Skydance's initial takeover offer. Sources telling us here at Bloomberg, Warner thought the offer of around $20 a share was too low. Warner CEO David Zaslav is said to believe the company's streaming and studios arm will command a premium next year once it splits from its cable assets. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, US dollar dominance in question.
The dollar's role as the key financial currency in the world has really changed in the last 12 months. And so I think this is just a cyclical adjustment after something like a 10-year dollar rally.
Up next, we'll catch up with Sonia Martin of DZ Bank, live from New York City. You're watching Bloomberg TV.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups come into the market to seek for new funding.
The best thing is to feel it and see it.
Stocks are bouncing back. We're up by 1.2% on the S&P 500, on the Nasdaq 100, up by 1.8%. Blackout period for the Federal Reserve begins this weekend. That's come about so quickly. That Fed meeting 2 weeks away. Chairman Powell speaks tomorrow. Ton of Fed governors as well get the final word in before things go quiet.
I'm laughing because they get the final word in without data. So ultimately, how good is that word if they're data dependent? It really creates this sort of chicken and egg. How much do we listen to it? How much does it matter? What are they actually looking at? I don't know. Is it a quiet period for them, or is it a quiet period for all of us without the data that we're getting from the government?
I thought there was some tension in the Fed minutes.
Yes.
A lot of them assume they're going to cut rates again, but the majority also believe that risk to inflation are skewed to the upside. Make that work.
No, I can't. Sorry. I mean, that's essentially what we're dealing with. And how much is this non-voting members that are sort of the quiet dissenters on the sideline, and the voting members that actually are pushing the mainstream, saying we need to cut again?
We were supposed to get US CPI later this week. Of course, that's delayed because of the government shutdown. October 24th is the new date on the calendar for that data point. Under surveillance this morning, US dollar dominance in question.
The dollar's role as the key financial currency in the world has really changed in the last 12 months. I think that what we're seeing is primarily a cyclical development and not this big structural, like the whole world is boycotting the dollar or something like that. And I think that the dollar's decline, it's still overvalued against most of the G10 currencies. And so I think this is just a cyclical adjustment after something like a 10-year dollar rally.
So here's the latest this morning. US dollar facing fresh volatility as US-China trade tensions ramp up. Sonia Martin of DZ Bank writing, while it is certainly easy to take a negative stance on the US dollar, given the situation in the US, many investors continue to invest capital right here in the United States. Sonia joins us now for more. Sonia, let's just compare and contrast the price action of April to the price action of, say, Friday, and the price action of more recent days. Sonia, back in April, we were worried about the loss of exceptionalism. Are we sitting here now looking to close out October, thinking about the lack of alternatives?
Yes, absolutely. I mean, as we said before, I mean, in April, we had this huge move in the treasury market, in the dollar. A lot of people were very concerned about the future of the dollar. As just mentioned in the program earlier, there was a lot of discussion, and we had some discussions, I remember, about the possibility that there might be a broader loss of confidence in the U.S. currency, in the U.S. equity market, in the U.S. market in general. And I think that really drove the story for a while in the spring and early summer. And, now we see the reaction on Friday. The dollar was very muted. Treasury yields went down. And I think what we've seen is a growing realization that for many investors, there aren't that many alternatives to the U.S. market. And as we see in the data, the demand for dollar asset has remained really high throughout the end of July. So that already includes, 6 months of Donald Trump as president.
Euro dollar, we were building up some big longs in a single currency, Sonia. Euro dollar's broken back down to 115.86. Do you believe we still need to let some air out of that particular trade?
Well, yes, I do. I will say, though, that to a certain extent, we are flying blind right now because we have no fresh data from the IMM on speculative market positioning. That's one of the data points we are not getting as a result of the shutdown. On the 23rd of September, the outstanding amount of Euro-dollar longs was still massive, over 100,000 contracts. We don't know how many of these have been unwound, but I'd be surprised if all of these were already out of the market. And I think particularly with a view to France, there is certainly some additional downside risks into Euro-dollar in the very short term.
So do you say that right now is a good time to get dollar long?
Well, I think definitely if you're looking at a very, very short-term view, that might be the case. But ultimately, I think as a medium or longer-term investor, levels below 116 are certainly attractive as a buying opportunity for Euro-dollar.
I just wonder how difficult it is to really use past models for this market. I'm looking, for example, at the dollar, and yes, it has seen a bit of strengthening over the past couple of weeks, but you look at gold, it's reaching a new all-time high. You look at silver, reaching an all-new time high. This idea that this is a market that is increasingly based on real assets and not the financialization of the idea that a lot of people have bought into over the past couple of decades. Is there something fundamentally different this time around when it comes to valuing currency markets?
I definitely agree with that. I think we have been in that situation for some time. You think about, COVID, the war in the Ukraine, the inflation push we had. I mean, all of that has fundamentally changed the way things work. I mean, for people like us who've been in this market for a long time, and we've had to rethink and relearn many things. And I think certainly when you talk about model-based approaches, I would argue that most of these simply do not work anymore. And we have to think with a much more open mind, and we have to think as well much more in scenarios, because things keep happening, particularly this year, that we would not have thought possible, not only in the US, but particularly obviously in the US. And, we've just seen a renewed escalation of the trade war between the US and China. And, it's very difficult to predict exactly what's going to happen. Is it going to be TACO, or is it going to be, I heard this morning on your program that Trump tries again or something like that. So we'll have to see how that plays out. But basically, model-based approaches don't really work in that environment anymore.
Tata, Sonia. Trump always tries again.
That's what it was.
So when it comes to that, and you have this potential escalation of the trade war brewing, do you think that's dollar positive? Investors just want to go to the haven?
Well, I think, so that obviously depends on what happens elsewhere in the world. I mean, when Trump became president and we thought about what would happen if Trump started raising higher tariffs, and to be honest, we didn't expect that to happen as early and aggressively as it did. The thinking was that this could actually be dollar positive because these tariffs would have a considerable negative impact, not only in the US, but also, of course, on other economies, and that this would ultimately allow the dollar to gain some ground. Now, I think that idea has largely been dismissed in recent months, but it's still somewhere there. So it always depends on what happens to the other side. I mean, when you look at Europe, for example, we have a trade deal. We'll see how long it lasts or when it will be changed. But the fact of the matter is that this trade deal has a negative impact on growth in the Eurozone, and therefore it may be dollar positive in some ways, but it certainly is euro negative in other ways. So I think that's something that we have to always think about this from both sides of the equation. There isn't a straightforward answer to that question.
Dollar stronger so far this morning. Sonia, thanks for jumping on. Sonia Martin there of DZ Bank. Sonia was talking about flying blind. It's interesting that at the end of this month when the Fed gets together, we might have CPI, might not have payrolls, at a time when the Fed is putting emphasis on one and not the other. And the one that they're not putting emphasis on is the one we might have. And it could be uncomfortable. It could have a 3 handle. That makes things difficult for this Fed, I think.
Or does it allow them to say, well, actually, it's probably a negative payrolls report that we would have gotten, which is what we heard from Chris Waller. So we have to look past this and trust that this is simply a transitory type of inflationary push. But you are absolutely right. It is really an odd kind of confluence of events.
Working up to that Fed meeting about 2 weeks away. Coming up next, we'll catch up with Lori Calvasina of RBC, Henrietta Trace of Vader Partners. We'll speak to the former senior White House trade official, Kellyanne Shaw, and Ian Harnett of Absolute Strategy from New York City. The second hour of Bloomberg Surveillance is just around the corner.
In the absence of data, people seem to be perfectly happy.
We're definitely dealing with less information, but we're not flying blind.
The earnings reports are real. That's our data.
The Fed is likely to cut. The economy is likely to grow.
I think they would err on the side of caution.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. Good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. In the absence of data, you put even more emphasis on the earnings. It's a big week for bank earnings. Check out the calendar. JP Morgan, Goldman, Bank of America, Citi, Wells Fargo, all reporting Tuesday through Wednesday. You'll hear from Chairman Powell as well. There's a lot still to play for. Equity futures bouncing back already this Monday morning from Friday's losses. Futures up by 1.3% on the S&P, on the Nasdaq up by 1.8% as the president dials down the volume, takes down the temperature with China over the weekend.
And it's frankly what a lot of people were almost hoping for and expecting, and that is the reason why you see the buy the dip mentality come back, and you do see that from Max Kettner as well. Even Mike Wilson, who talks about the potential for 11% drawdown in the S&P 500 should the tensions continue, said that the expectation is for that all to be bought back with a positive kind of tilt, because likely there will be some sort of resolution. So what if this time is different? That, I think, is quite a different scenario that this market has yet to grapple with.
Monday morning, the mood music is different. I've got all of that, but the direction of travel, the lyrics are still the same. Check out MP Materials right now in the pre-market, 10% move. Look at the reporting from the Financial Times in the last 24 hours. The Pentagon, stockpiling, critical rare earth minerals. That's going to be the big effort over at the Defense Department. And then JP Morgan coming out this morning, right on time. Jamie Dimon promising to help finance this massive effort to improve national security.
It feels like a whole of government, a whole of industry approach across the United States when it comes to the fact that the U.S. needs to fortify and shore up the access, the raw materials when it comes to rare earths, because China owns the entire supply chain, from owning them, refining them, processing them, and selling them. And it's not just about AI technology, which we talk a lot about this program because that's what it means for the stock market. It is about our national defense and the fact that there are pounds of these rare materials in almost every single one of U.S. weaponry.
You can say what you want on social media, on Air Force One. The Chinese can say whatever they want at the end of this month, the start of November, when these two leaders meet. Ultimately, the effort will not change. There needs to be an increase of domestic production on several fronts. JP Morgan wants to finance it. We know where this is going.
And this is the reason why it's sort of an interesting moment. Do both sides have the incentive to de-escalate, right? Who is willing to take more pain to decouple more suddenly versus gradually over a certain time period, which seemed to be the initial effort, right? Let's take a while to actually get access so that we can wean ourselves off them and then create our own. And that, as we were talking about earlier, is part of what China's responding to, saying, just hold on a second. We can tolerate the pain. We don't want your chips. And guess what? We'll develop them in short order.
Stocks are up by 1.2% on the S&P, just eating into some of the losses from Friday's session. A broad-based rally on the S&P 500, on the Nasdaq too. Coming up this hour, Lori Calvasina of RBC Capital Markets looking ahead to earnings. Henrietta Trace of Vader Partners as the US government shutdown enters its third week. And Ian Harnett of Absolute Strategy warning the AI capex endgame is approaching. We begin this hour with stocks rebounding following their biggest one-day drop since April. Laurie Cavacina of RBC writing the following. If the strong sentiment around earnings that was seen in the last reporting season can't be maintained, we think it will be difficult for the major indices to avoid a period of digestion. Laurie joins us now for more. Laurie, welcome back. I give you a ton of credit because I think you've been so consistent for so long on this point. Don't completely ignore the trade story. At some point, it's coming back and it will bite. How are you thinking about that going into earnings season?
Well, thanks, John. Thanks for having me as always. And look, it's interesting, John. I've been, kind of all over the last couple of weeks, London, running around the U.S. to a whole bunch of different cities and states. And the one thing that I was not hearing from investors that they were worried about was a re-escalation of China trade issues. And I think that's really interesting that is what really finally gave this market a bit of a scare on Friday. It really proved, one, that this was not on the radar of investors, and two, that tariffs do still have this, sort of power, and maybe there's been a bit of complacency on those trade issues. I think as we go into earnings, frankly, this has been an earnings-driven market. We haven't seen any multiple expansion in the S&P 500, the NASDAQ 100, or even the top 10 names in the S&P 500 since August. That's not to be, that's something to be expected, frankly, when inflation is moving up. And so I think this market is really going to get its mojo going forward from earnings. And unfortunately, to me, it just feels like we're in the middle of a little bit of a fade right now.
So, Laurie, let's talk about the earnings and what we've heard so far. We've had a massive step down in payrolls growth, got that. But ultimately, this is the Delta Airlines economy. Half the country thinks they're Group 1. Now, Laurie, when you have a situation like that, do you just assume the earnings hold up?
So I think what's been holding up the earnings, right, I do think that to some extent it's been these higher income consumers, if you look at some of the consumer companies or companies like the airlines. But I think also we've seen big tech propping up this market from an earnings perspective, those mega cap names. And frankly, when we look at the rate of upward revisions, a good barometer for earnings sentiment across different indexes and sectors, it's been the top 10 names in the S&P 500 that are holding up well. And it's been the tech sector itself, to a lesser degree, financials and healthcare. But really, we've already started to see weakness emerge in some of those tariff-related sectors, the consumer-related sectors. And as we think right now, I do think that what benefits these bigger cap names in the S&P, that can keep earnings afloat. But frankly, we do wonder if we're starting to get to peak levels of sentiment there as well.
Laurie, I do wonder if there is something structural underway. I mean, we were talking with Peter Scheer earlier of Academy Securities, and he was saying this is actually opening up opportunities to invest longer term in parts of the economy that will benefit from a decoupling between China and the U.S. I mean, moving past this moment and the idea of the volatility, do you agree that things like the Russell 2000 potentially could see upside if there is more of a push to increase the domestic supply chain? If some of these other companies as well stand to benefit from the likes of J.P. Morgan, from the likes of Apollo, making bigger investments?
So I think it goes back, when you're talking about small caps specifically, Lisa, I think it goes back to what's your view of the economy. And I would differentiate between upside and outperformance, because this has been a big debate on Wall Street over the last couple of months, frankly, where we've had a lot of people coming out and saying, you want to buy the Russell 2000. That's really been more about rate cuts than anything else. I think that catalyst has passed for now. But what we've told people is that if you're looking for the start of a bigger, longer term outperformance cycle in the Russell 2000, i.e. leading versus NASDAQ, leading versus the S&P, not just going up, that you really need to get a hot economy or a broken economy in your mindset. So what do I mean by that? Typically, you want to buy small caps when you break the economy, you own them for the springboard coming out, or you need an economy that's more like a 3% economy than a 1 to 2% economy. You want ISM manufacturing moving up. You want jobs growth reaccelerating. If you can get there on that macro data for that kind of ramp up, that really, really hot backdrop, then sure, go ahead and buy small caps. But that's not what I'm hearing from the economics community at large right now, or our in-house team. So we've been a little bit cooler there.
Based on what you hear from companies so far, and I realize that earnings season really officially kicks off tomorrow with the likes of J.P. Morgan and Goldman Sachs reporting earnings, I'm just wondering, how resilient do you think that corporate America is to some additional ratcheting up of trade tensions, particularly between the U.S. and China, even if it does cool in the near term, that this is going to be an ongoing story about the ramping up, ramping down, but continually toward the same destination?
Well, look, I think if we go back to the beginning of the year when tariffs were being discussed as a policy initiative, we heard a lot about short-term pain for long-term gain. And I think that somewhere over the summer, equity investors just forgot about the idea that there might be some short-term pain involved. So if you look at, kind of the question of resiliency, I think that corporate America is doing a fantastic job. That being said, I don't think that they are able to completely get out of this without some bumps and bruises. And frankly, Lisa, we saw some of those bumps and bruises in the last reporting season. If you looked at the industrial sector, for example, and this was the one that really got creamed during the first trade war of 2018, it's held up better this time around, but it's an extraordinarily expensive sector. And when we were seeing companies that were coming out and beating, we weren't getting the big pops that you would normally expect to see. If you look at margin expectations using consensus data for both 2Q and 3Q, which is more of a forward look, we saw between June and Labor Day, we basically saw all the tariff-related sectors take a hit, have those margin expectations trimmed. We saw it for the healthcare sector, we saw it materials, we saw it for industrials, and we also saw it in 3Q for consumer discretionary. The reason nobody noticed is that S&P 500 margin expectations stayed flat, and that was because the tech sector went up in both time periods. So I think that you've already started to see some of those bumps and bruises emerge. Nobody noticed, though, because the tech sector was making everything look good at the broader index level.
Laura, you mentioned trade during Trump's first administration. How are clients viewing the Chinese negotiations this time around?
It's a great question, Anne-Marie. And, it's funny. I mean, there were two things that we didn't really talk about over the last 3 weeks in my investor meetings. One was the government shutdown, and one was the trade relationship with China. We talked about AI. We talked about valuation. We talked about labor market weakness. We talked about how CapEx isn't coming through in the way people thought over the summer. And so I think that, to be honest, people thought that we were on the upswing and really had discounted the idea that we might be taking some steps back. I think the policy experts, in the financial community and down in D.C., I suspect that many of them were not surprised by this, but I do think equity investors, it just wasn't on their radar.
Laurie, appreciate you jumping on this morning and breaking it down. Looking forward to earnings season. Laurie Calvasina of RBC. A lot of people had moved on, and then it came back to bite on Friday, and we'll see if that's just a scare or something more enduring. We're hearing from the Treasury Secretary, Scott Bessent, speaking to the American press earlier on this morning. We won't let China export restrictions go on. This is China versus the rest of the world. We expect support from Europe and India to take on China on this issue.
It sounds like he's amping up the rhetoric, especially when you have a headline saying this is China versus the rest of the world, and we're not going to let Chinese restrictions go on. But at the same time, he's saying that he's optimistic that they can de-escalate, and he wants to meet with his counterpart. So this is, once again, the Trump administration having really a lot of scope in terms of how they want to negotiate with China. At the same time, I think as a Treasury Secretary speaking directly to the financial markets, saying we are still going to have this dialogue. I'm still going to meet my counterpart.
Equity futures pulling back just a little bit, positive now by about 1% on the S&P 500. With an update on stories worldwide, let's get to your Bloomberg brief. We can catch up with Lizzie Burden with more. Hey, Lizzie.
Hey, John. President Donald Trump is speaking in the Israeli Knesset following the release of all 20 living Israeli hostages from Gaza. Under the terms of the deal, once all the hostages are freed, Israel will free almost 2,000 Palestinian prisoners and allow more aid into the Gaza Strip. Elsewhere, silver hit its highest level in decades as a short squeeze in London intensified. Concerns over the lack of liquidity here in London drove silver near $52.50 an ounce, a level not seen since 1980. Investor demand spreading to other precious metals, with gold surpassing $4,070 an ounce and platinum also surging. And Xiaomi shares fell the most since April after reports that one of its SU7 electric sedan's doors failed to open after a fiery crash in the southwest Chinese city of Chengdu, trapping at least one person inside. The crash added additional scrutiny to the safety of electronically operated car door handles. And that should be my brief. John?
Lizzie, thank you. Appreciate it. More from Lizzie later on this hour. Up next on the programme, a shutdown, stalemate.
The longer this goes on, the deeper the cuts are going to be. Some of these cuts are going to be painful. This is not a situation that we relish. This is not something that we're looking forward to. But the Democrats have dealt us a pretty difficult set of cards.
That conversation up next with Henrietta Trace of Vader Partners, live from New York City this morning. Good morning.
People feel deeply destabilized by inflation, by misinformation,
by the potential for job loss. We have to be in service of the individual. Purpose, I think, for the last 15 years has been about we. It's been about societal progress. We actually have an Edelman Trust Barometer special report on the shift from we to me. It's moved from societal to personal. This is profound for brands. You can't buy people's loyalty anymore. We have to be about the individual benefit, giving them optimism. Brands need to live in culture. They have to earn their way forward by doing something. Trust is to do the right thing. That's the essential difference between success and failure.
Soothing words from the president over the weekend. The USA wants to help China not hurt it. Equities bounce back, up by 1% on the S&P 500. On the Nasdaq 100, up by 1.6%. Under surveillance this morning, a focus in Washington, D.C., the shutdown stalemate.
The tariffs have also given us a little bit of financial flexibility so that we can keep on as many essential services as possible, including, most importantly, paying the troops. The longer this goes on, the deeper the cuts are going to be. Some of these cuts are going to be painful. This is not a situation that we relish. This is not something that we're looking forward to. But the Democrats have dealt us a pretty difficult set of cards. We're trying to do the best that we can with the shutdown situation that Chuck Schumer has left us.
So here's the latest this morning. The government shutdown entering its third week as Democrats and Republicans remain deadlocked on Capitol Hill. Bloomberg's Tyler Kendall joins us now for more. Tyler, are we getting closer and closer to approaching those delicate moments where it gets difficult to continue this?
It appears that way, though, John. Really, neither side is budging on their position. Plus, keep in mind that the House is on recess this entire week and the Senate's not coming back until Tuesday. And both sides are really dug in, including this White House, which says that it's not going to negotiate with Democrats on any of the provisions related to health care until the government reopens. But as you're alluding to, the pressure is certainly mounting. Take these layoffs, for example, that you heard the vice president threaten are only going to get worse. They're already starting to be challenged in court. In fact, we're going to hear the first arguments in a case challenging the legality of these firings this Wednesday. So potentially we'll get an update there. But it was a court filing last week that we learned that the OMB sent letters to an estimated 4,100 federal workers across 7 agencies saying that their positions are going to be terminated. While that is going to be a big pressure point, we saw at least one pressure point appear to be relieved over the weekend, and that's pay for our troops. President Trump announcing that the Pentagon had allocated funding that they could redirect to military pay. This is $8 billion in research funds that hadn't been used yet and is instead going to go towards paychecks. But, John, we're going to have to keep watching this very closely because really at this point, as you mentioned, it's really a stalemate.
Tyler Kendall, down in the nation's capital in Washington, D.C. Tyler, thank you. Joining us now to extend the conversation, Henrietta Trays of Vader Partners. Henrietta, a question I never thought I'd ask. What does the House Minority Leader, Hakeem Jeffries, have in common with Congresswoman Marjorie Taylor Greene?
Wow. Well, they both are, at this juncture, actually in the same place on extending ACA subsidies and the healthcare component. I think that is the reality that the Republicans are going to have to accept before the government is reopened, or at least before the end of the year. We've got 75% odds on the ACA subsidies being extended. And that's because 22 million Americans disproportionately in red states like Marjorie Taylor Greene's are going to lose their healthcare coverage. And going into a midterm election, no matter which side you're on, you don't want that. So eventually there will be a deal to extend the ACA subsidies. I think it's going to hitch a ride with a farmer's bailout, but we're not at that pain point yet.
I don't really hear a lot of people talking about farmers the same way they're talking about these ACA subsidies. How do you think both of these could be done to reopen the government together?
The timeline is really important, I think, Anne-Marie. We have to get through this potential Trump-Xi meeting. President Trump in the last couple of weeks has sort of quietly or less under the radar been promoting the idea that there's going to be a breakthrough that yields agriculture purchases by China of U.S. soy, which, of course, they have not purchased at all in the second half of this year. So the timing, and around November 7th, which is when they go on recess, which I know sounds ridiculous since they're already on break, or at least avoiding work, they do have a scheduled recess for Veterans Day. So what I see happening is that the Trump-Xi meeting in South Korea on the 31st and the 1st does not yield a breakthrough in soy purchases. And then we need the farmers' bailout. And that's because we're running out of time. And the farmers need something if we're not going to be able to sell into markets like the European Union or India, as you're mentioning before. That's not going to happen for political reasons there. So it's really the timing. And I'm just trying to forecast for our clients what this ultimate off-ramp is going to be. And the farmer bailout need is very real, although under discussed.
Henrietta, though, are you saying that you expect the government to remain shut until Trump potentially has this meeting at APEC with Xi Jinping?
I don't really see a problem forecasting that right now. There's no forward progress. There's no indication that the House is coming back into session at all this week or into next week. They don't really work Tuesday, Wednesday, and Thursday is the only period of any real work week that they do come in. So getting to November 1st is pretty easy. It's just a hop, skip, and a jump away.
Which raises this issue of what happens in that time. And we already have talked about the idea that troops are going to get paid, with some of the funds getting redirected to the Pentagon in order to make sure that that happens. What else is going to happen like that? How much power does President Trump really have to do this in absence of any kind of direction whatsoever from Congress?
This is the most important question. The president is taxing U.S. citizens with tariffs, and now he's starting to spend that money. What the message from the vice president that was just relayed on that clip you just said is that the tariffs are going to pay for troop paychecks. That's not correct. That's wrong. The president doesn't have the authority to just pick up Treasury funds and start spending them. These are already allocated research and development packages that are $8 billion worth that they can spend over 2 years. That is a technical appropriation that Congress authorized that the president is diverting through the executive branch. It's not spending tariff revenue, but you're putting a spin on tariff revenue that makes it sound like it's a good thing. Like, hey, tariffs are paying for the troops. That's not correct. So the longer we get into this shutdown, the more the president is going to have an opportunity to say things like that. Are we paying the Coast Guard? They're not funded under the Pentagon. How exactly are we going to pay for those funds? It's all going to come from appropriated money, not from the president redirecting tariffs. And so that's going to be eventually a squeeze. And the president's putting out leaks in a whole bunch of places with WIC, eventually with food stamps. They need a farmer's bailout. They need that to come from Congress.
How much are both Republicans and Democrats secretly happy that President Trump is doing this? Because it gives them more time to negotiate if you do have troops continuing to get paid.
Yeah, nobody wants to see troops not get paid. It's never happened in history. Last time we shut down, we had an appropriation for the Pentagon. And so we didn't have to face that. I think it's ugly for everybody, but it does prolong the shutdown because now there's no urgency to act. That's why I can't see a clear delineation. We used to say, October 15th when staff gets paid, or the 24th and the 10th. And we've blown past those. And it's because there are other ways to plug the hole. We don't have a real deadline until November 7th that I can identify.
Well, the next pay cycle for the military is the end of the month. Is there enough in the Research and Development Fund to continue paying the troops from that fund?
There's a lot of ways to be inventive. There's $100 or so billion from the One Big Beautiful Bill that the Pentagon was authorized to spend. They could probably redirect some of that to troop pay and then backfill it later. There's a lot of ways to get creative. But my underlying point is it has to be already appropriated from Congress previously. They can maneuver at the edges for a little while, maybe even into mid-November, and then it starts to get painful.
Can they maneuver in terms of paying air traffic controllers? Because in 2019, that was the pressure point that actually changed trajectory of the shutdown.
Yeah, I mean, I would hope so. I've got to get on a flight tomorrow morning. But the real piece that I want to see is members have to go through the pain of going through TSA, going through the airport security.
Well, then they need to go to work, Henrietta. Speaker Johnson hasn't called them back. They're not working right now.
Here, so they're not seeing it. That's right.
Henrietta, appreciate you jumping on. Henrietta Schrays there, Aveda Partners. This was always going to be the pressure point, right? The airport's going to sound up.
To Henrietta's point, which is a great point, you need members of Congress to go through TSA. Well, they're back in their districts. Unless they're taking vacations, they're not going back to Washington, D.C., so maybe they don't actually know that yet. But wait till their constituents have to travel for business, for work, for pleasure, and then they're going to be the ones that are calling and saying, this is ridiculous. We need the shutdown to end.
Do members of Congress still get paid?
Do members of Congress still get paid? I believe they do.
They do.
Yeah, yes. They do.
Maybe we should think about, changing that in the future.
You don't say. I mean, that's something that's been brought up before.
Just align incentives.
Exactly. Yes, that's something that's been discussed extensively.
Airlines are doing okay.
Get paid first.
By the way, airlines doing okay. Down to airlines. those headlines that came out going into the weekend. Our customer is financially in a good spot. We're not seeing any pullback in demand.
Even in the economy seating. And air traffic controllers are pushing back, too. They're saying, just to set the record straight, and over the weekend there were a couple of articles talking about it wasn't us that stopped the first shutdown. We come to work. It was a small amount. There's sort of this interesting jostling where people want to keep you flying at the same time that you actually are experiencing those delays. So try to square that circle, too. I mean, there's a lot of, politicking behind the scenes.
If you are just joining us, welcome to the programme. We have got a bounce back in the equity market. Equity futures firmer by 1 full percentage point on the S&P 500. You see this across the equity market, not just stateside, but worldwide, after a pullback on Friday triggered by what looked like an escalation between the US and China. Over the weekend, comments from J.D. Vance, the Vice President, and the President of the United States on Air Force One, as well as on social media, attempting to open the door to some kind of agreement with China at the end of this month, the start of November. Fact of the matter is, there is still tension over one critical issue, and it's Chinese rare earths. China started this, and they haven't backed off on that issue.
And J.D. Vance, the vice president, said over the weekend it's up to Beijing to, quote, choose the path of reason. You hear from the Treasury Secretary, and he's talking about the fact that we're not going to go at this alone. We're talking to India. We're talking to the Europeans in terms of how we can confront China on this issue. And on Friday, Lisa and I were talking about the fact that Germany actually said this is a huge problem for us, and we're going to need to deliberate with the European Union on how we are going to deal with China and the fact that they own the entire supply chain pretty much. We're talking about 70 to 95% of the critical minerals.
Europeans are finding out that sitting on the fence is not a sustainable position anymore. You've got to make a call. Coming up on this programme, the former senior White House trade advisor Kellyanne Shaw on the prospects of a US-China trade deal. Plus, happening right now, President Donald Trump speaking to Israel's parliament after securing the release of all 20 remaining hostages in Gaza.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level, being open to comments, feedback, discussions. There's always this back and forth workflow. Sometimes conversations with different people might open up ideas to explore.
Embrace a growth mindset. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Live from New York City this morning, good morning to you all and welcome to the programme as we count you down to the opening bell. Equity futures on the S&P 500 firmer, bouncing back by about 1% on the S&P 500. On the Nasdaq 100, up by 1.5%. On the Russell, we're up by about 1.3%. This is the bounce back you've been looking for on the equity market. On our radar this morning, though, one of our top stories, President Donald Trump speaking at Israel's Knesset, his speech following the release of all 20 remaining living Israeli hostages from Gaza. Let's take a listen.
Guy's central casting. Let's put him in a movie. Look at him. Great job. And my people loved working with you. Loved it. They worked so well together. But many of Iran's top terrorists, including nuclear scientists and commanders, have been extinguished from this earth. And with Operation Midnight Hammer, boy, that's a great name for that, what we did. Last June, the United States military flew 7 of those beautiful B-2 bombers. They look so beautiful all of a sudden. They were always... I thought they were pretty planes. I had no idea they could do what they did. In fact, we just ordered 28 more of them. A little updated version. We ordered a whole pile of them. And almost 100 other planes went with them, including fighter jets. And we had 52 tankers, big, beautiful, brand new tankers that were loading them up 4 or 5 times. They've traveled 37 hours back and forth, think of that. But we had tankers all over the sky for all the other planes. We had the F-22s, the F-35s, F-16s. We had a hell of a lot of planes. So we had 52 gas stations in the sky. That's what they call them. I'll tell you, I wouldn't want to be flying one of them. We have our great General Raisin Cain right here. General, stand up. This guy, what a general. Thank you. I asked General Cain, I said, we're having problems with ISIS, and I was in Washington, and I asked, how long would it take to defeat ISIS? And my Washington generals told me, 3, 4, maybe 5 years, sir. I said, I don't get it. We got the best equipment in the world. Why? So I flew to Iraq, and I met with a man named Cain. He said, what's your first name? He said, they call me Raisin, sir. I said, wait a minute, your name is Raisin Cain? I've been looking for you for a long time. You gotta be kidding. So they told me 3, 4, 5 years to defeat ISIS. And I sit down with him and I say, why is it? I flew there in the dark of night. I landed, I'll never forget it. It's quite a trip. I'm glad I made it because I met him. I said, could I ask you, General? I come down. He's standing with another general and a sergeant. Everybody was like central casting. They could go into a movie right now. Between him and you guys over here, we could get rich making movies, okay? And they got along so great. That's the beautiful thing, that your military and our military, Bibi, got along so great. But I was told by the television generals in Washington, we have the best equipment in the world. Why is it taking so long? And they said, 4 years. I said, so let me ask you, Raisin, how long would it take you to defeat ISIS? Sir, we can do it in 3 weeks, but you'll probably have some time left over. I said, you got to be kidding. What the hell are you talking about? They said 4 years. I said, well, sir, look, it's not my place to say, but you're asking me the question. What you have to do is you hit him from the west, you hit him from the north, you hit him from the south, you hit him above, you hit him below. I said, so why didn't they do it? And he didn't want to speak badly of his superiors, which is hard to believe they were his superiors. It should have been the other way around a long time ago, because he's the one that did Operation Hammer. It was flawless. It was flawless. It was absolutely flawless. And I said, so you really think you can do it in 4 weeks? Yes, sir, 100%. You have to do it differently than they were doing it. They were using one base and it was hundreds of miles away. And he says, we have all these portable bases all over the Middle East. And they didn't want to use them because they didn't want to offend the country where the portable, they wouldn't have even known what the hell the planes were going up, right? They wouldn't have known. But he said, no, they didn't want to defend anybody, offend anybody. But we can do it in 4 weeks. I said, you sure about that? I'm going to call you back. I'll call you back on Monday. I'm going back to Washington. But you think 4 weeks? Yes, sir, I think we can do it in 4 weeks. We'll have time left over. So I call him on Monday. I said, you think you can do it? 4 weeks. I said, go ahead and do it. He did it. I'll tell you, he did it in 4 weeks, less than 4 weeks. So, General, stand up, please. Again, this is a real general. This is not a television general. He doesn't want to go on television. He doesn't want to go on television. That's it. The other guys love being on television. So we dropped 14 bombs on Iran's key nuclear facilities, totally, as I said originally, obliterating them. And that's been confirmed, and everybody understands it. Together we stopped the #1 state sponsor of terror from obtaining the world's most dangerous weapons. And if you think about it, if we didn't do that, and assuming we made the same deal that we have today, there'd be a dark cloud over this deal. And #1, it wouldn't happen because the other Arab and Muslim nations really wouldn't feel comfortable making the deal that we have now, right? If Iran had that nuclear weapon that they were about 2 months away from having. They would have had it in 2 months or maybe less than that. They were right at, this was our last shot. They looked at it for 22 years. This was our last shot. The pilots told me that. They said, 22 years, sir. They looked at it. Our predecessors looked. They studied it.
ओके गाइस, ये क्रूड ऑयल में ना वेट कर लो, इसमें नहीं आ रहा है, मोमेंटम ही नहीं आ रहा है। 530 हो गया फिर भी मोमेंटम नहीं आ रहा है। ये क्रूड ऑयल का जो सेलिंग का ट्रेड लगाया है, डोंट टेक दिस। अभी तक तो इसको फॉल कर जाना चाहिए था, नहीं आ रहा है, लेट इट गो, छोड़ दो। सेलिंग वाले ट्रेड में जाना ही मत, ठीक है? क्रूड ऑयल के सेलिंग वाले ट्रेड में जाना ही मत। ठीक है, भले ही अब सेलिंग आ जाए, डोंट एंटर इन सेलिंग ट्रेड। इसको मैं रिमूव कर दे रहा हूँ, इस सेलिंग ट्रेड में जाना ही मत। मोमेंटम नहीं आ रहा है। अभी तक आ जाना चाहिए था फॉल। ये कंटिन्यूसली यहाँ से ओपन इक्वल टू लो बनाया जा रहा है, रहने देते हैं। हो सकता है सेलिंग आ जाए, बट डोंट टेक, ठीक है? सेलिंग वाले ट्रेड में मत जाना, एंट्री पॉइंट पर ही है, मत जाना अभी, भले ही सेलिंग आ जाए। 530 हो चुका है, लंदन सेशन ओपन है।
You'll get that deal done easy. I think that'll be easy. But first we have to get Russia done. We got to get that one done. If you don't mind, Steve, let's focus on Russia first, all right? We'll get it done. In Lebanon, the dagger of Hezbollah, long aimed at Israel's throat, has been totally shattered. My administration is actively supporting the new president of Lebanon in his mission to permanently disarm Hezbollah's terror brigades. He's doing very well. And build a thriving state at peace with its neighbors. And you're very much in favor of that, I know. And it's good things are happening there, really good things. And with this week's ceasefire, we've achieved the most challenging breakthrough of them all. The most challenging breakthrough maybe ever. I mean, I've never seen anything like it. I've been involved in a lot of success. I have never seen anything like what's going on today all over the world. People are dancing in the streets, not just in Israel. They're dancing in the streets of countries that would have never danced in the street about what's happening today. They're dancing in those streets. So this long and difficult war has now ended. You know, some people say 3,000 years, some people say 500 years, whatever it is. It's the granddaddy of them all. And in an unprecedented achievement, virtually the entire region has endorsed the plan that Gaza will be immediately demilitarized, that Hamas will be disarmed, and Israel's security will no longer be threatened in any way, shape, or form. So Israel, with our help, has won all that they can by force of arms. You've won. I mean, you've won. Now it's time to translate these victories against terrorists on the battlefield into the ultimate prize of peace and prosperity for the entire Middle East. It's about time you were able to enjoy the fruits of your labor. Mr. Opposition Leader. I said he's a very nice opposition leader. I think... No, he's a nice man. Bibi, he's a nice man. Good. He knows what he's doing, right? No, a very nice guy. Well, see, now you can be a little bit nicer, Bibi, because you're not at war anymore, Bibi. But only by embracing the opportunities of this moment can we achieve our goal of ensuring that the horrors of recent years will never happen again. You don't want to have to go through this again. 8 years ago, I came to this region on a very special first trip abroad as the President of the United States. I came here very early at your request. I addressed the leaders of the Arab and Muslim world gathered in Saudi Arabia and said that it was time to build a future free of the grip of extremism and terror. And interestingly, right now, as soon as I'm finished, I'm quite late. You've kept me quite late between opposition leaders and Bibi's brilliant but very long speech. I thought I was going to run up here, make a speech, and then head to Egypt. It didn't work out, though. And you made a pretty long one, too, Sarah. But I liked what you all said. It could be worse. Supposing on top of it, I didn't like what you said. That would be no good, Ron, would it? Ron, you did a great job, by the way, Ron. Yeah. So I'm going to be meeting, actually, in a little while, I'm going to be meeting with the most powerful, the richest nations, really, in the world. Although now, with the tariffs, the United States is by far the richest nation in the world, as you probably have been reading. But the richest nations, most powerful nations, tremendous, headed by some tremendous people in many cases. Some cases I wouldn't say necessarily I would endorse. But I will tell you, some incredible people that really helped us make this all possible. So I'll be going there. I'll be quite late. They might not be there by the time I get there. But we're going to give it a shot. But the journey we started back then led to the crushing defeat of the ISIS caliphate, to the monumental Abraham Accords, and ultimately to the historic ceasefire this week, in which many of those same nations really played a very pivotal role, I have to tell you. Steve will tell you that. Jared will tell you that. Together we've shown that peace is not just a hope that we can dream about. It's a reality we can build upon day by day, person by person, and nation by nation. And because of that, the Middle East is finally ready to embrace its extraordinary potential. You have extraordinary potential in this region. It should now be clear to everyone throughout the region that decades of fomenting terrorism and extremism, jihadism and anti-Semitism have not worked. They haven't worked. They've been a disaster. They've just killed. They've killed. They've backfired completely and totally. They've just totally backfired. Everything that you thought, take it worst case, it's turned out to be worse than that. They have not worked. From Gaza to Iran, those bitter hatreds have delivered nothing but misery, suffering, failure, and death. They've served not to weaken Israel, but to annihilate the very forces that did the most to foment this hatred. And it's really, everybody that's tried it has become irrelevant. Meanwhile, we've seen those nations that set aside their differences, reached across ancient divides, and pursued engagement are now among the most successful in the region. They're getting along with Israel, and they're doing great. And I can tell you the four nations that joined the Abraham Accords early on, and you'd all be doing me a favor, and I'm going to be saying this in a little while to some other friends, would love you all to, is this right, Jared? Join up in the Abraham Accords. We have to join up and get together. You can have that whole thing filled out. We had a very weak administration, worst president in the history of our country by far. And Barack Obama was not far behind, by the way. And they did nothing with this incredible document, the Abraham Accords, but now you can fill them up. Now you have peace, you have people that really like Israel. I'll tell you what, and they like Israel a lot more today than they did even 5 weeks ago. You've made a lot of, you've come back. You've come back strong because it was getting to be a little nasty out there in the world, and ultimately the world wins. You can't beat the world. Or I would say to Bibi, it's now time, and he understood it better than anybody, because ultimately, you know, the world's a very big place. And I've said a lot. I said, this piece of land is very small. It's unbelievable what you've done with that tiny. You look at a map even of just not the world, the Middle East, and you have this little dot. And think of what you've done. It's incredible. It's incredible. But the world is loving Israel again. And I said to Bibi, you know, the world is big and it's strong. And Ron, ultimately, the world wins. And we don't have to worry about that now. But there was getting to be a period of time over the last few months, you know, the world wanted peace and Israel wanted peace. Everybody did. Everybody did. And what a victory it's been, right? What a victory it's been. If you would have gone on for 3-4 more years, keep fighting, it was getting bad. It was getting heated. The timing of this is brilliant. And I said, Bibi, you're going to be remembered for this far more than if you kept this thing going, kill. It would be it would not be the same. And I just want to congratulate you for having the courage to say, that's it, we've won. And now let's enjoy our lives and let's rebuild Israel and make it stronger and bigger and better than it's ever been before. We're going to do that. Took a lot of guts. And the choice for Palestinians could not be more clear. This is their chance to turn forever from the path of terror and violence. It's been extreme, to exile the wicked forces of hate that are in their midst, and I think that's going to happen. I've met some people over the last couple of months that want to see it happen very much, and after tremendous pain and death and hardship, now is the time to concentrate on building their people up instead of trying to tear Israel down. We don't want that to happen again. And the total focus of Gazans must be on restoring the fundamentals of stability, safety, dignity, and economic development so they can finally have the better life that their children really do deserve after all these decades of horror. I intend to be a partner in this effort in the sense that we're going to help and we're going to do something that became unbelievably popular. Everybody wants to be on it. It's called the Board of Peace, okay? How about that? Is that a beautiful name? Like a board of peace. The only bad thing from my standpoint, every single nation involved has asked me to be the chair. And I'll tell you, I'm very busy. I didn't count on that. But you know what? If we do it, we'll do it right. And we have unbelievable power and wealth. Because you're going to need wealth. You're going to need wealth to rebuild things. And they have wealth like few people have wealth. I want to thank the Arab and Muslim nations for their commitment that they've made to support a safe rebuilding of Gaza and beyond. I have many Arab countries, very wealthy countries, that came up and said, we'll put up tremendous amounts of money to get to rebuild Gaza, and I think that's going to happen. The power, they want dignity, they want to come forward, and they want to say, and I want to say who they are, because what they're doing is going to be, I think, something that you're going to be very impressed with, Bibi, and you need that. You need the kind of economic power that they have, and they want to see it work, and they want to see it be safe, and they want to see it be good for Israel, too. And as much money as it will be, and it's a lot, as you can see, it's a lot. For these countries, it's relatively little relative to their worth. It's really a lot of money like most people could never even conceive. But for these countries, it's not that much, especially because it ensures success and stability in the Middle East, which is what they want to see. So many of them will be with us in Egypt in a little while, I think. I'm not sure. They may be gone. They may have taken their Boeing 747s and left. I said, what kind of a plane do you fly? 747. I said, that's a large plane. No, they may have. Steve, do you think they've left on their their brand new Boeing 747s? Or I don't know. We're going to find out soon. It's going to be a big story. There'll be 2 people left, and they'll be the 2 poorest ones. But it will be the wealthiest and most powerful group of nations. So the group that we have assembled, that's waiting for us, is the wealthiest and most powerful group ever assembled at one time. There has never been a group like this. And they're only looking for good. They want good. They're going to do good. And as those commitments are made, I'm going to let the world know who's doing it, because they really deserve to get the credit. And some of them probably won't want the credit, but they deserve it. It's more obvious than ever that the productive and responsible nations of this region should not be enemies or adversaries. You should be partners and eventually even friends, and that's what's going to happen. I know it. Together you can stand against the forces of chaos. Yeah, you go ahead. That's an important point. Because you can stand against the forces of chaos that threaten all of your interests, and it's always a big threat, and unleash incredible prosperity and opportunity for all the people of these lands, and that's what's going to happen. You're going to unleash numbers and success, the likes of which Israel has never been able to think of, because you're so firm, and you should be, and you've done the right thing in defending yourself. You're not going to have to worry so much about it. You've won, and now you can build, and you can do things that you never even thought possible. When you put that genius into doing something else, it's going to be something it's going to be a miracle. The miracle in the desert, it's going to be amazing. And it already is in a true sense. But it'll be wonderful when you can spend time thinking about other than war and defense and offense also. To that end, it's my firm hope and dream, frankly, that together the Abraham Accords will turn out to be everything that we thought they would. Those 4 countries were very, very brave in doing it. They did it at a very early point, and every single one of them benefits unbelievably financially. And if you noticed, even in this bad period that we just went through, they all remained a member of the Abraham Accords. They've done unbelievably well. And you know who you are, and I want to thank you. And they've stayed because of loyalty, but they've also stayed because it was really good business. They've made a lot of money being members, and you're going to all, I hope that every one of the countries that we're seeking, Jared, I hope they join quickly. No games, no nothing. Just join, get it. It's going to be a great peacemaker. It's really going to bring it together beyond anybody's wildest dream. So instead of building fortresses to keep enemies at bay, the nations of this region should be building infrastructure to weave your commerce closer together, because you've got to compete with the big world out there in commerce now. It's a different kind of competition. Instead of making weapons and missiles, the wealth of this region should flow to schools and medicine, industry, and frankly, the new hot thing, artificial intelligence. It's a lot of intelligence they're going to have to be thrown off to pay back these sums of money that they're doing. But that's really the hot one. And I might say that the United States, a year ago, was a dead country. I say it to people. I heard it first from the King of Saudi Arabia. I then heard it from UAE. I heard it from Qatar. I heard it from many other countries. A year ago, the United States of America was a dead country. Now it's the hottest country anywhere in the world. It is the hottest. There's no question about it. In fact, if you go back a year ago, before the election, although once we had November 5th, we became hot because people got it. I would say November 5th was a time that we became really hot. But once you go back a couple of years, if I were in charge and the country was doing what they would, nobody was going to ask me to speak. Nobody asked Joe Biden to come up and speak, I guarantee you that. And if they did, he would have turned them down, I promise you. He didn't speak. He didn't speak, and he didn't speak well. But all of the countries in the Middle East, it could have, what we're doing now, it could have happened a long time ago, but it was strangled and set back almost irretrievably by the administrations of Barack Obama and then Joe Biden. There was a hatred toward Israel. There was an absolute hatred. The setbacks really started when President Obama signed the Iran nuclear deal. This was a disaster for Israel, and it was a disaster for everyone. And I remember that Bibi Netanyahu came to the United States and worked so hard to try and get Obama not to do that deal. He worked so hard. But it was like talking to a wall. I remember him telling me it was like talking to a wall. They wanted to go with Iran. They chose Iran, frankly, over a lot of other good nations, but specifically Israel. And that was the beginning of a very bad period of time. You had Obama go out, and the Iran nuclear deal turned out to be a disaster. And by the way, I terminated the Iran nuclear deal, and I was very proud to do it. Yet even to Iran, whose regime has inflicted so much death on the Middle East, the hand of friendship and cooperation is open. I'm telling you, they want to make a deal. That's all I do in my life. I make deals. I'm good at it. I've always been good at it. And I know when they want. Even if they said, we don't want to make a deal, I can tell you they want to make a deal. All right, they do. They want to make a deal, and we're going to see if we can do something, because this is crazy what's happening, and we're not going to have this anymore. Neither the United States nor Israel bear the people of Iran any hostility. We merely want to live in peace. We don't want any looming threats over our heads, and we don't want to even think in terms of nuclear destruction. It's not going to happen, never will happen. There's nothing that would do more good for this part of the world than for Iran's leaders to renounce terror, stop threatening their neighbors, quit funding their militant proxies, and finally recognize Israel's right to existence. They have to do that. They have to do that. And to Iran,
what could be a crowning moment for the president's foreign policy, the president of the United States addressing the parliament in Jerusalem, Israel, before travelling to Egypt for a signing ceremony following a US-led deal reached in the last week, which led to an amazing moment in this region earlier this morning. Hamas freeing 20 remaining living Israeli hostages, and Israel releasing 2,000 Palestinian prisoners in response. Some standout headlines from this address in the last 60 minutes or so. The president saying, for Israelis, Palestinians, the nightmare is over. This will be a golden age for Israel and for the Middle East as a region.
He really emphasized the rejection of certain extremist policies and started talking about the need for coalescing as he heads over to Egypt. A real question of how much he and some of the other members, heads of state that are going to be meeting, are going to lean into the Abraham Accords and continue a closer alliance with Israel. It really solidifies, though, how important this region is as a geopolitical node for President Trump and, frankly, increasingly for the entire world.
The president of the United States, the difference maker here. This didn't look like it was going anywhere for a long, long time. Moments ago, the president saying this is the start of an era of harmony for Israel and for the Middle East.
It's really a foreign policy achievement thus far for this administration. The remaining question is what comes next when it comes to this peace agreement. The hostages are released. You have Palestinian prisoners leaving the West Bank. But how do they redevelop Gaza? Who is going to run this transitional authority? So the president right now is speaking in Jerusalem, but how many times has he said, I'm going to Egypt next and Sharm el-Sheikh, and it's going to be an unprecedented peace summit? That is where his mind is right now, because that could be a continuation of what started under Trump 1, which is an expansion of the Abraham Accords.
If you are just joining us, welcome to the programme as we count you down to the open about 90 minutes away. Equity futures have bounced back following remarks from the president over the weekend, just dialing back the temperature between the US and China. We'll bring you market coverage in just a moment. I want to cross over to Bloomberg's Ollie Crook, who's on the ground in Jerusalem. Ollie, welcome back. As Anne-Marie said, just to build on her words, a crowning moment potentially for the president's foreign policy. But what's next? And how durable will this peace be?
Yeah, Jonathan, I think that is sort of the main question here before us, is the durability of the sort of experimental foreign policy that has gotten us to an outcome that would be really very impossible to imagine coming together in this way under really any other kind of president. And the question, I think, today, I mean, we should just mark the moment, this moment of Trump still speaking before the Knesset, really going, thanking his entire team and making some nods to kind of what his ultimate goal is for the region, talking about the Abraham Accords, talking about bringing peace to Gaza and to trying to redevelop it into a prosperous economic zone. But as you say, Jonathan, we are in the foothills of what is going to be a very complex and very long discussion about how to get there exactly. And I think that the joy today from the Israeli side, the joy today from the Palestinian side as they take their prisoners back, it masks the bitter complexity of the issues that are still to come and need to be discussed and that will begin to be brokered in this meeting in Egypt a little bit later. The question is going to be, who will the stakeholders be and what will their commitment be to try to bring security into the region of Gaza? Remember, this has always been the sort of main sticking point. You need a security arrangement within Gaza that the Israelis can live with, that theoretically the Israelis are not sort of running, but at the same time that the Palestinians find to be legitimate. You need that in place in order to have a governing structure on top of that, this sort of technocratic board that is going to be overseen by this sort of board of peace by Donald Trump. And he says a great many leaders who want to be involved. But before any of that happens, Jonathan, there needs to be a conversation about Hamas. What happens next with Hamas? Are they willing to lay down their arms? To what degree? There are provisions within Trump's 20-point plan to say that basically anyone who's willing to lay down their arms will be granted amnesty, will be granted safe passage. But even in the last few days, Jonathan, we've had reports of Hamas reasserting itself within Gaza, also punishing Palestinians that have been sort of seen as cooperating with the IDF. So these are the sort of prerequisites to make any sort of the great gestures that Trump is talking about here, talking about a historic dawn for the new Middle East and, God willing, an eternity of peace. That eternity of peace is still many, many steps away, and that is the very difficult and grueling process that will begin a little bit later in Egypt today.
The hard work continues. Ollie, thank you. Great work this morning tracking this story. Bloomberg's Ollie Crook in Jerusalem. As we count you down to that opening bow, just to reflect on the price action this morning, equity futures a whole lot firmer on the S&P 500. Coming up this hour, we'll catch up with Seema Shah of Principal Asset Management as stocks bounce back, Saul Martinez of HSBC as we look ahead to key bank earnings later this week, and Abigail Watt of UBS as the government shutdown enters its third week. We begin this hour with stocks bouncing back as President Donald Trump tempers his trade stance on China. Seema Shah of Principal Asset Management writing the following: even after the strong performance of the past 6 months, with the S&P 500 up 35% from its Liberation Day trough, equity markets have further room to run. Seema joins us now for more. Seema, welcome to the programme. Will you get a helping hand from earnings season and from bank earnings this week?
Hey, John. Yeah, I think that is definitely on the cards. You know, when we're looking across at the macro outlook, we're still feeling pretty positive. Of course, there are some signs of slowdown within the labour market, but we're not talking about recessionary area. And typically in this kind of environment, we can see continued performance from financials. So along with those tech stocks, which continue to drive the market, we would think that financials can join in with that rally and help push the equity market a little bit further.
Seema, it's not just bank earnings on the calendar, also a meeting potentially between the two leaders from China, from the US, President Trump and Leader Xi. Seema, how big a factor will that be in your outlook? The trade negotiations, the friction, the tension between China and the United States?
Yeah, it's a great question because, you know, in the last couple of weeks, it's completely fallen out of the headlines. You know, nobody really talking about the risk associated with it. So the news on Friday, I think, did come as clearly did jolt the market. It has the potential to have very, very serious impact on the economy, both from a growth side and from an inflation side. So we obviously have to keep a close eye on that. At the moment, from our perspective, we're going to go along the assumption that things eventually kind of work themselves out. Simply because the risk is so big, but it does clearly have the potential, and so investors. And I think the key thing is that there has been so much complacency within the market about what could happen to how much further the equity market could run, that this has been a good reminder that there are still risks on the horizon.
Risks of re-escalation between the U.S. and China. How much does it also reiterate the risk that this is not just a one-time price shock, but it's an ongoing process of tariffs that come on in different waves and price effects that happen over time, kind of like what we saw from Levi's last week?
Yeah, and Elisa, I mean, I think this is one of the things that we've been considering is that from the tariff perspective, this is an ongoing story. We know that tariffs are going to be used continuously as a geopolitical tool and for any other kind of negotiations that the US is looking to do. We're also expecting, even before Friday, that tariffs would continue to move a little bit higher. They'd change in focus sectors, more company focus. So I think this is still inbuilt. But we have seen time and time again that from a market perspective, these kind of headlines, they do start to move back and back and back in people's mindsets, especially as companies do start to kind of navigate their way through. So it's not to say that there won't be any impact. There will be. It is contributing to an economic slowdown. But we're not looking at something which is recession-like, provided the US-China negotiations do move in the right direction over the coming weeks.
So if there isn't really that great of a chance of recession, which is what I'm hearing from you, do you buy any dip? Was what we saw on Friday something that you want to welcome, usher in, and dive into?
I do think, I think any kind of noise, either with regards to the shutdown or even with the trade tensions, these are opportunities because we're trying to look beyond the noise. And, this has been a really good learning for this year, is that back in April, when everyone was really worried about recession, they were worried about how there was going to be a very significant market correction. We are up very, very significantly from those moments, and the market has managed to look through. So we would assume that this is going to be a continuation. Valuations are that much higher. The economic backdrop is a little bit slower. So, we're not going to be expecting to see gains as significant as we've had in the last couple of months. But to our minds, this is still a positive setup for equities.
The issue, though, with what's going on with trade is that J.D. Vance is talking about the fact that it's up to Beijing to choose the path of reason. Does it not feel different this time than it did in the spring?
There are definitely differences. And I think the key thing is that, China is showing that it has a lot of power in this. It's got a very, very strong negotiating tool. So it's very much sitting in, I guess, in their area. And, what is the US going to do to kind of bring down the tensions? So there is a difference. But I think at the end of the day, because the impact could be so serious, it's almost like too big to fail situation, which we would assume is going to push both sides to some kind of negotiation point. It doesn't necessarily mean that we're going to be looking at lower tariffs. We could be even looking at slightly higher tariffs than where they are today. But we wouldn't expect there to be a move back to the 135% tariffs that we did see earlier this year.
Do you think this just gets done by November 1st, where the president said that seems like an eternity for him? Or is this a 2026 story for the market?
I think we can get somewhere by November the 1st. And I have to say, I think it's going to be a very, very rocky road with a lot of noise, a lot of back and forth. But certainly, I think that the issues with China is not something which can be put to bed very quickly. I would assume that this is going to be a situation that we're going to be talking about through 2026, through 2027. And that rivalry between the two countries is going to be something which is a continued pain point, which comes back to rock the market every now and then over the foreseeable future.
What was interesting, and John pointed this out earlier, is that on Friday we saw a rally into U.S. Treasuries. And this was different than what we saw after the April 2nd Liberation Day. And it raises the question about whether the market is looking through any kind of price shocks as one-time, transitory, or whether it's complacent about the inflationary ramifications of this decoupling between the U.S. and China over a longer period of time. How do you see that?
Yeah, it's an interesting one because, in the last couple of months, you haven't really seen the inflation impact that people were anticipating in April. And so I think that what we saw on Friday was just this assumption that, this is a continuation. There will only be a one-time shock. It'll be very modest. This is really, really early days. So to our minds, one of the key risks that we do need to look out for in 2026 is, the inflation numbers moving a little bit higher than anticipated. At the moment, we're expecting CPI to be hovering around the kind of the mid or I should say the 3.2 to 3.3% level. If we were to see it move above the 3.5% towards a 4% number, well, then I think the equations kind of change. And I think that would be a real sticking point for the market. But it is really early days. And I think as we go into earnings season, that to us is going to be the key thing that we're listening out for. What are CEOs telling us about the price impact, how much they're planning to be passing on? And I think that picture won't be very clear until we're looking into Q1 or Q2 of next year.
Seema Shah of Principal Asset Management. Seema, thanks for jumping on. Appreciate it. Appreciate your time. Thank you. I'm pleased you went there. I think this is so important. I'm sitting here again after about 2 hours of this programme, reflecting on the fact that I think we've barely spoken about the Federal Reserve for more than 2 minutes. And I'm always thinking about what are we missing, what's the market missing, what are people not talking about, what do they need to consider more? The prospect of the Federal Reserve not cutting interest rates beyond the next meeting. Say, a Federal Reserve that until May, when you get the leadership change, is trapped in disagreement about what's happening in the labour market and ultimately what's about to happen to inflation too. Now, we won't get CPI this week because of the government shutdown, but if you look at the estimates for when we will get the CPI release, which is going to be October 24th, I believe, we're looking at a 3-handle. You've got a 3-handle on inflation. I think you've got a much stronger case for the hawks on the FOMC to say, what are we doing, guys, over at the Federal Reserve, cutting interest rates with inflation running in the 3s? And it's that sticky point between now, May, and the leadership change of the FOMC, which I think needs some more attention.
I think you're absolutely right. How much this is going to be a Fed that pushes back because of inflation, and how much is this going to be a market that pushes back? One thing people have pointed to is the long end of the yield curve has been incredibly complacent, hasn't really talked about some sort of huge spike up in inflation. You're seeing that in break-even rates as well. Does that start to shift if you don't get a change in tone from the Federal Reserve?
Stocks are doing okay this morning so far, up by 1% on the S&P 500, taking a bite out of the losses from Friday. Let's give you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. President Donald Trump heading to Egypt now for a Middle East peace ceremony after speaking at the Israeli Knesset. He spoke following the release of all 20 living hostages from Gaza. Once the hostages are freed, Israel has agreed to free almost 2,000 Palestinian prisoners and allow more aid into the Gaza Strip. The Trump administration is also signalling that it's open to doing a deal with China, days after announcing new 100% tariffs effective November 1st. The relationship between the two countries soured last week when China announced new export controls on rare earths. President Trump posted on social media, quote, "Don't worry about China, it'll all be fine." And First Brands names Charles Moore as its interim CEO after CEO Patrick James stepped down effective immediately. The auto parts company is facing increased scrutiny over its sudden collapse. The Justice Department is examining how Wall Street lenders missed red flags before First Brands filed for bankruptcy, owing more than $10 billion. And that should be my brief. John.
Lizzie, thank you. Appreciate it. More from Lizzie in about 30 minutes' time. Up next, the morning calls, plus Saul Martinez of HSBC as we preview key bank earnings on deck through this week, Tuesday and Wednesday. From New York City this morning, good morning.
I think the world is at the early stages of almost an ESG type moment. This is just going to expand and expand. I do think we're going to have economic friction, tariffs to China, so that's going to be a bit of a way on some parts of the market. And the other part, anything that's production for security, pharma, tech, chips, rare earths, critical minerals, natural gas, all those things should do very, very well.
There is going to be some serious investment on that front. That was Peter Cheer of Academy Securities. If you're just joining us, welcome as we count you down to the opening bell. 1 hour, 13 minutes away. Equities bouncing back. Futures up by more than 1% on the S&P. On the Nasdaq 100, higher by 1.8%. That's the price action. Here are your morning calls. First up, Bank of America downgrading Intel to underperform, saying the stock has gone, quote, too far, too fast. Next up, Mizuho raising its price target on Nvidia to 225, expecting China headwinds to be muted. That stock is up by 3% this morning. And finally, Citi cutting its price target on Blackstone to 170, saying to wait for a better entry point. If this ain't it, I don't know what that entry point looks like. We're up by 1.6% this morning. Those stocks have been hammered over the past month or so. We'll get to them in just a moment. Let's stick to the financials with a slew of earnings out this week. Saul Martinez of HSBC writing, we expect third quarter 25 results to reinforce the positive narrative driving the outperformance of large cap US banks and brokers. Sol joins us now for more. Sol, good morning.
Good morning.
It's good to see you. I touched on it there. Blackstone, KKR, Apollo. They've been hammered over the past few weeks. It feels like the market's treating them as a proxy for some of the developments we've seen in private markets, First Brands, Tricolor, all that stuff. How are the banks exploring those stories at the moment?
Yeah, I think right now, and it actually has impacted the bank stocks some. You have seen, since we put out our preview a few weeks ago, the banks that I covered down 5 to 10%. And part of it is the realization that the macro dynamics are still a little bit unclear, and credit is something to focus on. I think at this point, though, credit should be fine for the banks. Just remember, the big banks, especially those that are systemically important, have been very conservative really since the GFC in terms of their lending portfolio, and that's really been what's allowed private credit non-bank lenders to take share. So there has been that conservatism. And I think if you look at some of the data thus far, the credit card issuer data through August, you're actually seeing better performance on credit cards, better delinquency rates, better NCOs year on year. The most recent updates that the banks have given as of early to mid-September suggest that the commercial loan portfolios are performing well. Commercial real estate's doing well. That said, look, you're right. You have had some credit situations like Tricolor, like First Brands. You had CarMax having bad results. So it is something, I think, that will be monitored. I don't think it's something that will show up in results. I don't see this quarter being one where you start to see credit worsening. But I think you have to look for things like, are delinquency rates moving higher? Are banks reserving more, because that gives you a proxy for their what their estimated losses are? Are they classifying more commercial loans into criticized asset buckets? So those are things that we'll be monitoring. I think the banks are fine for now, but that said, I do think it pays to pay attention and to look at banks who are good underwriters but are also well reserved for potential losses.
You make a lot of great points, and I think one point of the past cycle has been that private credit is pulled up in business that banks might have taken on earlier, but they now have. I just wonder if there's another message here. Mm-hmm. Can you really have a reacceleration in the U.S. economy if you have these potholes in consumer credit, in auto lending, in other areas that raise red flags about just how quickly this economy actually is reaccelerating? Yeah, I mean, look, that is a fair point. I think the bull case for banks right now is that you have a good economic backdrop, moderate growth, interest rates across the curve are at we have positive real rates across the curve, so that is allowing for net interest income to grow. And more recently, you've actually had some optimism about loan growth. Loan growth has actually picked up for the banks. The quality of that loan growth we can talk about, but there has been some improvement. So the positive view for banks is that revenue picks up, but that really depends on rates staying where they're at. It really depends on the economy continuing to grow. If you were to see a soft patch in the economy, and the Fed cuts more than what's priced in, which is I think about 5 times this morning when I checked, and the 2- and 5-year part of the curve is also important, and that has come in. You're still at levels that are well anchored and that support asset yield expansion. In other words, fixed rate assets and loans are repricing to higher rates, and there's a benefit there. There's a little bit less of a benefit than there was 6 months ago. That said, if the situation you described, where the economy really hits a soft patch, and it happens, rates will come down across the curve. That's actually what happened in 2018. Remember, in the first Trump administration, banks did very well in 2016 and 2017 for very similar reasons. And we had tax reform, fiscal policy, expansionary fiscal policy. And then 2018, 2019 came, and rates collapsed across the curve, and bank stocks really underperformed during most of Trump's first presidency. So that is a risk. I don't think we'll get there for a lot of reasons, but certainly a weak economy is one that is not consistent with a bull case for banks. Up until now, there's been this competition between private asset managers and the banks, and it's been the sense has been that private asset managers have had the upper hand. Can you put into context the J.P. Morgan announcement this morning about the $1.5 trillion of financing for specific strategic areas in the United States and pair it with this sort of race, or do you think it's a completely separate story? I don't know if it's I don't know if it's completely related. I think for the banks, what the banks are trying to do, the banks are trying to service their clients effectively, right? And they're entering into relationships with private credit firms
But for a bank, a lending relationship often is sort of an anchor, right? They're not making high profitability in the lending relationship. But it's the other business that is associated with it. You provide credit, but you also get the investment banking, the treasury services, the core deposits. And it often probably makes sense more economically for banks to provide a full service for their corporate clients, but not necessarily to keep the risk on their balance sheet and partner with private credit firms. So I think with J.P. Morgan and a lot of the banks, and they're doing it somewhat differently, J.P. Morgan is keeping some of it on their balance sheet. They're trying to provide their corporate clients with all the financing and all the potential products that lending products that are out there and that they need. While still partnering with private credit, so it is a sort of a frenemies type of relationship, right? The private credit has taken share in terms of lending, but it's also a vehicle for banks to sort of partner with private credit, offload some of that risk, maintain that relationship with the corporate.
Lisa brought up J.P. Morgan. Got about 60 seconds left. They report tomorrow. Goldman Sachs as well. It's fair to say you're less constructive on those two names.
We are.
Why?
It's valuation, really. I mean, I came here last time 3 months ago, and I just downgraded them, and feel the same way. I think for J.P. Morgan, I think for both the quarter should be fine. I think it should be reasonably good. But J.P. Morgan is trading at 2.9 times tangible book value. You're pricing in a heck of a lot there, and they have a lot of excess capital. But buying back stock at 2.9 times tangible book value is not necessarily the best. May not be the best use of capital. I think Jamie Dimon would agree with that, right? So that the fact that they're not buying back their own stock does tell you something. I think Goldman has some tailwinds. You feel like I'm swimming against the tide sometimes with being cautious on Goldman. But look, if the market does take a breather, you're at 15 times earnings. Over half of the revenue of Goldman is sales and trading. That's not a high multiple revenue stream. So we just think the risk reward here is over time, much more skewed to the downside with both of those stocks.
It's good to see you.
Likewise.
Thanks for dropping by. Thank you, sir. Sol Martinez there of HSBC. Looking ahead to earnings from JP Morgan, Goldman, Citi, Wells Fargo tomorrow on to Wednesday when we hear from Bank of America and Morgan Stanley.
And expect to hear a lot about investment banking, the mergers and acquisitions that we've been hearing about and that Jeffrey said that they had a record revenue from. Let's hear what J.P. Morgan and Goldman Sachs has to say tomorrow.
Looking ahead to earnings season for the big banks. Coming up next on the programme, Abigail Ward of UBS as the government shutdown enters week 3. Plus, Yahira has your morning movers. Warner Brothers Discovery higher. On reports, the company has rebuffed Paramount Skydance's initial takeover approach.
The market probably is a bit cautious, but I think it's not expecting too much.
If the AI story gets questioned, then the whole thing probably starts to slow down.
It's not just risky assets. It's not just the AI right tail.
We can play different trends here in different ways that aren't as overpriced as the overall market.
The interesting part is the only trend is all systems go.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, taking down the temperature.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set.
President Donald Trump attempting to put a lid on rising tension with China. As reports suggest the Pentagon is looking to stockpile critical minerals, J.P. Morgan is making a $1.5 trillion promise to help boost economic security. That effort is still building.
And that news just crossing the wires currently with J.P. Morgan adding $500 billion to the total that it already was planning to help finance through using about $10 billion of their own capital to make equity investments in some of these crucial companies. It comes at a time where every private asset manager has been trying to get into this field because this is something that clearly is a priority for the United States. And in many ways, the U.S. is finding itself at its back foot because of its reliance on China for these rare earth minerals.
There is a fantastic stock market proxy, MP Materials. Check it out in the pre-market. It's higher by more than 11%, capturing the tension between the US and China. So I get the framing right now this morning. The president's backed away from the threat on Friday. Equity futures bounced back. But the tension over critical rare earth minerals, that's going nowhere anytime soon.
Absolutely not. And it's why you see the administration doubling down when it comes to what is going on with the Pentagon and making sure that there's billions of dollars that they can use to go into this space, as well as taking direct equity stakes into these companies. J.D. Vance, the vice president over the weekend, said it's going to be a delicate dance. And that is what is going to be between now and November 1st. The president said on Air Force One, from now until November 1st, it's an eternity for him.
This is quite a quote from JP Morgan's Jamie Dimon. Check it out. It has become painfully clear that the United States has allowed itself to become too reliant on unreliable sources of critical minerals, products, and manufacturing.
This builds on what he's been talking about for a while. Back in 2023, he wrote that U.S. supply chains for critical products and minerals, quote, must be domestic or only open to completely friendly allies or partners. This is something that has been on the docket for quite a while. How much is this going to be co-investments with the U.S. government in some way, sort of coalescing around this idea that, yes, the U.S. is investing, but so too needs some of the big corporate partners?
Take out what this means for the stock market and advanced technology in these chips. Magnets, rare earths, are needed for virtually every single weapon system. China owns them, processes them, refines them, and sells them. The entire supply chain is built around Beijing.
The futures bouncing back this morning, higher by 1.3%, following the biggest one-day loss going back to April in Friday's session. Equity futures firming up. Coming up this hour, Peter Chair of Academy Securities with stocks bouncing back. Norman Rule of CSIS as the Israel-Hamas peace deal begins. And Sonia Martin of DZ Bank on the dollar's safe haven status. We begin this hour with stocks rising as President Donald Trump takes down the temperature with China.
गोल्ड और सिल्वर का यार व्यू तो बुलिश ही है ओवरऑल. थोड़ी बहुत प्रॉफिट हुकिंग जरूर आई थी गोल्ड में, बट कुछ खास बड़ा सेल ऑफ नहीं आया. ऑल टाइम हाई से एक सेल ऑफ थोड़ी देर पहले निकला था. लेट्स सी, न्यूज़ का ही वेट है, उसी पे कुछ हो सकता है. इंट्राडे में देखोगे तो मॉर्निंग पे ऑल टाइम हाई टच किया, वहां से 11 बजे के आसपास एक सेल ऑफ आया था, बहुत बड़ी कैंडल प्रॉफिट हुकिंग की थी. तो अभी तो रेंज है. हाँ, अगर ये ब्रेक कर देता है 4090 तब थोड़ा सा बेरिस कर सकते हो. काफी बड़ी कैंडल बनी थी वो 11 बजे की, पता नहीं क्या हुआ था, उसमें न्यूज आई थी या फिर समथिंग लाइक दैट. गोल्ड में तो स्पेसिफिकली बता रहा हूँ मैं, एमसीएक्स में देखते हैं क्लोजिंग देता है नहीं 4090 के नीचे. अच्छा लेवल है, रिटर्न आ सकता है वहाँ से अनटिल अनलेस कोई न्यूज़ नहीं आती है. तो प्रॉफिट बुकिंग कंटिन्यू चल रही है वापस से. 1 आवर टाइम फ्रेम पे देख लेना, एक एम पैटर्न ना क्रिएट हो जाए. 15 मिनट में तो ऑलरेडी हो गया है, उसका ब्रेकडाउन भी हो गया, रीटेस्ट पेंडिंग है. 1 आवर टाइम फ्रेम पे थोड़ा सा टाइम लगेगा शायद इसमें, और एक कैंडल और. गोल्ड तो सपोर्ट पर भी पहुंच गया। अगर 4100 के नीचे सस्टेन करता है ब्रेकडाउन पे तो 4080 के अराउंड दूसरा एक सपोर्ट है 15 मिनट में। तो क्लोजिंग देख लो, आती है नहीं 15 मिनट की, एटलीस्ट 15 मिनट की बात कर रहा हूँ। बाकी सेल ऑफ आ रहा है अब तो।
The seeds are there.
क्रूड ऑयल में अभी कोई ट्रेड नहीं है, वेट ही करते हैं, कुछ नहीं बन रहा है इसमें। Do you think this precious metal rally is sustainable? नहीं कह सकते सर, मेटल रैली का जो आ रहा है ना, सिल्वर में, गोल्ड में, कॉपर में, नॉर्मली जितना मुझे लग रहा है गोल्ड के प्राइस तो ऊपर इसीलिए जा रहे हैं बिकॉज चाइना का जो सेंटर बैंक है वो कंटिन्यूअसली गोल्ड को बाय करे जा रहा है, पता नहीं क्यों। नॉर्मली गोल्ड के प्राइस इंक्रीज होते हैं तो इक्विटी मार्केट गिरता है एंड वाइस वर्सा, इक्विटी मार्केट फॉल कर रहा होता है तो गोल्ड के प्राइस बढ़ते हैं। बट अभी देखोगे यूएस मार्केट में इक्विटी मार्केट ऑल टाइम हाई के अराउंड ही टच करके आया है, गोल्ड भी ऑल टाइम हाई पर ही चल रहा है, तो दोनों में कन्फ्लुएंस है। एक्चुअली बड़े प्लेयर्स खुद ही डिसाइड नहीं कर पा रहे करना क्या है, आधे लोग गोल्ड की तरफ भाग रहे हैं, आधे लोग इक्विटी की तरफ भाग रहे हैं। दोनों सही नहीं हो सकते लॉन्ग टर्म में। तो कहीं तो फॉल देखने के लिए मिलेगा बड़ा आने वाले टाइम में, या तो गोल्ड बड़ा फॉल होगा या फिर इक्विटी मार्केट, क्योंकि लॉजिकली दोनों ही अपोजिट भागते हैं। इक्विटी मार्केट में अगर रिस्क बहुत ज़्यादा बढ़ जाता है तो लोग नॉर्मली गोल्ड को बाई करके सेफ हेवन में इन्वेस्ट कर देते हैं, सिंपल रहता है वो। बाकी लोगों को लगता है कुछ ज़्यादा इशू नहीं है, इकोनॉमी में सब कुछ सही चल रहा है, तो गोल्ड से ज़्यादा रिटर्न इक्विटी मार्केट में मिलता है तो पैसा वहाँ से निकाल के इक्विटी मार्केट में डाल देते हैं। तो दो मेन रीजन थे गोल्ड के ऊपर जाने के, एक तो चाइना बाइंग कर रहा है, दूसरा यूएस में लग रहा है कि रिसेशन आने के चांसेस थे, बट आया तो नहीं है आज तक। पिछले एक साल से ही कह रहे हैं रिसेशन आएगा आएगा, चांसेस कम ही लग रहे हैं। तो कन्फ्यूजन में है, इस वजह से दोनों ही जगह बाइंग हो रही है हैवी। कुछ बड़े फर्म मुझे लग रहा है गोल्ड में भी इन्वेस्ट करे जा रहे हैं और कुछ इक्विटी में ही भरोसा कर रहे हैं अभी भी कि कुछ नहीं होगा यूएस इकोनॉमी को। तो एक कन्फ्लुएंस है। बाकी मेजर तो रीजन यूएस का, चाइना का गोल्ड बाइंग का ही है। चाइना ने अगर, चाइना के सेंट्रल बैंक ने मतलब गोल्ड परचेज करना रोक दिया है, कम कर दिया, तब पॉसिबिलिटी वेरी हाई कि गोल्ड में एक सेल ऑफ जरूर आएगा, इतना जरूर कह सकते हैं। क्योंकि यूएस में रिसेशन तो मेरे को नहीं लग रहा है, आने के चांसेस है, उनकी इकोनॉमी बहुत अच्छा नहीं कर रही है, तो बहुत बेकार भी नहीं कर रही है कि रिसेशन दे देगी सीधा। तो गोल्ड रैली और बाकी मेटल्स की रैली रुकेगी नहीं रुकेगी, डिपेंड ऑन द चाइना बाइंग। चाइना का सेंट्रल बैंक अगर बाई करता रहा तो हो सकता है और जाता रहे। चाइना का सेंट्रल बैंक थोड़ा सा पॉज करता है या फिर थोड़ा कम बाई करना शुरू करता है तो ये सेल ऑफ आ सकता है। चाइना भी कब तक बाई करेगा, वो ऐसा तो है नहीं बस यही बाई करता ही रहेगा हमेशा। पिछले 1.5-2 साल से तो कंटिन्यूसली 2022 के बाद से कंटिन्यूसली बाई कर रहा है गोल्ड चाइना। बिल्कुल, डी डॉलराइजेशन का नंबर एक ऑप्शन गोल्ड ही है। चाइना वही करने की कोशिश कर रहा है क्योंकि उसको ही पता है कल के दिन कुछ होता है तो उसके तो फॉरेक्स रिजर्व में जो यूएस बॉन्ड पड़े हुए हैं और ट्रेजरी बॉन्ड्स पड़े हुए हैं और यूएस डॉलर पड़ा हुआ है, ये यूएस वाले तो लगा देंगे उस पर बैन, फिर क्या करेंगे वो। अब डॉलर पे तो कोई बैन नहीं लगा सकता, सॉरी गोल्ड पे तो कोई बैन नहीं लगा सकता। जितना बाई करके रखना है रख लो, क्योंकि वो तो एक यूनिवर्सल करेंसी है कह सकते हो एसेट के तौर पे, तो उस पर बैन नहीं लगाया सकता, फिर आप कुछ भी कर लो। तो वो अपने जो यूएस डॉलर है और यूएस ट्रेजरी बॉन्ड है उनको इंटरनेशनल मार्केट में सेल कर रहा है और गोल्ड को परचेज करते जा रहा है। उसका फॉरेक्स रिजर्व भी देखोगे, और सिर्फ चाइना नहीं, और भी जो सेंट्रल बैंक है वो सभी ये कर रहे हैं, बट चाइना बहुत हैवी लेवल पे कर रहा है, तो बड़ी इकोनॉमी है, तो इसलिए गोल्ड के प्राइस बहुत ज़्यादा फ्लक्चुएट हो जा रहे हैं उस वजह से। बाकी सिर्फ चाइना के करने से वैसे डी डॉलराइजेशन होगा नहीं, बट हाँ अगर ऐसी बहुत सारी कंट्री एक साथ गोल्ड बाय करने लग गई सेंट्रल बैंक उनके, तब थोड़ी प्रॉब्लम आ सकती है यूएस डॉलर के लिए। बाजार में भी एम पैटर्न के काफ़ी करीब है। प्रॉब्लम ये आ रही है ना, गोल्ड में प्रॉफिट बुकिंग आ तो रही है, ऐसा नहीं है प्रॉफिट बुकिंग नहीं आ रही, बट बड़े सेल ऑफ नहीं आ रहे हैं। मार्केट गिरता है स्लोली स्लोली करते करते, मतलब सुबह 1 घंटे में गिर जाएगा पूरा 2-3% जितना है, बाकी के रिमेनिंग आवर्स में वहीं पहुंच जाता है ऑल टाइम हाई पे फिर से। बन ही नहीं रहा है। इसलिए यूएस मार्केट ही ओपन होगा, ध्यान रखना 7 PM। 4090 4080 तक तो गिरना चाहिए, अब थोड़ा इतना तो आ ही जाए। बाकी एम बनेगा नहीं बनेगा डिपेंड करेगा 1 आवर टाइम फ्रेम पे, वहीं पर है उसका ब्रेकडाउन एम पैटर्न का। अगर ये होल्ड नहीं करता एम पैटर्न सक्सेसफुली बना देता है तब मजा आएगा, तब तो फिर ये इजीली गोल्ड की अगर मैं बात करूँ तो 1 आवर टाइम फ्रेम में, हायर टाइम फ्रेम की बात कर रहा हूँ, इंट्राडे में तो रुक ही जाएगा खैर। बट अगर ये ब्रेकडाउन कर जाता है, होल्ड नहीं करता है यहाँ पर 1 आवर टाइम फ्रेम पे, एम पैटर्न सक्सेसफुली बनता है, बना नहीं है अभी भी, तो हम एक्सपेक्ट कर सकते हैं यहाँ से फिर 2-3% गिर जाएगा, गिरना चाहिए लॉजिकली 3980 उस एरिया तक आ जाना चाहिए, बहुत आसान है। देखो एम पैटर्न बनाता है या फिर इस एम पैटर्न को कन्वर्ट करके डब्ल्यू में कन्वर्ट कर देता है। सो ऑन अ क्रूशियल लेवल सपोर्ट ही है।
Well, I mean, you kind of have to hand it to Trump. He did sneakily slide in this massive, 5 or 6x increase in the average effective tariff rate for the United States, and the S&P is at all-time highs. So he has done what he said he was going to do by increasing tariff rates to around 15%. But he's clearly not willing to do the things that will cause the most pain to the U.S. economy. And in that sense, I think the Chinese know that they have a bit more leverage because he tends to respond with these threats that are a little bit outsized relative to what he's actually able to deliver on.
So this is interesting, John, because we had Peter Scheer on earlier saying this time is different, and it feels different because it's initiated by China, and you have the capital markets increasingly moving towards supporting this idea of a greater degree of domestic reliance on rare earths minerals. Are you saying that we're not there yet, and that essentially it can't be that different, and there has to be the heat taken down because right now the U.S. economy can't keep going without the products from China?
Well, it's not, I mean, the U.S. economy is affected. Yes, absolutely. I think over time, what you're going to see is companies innovate their way around this choke point the Chinese have discovered around rare earths so that they aren't reliant on China for them. But the real sensitive piece for the United States is how incredibly dependent their military supply chain is on these Chinese rare earths. And that is the important factor for Donald Trump and why he cannot tolerate the list of restrictions that the Chinese put out last week. Now, I think it's important to put the Chinese restrictions in context here. The U.S. just 2 weeks ago expanded their own export controls to affect a wide range of new Chinese companies that are now not allowed to get access to certain U.S. technologies. The Chinese, in our view, thought they were just retaliating proportionally to that. The Americans saw the Chinese retaliation as an escalation, and that's why we are where we are today. But it's the military that's the sensitive issue, not the U.S. economy when it comes to these rare earths.
As President Trump deals with a lot of international issues, I'm just wondering how it complicates the issue that the U.S. government is closed, that it's shuttered, and that there still isn't necessarily a sense or a path for how it can get reopened.
Yeah, good question. And I think one of the fascinating things here is how it seems to make no difference whatsoever that the U.S. is closed down. You know, they did release their latest rounds of export controls, the U.S. did, right before the shutdown began. So maybe you think that was because they were hurrying to get out the door. I don't know. And, you know, I don't really think that complicates the fixing this issue that much, though. You know, there's been an enormous, majority of federal workers right now are still on the job because they've been deemed essential. And there's just been, the Trump administration is taking very broad discretion in what people can do. The workers just can't get paid for it. But that's a problem if you're a federal worker, not if you're trying to enact policy.
Hey, John, I appreciate your time. As always, thank you, sir. John Lever there of your Asia Group. Friday was a very interesting stress test for this market and very different to the price action we saw back in April. If you think about what happened with the bond market, I know the bond market shut today for Columbus Day. Happy Columbus Day, particularly to the Italian community here in New York, which often celebrates that, including yourself, Anne-Marie. And I guess me too included. I'm on a little bit of a tangent here, forgive me. But the fact that the bond market rallied on Friday compared to what happened in April was a bit of a tell.
And it was the greatest rally that we've seen going back to August 1st when we got that payrolls report. So it gives you a sense of people looking more to a support, frankly, for the bond market rather than some sort of sell-off.
Equity futures this morning higher by 1.3%. Up next, the former senior U.S. intelligence official Norman Rule as the Israel-Hamas peace deal begins. Happy birthday to the bull market. A 3-year run. Anniversary was yesterday, October 12th, 2022. We've had an 80% plus move on the S&P 500 over that period, and we bounced back this morning. The rally resumes, up by 1.3% on the S&P. On the Nasdaq 100, up by 1.9%. What a move, erasing some of Friday's losses. Thank you to Jessica Menton over in Bloomberg News for breaking down some of the numbers. $28 trillion in value added to this index over the past 3 years. Nvidia up by 1,500% over that period.
If you can remember, it goes back to when OpenAI was launched, the idea of ChatGPT, and suddenly it revolutionized the idea of exactly what artificial intelligence could do to the workforce. And suddenly you have seen those names absolutely skyrocket and continue with the gains. Yesterday, or on Friday, I should say, those were the ones that led things down. Those are the ones that are leading things up today as everyone tries to buy the dip.
Nvidia up by 3.4%. More on that story a little bit later as we count you down to the opening bell, 3 hours away. With your morning movers, let's cross back over to Yahira. Hey, Yahira.
Hi, John. We are seeing shares of U.S. rare earth miners climbing. MP Materials up 10.7%. USA Rare Earths also up after President Trump, of course, threatened a new 100% tariff on China, fueling trade tensions. It comes just as China tightened its grip on its critical minerals. So these domestic rare earth miners are rising on the idea that they'll benefit if China-U.S. trade tensions continue to escalate. And moving on to NVIDIA and AMD, also rebounding this morning. AMD up nearly 4%, NVIDIA up 3% after NVIDIA fell 5% on Friday, also related to President Trump's tariff threats. And these semiconductors, of course, are caught right in the middle of this trade spat. And amid the risk-off mood on Friday, most major cryptocurrencies, including Bitcoin, fell. That made stocks like Robinhood fall on Friday as well. But we are seeing a rebound now in the pre-market up 3.7%. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. On our radar this morning, President Donald Trump softening his stance to the US-China trade standoff after threatening a 100% tariff on imports. The president posting on Truth Social, "Don't worry about China. it will all be fine. Elsewhere, Vice President J.D. Vance warning that painful job cuts are coming if the government shutdown is not resolved. Vance telling Fox News the longer the standoff continues, the deeper the cuts will be. And finally, all remaining living Israeli hostages have been freed from Gaza under a US-brokered peace deal. The ceasefire, including a swap for nearly 2,000 jailed Palestinians. President Trump is in Israel and is set to address Parliament over the last 30 minutes or so.
Absolutely historic moment. And the president, when he addresses the Knesset, is going to say this is the historic dawn of a new Middle East. Not only do we have the remaining living hostages back in Israel, you do have hundreds of Palestinians from the West Bank now also being released. On top of that, he's going to go on to an unprecedented peace summit in Egypt. And that is really going to cement potentially what the next phase of the ceasefire, this agreement, could mean.
Let's head over to Jerusalem and catch up with Bloomberg's Ollie Krug. Ollie, the Israeli leader speaking right now in the Knesset, the President, Donald Trump, about to speak in just a moment. Just frame this moment for us, how important it is for the people of the region and ultimately also for the leadership of these two individuals.
Yeah, Jonathan, it's hard to actually put into words the sort of significance of this moment for the Israeli people who, since the beginning of the war on October 7th, more than 2 years so now, have been awaiting the return of the hostages who, as of this moment, are no longer in Hamas custody, which really, no matter what happens next for the Israelis, is the end.
Look at the gold, वहीं से return किया 4,100 से 4,090 के बीच में. देखो ऊपर जाता नहीं जाता या फिर नीचे आता है. 4,130 से 4,135 रेजिस्टेंस है. एम पैटर्न बना नहीं है, बन सकता है, बनता है तो बहुत अच्छा गिरेगा. रेजिस्टेंस है, आ जाता है फॉल तो बढ़िया. 4,130 टू 135 के बीच में सेलिंग के लिए अच्छा है. फिर देखते हैं नीचे 4,070 तक फॉल करता है तो अगर 1 आवर टाइम फ्रेम पर. यूएस मार्केट ओपन होने वाला है इस कैंडल के बाद, तो थोड़ा सा किसी का कोई ओपन पोजीशन चल रहा होगा तो एसएल कॉस्ट पर रख लेना. रेजिस्टेंस का गैप अप हो गया ना उस दिन, चार्ट पे गैप अप है सीधा.
9 months.
Well, aspects of this deal were always going to be on the table. I mean, the idea that there would be a prisoner exchange, of a release of Palestinian prisoners, the release of hostages, that there would be some sort of a disarmament of Hamas, that was going to be true no matter what administration was going to be in power. But the idea that you would bring pressure upon the parties to make this happen, I don't think that was going to be achievable in the Biden administration because of the nature of their relationship with the players in the region. And the Trump administration had a very different approach, and that approach made this happen. So we should be clear, the Biden administration's approach to the region was unlikely to achieve this result. And the Trump administration did this in 10 months.
Norm, when it comes to what comes next, there's going to be this unprecedented peace conference in Egypt. What do you expect that will come of that? Will we get more information on what phase 2 looks like when it comes to Gaza?
This is an extraordinary conference. In and of itself, this is unusual. 20 nations, the president of Indonesia is showing up. You've got 20 nations dealing with Mahmoud Abbas, who has not been to Israel in some time. You've got the Prime Minister of Egypt, who has been invited and may show up nonetheless at the end of this important holiday. If that happens, that would be the first time he has been in Egypt in quite a while. If the Israeli Prime Minister attends, that would be the first time he would be meeting with some of these countries. And remember, there are countries attending this that do not have relations with Israel. And this would be the Israeli Prime Minister attending with President Mahmoud Abbas, someone he has refused to recognize. So this would be an opportunity for Netanyahu and Abbas to, in essence, set the stage for that second effort, that second phase. Also for these countries to identify what support they're going to provide, and for the president to pull them together and start that process. And it is critical that this security, that this aid be put in place to provide the Palestinian people with the humanitarian and security architecture they need to restore their lives.
Norman, just to that point, you were talking about whether Bibi Netanyahu, the Prime Minister of Israel, would be going. His office said this morning, he thanked President Trump for the invitation, but said he won't be able to attend due to the beginning of the Jewish holiday this evening. So we'll see whether he eventually makes it there. But right now, it doesn't seem like it's the case. And I'm just wondering, if you parse this out, is this coalescing of powers in the region going to be helpful to bringing Israel back into the international fold? Or is Israel still the odd man out? Is it going to take a lot for them to regain some of their previous reputation?
Well, again, we'll see how long the conference lasts. And if at the end of the holidays the prime minister is able to attend, we need to see what the prime minister's politics are like. If the hard right becomes a problem, which prevents him from participating as well, because he would be meeting with Abbas, he would have to make some concessions. He has stated no Palestinian Authority in the West Bank, so that's or in Gaza. That's going to be a problem. But we've got a situation where the Israelis are now not going to be responsible for security or some of the reconstitution of governance in Gaza. The Palestinians will be doing this. Will Hamas be responsible for the problems of Gaza or the Palestinian Authority? Or it's no longer Israel's responsibility. It's now a Palestinian issue and an international issue. So in essence, the blame shifts from it's an Israeli problem to an international problem. But again, we must get humanitarian aid, security aid, and rebuild the lives for the Palestinian people. So I think before we get to that political problem, this is a humanitarian and a security issue, and that's where the emphasis will remain at this point.
Norm, I wonder if there's a broader conclusion also, because we used to see that the alliance between Western nations used to be the United States, Europe, and a couple of others, maybe Japan. Now it seems to be really shifting to the Middle East. How much has this deal and the U.S.'s relationship with Saudi Arabia in particular really solidified that idea?
Well, you've seen several things. So first of all, this wouldn't have happened had the United States not worked with Egypt, Qatar, and even Turkey. Certainly that's true. However, there have been months of intensive diplomatic conversations with Saudi Arabia and the United Arab Emirates, and Saudi Arabia working with France and other countries that in essence created an architecture that also made this happen outside of the United States itself. And that Saudi Emirati and diplomatic type pressure was itself a dynamic that cannot be ignored. So these capitals, these rising powers are something that need to be recognized and worked with. And the Trump administration, to its credit, did exactly that over the last 10 months, and we're seeing the results. So ranging from the chip deals that the Trump administration is putting together, the energy discussions, and now we're seeing this in the Middle East. It's a very interesting and dynamic approach.
Norman, appreciate your perspective on quite an important moment in that region. Norman Rule there of CSIS, and what could be a crowning moment for the president's leadership for years still to come. And we hope this is an enduring peace in that region. I imagine there's still doubts. The president is about to address the Israeli parliament. The White House pre-released some of the remarks he will make. The Holy Land is now finally at peace. A beautiful, brighter future appears suddenly within reach.
Absolutely. The president is talking about a new dawn in the Middle East. Almost echoes what he said as well in Riyadh, but this is just him in this crowning moment. And it really is, even though there are so many question marks about what comes next when it comes to the different phases of this peace plan, the fact that the living hostages are home, the fact that the remains of those that died in captivity are coming back to Israel, you have hundreds of Palestinian prisoners leaving the West Bank, and the president is going to sit down with Arab leaders in Egypt to talk about what's going to happen with Gaza, and potentially, to Norm's point, potentially Bibi Netanyahu will show up at the end of this holiday. This is unprecedented, and it's historic for the region.
We'll be tracking these events as they play out over the next few days, of course, right here on Bloomberg TV and on Bloomberg Radio. Historic week, potentially. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. French President Emmanuel Macron announced a new cabinet as pressure mounts for the government to pass a budget. On Friday, Macron reappointed Prime Minister Sébastien Lecornu just days after he had resigned. Macron's weakened majority and a widening budget gap are fueling investor concerns, with French bond spreads now at multi-year highs. Meanwhile, the Pentagon is looking to buy as much as $1 billion of critical minerals. The Financial Times reporting the purchase increase follows China's Ministry of Commerce putting new export controls on rare earths and other materials for defense and technology manufacturing. The Pentagon's Defense Logistics Agency stockpiles were valued at $1.3 billion as of 2023. And Warner Brothers Discovery has rejected Paramount Skydance's initial takeover offer. Sources telling us here at Bloomberg, Warner thought the offer of around $20 a share was too low. Warner CEO David Zaslav is said to believe the company's streaming and studios arm will command a premium next year once it splits from its cable assets. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, US dollar dominance in question.
The dollar's role as the key financial currency in the world has really changed in the last 12 months. And so I think this is just a cyclical adjustment after something like a 10-year dollar rally.
Up next, we'll catch up with Sonia Martin of DZ Bank, live from New York City. You're watching Bloomberg TV.
गाइस यूएस मार्केट ओपन होने वाला है. अपना एसएल कॉस्ट में रख लो. नेचुरल गैस में दोबारा एंट्री मत करना. अब यूएस मार्केट ओपन होने दो, फिर देखते हैं. जिन लोगों ने बाई किया है अपना एसएल कॉस्ट पर रख के छोड़ दो इन नेचुरल गैस. क्रूड ऑयल ऊपर आता है तो एक सेलिंग का ट्रेड बनेगा. नीचे देखते हैं अभी पुल बैक देगा तो, बट नेचुरल गैस में अपना एसएल कॉस्ट पर रख लेना. ठीक है, अगर अब मान लो यहाँ से ऊपर जाता है, वेल एंड गुड. कॉस्ट नीचे आता है, कॉस्ट टू कॉस्ट निकल जाएंगे. और अगर नीचे आया तो वापस बाइंग थोड़ा सा और नीचे के लेवल से करेंगे. समझ में आया? इसलिए एसएल कॉस्ट पर रख के छोड़ देना इसको. नेचुरल गैस कॉस्ट टू कॉस्ट पे आता है, निकल जाना थोड़ा सा, फिर बाइंग दोबारा करेंगे लोअर एंड से। बाकी होल्ड करके रख रहे हो तो एसएल कॉस्ट पे रखना। नीचे आया तो 266 267 के अराउंड देखेंगे वापस, इन द सेंस ऑफ इसके लोअर एंड पे बिल्कुल।
The political situation there, the fact that time is running out for Le Cornu and even for President Macron himself to figure out next steps on how they're going to get a budget together and indeed how you can cobble together a functioning cabinet. So that all of that is happening in the background. But Euro not really reacting so much to it. But what I would say is it has been a better week the last week for the USD. That is having that is why you're seeing Euro come down a little bit this morning. We'll speak more about that with our guest in a short while. And then gold. Take a look at gold. We're through $4,000 for the first time ever in history, up 0.9%. The rally just continues and continues. We have loads of senior voices from the world of finance, including Ken Griffin's, Ray Dalio, all of them speaking to us over the last couple of days and talking about the rally and the fact that money has gone in, namely because there has been a portfolio reallocation away from the USD. So again, a topic we're going to talk about on the show. Flipping over, though, I also want to show you one other chart that sort of went underneath my radar, and I was speaking about it with our colleague Anthony Stevens over in Hong Kong, but really interesting to note just how much of a run-up we see, not just in gold, but also in other metals as well. Copper really benefiting too. If you look at the price performance, the price action of copper over the last year, we're very close to the one-year highs. Also benefiting from this massive push into data centers and the build out of data centers and the grid around the power infrastructure. And take a look at the massive outperformance that we're seeing in some of these metals ETFs, even versus the S&P. And, you know, forget about oil. Obviously, oil hasn't done a lot over the past year, but even massively outperforming the S&P, which has had a strong year. So that is the performance of metals. Okay, let's also check in on how markets in Asia are faring. Min Lo is in our Hong Kong studio. Min, a lot is going on there, but maybe just walk us through the handover as we talk about some of this AI euphoria stabilizing in these U.S. markets.
That's right. As you said, a weak handover from Wall Street, Asian benchmark on the back foot today. And you can see mostly in the red here. As you said, the Oracle story, right? The thin margins on its cloud services, really disappointing investors and putting a pause on that AI rally. And so you can see the TAIEX is being dragged down by TSMC, a big catch down for the Hang Seng as it reopens after the holiday. The Nikkei is fairly flat at the moment. We don't often put up Vietnam, but it's here today because it got an upgrade from FTSE Russell to emerging market status, and that potentially would unlock billions of dollars into the Vietnamese stock market. It's trading slightly higher today. But flip the board, we're taking a look at the Chinese tech stocks after markets reopen in Hong Kong. And you can see, again, big slide down some of these tech names like Alibaba and Baidu, SMIC as well, down about 1%. But Alibaba in particular, I want to highlight that because Deutsche Bank yesterday just raised the price target for that company by 28%, saying that they have become this full-stack AI services provider, and yet we still see this big decline here of about 3%, and a warning from our own Bloomberg intelligence analyst Robert Lee saying that markets are overestimating the intelligence of AI, that companies like Baidu, like Alibaba, they're going to struggle to deliver meaningful earnings upside given the stronger valuations and the market expectations, and that could cause them to reevaluate the capex spending. But flip the board, we're also taking a look at the yen as well, because we continue to see a fifth day of declines here, and you know the selling pressure is still there. Certainly, perhaps not enough for the BOJ to intervene yet, but we already have the Finance Minister Kato talking about keeping an eye on excessive moves in FX, and the pressure is going to be felt in the JGBs because you can see here the selling off in JGB futures. And certainly something to keep an eye on. There are speculation that maybe the yen carry trade would be making a comeback.
Oh, okay. Thank you for the overview there. Everything from AI to JPY, Min Lo in Hong Kong. Well, spot gold has broken through $4,000 an ounce for the first time as concerns over the U.S. economy and a government shutdown add fresh momentum to a scorching rally. Wall Street titans now saying the metal has become a safer haven than the U.S. dollar.
Dollar's depreciated by about 10% in the first half of this year. It's the single biggest decline in the U.S. dollar in 6 months in 50 years. Gold is at record highs. Sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed.
Gold is a very excellent diversifier of the portfolio. So if you were to look at, just from the strategic asset allocation mix perspective, you would probably have something like, as the optimal mix, something like 15% of your portfolio in gold, because of the fact that if you didn't even have a tactical, because it is the one asset that does very well when the typical parts of your portfolio go down.
Well, so much to discuss this morning, from gold to currencies. Joining us now is HSBC Global Head of FX Research, Paul Mackel. So listening to some of the titans of the industry there, Ken Griffin from Citadel saying that he believes gold is a safer harbor than the USD these days. Ray Dalio recommending that gold should make up about 15% of investment portfolios as a diversifier. Are you seeing that from your account base? Are you seeing an intentional portfolio reallocation away from the USD into gold?
Well, I will say, having been in the region for the last few days, it's coming up in every client meeting. It is the topic of discussion. And of course, the higher the price goes, the more that people seem to get interested. But I think what's happening here is there's a few forces at play. I mean, one, it's been pretty well telegraphed that central banks have been diversifying into gold. Mm-hmm. Clearly, the retail community is getting quite excited. So I don't think it's just about the U.S. dollar, though, so it makes it a little bit different from what's been said or highlighted by others. But I think it's a question mark about fiat currencies altogether. You know, we have uncertainty in Japan, we have uncertainty in other places, so it's not just about the dollar that's being questioned at this point that's helping gold.
But, you know, you say that, you know, questioning about fiat currencies, but in the example of euro, and I mentioned it at the top of the show, you do have political questions going on and swirling around France, but the currency as a whole, the currency for the Eurozone, has remained rather immune to those perhaps very country-specific developments. How long can that paradigm continue for?
Well, you see moments where it can have an impact, but as you say, it's one story within many countries within the region, so it doesn't have a lasting impact, and that's something that we need to bear in mind. I also think that we still have quite big dollar forces that are going against that currency, so we can get interested or excited, that is, in the currency market about what's happening within Europe. But ultimately, the big trend is still that the dollar depreciation story is not over.
Okay, so then you're thinking about euro from the context of what happens with the USD. So actually, let's address that. I was really surprised to see the dollar gain ground over the course of the last week. There's a U.S. shutdown going on. Who's buying the USD here?
Well, I think a couple of things. That one is just a bit of a rethink that we've been so accustomed to look at policy uncertainty in the U.S. as being bad for the dollar. And then we've had a reminder that there can be policy uncertainty elsewhere. And as a result, that's kind of recalibrated the market expectations, how to think about the dollar across the board. But ultimately, I still think that that's going to be a short-term type of influence. Who's buying it? I would imagine it's more of your speculative type of forces that are participating in this. I think it really started with events in Japan.
Yeah.
And it's cascading into other things for the moment. But look, let's not lose sight of probably, as I said, the biggest driver in the room is that the Fed is still in the easing cycle. And when that happens, the dollar tends to soften.
Okay, but then the Fed has to deliver on what is priced into the curve, right? So 4 or 5 rate cuts by the end of 2026. That may not happen if you get upside surprises in inflation, in which case it's difficult to argue that the dollar will continue falling if those rate cuts don't actually get realized.
Well, that's a great question. And the way I would answer it is that it tells me, and has been telling us for quite some time, we're probably in the final innings in terms of how much the dollar will likely weaken.
Right.
And once it becomes clear that the Fed easing cycle could be finished at some point next year, or the early part of next year, which is very much our thinking, then we could have the components in place that the dollar has bottomed. And we've been highlighting this since early July, that the bottoming of the dollar could be closer than what many people could be thinking.
Yeah, so it's down 10% year to date. How much further do you think we can go?
I think we've got a few percent left in this trade.
Okay.
It's come a long way. There was a big flop in the dollar. Now we're going through the chop in the dollar because it's bumping around versus many major currencies. But once we get some clarity, and that perhaps when the shutdown is over and we begin to see the data coming through, and it's validating why the Fed needs to do a bit more easing, as I said, it weighs on the currency.
So flop, chop, maybe at some point pop.
We'll use that.
You can use that, exactly. I do want to ask you something that I've been reading about as well, which is, if this shutdown does continue for longer, it obviously just means we have less data to look at, right? Especially that non-farm payrolls print that didn't come out last week. So in the absence of data, is that also not eventually going to impact the Fed? I mean, if the data is not being published, they may also have to postpone their rate cuts as well. So don't we also have to think about that they may have to keep rates where they are in the absence of data being printed?
Well, the short answer is no. We think they'll probably stay the course and deliver another cut at the next meeting. But like everyone else right now, I assume that they're looking at alternative data sources to try and back out the pulse of the economy. There's a number of high-frequency indicators out there. Obviously, the survey data can still matter, and there are some employment indications as well. So I don't think there's enough to say that there's massive blind spots and they won't keep cutting.
Yeah.
But they're probably mindful of these blind spots.
Okay, so let's talk about one currency that actually has been not performing well versus the USD. That is the yen. We've massively shut up in the last couple of days after the LDP leadership contest. I mean, do you think there is too much baked in at this point about what the new LDP leader can deliver in terms of fiscal stimulus and sort of putting pressure on the Bank of Japan to keep monetary policy easy?
Well, what stood out to me was just the thinking or the comments about trying to control cost push inflation. And part of that inflationary story has been a function of a weak yen. So I think there is some understanding there that, unlike previous thinking about having very loose monetary policy or very loose fiscal policy, you can't necessarily do that given where the yen sits at this point. You could be creating an even bigger problem. So I think, again, the market is perhaps getting to a point of overreacting to things.
Yeah.
Let's see how the policy framework develops within the next few weeks. And if I'm right, then bring back some stability in the Japanese yen and poised into strengthening into the hike.
At what level do you think we may be close to intervention territory in the yen?
Wow, geez, I think it'd be interesting comment-wise. We're getting up to pretty high levels here. It's always hard to gauge exactly where the pain point is, but I think from a short-term basis, people would start to get quite nervous if we're up at 155.
Okay. Paul, thank you so much. Really good to have you in the studio as well. It's nice to have you here in the studio, not on a Zoom. Paul Mackel, HSBC Global Head of FX Research. Now for a look at some of the other stories you're following today. President Trump is threatening to block back pay for some federal workers once the government reopens, saying some don't deserve to be taken care of. The White House Budget Office has drafted a memo arguing the 2019 law guaranteeing back pay is flawed and doesn't require automatic payment. Democrats call that interpretation an outrage and a clear violation of the law. Emmanuel Macron's rivals are turning up the heat on the French president, demanding their choice of prime minister, snap elections, and even his resignation. Macron was thrust into fresh upheaval on Sunday after Prime Minister Sébastien Lecornu resigned just hours after unveiling a new cabinet. Options are limited for Macron, but so far he's ruled out another early vote. Coming up, teams from the US, Qatar, Israel, and Turkey are set to join the Hamas talks currently underway in Egypt and what is seen as the final push to end the war in Gaza. We are live in Jerusalem next. This is Bloomberg.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
On everything that we care about. The economy, media and information, markets, trade, geopolitics.
Teams from the US, Qatar, Israel, and other nations are heading to Egypt as part of a final push to end the war in Gaza. A U.S. team, including Special Envoy Steve Witkoff and Trump's son-in-law Jared Kushner, is set to join Qatar's Prime Minister and other senior officials in Sharm el-Sheikh. Hamas says it's looking to secure what it describes as a fair hostage exchange as part of a deal. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Well, Dan, so many of these discussions, all of the discussions are happening behind closed doors. We don't have a lot of information in terms of where they are in the process, but perhaps the fact that some of these high-ranked officials, senior representatives from the Arab world and the U.S. are flying into Sharm el-Sheikh is a positive sign?
I think you're right. This is the third day of those talks. You have the principal negotiators and mediators converging on that Red Sea resort. These are busy men. They have other things to keep themselves busy. They also have at stake the credibility of their countries and the governments they represent. So one assumes they would not be coming out if they did not feel that these talks were going in the right direction. The right direction meaning an implementation of that Trump plan unveiled last week, a plan for ending this two-year-old war and, as he would put it, bringing peace to the Middle East. Very ambitious. Indeed, there's been little disclosure from any of the parties, with the exception of Hamas, perhaps not surprisingly, because the full Hamas delegation has been in Sharm since the outset. The comments have been a bit cryptic. One is a Hamas demand to have a guarantee, as we would call it, that Israel would end the war as part of this deal. Hard to understand that, given that the text of the Trump plan speaks about a de facto and declared end of the war the moment the first phase is undertaken. That being the freeing by Hamas of those 48 remaining hostages in Gaza. So it would appear that Hamas may be angling for a speedier withdrawal of Israeli forces from Gaza than that envisaged by the plan. The other issue is, as you noted, Hamas talking about a fair hostage exchange. This, I think, points to what Hamas would want, the people it would want to be on that roster of 1,950 Palestinian prisoners and detainees to go free as part of the Trump plan in exchange for those hostages, though not necessarily right away. Israel is almost certain to balk at some names that Hamas might put on that list, specifically masterminds of suicide bombings by Hamas going back decades. So those could prove to be thorny issues. I imagine during the course of the day, as those principles come into Sharm, we'll know more.
Yeah, so essentially the mechanism for the right field conditions, which is what Hamas were looking for, the withdrawal line, in addition to what names are going to be on the prisoner list. Bloomberg's Dan Williams in Jerusalem, thank you for spelling it out for us. Okay. Now, coming up, deadly clashes in Aleppo between the Syrian army and the US-backed Syrian Democratic Forces. We'll bring you the details next. This is Bloomberg.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
A tentative ceasefire has been reached in Kurdish-majority neighborhoods of the northern Syrian city of Aleppo. That's after fighting broke out between the Syrian army and the U.S.-backed Syrian Democratic Forces, and a setback for the new government's efforts to unify the country. Let's get more with our managing editor for Middle East and Africa, Paul Wallace. This has been a really tricky situation, especially with those Kurdish forces up in the northern part of the country. But I believe earlier this year, wasn't an agreement reached between Ahmed Shara, the interim president, and the Kurdish forces leader to somehow integrate those Kurdish forces into the state institutions? Apparently, there was an agreement, but then, of course, we saw the fighting break out and quite violent clashes the last couple of days.
Exactly. That agreement was seen as a bit of a turning point. It came about several months ago, but since then there's been virtually nothing in the way of execution on it. Very little in terms of the FDF, the Syrian Democratic Forces, this powerful Kurdish militia, actually being integrated into the Syrian National Army. And the clashes in the last 2 days show the sectarian tensions that still exist in the country. But often these tensions and these clashes between various groups in Syria are feeding on themselves. So we had, it was back in the summer, very violent clashes between Druze and Bedouin tribesmen and Syrian security forces in Suwaida, a province near Israel. There's a lot of thinking that the SDF and sort of Kurdish forces or Kurdish political groups in Syria see those clashes and think, why would we essentially give up our autonomy when it comes to military power and integrate into the Syrian National Army when these things are happening? Because the Syrian National Army is being blamed often for, if not starting these clashes, then exacerbating them.
Okay, so still a knife's edge when it comes to some of these sectarian violence situations that are popping up. And of course, this comes on the heels of the first elections in Syria since the fall of Bashar al-Assad this past weekend.
Yes, sort of parliamentary elections, if you like. But there's, a lot of people say this is not really a proper democratic exercise. This is not exactly a display of sort of universal suffrage or anything. The electorate was very sort of tightly controlled. The candidates were effectively chosen by the government. So some people are saying, look, it's it's a first step. This is a country that's been in civil war since 2011, effectively. It's been absolutely devastated. It wasn't a democracy even before then under the Assad family. So it's got to take baby steps. But I don't think in and of themselves these elections, which seems to pass smoothly, there weren't any reports of sort of violence and things. But I don't think in and of themselves that people are saying they're going to make much.
Well, yeah, I mean, a third of the parliamentarians were directly appointed by the president, and the other two-thirds indirectly. So not fully democratic, but at least elections and a step in the right direction. Paul Wallace, thank you so much. That was Paul Wallace, the managing editor for the Middle East region. Let's take a look at equity futures as we head into the European session. Things are looking up. We had a bit of a pullback yesterday for Wall Street indices, but today things are stabilizing. AI very much in focus as some of the hype around that sector begins to subside, marginally so, though, given how big a run-up we've had in the last few months. All right, we will talk more about that AI boom, which has fueled massive gains for big tech. But that rally may be running out of steam. We're going to be talking about that with our next guest, Mike Coop from Morningstar Investment Management. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Spot gold prices climbed to above $4,000 an ounce for the first time ever as concerns over the U.S. economy and a government shutdown add fresh momentum to a scorching rally. More money. Bloomberg has learned Elon Musk's XAI is raising more financing than planned, tapping backers including NVIDIA to lift its ongoing funding round to $20 billion. And in what is seen as a final push, senior officials from the U.S., Qatar, Israel, and other nations head to Egypt for talks aimed at ending the two-year war that has devastated Gaza and destabilized much of the Middle East. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. We have got U.S. futures trading slightly towards the green today, up 15 basis points, though, and a pullback for those Wall Street benchmarks. Oracle, one of the names in focus yesterday at the stock, ending down 2.5%. Some concerns around their margins in their cloud business, and that sort of set the tone for other names within the AI space as well, and also has transpired in the Asian session. So a bit of a stabilization or consolidation going on around those AI stocks, which really have done so well the past couple of weeks. 10-year yield sitting at 4.13, so fairly stable today. We're down about 2 basis points throughout the course of the last 24 hours. The euro also in focus, sliding a little bit versus the USD, which has gained ground throughout the course of the shutdown. We were speaking about that earlier on in the show. Now down about 0.3%. The euro is, again, keeping a close eye on developments in France with the pressure mounting on President Macron either to bring in a new prime minister or to hold legislative elections. So something to watch out for there, of course. And then gold, big theme this morning, up 0.9% through $4,000 for the first time in history. Again, the run-up in gold has been nothing short of spectacular. It's up more than 50% year to date. As we speak to some of the titans in the industry, the likes of Ray Dalio saying that 15% of a person's portfolio should be invested in gold. You've got Ken Griffin also saying that gold is, in his perspective, a safe harbor than the USD is. So really notable to remark what some of those key leaders in the industry have been saying. And then finally, I want to switch over and also just point out the massive run-up we've had, not just in gold, but also other metals as well, including copper. And this is an ETF that tracks metals, non-ferrous metals as well, and they've really massively had a climb in the last couple of weeks or so, in line with the run-up that we've seen around these AI stocks as well. And namely because when you think about data center build-out, you also need the metals to power the infrastructure and the grids. And that's one of the reasons why copper is trading as well, close to the highs it has seen over the past 12 months. So something to bear in mind. Okay, let's also check in on how markets in Asia are faring. Minmin Lo is in our Hong Kong studio. Minmin, walk us through the price action today.
Yes, Jumana, we're keeping an eye on the currency markets here because, as you said, we've been seeing the dollar strength. It's not just because of what's happening in France and Europe, but also what's happening with the yen. Today, we're seeing the yen falling to about the 152 levels, about 0.3% higher on dollar yen. This is the fifth day of the yen weakening over the win of the new LDP chief. And so that is also, again, our Bloomberg's M-Life strategist Mark Cranfield is saying we need to see a few more days of outsized move before the BOJ is going to intervene in the currency markets. But until then, we're going to see the impact on the on the JGB markets. We're still seeing sell-off in the JGB futures, and there is speculation about whether or not the yen carry trade is going to make a comeback if this trend continues. But flip the board, another currency that is actually even weaker than the yen, believe it or not, is the Kiwi dollar. You can see it is falling against most major currencies, including the yen, about 1% weaker than the greenback today. That's after the RBNZ cut rates by about 50 basis points, an outsized cut, and also providing more dovish guidance, saying they're willing to cut rates even more if the economy doesn't catch up. And certainly this is the worst performing G10 currency so far over the past 12 months. But flip the board, we're also taking a look at the tech stocks in Asia because, as you said, we have been seeing this rally in the AI euphoria, taking a pause in the US after the Oracle story, the thinning margins when it comes to its cloud services data. And we are seeing here as well on Alibaba, Baidu, TSMC, a sea of red across these Asia tech stocks, certainly raising the question about whether or not this rally is overextended in Asia as well.
Min Min Lo in Hong Kong, thank you so much. JP Morgan CEO Jamie Dimon says the bank is spending $2 billion a year on AI and expects that to deliver billions more in cost savings.
Look, I think people shouldn't put their head in the sand. It is going to affect jobs. So think of every application, every service you do, where you'll be using AI, some to enhance it, some of it'll be you doing the same job, you're doing a better job at it. There will be jobs that it eliminates. But you're better off being way ahead of the curve and retraining people. So we retrain and redeploy a lot of people. So for JP Morgan, if we're successful, we'll have more jobs. But there'll probably be less jobs in certain functions.
Well, Dimon has been one of the most outspoken Wall Street voices on the opportunities AI offers. And while big banks and tech giants continue to pour billions into the technology, markets are showing signs that early winners may be losing their edge. Could the Magnificent Seven stocks be nearing peak outperformance as the AI trade widens? Well, for these existential questions and more, we're now joined by Mike Coop, EMEA CIO at Morningstar Investment Management. So AI, so much conversation these days is around AI. I thought it was interesting to hear from Jamie Dimon. He said AI cost savings now are matching the money spent. So they actually are sort of breaking even in terms of what they're investing and how much cost savings that is leading to. Is that representative of the industry as a whole, do you think?
Good morning. It's a really interesting anecdote. And as I look at our multi-asset managed portfolios that we run for clients, we ask ourselves the question, do we have enough diversification in portfolios when there's this interconnectivity that's increasing around the theme of AI? And there's one side of that connectivity, which is the providers, the infrastructure rollout, the big spenders, and all the deals we've seen. And then there's the other side, which is companies applying it to enhance their offering, to reduce their cost structure. The net of all of that is that at the wide economy level, we think it's going to be beneficial over time for both inflation and for productivity. So that's positive, and all of these instances of general breakthrough technologies like this in the past have been very good, interesting enough for bonds because they're very disinflationary. What they do for equities is less clear because as the pace of change picks up, then it's harder to forecast who the winners will be on both sides. And as an investor, your challenge is to go, how confident can I be about predicting the future and what's the right price to pay?
And it also, so let's come back to, so I like that you make the distinction.
Guys, ये natural gas में SL cost पे रख के छोड़ देना, दोबारा buy मत करना इस level पे, ठीक है? ये निकल गया ऊपर तो निकल गया. 24 तक अगर ये नहीं जाता है ऊपर तो फिर अपना एसएल कॉस्ट पर रख के छोड़ दो, ठीक है। कॉस्ट टू कॉस्ट का ट्रेलिंग एसएल जाएगा, निकल जाना नेचुरल गैस में, ठीक है। चला जाना चाहिए ऊपर तक एटलीस्ट 274 278 तक, टारगेट तक नहीं जाता है तो फिर नीचे आया तो फिर थोड़ा सा ज़्यादा ही नीचे गिरेगा अभी, फिर उस लेवल से बाइंग का प्लान करेंगे। कॉस्ट टू कॉस्ट का एसएल जाएगा, निकल जाना, फिर रिपीट कर रहा हूँ नेचुरल गैस में। नीचे आएगा तो फिर प्लान करेंगे 266 65 के अराउंड, इस लेवल से दोबारा बाई मत करना अब, ठीक है। लॉजिकली तो चला जाना चाहिए, देखो बहुत देर से रुक रहा है, सेलर नहीं बचे तो बड़ी कैंडल ना बन जाए, बस इतना ही इशू है। ठीक है, यहाँ पर अगर ये ट्रेलिंग एसएल जाता है तो फिर थोड़ा सा वेट करेंगे और डाउन आने का, कोई सपोर्ट ही नहीं है। अभी नहीं आ जाता यहाँ से नेचुरल गैस ऊपर तो फिर थोड़ा अब नीचे आने का वेट करना, नीचे वाले लेवल से अगर नीचे आता है तो, ऊपर जाता है तो टारगेट इसको रिमूव करके 274, ठीक है। ये अगर नहीं आ जाता है ऊपर, अब एटलीस्ट 274 तक भी नहीं जाता है तो फिर नीचे आने के चांसेस हैं, उस केस में फिर इस लेवल से बाई करना, यहाँ पर दोबारा बाई मत करना, फिर इस लेवल पे कॉस्ट टू कॉस्ट निकाल देना अगर नीचे आता है तो। इसमें भी थोड़ा सा नीचे होगा तो देखते हैं। ठीक है, क्रूड ऑयल में भी एक बाइंग का प्लान करेंगे, ये थोड़ा सा गिरे और अब तभी प्लान करेंगे। अगर इसको ऊपर ही जाना है, थोड़ा सा फॉल कर जाए। ऊपर तो जब आएगा तब आएगा। अब इसको तो लगा ही देते हैं। थोड़ा सा नीचे आ जाए तो यहाँ पर एक बाइंग का प्लान करना, थोड़ा नीचे आने देना, लेकिन अगर आता है तो ही लेना, नहीं तो बीच में एंट्री मत करना, एसएल बहुत बड़ा हो जाएगा। मुझे साइडवेज ही लग रहा है, ऐसा लग रहा है क्रूड ऑयल साइडवेज हो गया है 5215 से 5130 के बीच में। जरूरी है, नहीं तो गोल्ड भी देखोगे 1 आवर टाइम फ्रेम पे एम बना ही नहीं रहा है। एम बना सकता था बट क्रिएट ही नहीं करा।
in your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Kenya has lowered its benchmark rate for the 8th consecutive time. The central bank cut its key rate to 9.25%, which is the lowest level since 2023. Kenya's central bank governor, in a statement, said the move is aimed to stimulate lending by banks to the private sector and support the economic activity. South Africa's biggest union at Eskom is demanding a wage increase of up to 15% ahead of new negotiations. The wage demand is more than 4 times the inflation rate and follows Eskom's stabilization of the power grid and its first profit in 8 years. Eskom declined to comment on specific pay demands until negotiations officially start. And Kenya has converted its Chinese railway loans from dollars to yuan, citing annual debt servicing costs by $215 million and setting a potential precedent for other African nations. Kenya spends nearly $1 billion each year servicing debts to China, a growing strain on its public finances. For more, Bloomberg's Andiro Ganga joins us now. Andiro, so there's been a switch out of the USD into Chinese-denominated yuan. What's behind the move?
Good morning, Jumana. So if we go back a decade ago, Kenya borrowed $5 billion from China to develop the standard gauge railway all the way from the port of Mombasa, intended to connect Kenya to the border with Uganda. And a decade later, we are seeing that $3.5 billion of that loan is yet to be repaid. But like you mentioned in the intro, Kenya spends $1 billion annually servicing its debt to China. And almost half of the revenue that it raises goes into debt servicing in the larger picture. And so that is what necessitated this currency swap. And as a result, the country has bought itself some form of relief, $215 million annually. And it might not look like it's a lot of money, but this is a country that is in high risk of debt distress. And what this does is it opens up room for social spending, education, healthcare, and also development of infrastructure. And while the currency swap is happening, Kenya is also managing its Eurobond. It went back to the market. It raised $1.5 billion. Part of this money will go into buying back its $1 billion Eurobond maturing in 2028. And the rest goes into plugging that 4.7% budget deficit that the country will be looking at. And what the goal here is smooth repayment schedules and also ease refinancing pressures. Because if you look at the next decade, $26 billion in terms of external loans will be maturing, $1.5 billion in annual interest rates. So they need to create some form of flexibility for themselves. If we look at this conclusively, they're just trying to reduce the cost of servicing debt, diversify the currencies that they're exposed to, all while maintaining liquidity.
Yeah, but isn't it just moving from one hand to the other? So, you know, this reprofiling of debt can provide some short-term relief, but in the long term, does it really change things?
You put it correctly. In the short term, it provides relief, but in the long term, there are deep-seated structural issues that Kenya needs to look at. Revenue is lagging, pending bills are rising every single day, and then they have statutory obligations like pensions that really remain high. So this is a country that has a lot of work to do in terms of recalibrating its long-term fiscal strategy. But in the short term, it buys them the breathing room that they need. And this is also not in the context of just Kenya, but the greater African continent. The World Bank estimates that half of the countries are at risk of high debt distress. And so they could borrow a leaf from Kenya and start managing their debt, particularly with their bilateral lenders, to ensure that they have some fiscal room to try and look at things in the short term while they work towards long-term reforms.
Bloomberg's Andiro Ganga in Kigali, Rwanda. Thank you so much for bringing us that story. Okay, pivoting back to markets again. The question for investors today is, are we beginning to see some stabilization or some of the hype around the AI euphoria bursting? Oracle was a big sign yesterday. That stock ended in the red after not meeting expectations on profits in its cloud business. That sort of set the tone for other AI stocks around the world. Today, though, things are looking up. S&P up 13 basis points. European markets trading flat. But that is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Mann with David Ingles.
Good morning. Let's get to your top stories today. Asian stocks dropping with Chinese assets facing pressure as we approach the Open. You have fresh trade tensions between the U.S. and China, but a bounce in U.S. futures suggests investors are pulling back from worst-case scenarios, with President Trump opening the door to a deal.
China warning of retaliation and urging further talks after Trump announced his plans on double tariffs on Chinese goods, along with sweeping curbs on critical software. Stay tuned for top insights on the trade war and markets throughout the program.
Plus, the NBA returns to China, working to rebuild its brand even as geopolitical tensions continue to rise. From the Asia Pacific, welcome to the show. Hope you're all well. Looking at the approach to the Open is a bad one. It could have been worse given the latest lines coming through and the opening of that door, of course, perhaps a path towards a deal. But all that being said is just to say that we are expecting Chinese markets, as you can see on your screens, to play some massive catch down, given where markets traded into the weekend. Flip the page, please, if you want to get an indication, of course, of some of these ETFs in the U.S. or the big names. So you have ASX, you have the CSI 300 tracker on your screens. We were down 4.5%. This is as of Friday. Just again, take note. Crane shares maybe at play on tech. And we were down closer to 8-9% in some of the big tech names. This is on Friday. Right. Now, the good news is, and us pulling back from the edge, is really some of the rhetoric coming through out of Donald Trump before he got on Air Force One about 3 hours or so back. He says the November 1 is still going to happen, but he is confident that he could hammer out something. Asia Pacific stocks coming up on your screens. Take note, Japan is shut, although the poll we're getting today is as of this opening in Taiwan. We're down 3%, 0.6%. But the good news, as you can see, is the yen is on the weaker side of things. And, of course, S&P futures are catching a bid Monday morning. Very quickly, gold, oil, copper, and crypto hit massively, of course, and we are seeing some green on your screen, which I guess is indicative of this slash détente we're getting as far as this risk sell-off is concerned. Just very quickly, so we're looking at 2-3%, right, going into the Open today, decline. So the 50-day moving average is going to be very much in focus today. That's coming up very, very shortly, because currently we closed above, just about 3% above that level. We'll see whether we test this and whether or not we bounce across this support.
Yeah, you got to wonder, right? Is this just political noise? Is just posturing ahead of this APEC meeting, and whether, does it put in doubt now whether these presidents could actually meet in Korea? Certainly that is a big question, but you mentioned about, there is a bit of buffer given what we heard from those Trump comments overnight. And it seems like in some ways, markets are taking this, at least in some cases, stride. You do see a bit of cash down, as you mentioned, but there are nuances where people are looking past this here right now in terms of what to watch in the agenda. So we talk about where things stand in the U.S.-China trade talks here right now, the national team ETFs, whether we do see any sort of buying from that end, gold mining stocks, of course, and basically anything that's really risk-related here this morning. Trade data, we're still expected coming through for September, so interesting to see how those numbers feel and how strong really the export side of things continues to be. That renminbi fix could be quite telling today, given some of the FX moves we've seen, and of course, offshore HIBOR as well.
Yeah, lots to watch going into the Open today. Also, in the last 30 minutes, just to mention, of course, we're looking at shares of China Vanke following the resignation of the chairman. Right, now back to the top story. So on Friday, you had President Trump upping the rhetoric as far as trade tensions go. You had a statement coming out of China on Sunday, Ministry of Commerce, and then a few hours back, President Trump, as we were just alluding to there, pulling back ever so slightly from the edge. Let's bring in Min Min Lo, of course, a China correspondent. She's with us out of Shanghai this morning to help us understand where we are. Min Min, can I just bring you in here? Then we'll talk about some of what we've heard so far. So get us up to speed here.
Yeah, well, this morning, President Trump appears to be offering an off-ramp to China, right? He praised President Xi on Truth Social. He said, don't worry about China. Highly respected President Xi just had a bad moment. He doesn't want depression for his country. Neither do I. The USA wants to help China. We're hearing similar tones from J.D. Vance on Fox News as well. He's calling on China to take the reasonable path here, saying the U.S. will also be reasonable if China is as well. But so far, I've been in Shanghai over the weekend, and I've been speaking to people here from the private sector, from official circles, and also from what we're seeing on Chinese state media as well. It seems like the sense I'm getting here is that China feels the U.S. is acting on bad faith, and the U.S. credibility is at stake because there appears to be this implicit understanding after the Madrid talks that both sides are going to keep things calm until Trump and Xi meets. And there was a clear warning from President Xi in his phone call to Trump that any unilateral actions could undo the multiple rounds of trade talks so far. But look what happened over the weekend. The Chinese Commerce Ministry officially defending its actions, saying the U.S. was the one that took new restrictive measures. The first big one came just about 10 days after that Xi-Trump phone call when the U.S. expanded the rules around the entity list. And that really kickstarted this whole spiral of China tightening the noose on rare earths, both sides imposing those shipping levies on each other's vessels docking in each other's ports, and that's where we are today.
Yeah, it brings us back almost a throwback to what happened back in April, right? Markets in some parts of it at least are feeling it. I want to bring up that soundbite from the president who just spoke about opening the door still to a trade deal. Let's listen in.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened. And I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
You mentioned tariffs, so we're talking about 100% tariffs now, once again. What are the implications, Min, for the Chinese economy, and what other options does China have at this point?
Well, obviously, the biggest implication is on trade, right? It has the potential to just rupture all trade between U.S. and China, and U.S. importers will have to find other sources of supplies. So that's the big implication here. But I want to point out, so far, China's actions, the rare earths control especially, is the strongest attempt by China yet at long-arm jurisdiction because it applies to overseas exporters of goods that contains even trace elements of Chinese rare earths. Now, if that sounds familiar, it's because it's similar to the FDPR rule that the U.S. has, Foreign Direct Product Rule, which the U.S. used to apply on China to restrict its access to U.S. technology when it comes to semiconductor equipment that are made outside of the U.S. So it's China's first attempt, or the strongest attempt yet at this extraterritorial rule, and that's a big leverage that China has. And the Chinese Commerce Ministry over the weekend clarified that this is an export control. It's not a ban. There is a clear signal here that there is a space to dial down tension because they're saying they're willing to work with countries to smooth things over, to allow stable flows of those rare earths if they work together with one another. So we have until November 1st, about a couple of weeks from now, for both sides to dial down tension. But of course, China also has other tools in its toolbox. It is able to disrupt other economic engines of the U.S. You think about Apple trying to diversify its supply chain out of China. But so far, that's been stalled by Beijing, restricting Apple's ability to work with the likes of Foxconn and other Chinese contractors that are key to Apple. And here's what one businessman that was here in Shanghai over the weekend had to say about the impact of tariffs. Have a listen.
We have to see how tariffs sort of come out at the end of the day. We'll see what happens, particularly with the negotiation between the U.S. and China. Having said that, all that does is delay things. I mean, people, when there's an uncertainty, they don't make decisions. I'm talking about the advertising industry now. They don't make decisions as quickly as they should do, or they postpone making a decision because they're uncertain about the results. So it's not good news.
That was Martin Sorrell, who is the head of a global advertising agency, and he tells me he's still bullish on China because he's confident that Chinese companies are agile enough to shift with the global trade flows. As you can see from the trade data today, expectations are we're going to see an increase in trade year on year in September.
All right, Minmin, thank you, Minmin Lo, our China correspondent joining us out of Shanghai here this morning. Let's bring our next guest, Jikai Chen, head of Asian and Global EM Equities at BNP Paribas Asset Management. Jikai, it's great to have you here in our studios. Does it feel like it's almost like brings us back to 6 months ago and really this back and forth and tit for tat that we're seeing between U.S. and China? And what do you do in terms of investments now?
I don't think it's avoidable, right? I think we've been in this particular type of watching for news flow, watching for any tariff news overnight since pretty much November of last year. I think this is a new phase, shall we say. I think a lot of the large economies have reached tariff deals with the U.S. administration. I think this is the biggest one that's still outstanding. And I think about a week or two before this latest warning from President Trump, we saw that there was probably some signs of deterioration. You saw that both countries were looking to ratchet up further controls about exports to each other or sensitive technology. And obviously China had a new regulations on the rare earths. As mentioned earlier, like even trace amounts will now be controlled. I think that probably rattled a little bit of the US administration in terms of what they wanted to do, and hence the warning on Friday. Marcus really sold off. We probably will follow a little bit today, but earlier today before he left for the Middle East, we obviously saw a little bit of a de-escalation with the possibility of a deal or meetings.
Yeah.
I think it's also important to note that why he chose November 1st. I think we forgot that the APEC meeting is in Seoul at the end of this month, and I believe the last day is November 1st for the leaders' meeting. So perhaps this lays the groundwork for some negotiations behind the ground and perhaps a personal meeting face-to-face between the two leaders, and we just have to wait and see. Unfortunately, we are held to these type of events, if you will, investing right now.
Right. That we're likely going to get a gap lower at the open. To your point, so would you buy today's dip? Would you wait 2 weeks? What's the short-term view from an asset manager?
We do not make a lot of short-term trades, if you will. I think this is something that we've been watching for since beginning of the year. Yeah. I think one of the as I mentioned earlier, this is one of the big ones that's still missing in terms of tariffs. Initially, thought that we have until like mid-November to decide, but I think this is something that is coming to fore now. I think the markets will adjust. We are relatively well positioned, I think, in terms of where we are right now. We're not looking to making any knee-jerk moves ahead of this news. Yeah.
It's coming at a time when China markets are, this slow bull run has been doing very well in some ways. Do you think there's any risk of this being upended now in the China market, especially when it comes to these big beta plays that people have been really kind of piling into?
Hard to say. I think from where we are here, from beginning of year, obviously has been a great run in Chinese equities. A lot of the large caps have gone up a lot. I think this is reflection of the fact that at the very beginning of the year, a lot of investors were really underweight Chinese equities, if you will. Then with the DeepSeek moment, seems so long ago, it raised a new fervor of investment into Chinese equities to see if there's any alternative investment destination, if you will, for AI exposures. I think this will probably continue, if you will. I think most investors now are probably neutral, but I wouldn't say that a lot of people are very overweight Chinese equities. And obviously what has happened in the last quarter or so has also caught the eyes of domestic investors. They're also piling in. So we just have to see today's correction and see what the markets react to it, and wait for further news between the two administrations in terms of where the tariffs will end up.
Jikai Chen, of course, we'll have more with him in a couple of minutes. Get into, of course, some of his other conviction calls. You're head of Asian and also global EM equities at BNP Paribas Asset Management. Also ahead here on shows, much more on these renewed U.S.-China trade tensions, and really what a reminder from Friday. As you can see, we have a great lineup of speakers coming up out of Goldman Sachs, HSBC, Lotus Asset, and also the head of China practice at Eurasia Group joins us at those times, throughout the course of this morning, counting down to the open of trade. Shanghai, Shenzhen, and here in Hong Kong, futures are pointing substantially lower this Monday morning. This is the China Show.
Technology touches on everything that we care about. The economy, media, geopolitics.
Welcome back. Right, so the renminbi fixer today is out. This is important because this does give the PBOC maybe an opportunity to backstop some risk appetite today. As you can see, we're now stronger in the Chinese currency. We still have a trading at about 713 handle, though. 710 is the midpoint of the day coming through out of the Chinese central bank. Yeah, Jikai Chen is still with us here at Asian and Global EM Equities at BNP Paribas Asset Management. We're just talking about some parts of this kind of China rally that still remain quite strong. I mean, you've made some adjustments, though, when it comes to the consumption space and the like. Tell us a bit more what you've done.
So, since the beginning of the year, we've taken some of the consumer discretionary space, particularly on the concern that there's more competitions going through. As you know, one of the big companies decided to enter several lines of competition. And that's led to quite a bit of concern about how the margins are going to look for some of the e-commerce companies. So we've dialed some of those exposure back in discretionary and put them into some of the IT hardware space to take advantage of the fact that post the DeepSeek moment, we have seen the hyperscalers in the US continue to ramp up the CapEx. Going into AI continues to exceed people's expectations, and that's obviously quite positive for Asia, because at the end of the day, we are the AI supply chain for the rest of the world. So that has been helpful so far this year.
That's interesting, given, to your point, people have been trying to figure out how to best play AI in China, and I think for the last, let's call it 4 weeks or so, some of the platform companies became those proxies.
Yes.
So you think hardware is the best way to play that as far as China goes?
I think hardware is one area we are confident that when we do the numbers and look into the structural flows, we can at least hang on to the fact that the CapEx are coming through and the CapEx will need to be spent, and some of these companies in our economies, particularly in North Asia, will be the one to benefit from this increased order flows, the likes that we've seen in South Korea as well in Taiwan as economy basis. In China, it's a bit more tricky. I think there's still quite a bit of advancement, definitely in terms of AI models that are put up by the large platform companies. But at the same time, it's not easy to basically identify a stream of revenue that's going to come through from some of these companies at this point in time, directly related to AI. So we are positioned in there, and we are benefiting from some of those appreciation on prices that we've seen so far. But right now, it's not easy still to find, like, say, tie the AI team to the AI revenues flow in some of these Chinese companies right now.
And tell us about what the pool of investments. I mean, does it look like it's just quite limited to names that we don't really know at this point? I mean, you talk about this kind of scarcity premium.
Yeah, there's definitely a big scarcity premium in some of the local AI chip companies, right? So we've taken a look at a couple of them, and the multiples are really quite breathtaking. Some of those names are trading at 300 times PE. When you look at the world leaders in terms of AI chip design, they're nowhere close to that, right? And some of these companies are probably still barely profitable, breaking even, if you will, next year. So it's very difficult for us to basically take the leap of faith and basically go into some of these more domestic-oriented AI names at this point in time.
Do you have enough quality information on those companies? I think Yvonne and I were joking about this, I think about 1 or 2 months back. A name like Cambricon, for example. No one had really talked about it to this extent, and then here we are trying to understand what the company does, what they do, and to what extent. As someone on the buy side, do you think you have enough sell side support as it pertains to that cohort of that ecosystem?
Still very new, I would say. I think the sales are also busy doing their work on companies like this. But as you can see, this is something that's quite new. Again, it seems so long ago, but this basically took off after the DeepSeek moment in terms of perhaps a Chinese alternative stream in terms of AI design, AI models. They've already proven themselves in AI models. Then this question mark is their ability to leapfrog or have a breakthrough on the chip design part. So far, I think the jury is still out on that at this particular point.
Yeah, and it's interesting too. I mean, what's different this time around? I'm looking broadly speaking in terms of EM. Is that it seems like the Fed's resumed this rate cut cycle, and which is something that is quite interesting in the face of all these geopolitical risks. Is that still a very supportive sort of narrative to kind of continue to lean into risk at the moment?
I think it is to a certain extent, right? If you look back, in November of last year, there was a lot of complicated issues that's going on. One, the labor market was starting to soften, but inflation numbers are still quite strong, so the Fed basically paused. And we've been on pause until the last meeting where they resumed the rate reduction process. And this is helpful, generally speaking, for emerging economies, because for emerging economies, a weaker dollar in a resilient US economy tends to be quite okay setup, because the overall demand is still all right from the US consumer, which is the largest consumer base in the world still. And it also allows a lot of the emerging markets central banks to have a little bit more flexibility in terms of managing their domestic interest rate to mitigate any potential economic slowdown, because they don't have to worry as much on their currency compared to the US dollar. So I think this setup is still pretty good for emerging markets right now.
Jerkai Chen, fantastic. Thank you so much. And I guess you guys are going to sit this one out for today as far as the gap lower is concerned. Yeah, there you go.
Thank you.
Yeah, could control one's emotions given a day like today. Jerkai Chen, fantastic. Thank you so much, Head of Asian and Global EM Equities at BNP Paribas Asset Management. Yeah, Hang Seng Index 2.5% lower, 650 points to the downside. In terms of market breadth, that should be also quite negative as far as that is concerned. So we are going into a risk-off session. How long that lasts, who knows? We'll find out. A full preview is coming up next. This is Bloomberg.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter. Experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
As expected, equity markets are somewhat falling out of bed. Let's see to what extent and whether or not we'll get buying coming through to support these markets. But yes, this catch-down trade, not just in Hong Kong, but we're seeing that in the likes of Korea and also in Taiwan today, really on the back of this re-escalation of trade tensions.
And what is falling the most is the winners of this rally, right? They take a look at the beta stocks like the big tech. That certainly is the one where we're seeing the biggest blow when it comes to HS Tech here this morning. There you go. Alibaba's down close to 4% here right now, 3% losses for Tencent and JD.com. We're also focusing on the domestic chip space, given that this is kind of where that leveraging sort of options or tactics really are, rare earths versus really chips at this point. And there you go. You are seeing the likes of SMIC, Hua Hong Semi, also who have been darlings in this whole market as well, are also down by 2 to 3% here right now. We're focusing on some of the rare earth stocks. You saw some of the Aussie ones already react to some of these news here, but there you go. You are seeing the likes of Ganfeng Lithium down some 5%. CATL8 shares also seeing drops of similar measure. We're down 28 bucks there right now. So there you go. And gold miners, right? Oh, let's talk about Vanka first. So there was actually some news on the corporate side of that one. Chairman resigning. We're taking a look at the stock in particular. There you go.
Down 5.
Down some 5% as well. So still, there is some news to kind of look into this, all of this, in the face of all of these kind of geopolitical noise. Gold miners, though, also we're focusing on here today.
Yeah, because most of the indicators of risk appetite today actually started to pick up, but obviously gold has been dancing to its own tune, and it's actually seeing more upside as we speak. So we're down trading back above 4,000. It's mixed across some of the gold plays. It's hard to sort of split up what we're seeing as far as the actual miners are concerned, given how far some of these names have actually rallied. The same can be said about Vanco, which actually also did see some downside, as Yvonne is pointing out, down to maybe that news and now to maybe the risk aversion that's out there across these markets. Hang Seng Index down about 2.5% as we approach the opening bell. All but 2 stocks are actually down going into the open today. The opening bell coming up next. This is The China Show. Good morning.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Welcome back. You're watching the China Show. And yeah, we're down about 2% on A50 futures. We're down 2.5% on the Hang Seng Index. In your pre-markets, this massive catch-down trade we're seeing just about across the region. Japan is shut, although similar move in futures there on the Nikkei. U.S. futures, though, are pointing to some stability going into the rest of the session. But all that said, we are expecting to see a gap lower at the open, this adjustment coming through out of this renewed flare-up in trade conversations here.
And we're watching all the proxies, right? Whether it is the chip space, rare earth space, soybeans, all the like of really kind of what to measure how to look at these latest escalation, which was sudden. We weren't expecting this, given that we've been in this whole kind of trade truce for months now. And all of a sudden, it feels like it's April all over again, at least sentiment-wise. But then again, we talked about President Trump, J.D. Vance, the vice president, also speaking over the weekend, just trying to dial down the temperature just a little bit before his trip to the Middle East. President Trump did mention that they are still leaving the door open when it comes to some sort of trade deal as well. And we still have a couple more days until, of course, APEC. There you go. We're still seeing, though, a massive sort of gap lower when it comes to the onshore market. CSI 300, we're down close to 2.5% here right now. You are seeing that kind of rush into some of the CGB space. So bonds are catching a bit here this morning. The 30-year yield is down some 4 basis points as well. You take a look at the commodities are also kind of falling out of bed. Shanghai crude is down some 3%. Copper is also down 2.5%. And you are seeing some of these big cap names like CATL. A shares are down some 3% here right now. And we're focusing a little bit more when it comes to Hong Kong. It is that sort of tech exuberance is now at risk, possibly, just given that these were kind of the leaders of this rally. And there you go. HS Tech is down some 2%, given the fact that we are seeing these fresh threats when it comes to export curbs in AI, in chips and the like from the U.S. That's the first time that we are reacting to this here in China, right? So there you go. You are seeing when it comes to the big names like Alibaba is down close to 4%. Tencent, Meituan are down 1.5% or more. Domestic chips, though, you are seeing some nuances, right? So SMIC Huahong actually now that things have opened up are doing a little bit better. On the flip side, Capricorn Tech is going down about 0.75%, and OmniVision is going down 3%. So there you go. There's a bit of mixed reaction there when it comes to some of these national sort of champions. And the national team ETFs, we're watching very closely whether we do see any sort of buying from some of these sort of support E-fund and the like here. Not seeing too much here right now. We're still seeing a bit of a negative reaction so far in some of these ETFs.
Yeah, it would be a good indication if there is some market support that's coming through as well. It certainly goes into the A and H share conversation that maybe the onshore markets might fare slightly better compared to the offshore markets, given, of course, that they do have that there onshore. Just to also mention, we've sort of parsed through a lot of the commentary that's come through given the latest developments. And here is just a quick glance at what so far we've gathered from analysts talking about the escalating trade tensions between the U.S. and China. Let's start things off here with the note coming out of Andrew Tilton, Hui Shan, and their team there at Goldman. On the eco front, this re-escalation suggests a wider range of outcomes than was the case ahead of the last round of talks. There is a possibility of greater concessions and possibly lower tariffs, but also the risk of substantial new export restrictions and higher tariffs. Nomura, flip the page, please. Also coming out with there, this is Ting Lu and his team. This escalation of trade tensions is more about posturing for upcoming negotiations, including possible, and hopefully for everyone here, re-engagement, of course, in that meeting between the two presidents at APEC. And JP Morgan, very quickly, Wendy Liu, as far as strategy goes, should the Chinese stock market experience an outsized decline, which is perhaps arguably what we're seeing today, this is a window. This is a buy-the-dip opportunity that could emerge before the year end. Now, despite all of that, you have a look at the consumption sector, right? So you have our folks at Bloomberg Intelligence, because we also just happen to be wrapping up, of course, Golden Week, and we now have data on this as well. Marvin Chen and his team effectively saying here that the consumption sector could be an overall bright spot. There are nuances, of course, within the categories, but some analysts noting that positive figures during the Golden Week. Our team here at Bloomberg Intelligence notes that tourist trips hit a record high 888 million, while spending or general spending exceeded 800 billion. They say strong travel, leisure activity suggests households may finally be moving past these pandemic-era caution. Momentum was evident across dining, entertainment, and travel. The sectors most affected, of course, from events during and lockdowns during the pandemic.
Yeah. Meanwhile, Goldman Sachs is chiming in, right? So they've been talking a little bit more and crunching the numbers, and maybe not as optimistic as what Marvin and his team has been talking about, right? So they said goods consumption remains soft with downside in pricing, despite you're starting to see strong bright spots like tourism, traffic remaining solid. The demand softness we observed in the second quarter, the third quarter continued into the National Day holiday with sales growth of key retail and restaurant enterprises at just under 3%, which is lower than previous holidays this year. Joining us now is Michelle Chang, co-head of Asia Consumer Research at Goldman Sachs. Seems like depending on what metric you look at, you see different things. How would we interpret the latest sort of Golden Week data?
Yeah. So I think the biggest takeaway is there's a clear shift from consumer goods to more experience. Yeah, so I think during Golden Week, clearly traffic is really good. And of course, you can argue that it's a long holiday, so people probably travel more, so that they didn't have time to visit the shopping malls to shop. And also, you remember we have earlier Singles Day promotion activities which kick in recently. So consumers might hold back their purchasing during the holiday. But having said that, in the past few holidays, we still see holiday sales is still slightly better than the normal time. And this time, 2.7% growth only, compared with you have 6% in Labor Day and 4% in Chinese New Year. Even compared with past 2 months, July, August, the retail sales growth is like 3 to 4%. This 2.7% indeed is not too exciting. But having said that, break down into the category, we have been seeing that consumers want more experience. And also, if you look at some subsectors, there are still some bright side related to experience. And also, if the companies, they can figure out some new growth opportunities, there are still category or the penetration stories. They are still more resilient. Yeah, but all in all, I think aside from the general top line number is not too exciting, one key trend we have been seeing is pricing and deflation. Yeah, so from end of second quarter, we start to see that the pricing trend turn softer, and this might continue. Even we should have an easier base in the second half.
How much did discounts help?
On the one side, you have the food delivery platform fight earlier, although it peaked out in July, August. But looking at different freshly made drink company, earlier you can buy a cup of coffee or milk tea at 15, 16 renminbi per cups. But in the recent trading, it's probably only like 10 or even below. Wow. So it's actually quite big discount. And also in some sectors, like apparel, it's actually not really the inventory issue. In China, brands and retailers, they actually have capability to control the inventory pretty well. But it's more like you need to do promotions to attract consumers' attention. So discount, again, base should be easier in second half, but we still see third quarter, the promotion activity is still quite intense.
How do you look at in subsectors, right? Everything from jewelry to restaurants to, sportswear. I mean, what stood out to you?
So a few sectors we still like, definitely those with volume growth story. So basically, we take aside the pricing for now. We hope to see some pricing improvement, but if the sector still have volume story and it's still a safe bottom support, so some new consumer ideas like IP diversified retailers, they are still doing really well, and pet foods is still doing well.
Pet food, okay.
Yeah, and also on the other side, for the bigger categories, actually beverage, no matter it's packaged RTD beverage or the freshly made drink, these beverages still relatively doing well because of volume growth. And sportswear, I think, is still relative sectors you see general volume growth. But in near term, you just see a huge divergence in terms of the brand's performance. And maybe one more interesting thing to add is we have been talking about rational spending, kind of consumer trading down in the past few quarters. But in the past 2 quarters, some premium segment is actually actually doing better. So in sportswear, in cosmetics, even for some luxury, you see some luxury shopping malls traffic, they really improve because of the low base. So not sure whether it's a little bit like a stock market wealth effect or it's just easy base, but in the past 2 quarters, it's a premium if you can really deliver, the brand can really tell some good stories. People still want to pay premium. But in the mass, it's really, really competitive on the functionality, on the pricing.
So would you, from an investment strategy perspective, would investors be better off leaning towards these brands or companies on the higher price points?
Not necessary. I think ultimately, I think if you want to scale, definitely the affordability is still key. So value for money, and if they can capture the lower tier city opportunities, definitely from the scale perspective, this is still the areas they can explore. But for premium segment, niche brands and in the good brand cycle, actually there's opportunity. When we look at the consumer space, even in cosmetics, in jewelry, we actually see aggregate challenges. But you can still always pick up some brands that are doing well because they have right product portfolio and right brand momentum in the coming periods of time.
What else should we be watching out for? Obviously, when it comes to the food delivery space, you mentioned about maybe we reached a peak when it comes to the competition. But in terms of subsidies, should we expect that to continue into 2026?
Yeah, that's a great point. There's a lot of debate, and honestly, to some extent, market pricing huge corrections next year. And this is why a couple of bubble tea companies, they had good runs in the first 7 months, and then share price pulled back by like 20-30%. So on the one side, we indeed admit that this makes the whole competitive landscape very complicated. But on the other side, we always think that it's not just the subsidy, because if you break down into different brands, some brands actually doing much better because they have new products. So again, still go back to each companies whether they can figure out some new ways to serve, to engage with consumers. So looking into next year, on the one side, we factor in same-store sales decline, but some brands, they probably will be still performing better. And on top of that, they have store expansion, network expansion to support still pretty attractive growth next year.
It's hard. I wonder how you analyze the market now, because on one hand, you look at the headline number and you think, okay, the overall demand is quite weak. But also, do you think part of it is consumers have just gotten used to discounts and subsidies? In other words, demand could be okay, but if people expect discounts to continue, I'm not going to buy until they give me the discounts. I wonder how you would best characterize the Chinese consumer right now.
Yeah, and this is something we also worry about. Yeah, so earlier we do see some stabilization of the pricing, and initially it's not really better confidence. Initially it's more like, if I gave more discount, it couldn't drive traffic further. So the brands, company, they started to be a little bit more disciplined. Yeah, so hopefully I think the competition will be still a little bit rationalized, and so that people will still go back to pricing, because ultimately if it's all about pricing, and then different companies' strengths in product innovations and storytelling will be just underestimated. Yeah, but so that's why I think in the coming probably few quarters, if we still see pricing still uncertain, and if that's a volume growth, you still have the natural penetration story. And aside from the domestic theme, I think a lot of Chinese consumer companies, they are looking for is actually overseas expansion. Although these tariffs make things a little bit complicated in the near term, but we still see that there's decent growth opportunities overseas. So by leveraging their established competitive edge in China, and especially I think it's the quick response to what consumers want, and there's still decent white space to grow globally.
Very quickly, what markets are those? Is that Europe, Southeast Asia?
It's actually everywhere.
Including the US?
Yeah, including the US and Europe. Yeah.
Interesting. Very nice. Goldman Sachs there, one of the reports they have here is the Goldman Sachs Guide to Chinese Restaurants. It's not, of course, a restaurant's guide, but really Chinese restaurants and how you play that. Michelle Chang, thank you so much. Fantastic there out of Goldman. All right, a quick glance at these markets. 13 minutes into the cash market session. We're not doing well. We're coming off lows, I believe, in some cases. There we go, on your screens. Plenty more ahead. This is Bloomberg. Welcome back. Among the sectors we're tracking very closely, and there are many today given the sell-off, we're looking at property specifically on the back of this news of the abrupt resignation of the China Vanke chairman, who actually stepped in amid an already abrupt management overhaul back in January. So we'll continue to track this story. It's dragging down the space. We're down about 5% on the stock. We're down 3% on the sector.
Yep. So coming at a time when the financial position of the developer is already quite vulnerable here, and have a wall of really onshore debt maturities as well. So there you go. Some other big political stories that we're tracking for you today. President Trump has reiterated that the war in Gaza is over and that the truce will hold. He's traveling to Israel and is scheduled to address Parliament later on Monday. Now, if the deal holds, it would represent a major step towards lasting peace, something neither Trump nor his predecessor Joe Biden was able to secure in previous rounds of negotiations.
The war is over, okay? Do you understand that? I think people are, a lot of reasons why it's going to hold, but I think people are tired of it. It's been centuries, okay? Not just recent, it's been centuries. I think people are tired of it. Yeah, the ceasefire is going to hold.
Tensions are escalating in the South China Sea after the Philippines accused a Chinese ship of deliberately ramming a government vessel. The Philippine Coast Guard says the Chinese ship had already fired water cannon before the collision on Sunday, causing damage to its vessel but no injuries. The Chinese Coast Guard says it was conducting, quote, normal law enforcement operations near the Spratly Islands.
Right, let's stay in Southeast Asia here. So let's talk about Malaysia. So the second Minister of Finance says that the country's economy is actually being supported by strong private consumption. Speaking to Bloomberg, Amir Hamza Azizan has also talked about the resilience of the country's currency, the ringgit, reflecting really the solid fundamentals of the economy, and also he expects more foreign inflows to continue.
If you look at it, we are first half year 190 billion of FDIs coming into and approved investments. We're seeing domestic investments also growing well. We've seen, if I use as a proxy, and I look back at EPF as a proxy of formal employment, EPS contribution rates have gone up. It's growing at 9% compared to the previous year. So that's a sign that employment is still good. My money is still being pumped into the system. And the interventions that we're doing to lift the flow so that the citizenry has money in its hands are also helping drive private consumption. So I think those elements have actually created resilience in the Malaysian economy. And therefore, people look at Malaysia in a slightly different form. And then with the slowing down of the growth of interest rates in other countries, particularly the US where they have been cutting, that's allowed the differential to get smaller, so the ringgit has equally strengthened.
Do you expect the inflows to pick up speed and further boost the currency in the next 12, 24 months?
I think it was important for us to make sure that 2026 is a year that we have enough built in to sustain the domestic economy. So I think that resilience will actually show value to investors going outside. The government fiscal reform is showing value to it. So we started off with a fiscal deficit to GDP of 6.4%. This year we'll end up at 3.8, next year we'll down at 3.5. So there is resolve. And if you see at all the reforms that we've been doing, it's about putting in fiscal discipline is coming in. And those are good signs to investors that are coming in. We've had a stable government, clarity of policy, and that's helped to attract investments.
So supporting the currency, the thing is, the ringgit's performance is also contingent on the dollar, which also depends on what the Fed does. Right now, expectations are perhaps for 2 cuts. But that may not happen. How do you see that playing out into your currency?
Well, even if you look at this year, there were expectations of further cuts, and further cuts didn't come in, right? But the ringgit still resilient, because the fundamentals are still strong, and the differentials have remained quite reasonable along that line. So I think even if the Fed slows down its process, the ringgit still has a lot of wind behind it to be able to push ahead along the way.
Tariffs are a big uncertainty. You saw how, President Trump is imposing additional 100% tariffs on China, taking it to 130%. This is your largest trading partner, contributing to about 17% of overall trade. And some say 130% tariffs would mean stagflation, supply chain disruptions. How might that impact the Malaysian economy?
I think we've seen what's transpiring with the changing tariffs in the first half of the year. And when we started the journey early on in the year, the signals were tariff is going to come in, it's going to rattle the markets quite dramatically. Countries will have to do dramatic shifts in order to manage it. But over time, practicality started to come in because it's a very much more integrated supply chain that we're having on a global scale. So I think this recent shifts will probably also find a better landing in the not so distant future, and we'll come back to what is probably a practicable solution. And I think both sides are figuring that one out. So from a Malaysian point of view, the key is to actually understand what is the components of our trade. And our trade are E&E and semiconductors, but we also have still the commodities and so on anchoring the trade. So if we continue to do those well, semiconductors, which is a very narrow supply chain, continues to tick on a better note, I think we'll be able to ride it out.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
Some corporate stories we're tracking for you today. Didi Autonomous Driving says it's raised $280 million in a new round of financing. A statement posted on its official WeChat says investors include the Zhongguancun Science City Technology Growth Fund, JC Group, and Didi itself. The company says the capital will be used to accelerate AI research and the deployment of level 4 autonomous driving technology. China Wanka's recently appointed chairman has resigned from the role in a new blow to the embattled developer facing liquidity challenges. Exchange filing says Xing's resignation is due to personal reasons. Wanka has elected Huang Liping as the new chairman. The surprise twist threatens to further cloud the outlook for Wanka ahead of a wall of onshore debt maturities.
All right, just very quickly looking at the chip space, semiconductors, this is across the region. So everything from Samsung, SK Hynix down, and TSMC is coming up as well there. Down substantially. The opposite is taking place with Cambric Honda actually coming up. SMIC on your screens also seeing some upside. Again, perhaps a direct function of the trade rhetoric heating up yet again. And certainly these are some of the domestic plays there that have benefited from such pickup in rhetoric. Rare earth stocks coming up as well, doing very well. Again, rare earth very much in focus there because substantially well, 21%. So not all is bad going into the Monday session here. Just to also mention that U.S. assets, dollar yen coming up on your screens right now are showing markets are coming off the edge a little bit, although we are getting a lot of selling still. This might indicate maybe in a couple of hours things will peter out depending on the rhetoric that we've seen and heard so far out of the U.S. president. Plenty more ahead here on the China Show. Have a look at our guests coming through. This is Bloomberg.
Welcome back to the China Show. A look at the CSI 300 a half hour into the session, and you are seeing quite a bit of downside here. We're down about 1.5%. MSCI China is down by about 2%. This tumbling of equities certainly has been coincided with bonds taking a bit here this morning. Investors are certainly getting a little bit jittery when it comes to the latest, when it comes to U.S.-China trade tensions, this back and forth tit for tat that we saw over the weekend as well. We have seen at least the U.S. side come off a little bit in terms of the temperature and talking about, the door is still open when it comes to trade talks, but at least for now, we're still seeing a catch down story across onshore markets and here in Hong Kong.
Yeah, that's really on the back of the comments that the U.S. president made as he was making his way either onto Air Force One or on Air Force One. He's really toned down the rhetoric as far as that was concerned. It's taken the edge of markets. I think when you look at, to your point, U.S. assets right now are firmly in the green, but certainly what's worth pointing out as well is we haven't reversed fully the declines from Friday. So you split the difference between the two. We're not even halfway back. The MSCI China is down about 2%. Some of the big movers we're seeing on your screen, CSI 300 and the big names coming up very, very shortly. So it's not all red on your screens. You do have a bid coming through as far as the sort of your domestic chip plays like SMIC. Kingsoft is actually traded, of course, onshore. You are getting substantial upside there. But you are getting the drags. Goar Tech is a very good example of that. We're also looking at the 50-day moving average in the MSCI China. Certainly when you look at how, the Hang Seng futures on Friday fell to the limit of 5%. We were looking at several lines of support possibly that could be tested today. And as you can see on this one specifically, we are close, but not there just yet. Just to also mention that on the 50-day moving average, just watch it very, very closely and whether or not we do manage a bounce above that, because we are seeing some pressure right now. The FIX, which came in on the stronger side, managing to also take some of the edge off some of the selling out there. So dollar China's coming up. Dollar yen was quoted weaker going into the Monday session. There's a separate conversation in Japan and politics and what's happened to the coalition there might be adding more premia to Japanese assets. U.S. futures, as we were pointing out, Treasury futures are coming. You don't have, of course, Japanese cash markets up, but yeah, there we go. If yields were quoted today, we would be higher on the 2s and also the 10s. But yes, NASDAQ futures are now up 2% in the first few hours of trading here in the Asia Pacific.
Yeah, let's look back on what we've heard so far, really from both sides. President Trump says tariffs for China are still the plan, starting from November 1st. But speaking on board the Air Force One today, he called Chinese President Xi Jinping a, quote, smart man and a great leader.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened. And I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
Let's bring in our China correspondent, Min Lo. She joins us live from Shanghai here this morning. It seems like, at least for now, Trump is pulling negotiations back from the brink just a little bit.
That's right. Well, President Trump also wrote on Truth Social. He said, don't worry about China. Everything is going to be fine. And it seems like President Trump is anxious to reassure markets that this is not going to spiral out of control while he continues to put pressure on China to roll back some of the retaliatory moves that we have seen so far. We hear the same thing from J.D. Vance on Fox News as well, urging China to take the reasonable path here, saying the U.S. will reciprocate with reasonable measures as well. But so far, from the Chinese side, we have heard the Chinese Commerce Ministry saying that threatening China with tariffs at every turn is not the right way to deal with China, and China will not hesitate to retaliate as necessary to protect their legitimate rights and interests. And so far, we have seen the tightening of the rare earth controls as the strongest sort of long-arm jurisdiction that China has attempted so far when it comes to rare earths, because it applies to overseas exporter of products that contain even trace elements of Chinese rare earths. And this could have important implications on the tech supply chain, right? Analysts are saying it could cause a weeks-long delay of shipments of equipment from the likes of ASML. It could raise prices as well. And it seems like China is increasingly confident of the pain that they could inflict from its supply chain dominance. And they're willing to use that in exchange for tolerating incremental increases in the sort of export controls that we are seeing from the US, and even higher tariffs as well.
Well, yeah, Min, speaking of tariffs, it's strangely coincidental that trade numbers are actually set to come out at some point, in fact, any time now, really. And, you know, I wonder what the implications are when you look at trade, you look at some key dates as far as what we're watching is concerned. What options does China have now as we go into those trade talks and beyond them?
Well, of course, if the 100% tariffs, the additional 100% tariffs kick in, it could threaten to basically cut all trade between U.S. and China. But so far, as you said, looking at the trade numbers, China has seen trade hitting new records this year. It shows you that China is resilient and agile enough to really shift with the changing trade flows to increase its trade with other regions to offset the decline in shipments with the U.S. Of course, there's more sort of uncertainty ahead with the new levies being imposed on shipping vessels from both US, China. Both sides are imposing these levies on each other's vessels starting tomorrow. But again, in terms of what else is in China's toolbox, they still have other levers to pull. They have the ability to disrupt economic engines in the US, including, for example, companies like Apple and tech companies that are trying to, diversify their supply chain away from China. They are facing efforts that are being stalled by Beijing, which is restricting these companies from cooperating with the likes of Foxconn and Chinese contractors that are key and essential to their operations. You think about the Chinese market, it's still a huge market for really sensitive industries in the U.S., including agriculture, as well as tobacco, parts, aircraft parts as well. So yes, we have up until early November when the new tariffs could kick in, and of course end of the month is when President Xi and Trump could possibly meet in South Korea. Whether that's still happening, we'll have to see.
Min, thank you. Min Lo in Shanghai for us, our China correspondent there. Let's have a look at the implications across FX market. It's been a crazy ride across FX. In fact, just to mention dollar yen, which you see on your screens, right? So as recently as 10 calendar days back, we were at 147. So if anyone told us back then that we would write a headline, the yen would strengthen to 151, we'd call them crazy back then. But here we are in this new range. Joining us now is Joey Chu, head of Asia FX Research at HSBC. Joey, good morning. So obviously we will talk about the politics in Japan in a moment and what that means, but what do you make of the price action in FX markets this morning so far, given all the trade news so far from the weekend?
Well, I think we saw with a great sense of relief that the dollar CNY fixing came in at relatively low levels, sort of continuing the string of stronger than expected RMB fixing since they came back from Golden Week on 9th of October, right? We've been still stuck at this 710 type of handle, which I think is very good news and is a great anchor for the rest of dollar Asia amidst these times of volatility.
This is coming at a time when we're seeing the dollar rebound overall. I mean, obviously, with some interesting central bank decisions out of Asia last week, surprise cuts in some ways. But is there a sense that this whole kind of big dollar short trade is now fading?
I mean, I think we've been getting such questions since the start of third quarter, which was also when, the dollar started to find a little bit of a footing, partly because a lot of the de-dollarization type of arguments sort of faded, and a lot of the hedging moves in dollar Taiwan, for example, also sort of subsided. But, overall, our view is still that the Fed is still cutting, and historically, when we look back, there were times when, during the times when the Fed cuts and the U.S. does not go into recession, actually precisely the times when the dollar actually weakens. So our base case is still weakening modestly of the dollar.
Okay, Joey, can I ask you about the yen specifically, because that one has both a dollar component and its own idiosyncratic weirdness recently, and apologies for the lack of a more diplomatic way to describe that. The The argument recently is because of what's happening politically, or what's happened politically, the range on dollar yen has shifted up substantially. Would you subscribe to that view? What is that range now we're looking at on dollar yen?
Yeah, I think this uncertainty about, number one, in the first place, who is going to be the prime minister, and number two, whether there will be changes in this bias, be it for fiscal policy, monetary policy, currency policy, or even foreign policy. I think all these are great unknowns, and as we have seen in many times in history, especially with the US over the turn of the year, changes in government can have huge changes in the currency. So I think no one's really wanting to take a lot of risk right now. So the uncertainty is just sort of lifting dollar yen up, especially if you consider where we have been coming from at the before the elections, when dollar yen actually fell quite a lot in the second quarter. So our view is that eventually the dust will settle and we'll find out about the policies. Our base case is still that no matter who comes into power, the fact is that cost of living is the number one issue in facing the Japanese public, and so a weak yen is just going to be detrimental to this issue. And so any political leader that comes in has to face this reality.
Should we still assume that the BOJ can hike, even with a pretty dovish, I could say, new prime minister?
So our view is still that the BOJ will hike, because ultimately it will be basing its views and its rationale on the economic fundamentals. Of course, politics can affect it, because it can affect confidence, can affect investment decisions, and therefore affect the economy. But I think we have seen enough economic momentum or enough wage momentum onshore in Japan so far to judge that actually one rate hike is at least on the cards.
All right. Joey, you also mentioned, and apologies, I forgot to ask you about this and to go deeper into this, but yeah, I mean, the fix today was, I guess in many ways, a reminder of something else that might help us sort of backstop some of the risk appetite out there. Should we continue? Do you expect the PBOC to continue to lean into yuan weakness?
So actually, our view is that the fixing stalling at about 710 to 711 for the last couple of months already is both a function of the DXY not really moving lower, as well as a function of the trade talks sort of progressing well enough, or up until recently, but there have been no concrete developments in tariffs. So I think both conditions remain in place. In fact, the second condition about the tariffs, arguably you could say that it's developing in the negative way. So for us, I think there is some risk of upside risk in dollar CNY fixing going a little bit higher than what we have seen recently. But I still think that at the end of the day, it's not going to be a currency war that we are thinking about.
Joey Chu, thank you, head of Asia FX Research at HSBC there. We're getting just some lines crossing. There's a press briefing for the Customs Bureau in China in Beijing right now, and we're hearing from the Customs Deputy Director Wang Jun speaking and basically saying when it comes to trade faces rising uncertainty, difficulties, and the external environment still complex. Of course, this is on the back of what we've been hearing over the weekend, and really this escalation, a re-escalation of the U.S.-China trade dispute and the like. So certainly that's the comments there. We're still waiting, though, the export numbers and import numbers from September.
Yeah, they should be mentioning that at some point during this briefing, and we'll break those numbers to you once we have those trade numbers coming through as well. Interesting, maybe within that, what are we going to see as far as soybeans are concerned, or maybe the absence of which. Right, coming up here, we'll continue the conversation here on U.S.-China, and Hao Hong will be joining us out of Lotus Asset Management, who does see, of course, the latest moves as a strategic signal on the part of Beijing intended for the U.S. to get that message. Hao Hong joins us in a couple of minutes.
we do not make a lot of short-term trades, if you will. I think this is something that we've been watching for since, beginning of the year. Yeah. I think one of the, as I mentioned earlier, this is one of the big ones that's still missing in terms of tariffs. Initially, thought that we have until like mid-November to decide, but I think this is something that is coming to fore now. I think the markets will adjust. We are relatively well positioned, I think, in terms of where we are right now. We're not looking to making any knee-jerk moves ahead of this news.
Chikai Chen there, head of Asian and Global EM Equities at BNP Paribas Asset Management, speaking to us a little bit earlier on. Meanwhile, we're hearing from some of these financial newspapers in China saying that stock investors shouldn't be, quote, overly pessimistic despite external shocks. The Shanghai Securities News is citing brokerages who say traders should pay closer attention to China's economic transformation and capital market reforms.
Yeah, to help us sift through the noise and signal here, joining us here on set is Hao Hong, managing partner and CIO at Lotus Asset Management. How it's nice to see you. The market's done extremely well going into the weekend, yes. And then maybe for those who were looking for an opportunity to buy the dip or a dip, here's a dip for you today. Yes. Would you? What advice would you give to those people?
Yeah, well, I think we will be buyer of this dip, right? So we've been waiting for this. I think before this correction, the Chinese stocks has been going from strength to strength, especially the tech stocks. So I think for people who wanted to get into this trade, it's very difficult. All right, or not very, but it's trying to find a good position to get in, right? Mm-hmm. So now this is the chance, and I think the volatility will be with us for some time. Mm-hmm. But then this gives a period of building a window for building positions.
It's interesting though, but I think we didn't expect this in some ways. I don't know if you did, Powell, but what do you think is the reason, the motivation that China? In mind of this move of imposing export curbs on rare earths, right? Because we're still, a few weeks away from APEC.
That's right. Yeah, I think judging from the market's response, I think most people were surprised by this move. I think China is retaliating, because before this, the U.S. is using the BIS affiliated route, basically blocking all the channels that China can get its hands on advanced semiconductor chips. So I think after that, if you see a series of Chinese retaliation, right? So China is telling the leading tech firms not to buy NVIDIA chips. It's also showing confidence is Chinese-made chips, and also China is imposing fees on U.S. chips as well. For using Chinese ports. So leading up to this, right? So basically, we're becoming more restrictive on rare earths exports. Right? So I think people are seeing it as a sort of a retaliation to the previous U.S. move, but then over the weekend, Donald Trump basically retaliated by imposing 100% tariff on Chinese goods. So therefore, the market is rightly concerned. But I think judging from the history so far this year, more likely than not, we're going to get a tackle trade. Right? So Donald Trump is going to back off at this stage for two of the leading countries in the world. No one can gain anything from hitting at each other.
Do you expect the posturing, though, to continue the next 2 weeks ahead of the meeting? And do you expect the meeting to still take place?
Yes. Well, I think both sides are still expecting the meeting to take place in a couple of weeks. And also, going into this meeting, China has to posture, right? So as still have cards on the table to play, and also telling the opposite side, where the bottom line is for this negotiation. Right? So in so doing, it actually helped for the meeting to become more successful, right? So if during the meeting, China trying to change track and trying to retaliate after the meeting starts, then I think it will be a even worse starting point for the meeting.
Okay, so if this is the window opportunity to buy, what is worth scooping up right now, right? Because up until now it's been growth, right?
Yes.
Is it time to sustain growth, or is it time to actually rotate?
Yeah, I think people has done tremendously well with the growth stocks, right? So if you look at the Star 50 index in China, it's up like 180% in the past 12 months, right? So it's the leading performing index in the world. I think by now people has done so well, and also because the relative performance has been so exceptional extreme, then it actually pays to rotate some of the money back to the value stocks. So in the past couple of months, as growth stocks start to rally, Chinese banks, insurance, brokers hasn't been catching up as much. But these are the names that is very steady. It's heavy index weight, and so as money rotate back to these stocks, then we expect that these stocks will lift the Chinese index higher from here.
I'm looking at some of the valuations. I'm just going to mention SMIC as an example. Trading at 160 times earnings. I think your reaction says everything. But so what do you think expectations are? Do you think expectations are slightly too high as far as AI is concerned in China? Or how do I play that?
Well, I think everybody is going for AI, right? So it's going to change the way we work. I think specific for SMIC, we have a position in the stock. To declare, but then
thank you for that.
Then at the same time, we're expecting earnings to double from here, right? So rapid earnings growth from here. So as a result, even though now the PE is like very, very high, right? So but for growth stocks, 100, 200 times PE is actually showing the growth potential that people are willing to pay for, right? So at this price, so one shouldn't be too surprised to see the stock continue to do well, and also earnings starting to catch up. Therefore, then you will see PE ratio actually comes down because earnings is going faster than the price.
Okay. What should I look for in terms of ways to measure trade war tensions, the proxies that you've been looking at everything from soybeans to semiconductors.
Yes.
What's the right sort of one to look at?
I think a number of indicators we can keep track on. One is the soybean you mentioned, semiconductor performance, and also the Chinese yuan, right? So this morning, we see Chinese yuan is actually have a stronger reference rate, so meaning China is actually not retaliating after the U.S. imposing 100% tariff, and also the U.S. long bond yields, right? So and the Chinese long bond yield as well. So many of these indicators is going to tell you what the market thinks. But then I think the most direct way to measure is the polling market, right? So the prediction market. So they have a bet, whether China can resolve these conflicts around the APEC summit. I think right now the chance is like 90%-ish, right? So there's the market is actually quite optimistic of the outlook.
What do you think the risk premium should be after this meeting? Because this, to me, is a reminder that markets forgot about this issue.
Yes.
Right? We forgot about it, and then the weekend I woke up Saturday morning.
Yes.
Yeah, that it could still flare up. So what do you think the appropriate risk premium should be after this meeting, assuming poly market is correct?
Yeah, well, I think, there would be like back and forth, between now and leading up to the summit. And also I think, for the Chinese yuan, the Chinese central bank is sending a signal that China doesn't want a war, but, if there's a war, China is ready for it. And also, for the risk preference sake, for the Hang Seng, for example, right? So Hang Seng is about, 26,000-ish, right? So it's actually at a higher level than the beginning of this year. And you can see the lower point of the Hang Seng index is actually rising. Right? So one should be, we're very comfortable with Hang Seng being at about, 25,000 is a buying opportunity.
Okay, just in 10 seconds or so, do you think the national team might come in to stabilize in case the onshore market starts to fall even further?
Yeah, I think, judging from this morning's performance, I think, the national team is at rest, is quite relaxed at the situation.
All right.
And I think many people are looking for buying opportunities.
Hong, thank you so much. Managing Partner, CIO at Lotus Asset Management. Coming up here on the China Show, Eurasia Group's China Practice Head will be joining us in a couple of minutes. This is Bloomberg. Looking at the Japanese futures market, more uncertainty on the political side. According to Kyodo News, the Komeito party is saying it does not rule out cooperation with the opposition, and that exercise is focused on the nomination of the prime minister. More uncertainty out there. Japanese futures, there we go, as we promised, coming up on your screens. We're down 2% on equity futures.
Washington is dealing with a much more assertive Beijing. China is prepared this time around. It has put tools in place to respond to U.S. measures. It has reduced its dependence on U.S. imports and has reduced dependence on its exports to the United States by forging relations with other countries, particularly increasing its trade flows with Southeast Asia. And it's increased its self-sufficiency, as well as it's identified its choke points where it can hurt the United States.
That was Wendy Cutler there, the Vice President of the Asia Society Policy Institute, in the latest flare-up, unexpected flare-up, looking at where markets are right now in terms of the U.S.-China trade conversation. For more analysis on where we go next as far as the relationship goes here, let's bring in Eurasia Group's China practice head and former U.S. diplomat David Mealy here with us on set. Quite timely and perfect timing, really, to have you join us. Thank you so much for taking the time. So why are we here? Like, why is this happening all of a sudden?
Yeah, well, thanks, David. Thanks, Yvonne, for having me today. I'm glad I happen to be in Hong Kong. Why are we here? Well, I actually think the two sides were on a good path towards having the meeting at APEC and then for Trump to travel to China next year. And I'm still optimistic about that. But along the way, there was this closing of a loophole on the U.S. side, this new 50% rule that came out. And the Chinese saw it as more than perhaps it was intended to be. And then now we have the new Chinese release of these rare earth elements and related technology export control rules. And then President Trump has responded with his threat on tariffs. So it's been a back and forth that I think really reflects how concerned each side is about communicating where its pain points are and the necessity of the other side to help drive this car between those pain points.
Yeah. You mentioned some of these loopholes. Can you decipher what is actually new and what's not new in these curves in particular?
Well, the new U.S. rule essentially expands how export controls apply to subsidiaries that are tied to Chinese companies. And by some estimates, the number of affected companies goes from something like 1,200 to over 10,000. So it is a significant new rule. It is impactful. Whether the U.S. intended for it to come across and be understood that way, I am not sure. I think they think about these things for a long time, and maybe it is correct that from their point of view, they were just tightening things up.
Does it change at all the likely scenarios at the APEC meeting, assuming that meeting still goes ahead?
I'm going to go with it. It does not change APEC. I think the two sides are already signaling that they want that meeting to go on. Okay. President Trump's post on Truth Social overnight suggested this as an episode that I think he called it a bad day or something close to that, that they will get past. But perhaps it will delay the process a bit for getting to the transactional trade deal that we're all anticipating. I mean, at Eurasia, we're still holding to our call that the two sides will reach this deal. I think it's likely to be on the occasion of whenever Trump does get to China. But I do wonder if APEC, the result of that will be the two sides agreeing they need some more time just to hammer things out, hammer out what the actual meaning is of each of these moves that the U.S. and China have made, and come up with reassurance that the outcomes of these export control moves, it will not affect the reliability of industry getting what it needs to function.
I mean, I'm just wondering what could come next. I'm just wondering in terms of, now that we see the threat of 100% tariffs from the U.S., in terms of China's response, what do I look like? Is this TikTok deal in jeopardy? Are soybeans continue to be a sore spot?
So I think that's what would come next, would be a reminder of all the ways that each side can inflict pain. Let me step back, though. I was just in China for 2 weeks.
Sure.
Talked to a lot of my old government contacts, people in think tanks, businesses, and so on. And I came away with the impression that the Chinese really feel they can work with Donald Trump, that they see him as pragmatic, as transactional, as somebody who shows respect to President Xi. And what they really want to get to is getting to more stability and predictability in the relationship that they envision could last through Donald Trump's term.
Do they feel like they have the upper hand, though, China? right now?
They felt they played the rare earths issue last April very well. That was clear. But they also know that the U.S. holds a lot of cards. And we saw some of those cards last April, actually, when Trump responded with the controls on the chips and on the jet engines, on the ethane gas. So I think what both sides know is neither can move in a direction that serves its sole advantage. Each side has very serious pain points.
In my head, the timeline moves into next year when possibly, to your point, Donald Trump makes a trip to China, possibly, and then the U.S. midterms are rolling around. How do you think the U.S. midterms might affect Donald Trump's orientation?
Well, I think both Presidents Trump and Xi are extending themselves a bit by planning on these two meetings. And, I mean, they're clearly working towards getting to a deal.
Right.
But for both of them, they're going to have some pushback from people in their capitals. Mm-hmm. For Donald Trump, we can already see from the hawkish elements that there is a lot of concern about what he is going to do next. Mm-hmm. So whatever he does, he is going to have a strong motive to make sure it is successful. And that gives me optimism about the implementation of a deal. The midterms will be part of that, but it's more than that. China is hosting APEC next year. The U.S. is hosting the G20. Along the way, there are going to be a lot of opportunities for people to meet at the ministerial level. Yeah. And then at the end of the year, there's going to be opportunities for leaders to get together at the leadership level. All of this, I mean, from my experience working, basically 30 years on U.S.-China, nothing works for this relationship like scheduling high-level meetings. It gets the bureaucracies on each side to kind of sit up straight and figure out what's possible. And I think that's actually setting us up potentially for a good 2026 if they can get to a deal, if they can get past this episode, and if they can implement well.
Where does Taiwan fit into all this?
We saw what looked like some gestures from Donald Trump in recent months. The Lai transit of the United States did not happen. Defense talks were downgraded. There were some other measures as well. The Chinese are clearly looking with high hopes to Donald Trump to give them reassurance that the United States is moving away from what they felt was the quote-unquote hollowing out of Taiwan policy, of U.S. one-China policy in the Biden days. And so I think now what they are hoping for is that at minimum, Donald Trump, when he visits Beijing or at some point around that, makes a very clear public reaffirmation of U.S. policy. And that will allow them to feel that the U.S. is not implicitly sending signals to the Taiwan leadership that it is going to tolerate what the Chinese fear will be provocative moves by President Lai.
I mean, it sounds like an oxymoron to get more clarity on the strategic ambiguity sort of policy, but how much goodwill do you think Donald Trump is able to get for U.S. companies if he leans in that direction and gives China what they want?
I am hesitant to suggest that Donald Trump is going to actually act in a way that links a trade deal or actions to help U.S. companies to what he does on Taiwan. I think Taiwan exists on its own merits. It is the most important issue to the Chinese. Remember, when Trump and Xi have phone calls, we always learn that no matter what the central element of the call is, the Chinese always raise Taiwan. It is their number one priority to move that forward. And so I think Donald Trump recognizes that in this region, cross-strait issues are a source of potential instability. He does want an overall productive relationship with the Chinese, and I think it is those issues alone that will drive how he responds on Taiwan. That said, the gestures over the summer were probably to some extent a reaction to an understanding that after the tit-for-tat that occurred last April, a path towards the two sides getting to a trade deal and stabilizing the relationship had to occur against the backdrop of no major flare-ups over Taiwan.
Oh, of course, it's some things to monitor. We have the plenum coming up. We also have this 15 five-year plan.
Yeah.
What are you going to be watching out for the most? Do you think some of these external threats that China is seeing right now, does it change the playbook in any way?
I think when we talk about these external threats, what's really motivating China is it doesn't want to have to think about those because it has internal business to take care of. When I was in China in these recent weeks, what I heard the most about was this concept of involution, this idea that there is this destructive downward spiral of competition that is affecting not just sectors in the economy, but now pushing through the entire economy. I think what we want to look for the fourth plenum and for the 15th five-year plan is what China plans to do about this. I expect we will hear that they will express determination to act here, to address deflation, to address falling margins, to address youth unemployment, to address cannibalization of R&D expenditures, issues like this that come out of involution. They are very concerned, but it is very hard to follow through, and I will be looking to understand what exactly they see as their tools and what they will be doing about this.
Do you get a sense that these domestic issues are at the very top of their priority, and not so much all these, let's call them distractions on the trade front? What do you think is top of their priorities as far as your understanding goes from the people that you talk to?
My understanding is, like all countries, they're thinking about their own country first and domestic issues first. They are actually quite happy with how their economy performed in the first half of last year, but they know that the consumer stimulus that they employed can't be effective forever. Right. They know this involution issue is there. They know that exports are a top source of growth for them, and they're hitting resistance with the United States and eventually with the EU and other markets. So now they need to turn inward and focus on the property sector, on youth unemployment, on consumer sentiment, on involution, and I expect that we're going to see determination on that front.
David, it's great to have you in town. Thank you so much. David Mealy there, Eurasia Group's China practice head, joining us here in Hong Kong. We also did hear from the S4 Capital chairman and founder, Martin Sorrell, saying that he remains super bullish on China despite Trump's new tariff threats. Speaking to us at the International Business Leaders Advisory Council conference in Shanghai, Sorrell explained how tariffs are impacting the advertising industry.
We have to see how tariffs sort of come out at the end of the day. We'll see what happens, particularly with the negotiation between the US and China. Having said that, all that does is delay things. I mean, people, when there's an uncertainty, they don't make decisions. I'm talking about the advertising industry now. They don't make decisions as quickly as they should do, or they postpone making a decision because they're uncertain about the results. So it's not good news. Growth as a whole is going to be lower. I think we've entered a new age of fragmentation, and growth is lower. Inflation is more stubborn, as we know with the central banks. They try to get inflation down. It's much more stubborn and tariffs don't help.
You talk about slow growth being the new normal.
Not slow growth, but it's sort of under 3% rather than over 3%.
What is your assessment of China and how and whether it will be coming out of this?
I remain super bullish on China. I mean, despite problems in the real estate market, which we still have, the stock market probably has improved a little bit from where it was this time last year with EBLAC. State-owned enterprises borrowings, I mean, that is being addressed.
Consumption sentiment is still pretty weak, though.
No, it's true. I mean, consumer sentiment, but Chinese always save a lot. The big opportunity for China is in the tariff world that you mentioned and we were discussing. As the trade patterns alter and the US will have to become, in my view, less important to China. It'll still be important, but less important. China is already diversifying its trade policy. Very interesting, even since April.
But we've been seeing very compressed margins, though, domestically because of the deflationary pressures. Do you see that changing anytime soon?
Deflation is an issue in the Chinese economy that we has to be dealt with. No, I think China has enough. The government has enough fiscal firepower at the centre to deal with the situation. The priority for domestic Chinese companies is outbound China. The big opportunity for Chinese companies is outbound China. The big opportunity for Chinese companies is outbound China. They need, I believe, our help in marketing. You have to be very acutely aware of what goes on here in the Chinese consumer. And there's not one Chinese consumer, obviously. Foreign companies come in here know that it's going to be super competitive, and they have to be super efficient and super agile.
Yeah, there we go. That was S4 Capital Chairman Martin Sorrell there with Min, of course, in Shanghai just over the weekend. Very quickly, we are about just an hour and 14 minutes to the cash market session, and we're doing better given the circumstances out there. We're certainly coming off lows of the day. We're now just down about 2%. Shanghai comp CSI 300 down as much as I think 2.5% in the opening minutes have certainly come off lows of the day. Welcome back. So the NBA has returned to China with some preseason games in Macau, 6 years after the fallout, of course, over the protests in Hong Kong put the relationship on ice. Stephen Engel, our chief North Asia correspondent, sent this report.
Six-time NBA All-Star and Hall of Famer Mitch Richmond is part of the NBA's, dare I say, full-court press to win back fans in China after a 6-year freeze of its annual China Games. You could say the relationship has been hit and miss. The league had been playing preseason games on the mainland since 2004, building a massive and lucrative fan base. That came to a screeching halt in 2019 after one team executive posted on social media support for Hong Kong's protests, angering Beijing. 6 years on, the NBA China Games are back, but now in the Chinese gambling hub of Macau through a multi-year deal with Las Vegas Sands.
There's a lot going on with basketball in terms of its future potential, but I think it's going to be investment-led. And I think there's a huge opportunity here in China.
Simply put, China is a market that's too big for the NBA to ignore. And for China, the NBA is too popular for it to ignore. S&P says a staggering half of China's adult netizens watch NBA games online, including one NBA player who's from China.
I feel blessed, be a part of this family. Since I was a kid, I was watching on the TV. Right now, it's like a dream come true for me.
From my perspective, it's always been an extreme amount of love. I have, a tremendous amount of respect for, the country of China, and they have the same for us.
A sentiment echoed by former football great David Beckham, who was on hand as a multiple brand ambassador in China and told me he believes sports has the ability to break down barriers. Soft power, if you will.
My connection started a long time ago with China. And every time that I go into a new country, a new city, I jump into the culture straight away. So it's about the food, it's about the people, it's about the fans.
This year's NBA China Games in Macau feature two teams that, while they've come close, have actually never won the NBA title. But there may be another prize at hand, and that is winning over fans for their teams in the Greater China region, especially now that the former Houston Rockets center Yao Ming has been out of the league for more than a decade now. The two teams are the Phoenix Suns at the far basket and also the Brooklyn Nets. Oh, by the way, the Nets are owned by Alibaba co-founder Joe Tsai.
Yao Ming is no longer with the Houston Rockets, and I'd rather spend more time in New York than in Houston, and I'm going to make the Nets China's team.
Call it a draw on China bragging rights as the Nets and Suns split their two games here at the Venetian Arena. Stephen Engel, Bloomberg News, Macau.
So cool. All right. If you're a subscriber and want to rewatch all the interviews and Steve's package, of course, you can watch it through our interactive TV function, TV Go. You can also become part of the conversation and send us instant messages. Check it out at TV Go. All right, checking markets, checking movers here this morning, and you continue to see some downside when it comes to Hang Seng. We're down by about 2% here right now. You are seeing a little bit of strength coming through in the currency here, of course, after that strong fixing from the PBOC here today. But certainly in terms of what to watch, or watching some of the key technicals, or watching the likes of rare earths, for example. Of course, they have been at the center of this whole U.S.-China trade spat as well. So some of what they've seen in Australia and China have been climbing as we continue to watch some of these developments coming through here as well. But you've been watching some of the technicals levels overall, Dave?
Yeah, going into today, I mean, looking at the drop that we had on Friday did indicate maybe a 3% drop was likely going to be one of the scenarios to consider today. And a 3% would have taken us to the blue line, which is the 50-day, which is effectively where we are right now. This note just dropped in our inboxes. This is out of UBS, James Wang and his team. And he says, the question is this a replay of the April sell-off? And he says, we don't get to that point quite a bit. We will see some bottom fishing, which he says will lead to the index bouncing off. If any, we test the 74 handle. This is what he had to say here.
Yeah, well supported, he says, right? That would bring us back to levels that we saw in May 9th, right before the previous tariff de-escalation, and 15% from some of the current levels here so far. So that's the take from the UBS side of things here. We talked about what really has been the pain point, or at least where we're seeing the biggest price action. For one thing, it's the rare earth stocks. So those have been actually moving on the upside here when it comes to Australia, in China, for example, here, as of course this spat intensifies. So there you go. You actually are seeing quite a bit of movement there. China exporter stocks, certainly that's sort of be the focus here, given the threat, of course, of 100% tariffs on Chinese goods. There you go. You are seeing a bit of a movement there to the downside. Tongfu Microelectronics, for example, is down some 5%. EV makers also is part of that story, I guess you could say, when it comes to the exporters side of things as well. But there you go. You are seeing, because we did see some NEV sales did grow about 15.5%. But today it really is kind of a risk-off session in some of these, especially when it comes to China tech overall, Dave.
Yeah, in fact, just on the Alibaba note, and that's coming up on your screens right now, this one actually just coming through in the last hour. So higher, which is not the description of the direction, not of markets today. That's the appliance maker, of course, coming through with Alibaba and signing this AI cooperation pact. Scant on details. This was a statement out of WeChat, or put on WeChat. The partnership between the two will focus on areas like AI plus cloud, advanced manufacturing, also e-commerce, and also global expansion. Just a note, but of course today's we're a catch-down trade as far as both things go. Before we wrap up the show, a look at in the next hour. So we're looking at this massive move on Friday in overnight HIBOR, that spike you see of about 107 basis points to 245. This updates in about 15 minutes or so, but we will leave you with a look. So something on positive notes. Markets are coming off the lows. U.S. futures, dollar yen, VIX futures are also, as you can see, not acting as much dollar, and we're also looking at Aussie yen, of course, which is a good indicator of risk appetite.
Yeah, as Hao Hong mentioned, right? If you take a look at what poly market and when some people are betting on whether we still continue to see some sort of resolution on the trade front as well, you see signs possibly of that taco trade maybe reemerging here this morning. That's it for us here on the China Show. Insight is next.
So Sri, You know, I saw a story this morning on the Bloomberg saying which banks were expected to beat estimates, which to me, that doesn't make any sense. Why don't analysts then raise estimates?
Well, they can only go about how the management is guiding them, and management's always smart to guide them to a place where they are sure when they report the numbers that they can try and beat those estimates. And that's what they've done this quarter. If you look at all the big numbers, especially in capital markets, especially in the investment bank side, when you look at trading and the deal-making side of things, all the banks have done really well. And that was kind of expected.
We knew that.
As the year has progressed, you've seen a big tick up in deal announcements. That is now starting to flow through into fees. There has been heightened trading activities, and along with the
good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
Our gold company is earning a lot of money right now. Absolutely. The margins are as fantastic as I've ever seen in my career. Yep. Is that a warning sign that the price is too high and maybe costs will catch up, or are prices of gold still too low and they'll go higher from here? You know, right now you would have to say that just on that metric alone, gold companies are probably over-earning in terms of their profitability. When you then do the analysis and say, what does gold buy you? Yeah, so what does gold buy you in real life? And we've done this analysis, we've shared it and things with
Don't
you guys.
have this conversation with my wife, by the way.
Yeah. And, you know, if you want to go and buy a Big Mac or burgers or low-value goods, you can buy more of them today with gold than you could have done in the past. But if you want to go and buy a pretty standard item, say in the US, like a Ford F-150 pickup, you can't. You're buying less of that, even at today's gold price. So gold has preserved its purchasing power for some items. It hasn't preserved its purchasing power for all items, like Manhattan property, the average property price in Manhattan. You can buy way less of that. So has it kept up with everything? No. So therefore, on that metric, excluding the first one, it's not overpriced, because otherwise you could buy everything with less gold than you could have done in the past. And so I think, you know, you've got to look at these different metrics to decide where the price is itself. But I still come back to this trend, and you mentioned momentum. Momentum is very important here. So maybe you have some speculators riding on the journey in the interim, causing volatility like we've seen today. And maybe some of this physical leasing is part of that. But actually the trend is probably your friend in this environment. And if we are going in this direction, hopefully slowly, we're going in this trend, then, you know, where could it go to from here? You know, it could go a lot higher if we're actually repricing paper currency relative to real assets, and there's an issue around people believing in it, then, you know, this currency aversion trade, you know, could last a while.
I mixed my commodities metaphors earlier and said that there'll be some splitting of the wheat from the chaff. But, you know, with the debasement trade, does it worry you that it's kind of unspecific at the moment and this momentum is just driving at anything that isn't sovereign debt, that isn't currencies? And do you think that actually, you know, Anna's talking about the silver bars and the shortage here in London, that actually, you know, gold is the one you can rely on and some of the others will suffer in the future, the near future maybe?
I don't know. I've always said when I come on here that silver and gold are very different. You know, silver's an industrial commodity, solar panels and so on. Gold's a monetary commodity. And so they have very different dynamics that sit behind them. You look at the silver market today, there's something going on in the lease market. There's a shortage somewhere. Someone's paying to get hold of it to meet a commitment. That's all that is. It doesn't mean that the price is too high or too low or where it is right now. But I'm actually excited by, you know, the profitability of the underlying companies, which is what we invest in. And, you know, at these prices, these companies are earning like enormous margins, absolutely fabulous margins. Is that priced into the equities? And you might say, well, oh my God, Evie, the stocks are up 100% this year. How could they possibly be cheap? That's staggering. They've never been cheaper than they are right now. You know, and we're starting to see the market catch up with that trade. I think last time I was on, I was talking about the average long-term gold price that people are using in their models was between 2,200 and 2,400. You know, that's a big discount to today's spot price. That's like a 50% discount to the futures curve. That's a massive, massive difference. So the prices are now starting to be upgraded. So we've seen some of these sell-side analysts come out and say long-term pricing should be 2,800, 3,000. That's still a big discount to spot and a massive discount to the forward curve. So when you look at all this together and you say, well, what's priced into the equities? What's priced in is a massive retracement from today's prices. Yeah. And if that doesn't happen for 12, 18 months, 2 years, these companies will way over-earn relative to expectations.
I also want to ask you, back to London Metals Week, what the vibe was when the Trump tariff threat came along on Friday night? Was everybody in town? Did it kill the vibe? Did it change your thinking strategically at all?
Great question. So it doesn't really start until Sunday. So it wasn't really much of a kind of atmosphere to engage with people there. So I think by the time we got to Sunday evening, J.D. Vance had come out and said things to kind of soften some of the volatility. Hence, we didn't have the big move on Monday in equity markets that was priced in on Friday night. So I think that comment had kind of calmed things down a bit. Yeah.
Gold always crashes, doesn't it?
Does it?
That's what history tells us.
You're the man with wisdom.
But I look at the long-term chart. It always goes up and then it comes down pretty hard.
Well, I think everything goes up and everything comes down and everything goes back up again, and that's a cycle. So, but I think what we're in right now is it's probably bigger than a cycle. Yeah. Because we've got this. We've got this enormous trend that's been with us now since the 1950s, the overprinting of paper currency, and this growing social liability. And I think it's so hard to break away from that. And eventually these things get to tipping points. And when you get to a tipping point, then things change. And maybe we're seeing a change in some of these real assets on the back of that.
When you get to a tipping point, things change. Wisdom from Evie Ham.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
So, Roz, we are seeing a tit for tat. Depending on where you look, it's either China's trying to escalate or de-escalate. And this FT interview really did have a lot of poking on the part of Treasury Secretary Scott Bessent. In your opinion, does this get ratcheted back?
Well, it's interesting because we are seeing, you're saying, a lot of posturing going on. So China and the US trying to get potentially in the strongest position going into this possible conversation between Xi Jinping and Donald Trump later this month in Asia. But it's quite risky business that they're doing because they are coming at each other in a variety of ways, not just rare earths, critical minerals, the tech space, but also, as we've seen now, shipping, just reflecting the extent of the tensions across the trade and economic relationship between these countries. And some of it may just be largely posturing. It may be trying to get in that position ahead of the meeting. But again, up until that meeting, Xi Jinping and Donald Trump both need to decide for themselves, does this meeting still make sense? Am I going to go into that meeting and come out of it with what I need, or is there risk here in even having that conversation? And so it's really about not getting to the point where this relationship gets so tense they decide not to meet at all. I mean, you heard the comments from Scott Bessent to the Financial Times saying that China is apparently hurting the global economy. So the message is that China's causing itself reputational damage, not just with the US and others. But in the same token, he's saying the lines of communication between the US and China are still open. He, in fact, plans to meet with the Chinese Vice President, He Lifeng, one more time, possibly this month, before a Xi and Trump sit down. So on the one hand, there's the tough talk that's going on and these actions that are happening. On the other, there's the sense that conversations are still going on, at least behind the scenes.
Technology touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
Live from Singapore, this is Insight with Haslinda Ahmed, where we dive deeper into the stories that matter with crucial context and sharp analysis. Presidents Trump and Xi locked in a showdown, with both countries claiming the ball is now in the other's court as the clock ticks toward a further escalation in import tariffs. Risk sentiment in the markets improves, but raging beneath the surface of short-term fluctuations is the great debasement debate. Are investors really pulling away from sovereign debt and currencies in favor of precious metals and Bitcoin? We ask Adam Levinson, founder of global alternative asset manager Gamma. Also ahead, Asian rare earth stocks extend gains as escalating US-China tensions reignite investor interest in strategic minerals. Corey Coombs, head of critical mineral supply chain research at Trivium China, will be joining us to discuss how a supply shortfall could affect the global economy. Well, let's get straight to our top story. Asian stocks are mostly higher amid easing trade tensions between the U.S. and China. Treasury Secretary Scott Bessent says he's still expecting Presidents Trump and Xi to meet later this month at the APEC summit in Korea. But Bessent is warning that all options are on the table for retaliating against Beijing's move to tighten exports of rare earths. China, for its part, has defended its decision after holding working-level talks with U.S. officials on Monday. And while the latest tariff spat between the U.S. and China is still top of mind of investors, money managers have also been increasingly discussing a phenomenon known as the debasement trade. The strategy involves pulling away from sovereign debt and currencies as investors seek to protect themselves from threats posed by runaway budget deficits. For more on this, let's bring in our senior FX and rates reporter, Ruth Carson. And we know, Ruth, that this is really gaining momentum, rippling effects across markets, Singapore to New York, Japan to Paris. I'm just wondering, why is it happening now?
It's a great question, and it's certainly being debated everywhere as to what the answer actually is. Now, when we look at where markets are today, you've got governments that are spending heavily, deficits that are ballooning, yields have shot up as well. It's making investors everywhere really start to question, are we investing in the right assets? And we're seeing that. We're seeing that reflected in the prices of gold that are at records, silver that are at records, and Bitcoin, even with the pullback that we saw on the weekend, it's still at all-time highs after rising over 20% this year. It's that rush towards alternatives as people really grapple with the question of viability.
You talk about how we've seen that massive run-up in gold and silver, in cryptocurrencies, Bitcoin in particular. The question is, how much more upside are we expecting? Is there more upside?
Isn't that $1 trillion question? And we'll all be billionaires if we got that correctly. At the moment, just talking to traders everywhere, which is part of my daytime job, we're finding that rush for gold hasn't abated. Yes, every other day we're seeing new records and people are saying it still has further to go. Now, key to all of this, particularly when it comes to precious metals, is this. It's not just the punters that are doing it. You've got reserve managers, central banks, pension funds, life insurers. Take your sticky money pick. They're all doing it, aren't they? Plus, you've got the upside from day traders and money managers, the asset managers who act on behalf of these super large investors, all saying, you know what? Buy gold. It's a hedge to almost anything at the moment.
Surprising, right? I mean, just a year ago, you wouldn't think so. And we've been talking a lot about de-dollarization as well. To what extent is this a continuation of that? Or is that above and beyond? Is it something bigger?
It's a cocktail of both. So yes, de-dollarization has been something that has been debated about for years, actually. And that definitely gained traction this year, considering the dollar has dropped quite a bit, more than 7% this year alone. Now, is the debasement trade reflective of the de-dollarization trend? Yes, people can argue that, but it's also arguably a shift away from fiat currencies. Think about it. You've got the dollar under a lot of stress, as we know, from attacks on central bank independence to Trump's trade war. But you've also got problems with the yen, right? The haven that we once knew it is arguably no longer the haven that it was. And if last Friday's, implosion of politics shows, there's plenty of uncertainty there as well. Euro has its own problems too. So in a way, it's almost as if people are, the trust towards fiat is chipping away a little bit. And as a result, it's bonds as well.
Bit by bit. Ruth, thank you so much for that. Our senior FX and rate reporter, Ruth Carson there. Let's bring in Adam Levinson, founder and CIO at Graticule, a global alternative asset manager. Adam, good to have you with us. What's your take on this debasement debate? It is gaining momentum. It is the hottest investment trend in town. Are you buying into that?
First, thanks, Haslinda. Thanks for having me. I'm buying into it because it's been the most persistent, robust trend, and it's very hard to ignore. As you were just talking about moments ago, it's really primarily an anti-fiat currency movement. That's a function of a lack of trust in a lot of governments around the world that show no ability to curtail spending. They want to run out of control deficits. And so citizens, investors, professional or otherwise, are turning to non-fiat instruments. And then additionally, the backdrop is also occurring around a massive wealth redistribution among age cohorts. Two younger generations, pools of very large savings in developed markets. And those younger generations have a very different preference profile, primarily toward crypto and Bitcoin in particular. But gold's a part of that mix, as is silver, and you're seeing that routinely each and every day in flows.
The thing is, it's still being debated, right? I mean, not everybody's buying into it. You are. But when you take a look at yields, for example, Ruth talked about how yields are trending higher. But if you take a look at the past 3 years, yields have pretty much been range bound. And that does not suggest debasement.
Well, yields have been range bound. Real yields have been quite low. And as a function of that, there has not been a major impediment to shift away from paper or fiat related assets. And so, you may suggest that people aren't buying it, that it's much of a debate, but you can't find a more persistent trend in markets that is away from fiat generally over the last 2 years. And so remember, what you're also dealing with is the savings pool is enormous, absolutely enormous. Just small adjustments or movements in that direction, are very large sums and have a displacement effect on these other assets, which are not particularly deep markets historically.
So just to be sure, the debasement trade does not require higher yields.
No, debasement trade doesn't require higher yields at all. The debasement trade is facilitated by low real yields, but you're seeing the back end of yield curves, particularly in places like the UK and France, which are arguably more problematic than the United States in this regard. But there you're seeing a revolt of investors, by investors, unwilling to hold the long end, despite yields rising. That's not attracting new flows in. It's more of a warning that the back end can become discontinuous or unruly at minimum.
Those who do not believe in the debasement trade also point to the dollar. Yes, we saw, how the dollar dropped in the first half of 2025, but they say it is just the unwinding of the rally that we saw in 2024. What do you say to that?
I think that's largely true. Look, the dollar, if you look back over the last decade, the decade of so-called U.S. exceptionalism, the dollar just received an overwhelming amount of flows. And so just a natural unwinding of that to a degree has been an adjustment downward in the dollar. And while that too may continue, that's been contained around what you might say is just sort of reasonable volatility of that asset class. The bigger trend has been the debasement more broadly, which is out of fiat altogether. The other part of the dollar trade, and this runs counter to the de-dollarization idea, and is the notion of the growth in stable coins, which is effectively dollarizing much of crypto that isn't in Bitcoin.
So, Adam, when it comes to the dollar, has it turned? Is this a pivotal moment for the currency? Where do you see it go from here?
I don't think it's particularly pivotal. I think it's simply just a pause in a trade that is somewhat advanced over the course of this year. And you can have slight unwind, small waves of adjustment higher in the dollar, but nothing's changing against the backdrop that we just described. And so, other than marginal position adjustment, the underlying forces that are pushing this trade, pushing the reallocation, are in place. And so you will see somewhat further de-dollarization, but I suspect the most persistent trend remains debasement and out of fiat currencies looking for alternatives.
And of course, this has played out in the crypto space. Some say perhaps Bitcoin is getting to 120. What's your take, and what have you been doing with cryptos?
Crypto, let's separate two things, first of all, and that is Bitcoin itself, which really is, this generation's digital gold, and the proxy, if you will, for debasement. And what I would suggest is everything else going on in crypto. And that to me is probably less well understood broadly. The real trade this year has been the start of something incredibly significant, and that is what we describe as the convergence between traditional finance markets and digital finance markets. So TradFi and DeFi convergence, which we think becomes very pronounced over the next 3 to 5 years, that was facilitated by the shift in regulation in the United States, effectively, welcoming the development of crypto markets, and the recognition, or what should have been the recognition, that stable coins really are the killer app, mostly built on Ethereum, some on Solana, but stable coins being the point of porosity now between these two markets. So whereas, over the last several years, you could argue 7 or 8 years, really, crypto was often thought to be great infrastructure with no real product. With stable coins, you have a genuine killer application that now allows for an entire new financial architecture to be built on top. And so you've seen the start of this in a number of different elements in crypto. The most significant this year being the expansion of DATs, or digital asset treasury companies, outside of just MicroStrategy, what Michael Saylor had done in Bitcoin space. But in some ways, it has allowed you to invest in almost venture with liquidity, which has been somewhat extraordinary. If you've chosen wisely, you've seen absolutely extraordinary growth in these companies, and that's consistent, frankly, around what you see in financial companies built on these new rails, right? The most glaring example, right, is Tether, and that's raising money at a valuation of $500 billion. That makes Tether the second most valued financial institution in the world. People don't necessarily think of that immediately. Second only to JP Morgan. And it's a company that has 150 employees. The profit, if you will, or revenue per employee is just unlike anything we've ever seen before, versus JP Morgan's 330,000 people and still unable to deliver, much of a customer service experience. It's not a surprise that the same younger age cohorts that are inheriting a tremendous amount of savings in this.
Adam?
Yes.
We'll delve deeper into digital assets just slightly later after this short break. Adam Levinson from Graticule Asset Management Asia will be staying with us. Now, still to come, LG Electronics India looks set for a strong trading debut after its $1.3 billion IPO drew heavy investor demand. We'll be live in Mumbai later this hour. Much more ahead. Keep it here with us. This is Bloomberg.
On everything that we care about: the economy, media and information, markets, trade, geopolitics.
Welcome back. Big swings in Samsung Electronics today, with the tech giant erasing an initial gain after reporting its biggest quarterly profit in 3 years on surging demand for AI-linked chips. Samsung has been playing catch-up to smaller rival SK Hynix on the AI front after a series of development missteps. Now, amid the debate over the strength of the AI rally, let's discuss what the next big opportunities may be in the technology. Still with us, Adam Levinson, founder and CIO at Gratitude Asset Management Asia. Adam, we know we've been talking about this AI bubble angst, but there's still huge, big trades out there, right? I mean, you say you're pretty excited when it comes to powering the AI infrastructure. Not that sexy, but you can expect big returns. Talk to us about that.
We think it's dramatic, Hassan. Actually, sentiment in markets today centers around just a few big concepts. One obviously is the U.S.-China relations and tariffs. The other, and the one that primarily everybody spends an enormous amount of time on, is where are we, so to speak, in the AI bubble, if it's that. And our contention is we've got still a very long way to go. Even if you accept that we should use the internet sort of 97 to 2000 analog, we're perhaps running ahead of it in terms of relative investment, per unit of GDP at this point in the cycle. But overall, the internet investment as a percentage of GDP peaked in the U.S. in that cycle at 1.3%, or somewhere around 85 basis points of GDP currently. Now, what makes it scary is GDP's grown a lot in the last 25 years. And so the numbers are very large, but we're nowhere close to even where we were then. And this is the most significant technology of our lives by far. And so it's going to exceed that in our view. The part that's abundantly clear and actually subject to very little debate at this point is you're going to need a tremendous amount of power to drive all the investment in the space. And it's only going to be generated a handful of ways. And you've seen, the market actually be somewhat agnostic, just now starting to recognize that you have to own power, a number of different ways. But our view is the most unique instrument in this cycle tends to be, in the short term, Bitcoin miners that are effectively converting themselves to high-performance compute. And you're seeing now deals that people thought about a year ago now coming to fruition all in the last several months. And then a company like Bloom Energy that had a very big day today on the announcement of yet another deal of integration into a new set of data centers, that being by Brookfield. But that's a company, it's not, this is funny. I made the comment previously about, with respect to crypto, where it was thought to have great infrastructure, no product. The opposite was true of a company like Bloom, which had a great product but no market. And what's happened is the market has now become ubiquitous. The need for power, the need to create what is essentially 100 gigawatts over the next 5 years of power generating capacity means that you have extremely asymmetric returns in this space, and we're not even close to being done.
And to your point, Adam, we have Bloom Energy, reaching a record overnight, and we had Bitcoin miners leading that crypto rally overnight as well. You talk about the energy footprint for the AI space. I'm just wondering as well, nuclear comes into play as well, doesn't it?
And nuclear definitely comes into play. And in fact, we made this argument in nuclear and started investing in nuclear and have had, many fits and starts since 2018. And I think that's part of the ultimate state of what gets built. The difference in nuclear is, in reality, over the next 5 years, in this sort of 100 gigawatt requirement, if you will, new nuclear probably delivers virtually none of that. The extension or lack of retirement of or previously anticipated retirement of nuclear is probably worth just over 10 gigawatts in aggregate, whereas for us, we think Bloom alone will likely deliver 10 gigawatts of via solid oxide fuel cells with also no emissions. But the access to power, the time to power with Bloom is literally a quarter. And nuclear, any new nuclear, we're looking at 5 years plus.
Adam, when you take a look at the supply chain in Asia, where are the winners? What would you be betting on?
We've been deeply involved in Taiwan, almost across the board. The one thing that is, the other thing that I think is really not of any debate is whether it's GPUs or ASICs development, and clearly there's been a move recently, toward ASICs. In fact, ironically, the deal announced overnight between Broadcom and OpenAI is referenced as a power deal. The amount of XPUs in the form of 10 gigawatts. That tells you an awful lot. But all of that goes through Taiwan still. And so, it's somewhat remarkable. We know if you go back sort of 15 years, and the thesis was software eats the world, a number of investment professionals basically eliminated their focus on hardware. It was considered not sexy. We always stayed involved in it, one, because it was always relevant for a lot of markets in Asia, primarily Taiwan, Korea, and Japan. And second, even if you couldn't find opportunities in the supply chain itself, it always gave you insight into U.S. tech orders and early warning around macro.
We have to leave it there, Adam. Adam Levinson, founder and CIO at Graticool Asset Management Asia. Thank you so much for joining us. Keep it here with us. This is Bloomberg.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
Welcome back. You're watching Insight. We're tracking big gains in Australian rare earth stocks with the strategic materials back in the spotlight on fresh US-China trade tensions. Beijing's expanded export restrictions on some rare earths are boosting bets on alternative suppliers outside China. Investors are grappling with the possible implications for global supply chains and the production of key technologies. Chinese trade expert Mi Zhu, speaking earlier on the China Show, defended Beijing's export controls on rare earths, saying they can strengthen global supply chains.
Some people think that China do not want to export our rare earth products, and I don't think that is the truth, because we still are, encouraging the companies to follow the market rules and trying to do the businesses with other trading partners. I I know that China's rare earth industry is very strong, but it's not only because our domestic market. We depend a lot on the global market, but the global market is based on some rules and certainty. So if we are continue to support the government, the government to support the enterprises in different ways to trying to give them more confidence, I think that the supply chains can be strengthened.
Let's bring in Corey Combs, head of critical mineral and supply chain research at Trivium China. Corey, good to have you with us. It does seem like China's weaponizing the rare earth supply chain. What do you make of the move? It does seem pretty confident.
Absolutely. There's a lot going on with these and a lot to speculate on, but I'd say two things are quite clear. First, it seems to me there is a retaliatory component, right? The expansion of the controls from 7 mostly heavy rare earths to 12. But there's also a separate and completely distinct part of these controls, which is the expansion into a more significant version of extraterritorial jurisdiction, basically saying and laying claim to China's control over very critical production chains, including for semiconductors. This is a significant expansion. I think it reflects the tensions between the US and China. This isn't just about leverage. This is a much longer term issue of how does China protect its interests? It seems to view this as one of the ways to protect its interests.
And of course, timing is crucial. It comes just before the intended meeting between Xi Jinping and President Trump on the sidelines of the APEC meeting. How effective do you think the move will be?
Absolutely. I mean, this is the first, from the moment these hit, all the speculation was, is this just leverage ahead of the negotiations? I don't believe that. Certainly it will be a point of leverage, but I think it was driven by longer, more structural issues and as a retaliatory effort or retaliatory measure to recent U.S. actions, including September 29th BIS rules, the expanded entity list. So there's all that to unpack. How does it affect the talks? Well, honestly, it would be hard to imagine that Beijing anticipated the ferocity of the U.S. response. And certainly I personally think the U.S. Reacted somewhat emotionally to the news. And I think that's reflected in the fact that the U.S. kind of toned things down. Perhaps there's some back channeling. But we saw, U.S. President Trump's remarks that I believe it was, don't worry about China, it'll all be okay, kind of that messaging. I think it was a clear attempt to kind of dial things back because ultimately both sides are interested in these talks. It's not necessarily about getting a grand bargain, next month, this month, but it is about continuing to make incremental progress. I think both sides are interested in the talks still need to happen. That's the good news.
Yeah, but the thing is, these rare earths are critical to the U.S. Talk to us about the economic and security risks should China go ahead with the new restrictions.
Absolutely. So 2 pieces here. One is we've been facing the restrictions